Let's begin the CA Final Advanced Auditing Revision Marathon for the new scheme May 2024 or November 2024 exams onwards. Fine, this marathon is going to be in 3 parts, and right now that you're watching is part number 1. And by the way, please watch this introduction. Don't hurry up yourself directly going to the timestamp of the standard. Okay, at least watch revision comfortably with a cool mindset. Don't hurry up yourself. Okay. Now this, I'm going to upload this entire revision approximately for 27-28 hours. It will come 28 probably. So part 1 right now that you're watching is approximately 12 hours, where we are covering 14 standards. We are covering 14 standards. I don't know how many of you have seen this weightage section wise, skill wise. There is a document which Institute have released. In that they have clearly mentioned, the entire weightage is broadly divided into 5 categories. And what are the important chapters, so that if you study them, you can damn sure secure 60 plus. If not 60 plus, at least 55 plus, you can for sure secure. Getting it? Just 3/4 syllabus if you study. So if you look at, chapter 1 to chapter 11 in the Institute book are completely dealing with standards. Totally we are having 46 standards. 35 standards on auditing, 3 special purpose framework related standards on auditing, 1 standard on quality control, 2 review standard, 2 related services, 3 assurance standards. Likewise, we have totally 46 standards, and we are discussing all the 46 standards in our revision class. So 1 to 11, and finally if you look at the 19th, which is ethics chapter. These 1 to 11, nothing but complete standards, engagement and quality control standards, we call it as, and ethics. If at all, as per the Institute book, 1 to 11 plus 19, totally 12 chapters. If you study, 75 to 80 marks of the paper, without any doubt you can attempt. Without any doubt you can attempt. Anyhow. So that point clearly I spoke in audit strategy video. There is a video, caramharsha final audit strategy May 24. You just type this, you will find a video which latestly uploaded in the month of March 2024. So part 1, we are going to cover 14 standards, and these are the standards I'm covering. Before you proceed further, kindly listen to it. There are certain important instructions you must follow in order to get maximum benefit out of this revision class. Don't watch new standards directly. Like, what are the new standards? Right now, this is part 1, right? In part 2, we are covering 22 standards approximately. Within that, review standards, specialized areas, related services, assurance standards we are covering. Getting it? So they are all being covered in part 2. So directly, you will also find my part 2 video on the YouTube. You will directly open there. Many of the students directly start watching the newly added standards without understanding basic things, how these standards work. In all these standards, the preface says standards on auditing you have to be strong at. Without that, you cannot understand these standards. First, cross-check yourself whether you are very strong in standards on auditing or not. If at all you are not standard, if at all you don't understand as a whole standards on auditing, I challenge 2400, you cannot understand fully. I challenge 805, 810, you cannot understand fully. If at all you are not good at standards on auditing. Okay, 4000 series, 3000 series, to some extent you can understand, even if at all you are not good at remaining standards. But there is a clever way, there is a clear way why I have, there is a clear-cut logic why I have uploaded in this. I have discussed this entire revision class in this particular order. So first, to finish all of you part 1, that in the same order. Getting it? Like whatever the video you're watching, in the same order you proceed further. Don't skip directly to some particular topic. Watch in the same order. Invest your 25 hours of time. I will promise you, you have never listened to audit like this ever. We are discussing in this class each and every topic. We also discussed how how questions will come in exams. How on each and every topic an MCQ can come, a descriptive question can come. You will not find that many combination of questions even in a full-fledged question banks also. That assurance I can give you. And in the part 2, once you finish part 1, then go to the part 2 and finish the remaining standards. Anyhow, for part 2 also there is an introduction like this. Getting it? And follow timestamp order. That's what I told. Watch at standard speed. Some of you right now are watching at 1.25, 1.5 playback speed. Kindly reduce it to standard speed 1. Already this is a revision class, which itself means we already are taking it fast. Your objective is understand and absorbing. That is your objective. Your objective is not finishing the video. Your objective is listening and understanding something out of it. Always remember your objective. To achieve that objective, what you have to do, listen at standard speed. And in this particular marathon, I have used my smart notes for CA final, which is a colored notes. Getting it? You will find my smart notes in our website. Asreshta for CA CMA, there is a website like this. Okay, so in this PDF resources, CA final, if you go, so if you open CA final, you will find here all our booklets, PDF. You can download and take print, whoever want. So our main materials, question bank, MCQ booklet, and finally, even smart notes also we have given. If at all you want to place an hard copy, just open this book, click on the word smart notes. Okay, you will find like this, 450. This is inclusive of courier charge. You can place order. But what I recommend you, whatever book you are very comfortable with, stick to that book only. Whenever you are watching revision classes on the YouTube, stick to the same book what you are following, preferably. But I'm telling you, my book is no doubt is 100% similar to ICA book. Getting it? Though it is a smart notes, we cover full content in this for sure. Getting it? So if at all while watching this revision class, you felt very connected with the book also, then you can place an order. Otherwise, if at all you feel you can study on your own, whatever the material that you are using, absolutely you can use that. Remember, through this revision class, what I'm going to give you is an absolute clarity that you didn't had earlier in audit. And I'm very, on a humble note, I'm telling you, you will get a clarity on audit CA final like never before. And even have taken so seriously this time revision class. So seriously I've recorded, it's a face-to-face class which I've taken recently in CF in Chennai, face-to-face. The same session is recorded and we are uploading for you. Okay, why late? Continue watching further. All the very best. Continue watching with fundamentals. Okay, so let's begin with fundamentals of audit. See, there are some fundamental terms that you need to understand before we discuss the actual subject. There are some fundamental terminology that we must have a decent clarity on. Initial, I'll go little slow. Gradual, I increase the speed until you all come in my pace. Okay. So I'm not focusing on definition of audit because we all know the definition of audit. But in this definition, there are some key terms which you need to understand. One is financial information. This is a very important key term. Audit is an independent examination of financial information. What do you mean by financial information? Financial information can be expressed as, it can be divided into two parts: books of accounts and financial statements. This is what auditor typically examines. So the auditor typically examines books of accounts and financial statements. Books of accounts includes the supporting documents and vouchers. Books of accounts by definition includes supporting documents and vouchers, bills, invoices, whatever. You see Companies Act definition of books. This is what they define. In Companies Act, they have defined books of accounts definition, you see. So all sums of money received and expended and matters in relation thereto. What do you mean by matters in relation thereto? Suppose if you make a purchase, that related purchase, we have so much of documentation. Like it may be in electronic form or it may be in physical form. Some medium and small scale concerns, they still maintain records in physical format, accounts in electronic format. Of course, they use some Tally or QuickBooks, something they'll be using. Getting it? But some vouchers and all, invoices and all, it will be in the still physical format. Okay. So all that purchase voucher, purchase invoices, goods received note, e-way bill, okay, all these are called as matters related thereto. Getting it? They are supporting documents. So by definition, books of accounts include supporting documents and vouchers. Auditor has to examine this, and auditor has to examine ultimately the financial statements. For the financial statements, the background is what? Books of accounts. The auditor has to typically examine this entire financial statements, books of accounts, supporting documents, nothing but financial information. Getting it? And then has to give an opinion. See, we just have to give an opinion. That's it. So, opinion means we have two types of opinions. One is positive opinion and negative opinion. On any context you take, we give broadly two types of opinions. One either positive or negative. So on any particular aspect, it may be a mobile phone, it may be a bike, or it may be a car, or it may be anything, air conditioner, whatever. Auditor is giving opinion on financials. That's it. Getting it? But the types of opinions are broadly two. It can be either a positive opinion or a negative opinion. We call them as unmodified opinion and a modified opinion. In audit, we just refer them as what? Unmodified opinion and modified opinion. We'll go into that little while later. So auditor has to verify the financial information of any entity. Let's now refer it as company. The entity, actual auditing standards, you see, they don't use the word company anywhere. They use the word entity. At every place in auditing entire standard, you don't find the word company at all. In entire auditing standards, 46, not just auditing, entire all 46 standards, you find the word entity. But we popularly discuss the audit subject or accounting standard subject in the context of company form of organizations. So we use the word now onwards company for better understanding. Look at a company like Tata Motors or even Reliance company. You take Reliance Industries. They are having in the 22-23 more than, or I can say near to 10 lakh crore. The turnover is close to 10 lakh crore. Getting it? So they have presented so many incomes, they have given so many expenses in the profit and loss, so many assets and liabilities information in the balance sheet, and the auditors are signing it. So what auditors are certifying there? The above information is true and fair. So tell me, if somebody asks me whether this phone is good or bad, getting it? First I need to operate it. Yes or no? First I need to operate it. How much time? Sufficient time. So that I can give an opinion. Getting it? You see in YouTube and all, you find so many reviewers giving reviews on phones and bikes. One reviewer spends 5 minutes on a phone. Another reviewer spends 15 minutes. Some reviewers will be doing a review on a phone after spending for 1 week. Getting it? So they'll be specifically saying, I've been using this for more than 2 weeks and now I'm giving a review, detailed review. Now, how much time? Sufficient time. Getting it? What is sufficient? Depends on person to person, entity to entity, company to company. Getting it? Year on year. Last year in the audit, I might have spent 30 days. This year I might be spending some 50 days. Next year I might be spending some 120 days. Who knows? So we have to verify. We have to examine the financial information until we get complete information that we want. And that information in auditing is called as audit evidence. Getting it? See, we want information. You are asking me whether the balance sheet P&L is right or wrong. You are simply asking me, is this balance sheet right or wrong? Shareholders are asking me, sir, can we take a decision on this balance sheet P&L? Company prepared the balance sheet P&L and gave us, so can we take a decision? So you please tell whether it is right or wrong, because directors prepared it. So the numbers, no, 10 lakh crore they are saying, some number. So is it right or wrong? Let me verify. So I will verify to whatever extent possible for me until I am satisfied. Until I am satisfied. Until I get convincing information. Until I get sufficient and appropriate audit evidence. Getting it? I will verify. Getting it? This is what exactly we learn in SA 500. The auditor has to obtain sufficient appropriate evidence. What is sufficient appropriate evidence? Nothing but Reliance is showing 10 lakh crore turnover. So I'll ask breakup. April month how much, May month how much, all that. I'll take randomly but some dates. On each and every date, some invoices were there. I will randomly take 150 invoices. The total company, total invoices, some 10 lakh, 15 lakh invoices might have been there. I will take randomly some 150 invoices and I will verify, which remember, I verify random invoices. Random means whatever I ask, they have to give me. Any invoice number I ask, they'll give me the background, vouchers, documents, everything. Likewise, I tested the entity. I tested the company 150 times on sales only. Getting it? 150 times I tested on sales. Whatever invoice number I'm raising, they're just like that giving the information. Just like that proving that it is correct, it is genuine. After I verified 150 long number of invoices, I am tired. I'm convinced that yes, sales are true and fair. Getting it? This is what exactly auditor do. You know, most of the opinions that we give are unqualified opinions. Most of the opinions in most of the companies, you take any listed company for the matter,
90%, more than 90 I can say, unqualified opinions. Or maybe you might have done articles, you might have given audit reports where you just copy pasted, you never observed. Yes or no? Just looked at the date, changed the date and gave correct. But you see, the opinion is unqualified. Why we are giving unqualified? Because we are unable to give qualified opinion. We are unable to give adverse opinion. We are unable to give disclaimer. We are unable to give modified opinion. That's why we are ending up giving unqualified. Unqualified opinion we are giving not by choice but by chance, because we don't have any other option. Now tell me, if you want to give adverse opinion on any financials, they'll ask you why you want to give adverse opinion. You have to show them mistake, right? You have to show them pervasive level of misstatement. If you cannot show them, if you cannot argue with the company, can you say, no, I want to give adverse opinion only, no, whatever it is, I don't want to bother, I want to give adverse opinion. You have to give reason, no? Why you gave adverse opinion, you have to give reason also. Remember, in audit report, there is something called basis for opinion para. In that para, whatever opinion you give, you should give reason also. What reason you will mention? You don't have any reason. To give adverse opinion, you don't have any reason. To give qualified opinion, you don't have any reason. So since you do not have any reason for giving modified opinion, you are ending up giving unqualified. You tried your best to identify frauds, to identify mistakes, to identify material misstatements in the financials, but you failed to detect. Getting it? This is what naturally happens in audit, and so we are giving unqualified opinion. Unqualified opinion means saying that the financials are right, saying that the financial statements are true and fair. You can take a decision based on that. Getting it? Now, these financial statements are two types. These financial statements are two types. One, general purpose financial statements, special purpose financial statements. One is general purpose financials, another one special purpose financials. If the financial statements are prepared using special purpose framework, we call them as special purpose financial statements. If the financial statements are prepared using general purpose framework, we call it as general purpose financial statements. Special purpose financial statements audit, they were specifically discussed under 800 series. Remember, under 800 series, they clearly mention one word. If you look at the heading of 800 alone, it do not directly say audit of special purpose financial statements. It uses the word at the beginning, special considerations. Special considerations for audit of special purpose financial statements. Initial letter, the first beginning letter in 800, special considerations, which means 800 indirectly says the audit of special purpose financial statements, you can use all the auditing standards. In addition to that, what are the special items that you should focus on? What are the special items that you should focus on when you are doing an audit of special purpose financials? For audit of special purpose financials also, entire 35 auditing standards will apply. I'm telling you, even suppose you are appointed to do audit of special purpose financial statements audit, you have to give an audit report ultimately now. The audit report format is same, 700 format. How do you plan the audit? Take SA 800 principle. How do you decide materiality? 320 principle. All the auditing standards that we learned, 35 standards that we know, they are all majoritarily applicable even for special purpose financial statements audit. In addition to that, since it is special purpose financial statements, what special things that you should consider? What are the additional elements that you should focus on? That is what specifically covered in 800. The heading is reflected that. So a heading clearly says, for special purpose audit, don't think that this is the only standard. This is an additional standard for special purpose financials. Suppose if you're doing audit of general purpose financials, 800 will not apply, which means up to 720 it is applicable. We have standards from 200 series to 720. Getting it? All the standards are applicable in the context of primarily general purpose financial statements. For special purpose financials, additionally you have to apply these standards. Earlier, when I'm teaching auditing standards, I used to tell very clearly this. Whatever auditing standards that we are discussing, they are mainly, predominantly applicable for general purpose financial statements audit. Because that time we don't have special purpose financial statements audit and all in our syllabus. Now I'm clearly saying you, these auditing standards will apply predominantly for general purpose financials. In fact, that is the main reason why they were drafted. When you are doing audit of special purpose financials also, you can apply them. Getting it? Now, so what is a special purpose framework? If, first of all, there is something called applicable financial reporting framework. What is the objective of audit? You might have seen. The objective of audit is to obtain reasonable assurance whether the financial statements as a whole are free from material misstatements and whether they are prepared in accordance with applicable financial reporting framework. So what is applicable financial reporting framework? So what is applicable financial reporting framework? What is a framework, first of all? Rules and framework is nothing but rules and regulations. Remember, the word framework can be used in any context. Getting it? Regulatory framework, legal framework, medical framework, some engineering framework, missionary framework. So framework word is something which is general in every context. Now we are talking about which framework? We are talking about financial reporting framework. For us, what framework is relevant to understand? Financial reporting framework is what relevant to understand. What is financial reporting? Financial reporting is nothing but preparation and presentation of financial statements. It's not just preparation, but also includes presentation. Today we are preparing financial statements, balance sheet, P&L, not just for our understanding, in order to present it to public at large. That's why the subject is called as reporting, financial reporting. Financial reporting subject, you're learning not to prepare not how to prepare the accounts, but how to present it to people, how to report it to others. Getting it? So preparation and presentation of financials is nothing but financial reporting. Now applicable. For a bank, the rules and regulations for preparation and presentation of financial statements are different from insurance company. Insurance company has to prepare financial statements as per IRDA, preparation of financial statements regulations, some 2002 is there. As per those regulations they prepare. So for insurance company, applicable financial reporting framework is defined by IRDA. For a bank, the financial statements are prepared as per Banking Regulation Act, Form A, Form B, some schedules for there. Getting it? So a bank has to prepare financials as per Banking Regulation Act. So for a bank, applicable financial reporting framework, applicable rules and regulations for preparing and presentation of financial statements are given under banking law. For an NBFC, the applicable financial reporting framework is Schedule 3, Part 3. For a listed entity, the applicable financial reporting framework is Schedule 3, Part 2. Ind AS. For an entity who has to prepare financial statements as per Accounting Standards 2021, because earlier it was 2006. They were amended many times and now it is revised. Accounting standards were issued in 2021. That's the latest normal accounting standard, not Ind AS. So normal companies, applicable financial reporting framework is Part 1, Schedule 3. So depending upon nature of the entity, and objective of the financial statements. Objective is what? General purpose or special purpose? Depending upon the nature of entity, objective of the financials, whatever financial reporting framework adopted by responsible party, nothing but management, getting it, is known as applicable financial reporting framework. Now you see, if you understand with examples, you can easily understand these terms. Now you can remember this. You need not mug up. So depending upon the in view of, they use the word in view of, not depending, in view of nature of entity and objective of the financials, the financial reporting framework adopted by management for preparation and presentation of financial statements is known as applicable financial reporting framework. Getting it? Now this applicable financial reporting framework may be again fair presentation framework or compliance framework. Earlier also I used to teach all these fundamentals from the beginning at CA Inter level itself. Initially, when I started this particular thing, many have asked me like, why this is not there in syllabus? And most of the questions are coming from this. Many questions, MCQs and all, they're drafting with the fair presentation words, compliance words and all. People are not understanding it, getting it. In CA Inter, they have asked one straight question, what is applicable financial reporting framework? 4 marks question. Getting it. In final also they can ask. There is no like exception. You're not exceptional. For you also. In CA Inter, CA Final, the syllabus is predominantly 50% is same. Because standards are there in CA Inter. Same standards were there at CA Final. And the coverage is also almost similar. 70% is same. Some 30% advanced level is discussed at final. Some content is not discussed at Inter because it is bit advanced. Getting it? Now, fair presentation framework, compliance framework. So what is a fair presentation framework and compliance framework? See, first we have started with types of financials. In that, we are understanding general purpose, special purpose, but we stopped there and we are actually understanding some more terms and then we'll go back there. Getting it? Now, what is a fair presentation framework? If you look at fair presentation framework definition, you see here, it refers to a framework. Obviously, it's also a framework, right? Where financial statements are prepared and presented as per the requirements of such framework. As per the requirement of such framework. So in that framework, whatever rule and regulation it says, if the financial statements are prepared exactly as per that rule and regulation, that's a fair presentation framework. And you see, it is not yet over, and you may deviate. If you want, you may deviate from the requirement of the framework to achieve fair presentation. If permitted, generally it is explicitly permitted. They use the word actually explicitly within bracket. When you observe fair presentation framework definition, they give as it is and they use the word explicitly. Whereas for this, they use the word impliedly or explicitly. Impliedly or explicitly. They may test you on these words also as an MCQ. They may test you on these words in an MCQ. Which of the following statement is true? Point number 1. A fair presentation framework contains explicit deviation, explicit permission to deviate from the requirement of the framework to achieve fair presentation. Option B. A fair presentation framework may impliedly or explicitly permits the deviation from requirement of the framework. Option C. A fair presentation framework impliedly permits deviation from the requirements of the framework. Option D. Fair presentation framework permits deviation from the requirement of the framework. How will you figure out? Observation is important. When you're reading, you have to observe the things. What wordings they are using, what terminology they are using. Observation is very important. As I go further, at every concept, maximum possible, how that can be tested in different way. I will definitely cover that aspect also. Okay. So, fair presentation framework means, see, first of all, suppose you look at a company. For a company, the financial statements preparation is given under 129 section. In that subsection 1, it says, every company shall prepare its financial statements in accordance with Schedule 3 accounting standards and should achieve a true and fair view. Since they have used the word true and fair view in 129, a company has to prepare financial statements using fair presentation framework. What is it? A company has to prepare financial statements using fair presentation framework. Because they have used the word true and fair. If at all they didn't use the word true and fair, look at the definition once again. Suppose if true and fair is not there, every company shall prepare financial statements in accordance with Schedule 3 and accounting standards. Which means whatever the accounting standard says, whatever method accounting standard suggests, only that method you have to follow while preparing the financial statements. Depreciation method, revenue recognition method, provision creation method, segment reporting methods, whatever. There's so many, on so many occasions, for so many elements of financials, so various standards are dealing with. Yes or no? Whatever standard says, you just have to follow. Suppose the standard requirement is not suitable for you. The standard requirement is not suitable for your organization. Still you have to follow that. We know very well our financial statements should represent substance over form. Yes or no? What do you mean by substance over form? Fairness. What is actually called as fairness? What is the difference between true and fair? We have sold to so many customers on credit. The total outstanding debtors as on 31st March is, let us assume, 500 crore. The debtors outstanding were 500 crore. They're all genuine sales. But out of this, there are debtors worth of 50 crore who were about to become insolvent. As on 31st March, conditions exist. Subsequently also, okay, fine, let's not go into that. But there is some doubtful debt. Now, honestly speaking, how much I have sold goods for credit for? 500 crore. Truly, I have to receive 500 crore. But tell me, when I'm showing, you are asking me what is my net worth. Should I consider that 50 crore which is doubtful when I'm answering you about my net worth? I should answer you fairly what is my net worth. Yes or no? Because you're going to invest in my entity. Yes, I sold goods for 500 crore on credit. I have to receive 500 crore. That's true. But fairly, how much I will receive? 450 crore. Provision for bad and doubtful debts is a result of fair presentation. So truly, you have to receive 500 crore. But fairly, how much you receive? 450. Our financial statements always present not only true picture, but also a fair position, but also a fair performance of the entity. Getting it? So that's exactly true and fair. So suppose under the law that you are preparing financials, if the law says you have to blindly prepare financials as per so and so rule, no deviation is permitted, that's a compliance framework. That concept is called as what? That situation is called as what? Compliance framework. Suppose if the law specifically says you comply with accounting standards, you comply with Schedule 3, and also achieve true and fair. If the law specifically highlights even true and fair also, explicitly the law permits you to achieve true and fair view, you can violate an accounting standard, you can deviate an accounting standard, you can deviate from Schedule 3. Are you getting it? So if deviation is permitted so as to achieve fair presentation, that's called fair presentation framework. Not only in India, across the world, most of the general purpose financial statements, they are prepared using fair presentation framework. Most of the general purpose financials are prepared using fair presentation framework. You take Apple Incorporation, Tesla Incorporation, Alphabet, okay, Incorporation, or you take any Volkswagen related audit report Europe, you take any Indian company audit report, bank, NBFC, any entity you take. In the audit report, in the opinion paragraph, the auditor specifically uses the word fairly, present true and fair. In case of fair presentation framework only, in the audit report, we can use that terminology. If at all, we are doing audit of financial statements which are prepared under compliance framework, we cannot use the word present, true and fair or not. We simply have to give our opinion whether they are as per so and so requirement. If they are as per the requirement, we give unqualified opinion. If the financials are not as per the requirement, we give modified opinion. Simple. Whereas in fair presentation framework, if the financials are true and fair, we give unqualified opinion. If the financials are not true and fair, we give modified opinion. Are you getting the point? So now again. So what is a special purpose framework? It is a framework where financial statements are prepared in accordance with requirement of a specific user. Where there will be one dedicated user, okay? Because of his request, because of that entity request, we are actually preparing these financials. Otherwise, we don't prepare these financials. We are preparing these financial statements specifically for the specific user requirement. Suppose our company has got an offer for, like we want to go for expansion. Ours is a startup. We want funding. So there is an investor who is readily available to invest in our entity. So he is asking me the financial position and performance, and for which the criteria he has given. I went and presented him my regular balance sheet P&L which I prepare every year. Whatever balance sheet P&L I prepared generally for general purpose every year as a part of legal law compliance. Getting it? I have given all my past 3 years balance sheet P&L to this investor, proposed investor. But he took that, he considered that. But what he wants is, he wants the balance sheet P&L, everything to be prepared on cash basis. Same for the past 5 years or past 3 years. He is asking me to prepare balance sheet P&L on cash method of accounting. So cash basis of accounting. So now fine. I understood what is he is asking for. He exactly want to see the cash flow pattern. He exactly want to see if at all cash method is used, do we have profits? See, I know you are selling goods on credit to so many customers. You can show profits, but recoverability, who will guarantee? Yes or no? So only when you recover the sale amount, then only there is a typical profit. If you do not realize the sale amount, if at all debtor has insolvent, so your position and performance is highly questionable. Getting it? So for his purpose, specifically we went back and prepared 3 years of financial statements. We called a chartered accountant. We told him this requirement. Sir, you have to prepare us the financials as per the specific user requirement. Getting it? So that's it. So he prepared and gave. So we went and again submitted that. He is asking us audit report on that. On the special purpose financials, whatever we prepared, he is asking an audit report on that. Now you see, we prepared special purpose financials. That too, we don't know how to prepare. We know how to do business. We are a company, mine is an organization. We are running a chain of bakery. Okay, we are running actually bakery products and all. But since we want to go for expansion, we want funding. So and so person has committed us that he will give fund, provided he asked me to prepare financial statements as per applicable framework. Whatever the framework he decides, he decided the criteria cash basis of accounting. You see this example comprehensively. I'm trying to incorporate all the points here. So there is a funding party. There is a funding party or investor, proposed investor. And our company management is there, which is a startup company related management. So this funding party requested special purpose financials under cash method of accounting. Under cash method of accounting. Cash method of accounting. And this company appointed one chartered accountant in practice. For what? Not to audit, but to prepare and present financial statements as per this criteria. As per this criteria. Criteria is set by the third party. Criteria is set by the third party. We also call him as user of the financial information. We also call him as what? User of the financial information. So we appointed a CA to compile. What is it? To compile financial information. To compile financial information as per the criteria established by third party. By the way, primarily, who is responsible to prepare these financial statements? Management is primary. We call him as responsible party. We call them as what? Responsible party. We call him as practitioner. We call him as practitioner. We call him as user. User of the financial information or third party. Appropriate user or appropriate third party. Now they prepared, right, cash method of accounting. That is called as applicable criteria. What is it called as? Applicable criteria. So now look at, now here is a CA is preparing accounts, right? Whatever the work that he is doing, that is called as compilation engagement, for which 4000 series standard is applicable. Getting it? 4410 is applicable specifically. Getting it? So compilation engagement. Getting it? So we have two standards. One is dealing with agreed upon procedures, another dealing with compilation engagement. Compilation is nothing but we're preparing whatever. You ask me to prepare financials, I'll come and prepare. Getting it? I'll help you how to prepare these financials, all that. Now we went and submitted these financials to the third party again. Who is the intended user? who designed the applicable criteria. As per this criteria only we should prepare. We cannot deviate. We have to prepare exactly as per this criteria. This concept can be called as compliance framework. Here the concept can be called as what? Compliance framework, because you are preparing financial statements exactly as per the requirement of the third party. You have to prepare exactly as per the rule given by him. Compliance framework means what? You have to prepare exactly as per the rule. You cannot deviate. Fair presentation and all, you need not worry. Are you getting the point? So that's compliance framework example. Most of the special purpose financial statements frameworks can be taken as an example for compliance framework. Getting it? Now the third party, after we submitted these financials, he is asking audit report on that. So we appointed another chartered accountant in practice to audit these special purpose financial statements. His objective is see whether the financial statements are prepared as per the requirement of the third party, whether applicable criteria exactly applied or not. He has to check and then give a report on that. If at all the financial statements are prepared by this company, this startup, exactly as per the criteria given by the third party, we will give unqualified opinion. If at all the company has if at all the company has not clearly followed the framework, third party criteria, we will give modified opinion. Simple. So here CA is giving opinion, right? For him, SA 800 standard is additionally applicable. He has to do audit as per all standards on auditing. In addition to that, since the financial statements are prepared using special purpose framework, he has to consider specially certain elements. Are you getting it? And you know what? This CA is already the auditor of the company. For this company, he is already the existing auditor. He was appointed 3 years ago. This is a non-government company. 5 years appointment. So this chartered accountant is already doing general purpose financial statements audit of this company already. Same person we appointed for doing audit of special purpose because he already know about our company. And we even asked the third party, sir, can our stat auditor do this audit? He said, whoever it is, he should be independent. Third party requested only one thing, the auditor must be independent. So compilation engagement, special purpose financials, SA 800 engagement, and SA 800 audit of special purpose financial statements engagement. And he is also our general auditor. For him, all other normal standards on auditing will apply. Able to understand? Next. So special purpose framework, I hope you are clear on this. Now coming to general purpose framework. If the financials are prepared using general purpose framework, we call it as general purpose financials. Otherwise we call it as special purpose financials. General purpose means what? There is no specific purpose here. We prepare generally every year. Who will use these financial statements? Everybody. There is no specific person that who will use these financials. Stock market analyst will use. Our proposed investors will use. Government might use it for GDP calculations, all that. Or even for tax authorities might use this. Whether we pay tax correctly or not. GST authorities will use for turnover matching, all that. So there are many users of our regular financials which we prepare every year. We are preparing every year these financials for general purposes, which considers in this framework what information we should present, what accounting principles and methods we should follow. Everything is as per common financial information needs. Everything as per common financial information needs of wide range of users. So there are wide range of users. They all have commonly some financial needs, financial information needs. Everybody, like a banker, want to know what is my turnover, what is my profit, what is my purchases and expenses, all that. And he also want to know what are my assets, how much of my assets are fixed assets, how much of my assets were floating assets, current assets. He want to know how many immediate obligations I have, how many long-term obligations I have, how much capital I have invested. Everybody, whenever you share them that you're doing some business, they commonly ask these questions, right? How much capital you invested, where you invested, how much turnover you're generating, how much is the profit that you're generating, what are the expenses you're broadly having. These are the common questions that we receive, right? Whenever we say we are doing a business, or these are the common questions that you ask. So commonly, everybody want to know about our financial business, some financial data everybody want to know. That common financial information needs. Getting it? Considering that if the lawmaker develops a framework, if the lawmaker developed a framework, we call it as general purpose framework. General purpose framework is generally developed by the lawmaker. Schedule 3 is given by MCA. Accounting standards are given by ICA, NACAS and NFRA. Tomorrow, in future, NFRA will give yes or no. Why a government authority is involving? Because it's a general purpose financials. Because the financial statements are not just used by any specific person, but are used by public at large. Since public at large is involved, government will involve. That's why general purpose framework is always defined, always is decided by the government. If the financials are prepared using general purpose framework, we call it as general purpose financial statements. Are you getting it? That's it. Now you see the objective of audit is to obtain reasonable assurance whether the financial statements are in accordance with applicable financial reporting framework. So applicable financial reporting framework means general purpose or special purpose, fair presentation, compliance framework. All these questions you should answer. This is what the meaning exactly. So now keeping in mind, first as an auditor, you should understand what framework is applicable. For what engagement I am appointed? Am I appointed for special purpose financials audit or am I appointed for general purpose financials audit? You need to clearly understand your role. Then you decide that. After deciding that, verify the financial information whether they are as per the framework. 2. Another objective is what? Not only whether they are as per framework, whether they are free from material misstatement. Misstatement means what? You see the misstatement definition I've clearly given with a breakup. Misstatement is nothing but difference between what? Reported financial statement item and applicable financial reporting framework. So what you reported in the financial statements ultimately, compare it with applicable framework that is applicable. So as per applicable framework, what you have to report? See, what is a mistake? Difference between what you did and what you are supposed to do. If both are same, there is no mistake at all. Yes or no? If both are differing, there is a deviation, there is a misstatement. That's what you have to, a company has to prepare financials as per applicable framework. But what they reported is different from applicable framework. So that's a misstatement. And misstatement can happen in 4 ways. It may be in the form of amount. In a financial statement, a misstatement can be in amount, or a misstatement can be in classification, or a misstatement can be in presentation, or a misstatement can be in disclosure. Misstatement can be in any of these 4. Amount, classification, presentation, disclosure. Generally, whenever we think of misstatement, we only think of amount. But misstatement can be in classification. Best example for amount, the 700 series itself used this example. Getting it? Inventory valuation. If the company misstate, if the inventory has been valued wrongly, if you don't mind, can I switch off this AC? Huh? Yeah, can you just button? Yes, sorry. So, inventory is materially misstated. So, that is amount. Suppose inventory, the cost is 100 crore, whereas NRV is 75 crore. The company has to show the inventory at 75, but the company showed the inventory value still at 100 only. Getting it? So that's a material misstatement. 2. Misstatement can be in the form of classification. Suppose the asset you purchased, suppose the company is having some surplus funds, they purchased one immovable property. Because they have surplus funds. Now that immovable property is purchased with a view to get a value appreciation in the future. For that reason they purchased. What is this actually? It's an investment property to be classified as investment. But the company showed it as a fixed asset. As per applicable framework, investment property, it is classified as what? Investment property. But the company, how the company reported? As fixed asset. So as per this investment, as per this fixed asset, so it's a misstatement. Or misstatement can be in presentation. Misstatement can be in the way you are presenting the information. We all know Debtors has to be presented gross minus PBD, provision for bad and net you should present, yes or no? But the company, instead of presenting like this, PBD they are showing in liability side. They are not netting off with the asset. They are showing it under liability. It's a misstatement in presentation. The way you are presenting is misstated. Getting it? Disclosure. As per every accounting standard, best example you take schedule 3, share capital related disclosure requirements are many. So a company has to disclose the shareholders' names and the percentage of holding if the holding is more than 5%. It has to be shown. 2. In the past 5 years, is there any buyback? Getting it? Is there any bonus issue? Or like this, there are some information which you have to show which happened in the past 5 years. That company did not show. That's a misstatement in disclosure. So non-disclosure is a misstatement. Partial disclosure is also a misstatement. You are omitting some disclosures, that is misstatement, or you are omitting complete disclosure itself. That's a misstatement. Able to understand. Now you see, you need to understand misstatements are in 4 ways. Now suppose, in exam how they'll ask you question, I'll tell you. If the auditor has identified a material misstatement by way of a non-disclosure, getting it? How the auditor responsibility section in the audit report shall be covered? What points auditor shall explain in auditor responsibility section of the audit report if the auditor has identified, how basis for opinion shall be reported if auditor has identified misstatements by way of non-disclosure. Getting it? If the misstatement is in amount, how to qualify in the basis for opinion paragraph. If the misstatement is a non-disclosure, how to mention the same. Like this, the questions can come. It was there. They were all asked. These are all asked, being asked. In CA Inter it was asked. In CA Final also it was being tested. Getting it? So that's misstatement. Got clarity? So now this is the initial overview about various terms that we are going to use in this chapter. So for all these things, we are having some standards called engagement and quality control standards. So whatever standards that we have are called as engagement and quality control. We are totally having 46 standards. We are having totally 46 standards. Now within this, once we qualify, we can render 2 types of works. Either we can render assurance works or we can render non-assurance. In an assurance, there will be 3-party relationship. In an assurance, generally there will be 3-party relationship. There will be an auditor, there will be a third party who is using our report, and there is a responsible party who is responsible to prepare financial information as per the applicable criteria decided by third party. Generally, third party decides. Suppose if it is general purpose financials, government will decide. Special purpose financials, third party will decide. Now, so one work that we do is somebody will prepare some financial information as per so and so criteria. We just have to give opinion. We just have to give assurance conclusion. What is it actually called as? Assurance conclusion. We just have to give assurance on that. Is that information right or wrong? That's it. Is that information right or wrong? Now assurance on what? Financial information. Assurance on financial. This financial information is again 2 types. Historical financial information. Other than historical financial information, we give assurance on 2 different things. One, we give information on past financial information. Whatever financial statements company already prepared, on that you are giving assurance. Our regular audit reports, they are containing opinion on what? Already completed financial year related financial information. Yes or no? So that is regular, our work. Another one, we are giving audit report on pro forma financial information. What? Pro forma financial information, prospective financial information, future financial information. Getting the point? So other than historical financial information means again 2 types. Prospective financial information, pro forma financial information, forecast. It may be called as forecast. Of course, forecast comes under prospective financial information. Getting it? Projections, all that comes under this category. 2. We can give assurance on non-financial information. We can give assurance on non-finance. It's not finance at all. Some controls. Controls at a service organization. We can give assurance on what? Controls at service organization. A company specifically called me. A company specifically called me to comment on their controls. Suppose Chennai Metro Rail Limited. They appointed me to look at the controls they implemented regarding ticket collection. Getting it? Collections related to tickets and how the passengers are entering into the station and exiting. What controls they are following. Is this controls properly working or not? Our objective is to do that audit only. Our objective is to check whether ticket related controls are proper or not. Revenue related controls are proper or not. There we are not doing balance sheet audit, P&L audit, books of accounts, nothing. They called me specifically. They called us specifically for checking these controls. That is called controls audit. Getting it? That is also not a financial information. Correct? It comes under other than historical financial information. It comes under other than historical financial information. For this, we have a standard called 3402. Whereas this entirely is covered under 3400, 3420. Are you clear? So 3 standards we have. Now, then we still have. We can give assurance on historical financial information. We can give assurance on what? Historical financial. So historical financial information we can give assurance. And this assurance can be in 2 different levels. This assurance can be in 2 different levels. One assurance that we already know, reasonable assurance. Another assurance is called as limited assurance. The best example for these two, what is the difference between reasonable assurance and limited assurance? In a reasonable assurance, suppose I have to verify purchases. Suppose I have to verify purchases. Purchases of an entity. Generally, what points you will verify when you are verifying purchases in a very big multinational company? So first I will see is there a purchase department or not? Is there a vendor master? Vendor means approved list of vendors from whom we can purchase goods. What are the controls on the vendor master? We will see. Then now a company want to purchase. They have to place a purchase order. We will see purchase order. Who is placing? Why they are placing? What is the control? Do they have a power to place the order like this? So we will see authorization controls on that purchase order. Then once purchase order is placed, the other person will send goods. Inspection will be happening regarding specifications, all that, quality, all that. Then GRN will be prepared. Then the other party will also give e-way bill. We inspect all that. If at all we still have doubt, we go to the go down and observe the purchases process, how they are receiving all that. So here we are asking company inquiry. We are inspecting documents. We are observing how the purchases are happening. We are testing the controls. We are testing the transactions. This is what we do in audit. This is what we do for getting reasonable assurance, whether purchases are proper or not. Whereas in limited assurance, we don't do all this. We just inquire and do analytical procedure. We just do 2 activities, 2 procedures, inquiry, analytical procedures, and based on the inquiry and analytical procedure, we give opinion. Company sales are some 10 lakh crore, purchases are some 7 lakh crore. Last year company sales are some 8 lakh crore, purchases are 4 lakh crore. Last year purchases were somewhere around 50% of the sales. This year it was around some 55-60%. They are not much variation, not huge variation. Technologically it appears fine. Logically purchases value appears fine. Business increase, purchase also increase. Then I inquired people. So what is the purchase mechanism in this company? They told me some reply. They gave me some reply. So I understood what exactly happening in purchases. But I did not test any transaction. I did not vouch any voucher. Getting it? I just inquired. Nothing comes to my attention. When I inquire, when I interact with the management, when I'm inquiring them, when I'm talking to them, or when I'm doing analytical procedure, nothing come to attention. Nothing came to my attention to cause me believe that something is wrong. Getting it? I did not get any information. That's it. That's enough. Nothing has came to my attention that something is wrong. I'll directly give an unqualified conclusion. Directly I'll give what? Let us call it as unmodified opinion right now. Later on we'll use the specific terminology. So I will give unqualified opinion. Getting it? I only do inquiry analytical procedure here. Whereas in audit, no, we do inquire, we do analytical procedure, we do external confirmation, we do test, we do inspect documents, we observe things, we go physical verification, we do recalculation. So many things we do in audit. Same purchase item, but we do all these procedures. We do in all possible ways to find a mistake. Whereas in limited assurance, we don't do all that. We just inquire, we just logically see whether everything seems correct or not, or something is wrong. I just logically try to do that, document it, give the opinion. That's it. That's a limited assurance. So now for limited assurance, we have something called standards on review engagement. For reasonable assurance, we have something called standards on auditing. Whereas for assurance on other than historical financials or assurance on control, we have standards on assurance engagement. Standards on assurance engagement is reflected with SAE, whereas standards on auditing is just reflected with SA. Able to understand? Apart from this, we will also provide certain non-audit services, non-assurance services. Some clients call us for filing IT return. Some clients call us for GST return. Some clients call us to prepare books of accounts. These are all non-assurance services where we don't give any assurance conclusion. We just whatever client and me agreed upon, that procedure I'll just go and then perform. We both agree upon some procedure, I'll perform that procedure. Or he asking me to compile the information, I'll compile and give. That's it. There my duty is to prepare the data, to prepare the information, or to do a procedure as we agreed upon. No assurance, nothing. Are you getting it? So these are all called as non-audit or non-assurance services. For them, no, we have a standards called related services. Related to assurance, right? Something, yes or no, but not assurance. So parallelly along with assurance, we are providing all this. So standards on related services. So we have 2 standards on related services. We have totally 3 standards on assurance engagement and 2 standards on review, 38 standards on auditing. Out of 38, 35 were general auditing standards. 3 standards were dealing with special frameworks. 3 standards were dealing with the special frameworks, special purpose framework related standards. Are you getting it? Now, whatever work you do, whether it is assurance work, non-assurance work, audit, review, assurance, related service, whatever you do, you have to do them with a quality. You have to ensure quality is maintained in all these works. For that, whatever controls you have to take up as a chartered accountant, whatever controls you have to set up, whatever controls you have to follow, whatever rules you have to follow, it is your responsibility. Your firm has to maintain entire this quality control system. That is what a standard called SQC. There is only one standard. There is only one standard. So this standard says you have to, whatever work you are performing, you have to maintain quality control. You see SQC heading, quality control for firms. They use the word for firms performing audit, review, assurance or related services. This is the heading of the standard. Correct or not? So SQC is applicable for all types of works that you are doing. Okay, we'll discuss all that. So that's it. This is fundamentals. Clear, all of you? Yes. So let's begin the next chapter, that is audit report. Remember, the weightage of all the standards is put together 60. Minimum weightage of all the standards put together is 60 marks. So this chapter, which includes CARO also. This chapter covers CARO reporting also. So this chapter weightage somewhere around 10 to 15 marks. Getting it? Because in this chapter we are covering approximately 10 standards. Okay, 700, 701, 705, 706, 710, 720, 299, 600, 610, 620, 570. 260 I will discuss later. As part of standards on auditing, we have a separate chapter which is 11th chapter in our book. So in that I will discuss 260. Getting it? Earlier also we have 260 in the old scheme, but it was discussed at a very basic level. But now 260 is discussed at very advanced level. So that's why I have kept 260 in this chapter as well as there. In standards and auditing chapter also 260 is there. Here it is in a simplest version, but there it is in advanced version. Okay. First of all, I am completely against the idea of color book. Getting it? I don't like color books or charts, nothing. Because if you look at the question papers in the past 6 or 7 attempts, how the way questions are drafted. You know, when we were writing the auditing CA final, no, even CA inter CA final audit, one paper is the question paper. That's it. 2 sides. Only 2 sides. Only one paper, question paper. Today auditing is approximately 30 pages question paper. including MCQ booklet, I'm telling you. 30 pages approximately the question paper of auditing is today. When we were studying, 1 page. Whatever methodology of learning that we applied when we were studying, the same methodology is what many students are even now they're applying. Why people are feeling auditing is very tough, or auditing is a dry subject, or auditing is something you can't understand, scoring 40 is enough. Why this kind of notion has been developed in people's mind is because they never try to understand the subject. Since they don't understand the subject, which they didn't try first of all, so they named it as a dry subject because they don't understand. But if you look at the quantum of efforts that you give in FR, financial reporting subject, like people know what they say is no matter how much you study, you can't score more than 40 in audit, and he will not study at all. See, the point is, like, you know, the person who introduced this, probably there will be some inventor, right? Always for anything, there will be one person who invented this. That person would have never studied audit. He would have hardly invested some 78 hours or 100 hours, and then he want to score exemption. He scored some 34 and failed 4 times and finally qualified with 40, and that's how this propaganda has been created. And the same guy who said auditing is not a scoring subject would have taken 250 hours of FR coaching and 150 to 250 hours approximately of preparation time. 400 to 500 hours of preparation would have spent on FR and scored 62, example. And he says FR is scoring. Hey, you spend 400 hours. Obviously you score 60 plus. How many hours you spent on audit? 70 to 80. And he scored 40. Tell me relatively, which is highly rewarding? Auditing is highly rewarding. You spend equal amount of time on FR, whatever time you spent on FR, you spend equal amount on audit, I bet you will get 80 plus. Of course, the point is you will not spend, thinking that you will not get. Only when you spend your time and effort, then only you realize that, right? Without spending adequate time, how do you? So the point is to spend the time, they're not understanding. When they're reading, they're not understanding. Fine, whatever time I spend, there is no point because I'll not understand anything at the end of the day. And from where he is reading? He is reading from some chart. Chart book itself contains 25% of the original content. That's why you see the first page in the smart notes which I gave. First page, if you observe, I clearly explained you the difference between what institute is expecting from you and what you are expecting from the institute. Both are not matching. The first page you see, there is a sentence, and I'm telling you that's one of the easiest sentence that is there in the entire auditing syllabus. And that easiest sentence, 99% they don't understand when they read once or twice or thrice. They need to struggle a lot to understand that sentence. Getting it? So I just intentionally gave in the first page that exercise so that people realize what is expected from you is different. Getting it? In this next whatever 25-30 hours of time we have, believe me, I will change your perception on entire auditing, not just on few chapters. On entire the subject, I will change your perception. Just that you have to be with open mind. Don't be with an assumption that no matter how much ever I listen here, I will not get anything. I will not understand anything. No, just come out of that. Be curious. Be curious that you are going to learn something new completely. Okay, I don't know how many of you have seen my marathons or revisions earlier. But since it's a face-to-face class, definitely you will have a lot of good impact. One more honest saying I'll tell you, face-to-face class is very effective for the faculty, not for the student. So this is truth. Because you cannot listen continuously more than 1 hour 15 minutes. Some students, not even 20 minutes. Not even 20 minutes. Okay. The moment they continuously listen 20 minutes, that itself is enough. They open phone, Instagram, they open, mute, they'll just scroll through the post. Finally, sometime randomly, okay, fine, something is saying, okay, let me listen once. He'll come back and he will say, not understood anything. Out of 1 hour, you listened to me for 15 minutes. 40 minutes you spent on Instagram, and 5 minutes again you're coming back and listening. You will obviously do not be in the pace. You will not be in the pace. So Don't write running notes also. Just listen what we are discussing and see the book. Of course, anyhow, I'm using a projector, so simultaneously you can easily locate any concept that I'm referring to. This smart notes is nothing but 90% of the main material. Like some students ask me, they do investigate, sir. They compare site page by page, line by line, smart notes and main material. Sir, both are appearing same. When did I say it is different? Getting it? The only reason why I'm doing the smart notes is because people are obsessed with color materials, and they're asking me, when will you release your color material? I released my color material. Getting it? Listen, there is no shortcut for success. Getting it? And people think right way of working is hard work. No. Getting it? If you work rightly, that's the most easiest way. Just that we should discover how to work in a right manner. Okay? Now, so let's begin with audit report. This audit report, we are having two parts. In audit report, we are having two parts. Part 1 of this audit report is dealing with reporting standards. Part 2 of this chapter, I deal with reporting requirements. Part 1 of this particular chapter, reporting standards, and another one is reporting requirements. First of all, what is the objective of this chapter? What is the objective of this chapter? Many do not understand this also again. They read audit report chapter and they don't know how to prepare audit report. Yes or no? Generally in school days, we have this something called letter writing. English subject, yes or no? We have something called letter writing. What's the objective of that entire thing? Just to learn something, how to write leave letter when we are affected with fever. Yes or no? So that is what there is some objective. So once we complete a particular chapter, we should know at least, we should be able to have at least a reasonable quality of writing an audit report. So now let's learn how to make an audit report. So I will use parallelly Tata Motors audit report for comparison sake. So Tata Motors audit report I'll use for comparison sake. This is latest Tata Motors 22-23 financial year audit report. First now, let's look at this particular index which they have given. You look at this index. You see, this is an annual report. The primary purpose of why this company has released an annual report is to issue notice to the shareholders. What is it? To issue notice. Every one of us know that a company has to issue at least 21 clear days before a notice calling for general meeting, AGM, annual general meeting. And we all learned that along with the notice, the company shall also give financial statements, auditors report, board of directors report, and any other report which company wanted to give. Why 21 days notice time is given is so that they can plan bus ticket, train ticket, all that. No. They have to read this annual report. Because you see, along with notice, what we are giving in this, we are giving standalone financials, consolidated financials. We are giving various statutory reports that are required under SEBI and Companies Act. We are giving various sustainability related, our chapter, we have SDC, right? So that is this only. Okay. So whatever is covered here, this entirely theory. Theory part is what covered for us. And along with this, companies also reporting, how companies doing value creation for stakeholders, various, how the company is doing business, nothing but. And they also talk about what are the business segments they have. Okay, and they have. So now you see, annual report contains lots of other information in addition to the financial statements segment that we know. Now, see, in this annual report only, the auditor, in this annual report only, the company is presenting standalone financials and consolidated financials. Standalone financials means first it will start with audit report on standalone financials. Then of course, actual financial statements, balance sheet, P&L, cash flow statement, changes in equity, notes to accounts. Getting it? And consolidated, audit report on consolidated financials and the consolidated financials all set. This is what there in this. Now, this standalone financials, consolidated financials and audit report were included in a document which contains other information. Which contains other information. Other information means what? Other than financial statements. Other than financials. What is other information in this? Tata Motors, statutory reports, sustainability reports, about the company, business segments. These are all other information. What is the responsibility of the auditor for other information? 720 standard is dealing with that. Are you getting it? So what is responsibility for us relating to other information? First of all, tell me what is our objective? To give opinion on the financial statements or to give opinion on the annual report? Very good. So our objective is to give opinion on the financial statements, whether they are free from material misstatements. Now, when we are giving opinion on the financial statements, why are we bothered about other information? Because the financial statements on which I gave opinion through an audit report and that financial statements together, you are releasing with other information. If at all, only the financial statements and audit report, if you publish separately, I'm very happy. But you are publishing this along with other information. You know, in other information, you see Tata Motors is saying, highlighting 3,45,000 crore turnover. Yes or no? And they are highlighting so many sales, so many number of units, how many they sold, what is PAT, what is so much of financial information also they are talking in other information. Are you getting the point? Whereas in the profit and loss account of Tata Motors, let us assume the turnover is not this number, some other number is there. In the company financial highlights, you are giving some number turnover, and shareholder who reads both, he will get confusion, right? Yes or no? Which one is correct? He will get it out. Though I gave an audit report that profit and loss account is correct, then why company is saying some other number in highlights? They'll get it out. To resolve that, to resolve these kinds of doubts, in audit report, we have a section, we have a para called other information para. So for that 720 standard, we will be learning. Okay. I'm just giving introduction. I'm not going in depth. Whatever I have covered in fundamentals is only a basic understanding. Entire standards, each and every standard I will discuss. Getting it? Neatly I will be discussing. Getting it? So one element of audit report, you see. One element of audit report is what? Other information. One element of audit report. So, yeah. So in this chapter, we are ultimately learning how to prepare audit report. Now, in order to prepare audit report, what should be the contents of the audit report? What are the elements of the audit report? First, we should understand. So the first and foremost element is, in audit report, it must have a title. So what should be the title? The title must be Independent Auditors Report. Independent Auditors Report. Simultaneously, I will also use this module 1. Main material also I will be showing you. This is exactly copy paste of ICA book, so don't worry. So there should be a title called Independent Auditors Report. The title name must be Independent Auditors Report. That should be the title. Suppose in case of review, we use a different heading called Independent Reviewers Report or Independent Auditors Review Report. Independent Auditors Review Report or report of reviewer on the financial statements of the entity. So any suitable words we can use. Getting it? Next, addressing. The report is addressed to somebody, right? So whom? Generally, in case of general purpose financial statements, we address to members. In case of special purpose financials, actually we address to either board of directors or we are addressed to third party for whom this ultimately report is being used for. Getting it? Then third one, opinion and basis for opinion. You know, actually, I don't know how many of you, like, just I want to know, have you gone through SCI 800 series, 2000 series, 3000 series, all that? No. You are making this class as a platform to start them. Okay. So, see, in SCI 800 series, 3000 series, 2000 series, all there and all, they introduce another word called modified report. Remember, modified opinion is different. Modified report is different. Audit reports are two types broadly. One is unmodified report. One is unmodified report. Another one is modified report. You will not get this understanding in the audit report chapter itself. If you look at initial standards, you will not get this understanding. Only when you read special purpose financial standards, 2000 series review standards, assurance standard, related service standards, in all these cases, they use this word modified report, unmodified report terminology. In CA Internal, now in the new scheme, in the audit report chapter introduction itself, they give a diagram like this. Audit reports are two types: unmodified report, modified. Suppose if you are giving an audit report which is exactly as per SA 700 format, which is exactly as per 700 format, where you are giving unmodified opinion, where you are giving unmodified opinion, then that format is called as SA 700 format. That is unmodified. So whatever standard gave the format, right? Whatever the format which is given in SA 700, same format you are giving, you are using. Without modifying the format given in the original auditing standard, you are giving the report. So it's called as unmodified report. So it's called as unmodified. As per SA 700, no, I'll highlight certain things. Material uncertainty related to going concern, emphasis of matter paragraph, other matter paragraph, other information paragraph. These four, actually, if you look at original SA 700 format, were not there. You see, that's why I given the bracket applicable as per relevant standard. This is a comprehensive audit report format which I gave you in the material. This is a comprehensive. What if all the standards related circumstances apply in the given engagement? Getting it? So then how the audit report looks like comprehensively? That format I have used here. Technically, originally if you look at 700 format, whatever I have highlighted in yellow color specifically, they were not applicable. As per original standard, they were not applicable. Material uncertainty related to going concern, key audit matter, emphasis of matter, other matter paragraph, other information paragraph. These are actually called as sections. In audit report, no, they were even referred as what? Sections. Or either you can call them as a paragraph or you can call them as a section. Key audit matter section, other information section, auditor responsibility section, like that. Getting it? So without these paragraphs, if at all I prepare an audit report and giving unmodified opinion, that's actually 700 format, forming of an opinion and reporting on financial statements, SA 700 format, and that report is called as unmodified report. Suppose in that report, if I am including, remember, I am giving unmodified opinion only. But along with that, I am including certain sections in the audit report. The format given under SA 700, now I am modifying. The format I am modifying, not the opinion, understand? I'll talk about opinions all that little while later. Look at the structure. So, I gave unmodified opinion, but I am including material uncertainty related to going concern side heading. So, I am including this section in the audit report. So, the audit report format is modified now. Whatever SA 700 format, I'm not following. So, I'm adding some additional contents. I am modifying the audit report by adding additional contents in the audit report. Or I am using an emphasis of matter paragraph, or I am using other matter paragraph, or I am using other information paragraph. Getting it? When I use all this, actual other information also not there. When I'm using these three specifically, I am modifying the audit report, which is not as per original SA 700 contents. Because I'm adding them, I'm newly adding them. Able to understand? Or if at all I am giving modified opinion also, then also the report is modified. Because SA 700 only talks about unmodified opinion. And now I am not giving unmodified opinion. I am modifying. That's why you see SA 705 heading, modifications to the opinion. Yes or no? In the independent auditor's report, original audit report, there is some unmodified opinion. Now we are modifying it. So by modifying the opinion, you are modifying the format. Able to understand? By default, an organization expects you to give unmodified opinion. But you are modifying the report by modifying the opinion. So either if you modify the opinion or if you add these paragraphs, even though you are giving unmodified opinion, the report is modified. That's called modified audit report. What is it called as? Modified audit report. This discussion specifically was covered in SEA 810. SEA 810, 805 mainly. In these two cases, this discussion has been specifically covered, but not explicitly they discussed like this, but they used all this terminology in that. Okay, I'll come to that SEA 805, 810 later. First we'll finish all the auditing standards, then go to 800, 805, 810, then 2000. Believe me, review standards, assurance standards, related services standards, and even SEA 800 series are damn easy, if at all you understood the actual standards on auditing. Because in 800, 805, 810 also, every time we will be talking about all written representations, subsequent events, entire the discussion, going concern discussion, all that will come in 800 series. All that will come in 2400, 2410 also. When we are discussing 800 series, 2400, you feel like revision of the revision. Getting it? Whatever we are revising, right? Standards auditing, same you feel like revising that. So that's how easy they are. You should not read them at first. You should read first all this, then you should read later. You will understand very easily. Now, so this is the structure of the audit report. First understand unmodified report, modified report. Now, now opinions. So first, the first element, one is title, another one addressing. The first thing that we talk about in the audit report is opinion. People want our opinion directly. They don't want all the nonsense. First, they want to know what is your opinion. So in the audit report, first paragraph itself is opinion section. And in audit report, no, we have two types of opinions. The SES 700, no, SES 700, no, it clarifies the opinion is two types: unmodified opinion, modified opinion. Unmodified opinion, modified opinion. When auditor can give a modified opinion, when auditor can give a modified opinion, here they have given, you see, in the introduction definitions below, when auditor can give a modified opinion. So first of all, see, if the board of directors in a company context, board of directors are the one who are preparing financial statements. Whatever the financial statements they prepare, no, balance sheet, P&L notes, SOC, statement of changes in equity, all that, I verified everything. I felt that these financial statements can be issued as it is. What is meant by that? When I feel that the financials prepared by the company can be issued as it is, what does it mean? They are free from material mistakes. When I say that they can be issued as it is, dear director, you prepared excellent, fine, you publish as it is, no problem. Which means it doesn't require any modification. It doesn't require any amendment. So I give unmodified opinion. So my opinion is also unmodified. Unmodified opinion means what? My opinion on the financial statement is not modified because the financials itself does not require modification. Suppose I verified balance sheet, P&L, all that. Some investments were wrongly classified and some inventory is materially misstated. Provision for bad and doubtful debt is understated. Creditors were overstated. Some misstatements I identified. Now tell me, when I identify these misstatements, can the financial statements as it is be issued to the public? No. I told directors, please modify the financials. They agreed. They'll modify. Okay, sir, we will modify so that financial statements are absolutely true and fair. They modified everything. Whatever mistakes I told them, they modified. All the misstatements were corrected by them. Getting it? There were no uncorrected material misstatements. There were no uncorrected material misstatements. Everything, every material mistake they corrected. Now tell me, do they further require any amendment? I will give unmodified opinion. Suppose when I ask the company to please modify these mistakes, because there are so many mistakes, you please modify. Directors replied, no sir, the financials are already freezed. Approval also happened. Now we cannot change anything. It is out of our control. We will publish the financial statements as it is, which contains material misstatements according to us. So you don't modify? Fine. I'll modify my opinion. So I will give which opinion? Modified opinion. So we give modified opinion when auditor concludes. When auditor concludes based on the information he has. Based on the information means what? Based on sufficient and appropriate evidence. The financial statements as a whole are not free from material misstatement. The financial statements as a whole are not free from material misstatements. So when the financial statements are not free from, means they are containing material misstatements, I will give modified opinion. That is one circumstance. Two, see, ultimately I have to give opinion. That is what my objective. To give opinion, first I have to verify things, right? I have to verify purchases, what is the breakup, what is the background invoices, when the purchases were made, on what dates it were made, what is the process of purchases, from whom you are purchasing. I want to verify so much of information just related to purchases. Likewise, I want to verify sales, I want to verify employee benefit expenses, I want to verify depreciation, I want to verify fixed assets, current assets, liabilities, so much I want to verify. But you know, company is not giving me information which I want. So purchases, no, company saying, sir, how much is the purchases? They showed the number, some 2 lakh crore, Tata Motors. Give me documents for that. Sorry, sir, documents were not available. Data was deleted. How should I verify now? How should I know this 2 lakh crore is correct or not? So ultimately, I end up with no clarity on this. I did not get information which I want so that I can give some opinion. So you're asking me to give an opinion whether this is right or wrong. You give me information, you show me data. Show me the data. Based on the data, I will tell you whether it is right or wrong. You did rightly or wrong. Yes or rightly or not right. I'll comment based on the data you provide me. But you're not giving me data. How can I give opinion? So when the information that is required for audit is not available, then also we give which opinion? Modified opinion. If auditor is unable to obtain sufficient appropriate evidence, if auditor is unable to obtain sufficient appropriate evidence to conclude that the financials are free from material misstatement, to conclude that they are right, I don't have information. I am unable to get the information to say that they are right or to say that they are wrong. See, if I have data in the back, you gave me a phone, I'll operate for some time and I'll give you an opinion whether it is working good or not. You didn't give me a phone itself and you're asking me what is your opinion on so and so phone. Are you getting it? I am unable to obtain the required information, sufficient and appropriate evidence to conclude that the financials are true and fair, to conclude that they are free from mistakes, to conclude that they are right. I don't have evidence. Now will you say, since you don't have evidence to conclude that they are right, will you say they are wrong? No, you cannot. If evidence is not available, you cannot give opinion. First of all, understand. You cannot give opinion. These are the two types of modified opinion. But remember, now, you know, suppose you take this Tata Motors itself. So standalone financials I'll go. This is audit report. Suppose this is the balance sheet of Tata Motors. This is the balance sheet of Tata Motors, 31st March 2023, which was the latest balance sheet available. So non-current assets, some property, plant and equipment, some 11,700 crore is there. Okay, so this is completely in crores. 11,700 crore worth of plant and machinery is there. So in this plant and machinery, Tata Motors is maintaining a fixed asset register. What is the breakup of PPE? So they have a very big electronic register. I asked them what is the breakup for 11,700 crore. I asked them, they sent me even mail. This is our register, sir, asset register. They sent me as asset register as it is, raw data. Getting it? The mail which I am using is completely company given mail. So inside that everything, whatever I am receiving, whatever I am sending, everything will be properly documented. Nothing can be deleted. It is confidential. I cannot even download that file onto my normal hard disk or my whatever pen drive. I cannot download. Confidentiality is maintained. Getting it? So even that's how we auditors work. Getting it? Asset register I open this asset register. Big Excel sheet. Very big Excel sheet. More than 20,000 line items were there. 20,000 line items were there, more than. So many assets breakup. Like, you know, suppose you see in this classroom itself, we have some 8 air conditioners. So each air conditioner is one line item. Yes or no? So and so Blue Star air conditioner number 1. Purchased on so and so date, installed on so and so date, amount was so and so, GST component was so and so, GST input tax credit claim, so we will not capitalize, installation expenses so and so, total capitalized cost how much, and now what is the depreciation as on 31st March 2023? What is the depreciation for 22-23? What is the total accumulated depreciation? What is the closing book value? Where the asset is located? Getting it? It is located in Nungapakam, so and so 3rd floor. like this asset register contains information for each and every asset. These 20,000 number of assets were located at different Tata Motors plant, factories, different corporate offices. They were located at different. So I selected randomly some 200 assets. Now I called my senior article and junior article. I called some 10 members. I told them this work. Please go and verify these 200 assets at different locations were there. You go in there, physically verify whether this asset is there or not, and also verify concerned invoice. Also verify when it was purchased as per the date of invoice. Look at e-way bill if available, or earlier we'll be having some other transit related document. Verify that. So all that I gave them certain instructions. They go and verified, and all of them came back and they just told that one asset is not found. Out of 200, 199 assets, our team, whoever went, they found. For one asset, they did not find in the exact location. When they are asking the concerned branch of Tata Motors, they are unable to explain where the asset went off, where the asset is. Now that one asset value is approximately 10 crore. That one asset value is approximately 10 crore. Fine. So out of 200, one asset is not found. So I told them, don't come back, stay there only. I will give another 100 assets list. Go and verify. So again, they verified all 100 present. Again, I'm not convinced. 50 I gave them again. Again, I gave another 50 assets. Again, they went and verified all the 50. Again, finally, they came back and told, fine, sir, everything is available. Only that one. Oh, only one problem is there. It is not that it is repeating every day. Yes or no? In the out of 200, only one. This is something called anomaly. This is something called anomaly. Getting it? In SA 530, it's called as what? Anomaly. I'll define later what is anomaly. So this one item which we did not found is exceptional. You see, generally, out of 200 assets, one item is missing. Can I directly say out of 20,000 items, proportionately these many assets were missing, 100 items were missing? No, I cannot say. Yes or no? So that's why, whether is it only in these 200 assets or every sample which I select, this will happen. So I verified extra. There I did not find. So there's only one mistake which I found, which is non-repetitive anomaly. So I told them, so they verified this 10 crore worth of asset is missing. So we came back to the company and we told the company, said this 10 crore worth of asset is missing. We don't know where it is. The company is also trying to investigate. Ultimately, they came up with no answer. No, sir, we filed a complaint. We don't know what happened exactly. So they came up, finally we found that 10 crore worth of asset is not existing. Physically, it is not existing. But asset register shows that asset. Balance sheet value also considers that asset. Now tell me, is this a material mistake or not? An asset which is physically not present. An asset which is physically not present. Getting it? And shown in the balance sheet as at 31st March position of the company, indirectly company is asserting that 11,700 crore worth of plant and machinery was existing as on 31st March. When they say in the balance sheet 11,700 crore, they are asserting what? They are asserting this much value of assets as on 31st March physically available with us. This much value of assets we are owners. This much value of asset is rightly arrived after depreciation. Total purchase cost will be something, minus depreciation something, net value is something. Like this breakup they gave in notes. Management is asserting so many things on this. Now tell me, one asset is not there, missing. Now 10 crore, is it material or not? Considering 11,700 crore, 10 crore, one item is missing, immaterial. What is it? Immaterial. Okay, fine. All these things happens, but I tried to investigate further. I did not find like this any other mistake. Only one mistake I found. I did not find any other mistake. So I will give which opinion? Unqualified opinion. But the rest, current assets, everything I found. Whatever I want to verify, I verified. Whatever liabilities I want to verify, I verified all the concerned documentation. I spoke to third parties. Assets I verified, expenses I verified, incomes I verified. Everything was perfect. Only this 10 crore worth of item and related depreciation I could not verify. So I'll still give which opinion? Unqualified opinion. What if the asset value is 100 crore? What if the asset value is 100 crore? Now it is material. Now it is what? Material. 100 crore is almost 1% of 11,700 crore. 0.9% approximately will come. Getting it? 1% value is no doubt material. Yes or no? Even in the schedule 3, if you look at anything above 0.5% of turnover, yes or no, you should show it separately. So schedule 3 itself says 0.5% of turnover is material value. I consider that, and this 100 crore comes 0.5% or some percentage it satisfies, or I felt it is material. Now a material asset is misstated. asset is physically not there with the company. I know it's a clear-cut misstatement. It's a clear-cut misstatement. They have all the documentation, everything is there, but the asset itself is missing. I told the company, write off the asset. They told they will not write off. No, it is there, sir, but I don't know where it is exactly installed. Suddenly, out of these many assets, 100 crore worth of asset is missing. It is not supposed to happen, but it happened. So company is not rectifying the financial statement. Still, they are showing it is there. But I know very well that because I went for audit, I know physically it is not there. Materially misstated. Now, can I say, shareholders, do not believe this balance sheet? Can I say like this? Don't believe this balance sheet. No. Remaining items and all are correct, right? In fact, I gave an opinion like, don't believe this balance sheet. This balance sheet is not true and fair. Company is cheating everybody. Director asked me, sir, what happened, sir? You verified everything, right? Only 100 crore worth of asset only you did not find. So how come you say like that? So aggressively you are commenting. I will give qualified opinion in this case. I'll give which opinion? Qualified. So qualified opinion is given by the auditor when he found a misstatement which is material but not pervasive. Remember, the word pervasive is different from persuasive. Getting it? Persuasive is different. Pervasive is different. Both spelling you see. Pervasive. Getting it? Persuasive. Both are different. Persuasive means convincing. In audit, we will just get persuasive evidence. The nature of evidence that we get in audit is what? Persuasive. Suppose they showed me asset physically there. They showed me concerned invoice also. They showed me depreciation calculation, all that. And they are using it for our business operations. I will convince that asset is owned by the company and asset is really owned by the company. It can be shown in the balance sheet as a fixed asset. I will convince. But in the background, that asset is a leased asset. The invoice which they showed me is a fake document. Getting it? This is actual transaction, what happened in behind. Just to convince me, they made the situation like that. But I am not bothered about reality because I don't know. Are you getting it? This is reality which company knows. We are not aware. How do we know 100 crore worth of asset is owned by Tata Motors? You show me. I showed. They showed me. So it was physically there. Where is the purchase invoice? They showed me the invoice. They showed e-way bill. They showed all the bank transfer, everything they showed. Perfectly it is there. Now can I say this asset is a fraud asset? Nothing. So I convince based on the evidence which they show me, I will convince and give opinion. In audit, the nature of evidence that we get is persuasive evidence. We only convince based on the data given. If the data, everything appears true, I convince that it is true. Are you getting the point? Pervasive means what? Pervasive means the effect is so significant that it alters the position of the company, performance of the company altogether. It changes your perception about the company. That's called pervasive effect. What is it called as? Pervasive effect. 100 crore is no doubt material for Tata Motors, but it is not pervasive. What if it is 1000 crore? One entire factory itself is missing. They told so it's a factory. Company is having some 7 factories or some 17 or 70 dealers, 70 dealership locations they have some. I just want to physically verify each and every dealership location. Randomly I selected some. Let us assume randomly I want to verify 20 locations I selected. One location I went there. It's not there. The dealership itself is not there physically. Where is the dealership? That location where you said so many assets were there inside this dealership. The dealership address itself. We went there. At that address, graveyard is there. What is this? So some 1000 crore worth of assets which the Tata Motors is showing as fixed asset is physically not there. Companies materially, financial statements are materially misstated. Not only that, if this 1000 crore we write off from the balance sheet, it will change the company profit itself. It will change the company position itself. Already Tata Motors is at neutral position, working capital and all, they are able to discharge now. Earlier they are not. Now only Tata Motors is selling good number of cars and they are able to discharge their working capital requirements without borrowing loans. Earlier they used to borrow loans and then discharge working capital. They are a loss making company. Tata Sons is helping. Getting it? So it's a material and pervasive. I will straight up give which opinion? Adverse opinion. Because if 1000 crore worth of mistake I found, if it is not rectified in the balance sheet, it is pervasively misleading. It is misleading people. It is misleading people altogether. With this 1000 crore assets, the net worth position of the company is positive. If this 1000 crore is not, their net worth will be negative. If this 1000 crore worth of asset itself is written off, if it is wrote off, company looks like an insolvent company. Getting the point? But because of this, company financial position looks stable. So it is completely misleading. That's called pervasive. When the financial statements are materially misstated and are also pervasively misstated, we give which opinion? Adverse opinion. Remaining current assets and all, we have got evidence, but we'll ignore all that. Pervasively, as a whole, the balance sheet is not reliable. As a whole, it is not reliable. Able to understand? Next. Same example I'll take. Suppose 10 crore worth of purchase invoice is missing. The asset is there physically, but invoice is missing. I am having a doubt that what if this could be a leased asset? Yes or no? If you show me invoice, purchase invoice, I will say it is in the name of the company. So you can show proudly under fixed asset register. You can show it as a fixed asset. I will convince. But invoice is not there. Now, if invoice is not there, can I say Tata Motors is trying to dodge me? They are trying to manipulate me? No, I cannot say that. Can I say Tata Motors is not owning this asset? They told, sir, in 10 crore is our own. Sir, invoice is lost. We lost it. We lost a certain record, sir. So that's why we are unable to prove our ownership. We are unable to prove our ownership. Generally, if it's a leased asset, that to operating leased asset, we will not show it under asset side at all. We will not add it in the asset register itself. Yes or no? Now, ownership of the asset is becoming questionable. Ownership itself is questionable. Can I say Tata Motors is not owning it? You should prove, right, that they are not the owners. Do you have any proof that they are not the owners? You don't have any proof. Or do you have the proof that they are the owners? You don't have that also. Now, ultimately, you end up unable to comment on this. You ultimately unable to comment on whether this 10 crore worth of asset is owned by Tata Motors or not. You did not get sufficient appropriate evidence regarding ownership of an asset. Absence of evidence. Now, is this material for the company? Immaterial. Considering their turnover, considering their total assets, it is immaterial. For an immaterial item, why are you waiting for evidences and all? Ignore it. Give unqualified opinion. Give which opinion? Unqualified. Because the evidence for which you are looking is immaterial. For material items and all, you got evidence? Yes, I got evidence for material items. Immaterial item, why are you sitting and wasting your time? Ignore. Unmodified opinion. What if this plant and machinery value is 100 crore? Sorry. So what is, kindly excuse me with my cough, okay? Yeah. So if at all the ownership of 100 crore worth of asset, company is not able to prove. 100 crore worth of asset, company is unable to prove the ownership. 100 crore is no doubt material. And for material item, I am not getting evidence. For material item, I cannot give my comment also. But can I say I cannot give my opinion? I want to disclaim the opinion here. Tata Motors 100 crore worth of invoice you are not giving me. I will not give opinion on the financial statements. Tata Motors said, hello, you have verified remaining all the things, right? This is just, of course, I agree. This is an important item. But this is not something so significant as a whole, the balance sheet and P&L, so that you can deny your opinion. So serious step. This is material, I agree. This is not pervasive. Okay, fine. I'll give qualified opinion. In that, I will clearly mention that the entire financial statements are true and fair, except that so and so item I did not get evidence. Except this, rest all other financial statements I am giving opinion. This I don't know. I will just mention like this. Tata Motors also agreed. Okay, sir, you can mention like this. This is qualified opinion. Now you observe, qualified opinion we give in two circumstances. One, we have an evidence that the balance sheet is materially misstated. We have an evidence for that. And balance sheet is materially misstated. There we will give qualified opinion. Two, we do not have evidence for a material item. For a material item. Then also I will give which opinion? Qualified opinion. Next up. Adverse opinion is given only in one circumstance. There is a material misstatement. You have a proof that there is a material misstatement, and it is pervasively impacting the company, where you will end up saying the above aforesaid financial statements are not true and fair. You will directly say that the aforesaid financial statements are not true and fair. Can you switch on the AC? No? You are sitting relaxed, you will not sweat. But I'm different, right? How much ever energy all of you together are consuming, single I am alone consuming that. So next up. So that's adverse opinion. Disclaimer. Suppose 1000 crore worth of one big factory itself related documentation is missing. I am unable to establish the ownership. I am not believing Tata Motors information also, whatever information they are providing me. Ultimately 1000 crore worth of factory related invoices I couldn't verify. Ultimately, I decided not to comment on the balance sheet. Why should I comment? 1000 crore. Is it right or wrong? I don't know. I cannot say it is wrong or I cannot say it is right. I'm in dilemma. So with the dilemma on a significant portion of the balance sheet item, why should I give opinion? Let me not give an opinion. Getting you decided like that. There you give which opinion? Disclaimer of opinion. You see, in 705 I gave this diagram. In 705 standard I gave this diagram. Qualified opinion you will express in two circumstances. Qualified opinion, page number 20. Qualified opinion you express in two circumstances. One, you have verified proper documentation, evidence, everything you have verified. And you know, you found a material misstatement. You found a material misstatement exists in the financial statements. Yes, it is physically not there. That's a proof. Getting it? But is it pervasive? No, it's not pervasive. It is not so significant as a whole. Pervasive, you can understand, you can use the word substantial. For pervasive, an alternative way to understand is substantial, but don't write the word in exam. For your understanding's sake, substantial is the better word to define pervasive, to reflect pervasive. There is a material mistake, but it is not substantial. It is not substantial in the balance sheet and P&L. So I will give opinion on the balance sheet that everything is fine except so and so mistake. That alone I will point out. Getting it? Or suppose you are unable to obtain evidence. You are unable to obtain evidence regarding ownership of certain fixed assets. Yes or no? And are they material? Yes, they are material. 100 crore is the value of the asset. They are 100 crore worth of asset. I don't have ownership. Are they substantial in the balance sheet? No. They are not substantial. They are fine. So you can give an opinion on the remaining part of the balance sheet. Just this substantial item alone, this material item alone, you put it under exception. Though it is not a substantial, it's a material item, you put it under exception. Okay, then also I'll give which opinion? Qualified opinion. You see, qualified opinion definition. 2 points will be there in qualified opinion definition. I don't know how many of you found MCQs on this. MCQs were there on these. Earlier, we have a separate MCQ booklet. That booklet can be used except the chapters whatever removed, remove that. Remaining part you can, or else you can download my MCQ material, which is also there, free PDF you can download. So you just go to, there is a website called Race for CACMA website. In this material I have given entire my material soft copy PDF. Getting it? So PDF you can comfortably download. So MCQ booklet is there. In this so many MCQs I have covered. I have covered almost many MCQs. Getting it? Few RTP MCQs I have covered. Last scheme, old scheme, we have a separate MCQ booklet. That MCQs have added. And of course in ICA booklet we have case study MCQs and normal MCQs that also were added here. So almost all the MCQs were present. Next. So the auditor shall express which opinion? Qualified opinion. When? Two circumstances. Having obtained, having sufficient appropriate, and you concluded that there is a misstatement. The mistake either individually it is material or multiple mistakes you found, aggregate of all the mistakes is material. But you know, they are not substantial. They are not pervasive. Getting it? So you can give which opinion? Qualified. Suppose if at all, instead of the word but not pervasive, if I substitute the word and pervasive, then the adverse opinion definition comes. Getting it? In qualified opinion, first part of the definition, copy paste. Only one word you have to change. Here it is but not pervasive, right? Instead of that, if you use the word and pervasive, it becomes adverse opinion. The auditor, having obtained sufficient appropriate evidence, concluded, means you decided that misstatements are both material and pervasive. Then you give adverse opinion. Suppose you are unable to obtain sufficient appropriate evidence. You did not get evidence. You are unable to get evidence on which you can base your opinion. See, only if there is an information, background information, you can base your opinion. By looking at that information, you can conclude is it right or wrong or something. But you did not get the information itself on which you have to base your opinion. And auditor no concluded that. You see how cleverly they have used possible effect. Auditor concluded that possible effect on financial statements of undetected misstatements. Possible effect on financial statements of undetected misstatements. You see, 100 crore worth of plant and machinery, you are not giving me invoice. You are not giving me invoice related to that. So where I am unable to comment whether it is owned by the company or not owned by the company. Okay, can I ignore this and say unqualified opinion? No, I don't want to take risk. What if tomorrow this is a leased asset, company is showing it as a fixed asset fraudulently? What if? What if means what? Possible effect. Are you getting the point? What if there is a possibility? What if the 100 crore worth of plant and machinery is misstated? Have you found this mistake, by the way? You did not found. Undetected. But there is a possibility of this mistake, right? The possible effect of undetected misstatement. When evidence is not there, you think of the worst possibility. What if evidence is not there? Fine. You are saying that ownership document is not there. I will think in a worst possibility. What if the company is not really the owner? They fraudulently shown this asset as the ownership. I mean, they fraudulently showed as one asset of the company. What if this happens? In such a case, if there is a mistake like this, will it be material? Yes, it is material. The possible misstatement could be material. Of course, it is not substantial, but not pervasive. I will think of the worst possibility. When evidence is not there, I will think of the worst possibility. What if there is a misstatement which I have not identified? What if is called as possible effect? Getting it? So when evidence is not there, I will question what if there is a mistake? What if it is not identified? And that mistake is going to be material but not pervasive. I will give qualified. Here if you see, if you replace this but not word with the end, then it becomes disclaimer of opinion. Getting it? If evidence is not there for substantial portion, and what if that entire substantial portion was intentionally misstated by the company, which I have not discovered? What if this undiscovered misstatement is there in the financials, which is material and substantial? Let me not give opinion on that. Let me not associate with that audit report. I will not give an opinion on that. That's called disclaimer of opinion. Understood or not? These are relevant. These are important for MCQs. These are important for MCQs. The definitions are important for MCQs. Now, which modified opinion I will give? Which modified opinion I will give? It depends upon nature of the matter giving rise to modification. Why I wanted to modify? Is it because you found a misstatements which are material, or is it because you are unable to obtain evidence for material item? What is the reason you want to modify? See, there should be one reason, right? Why you want to modify? In two occasions I will modify my opinion. One, I found a material misstatement. Then I will modify my opinion. Or for a material item, they are not giving me information. Then I want to modify the opinion. Okay, you want to modify? Fine. Which opinion? Qualified, adverse, disclaimer. It depends upon pervasiveness. It depends upon pervasiveness of the effect. Pervasiveness of the effect of the material misstatement, or pervasiveness of the possible effect. Pervasiveness of the possible effect. If it is possible effect of matters, the matter may be a material misstatement, or the matter may be an undetected misstatement. The matter may be a material misstatement or undetected misstatement to the financials. So why I want to modify? One, material misstatement I found. Two, for a material item I did not get evidence. Now okay, you want to modify. Which modified opinion? It depends upon pervasiveness. Suppose if the modification reason is misstatement I found and it's a material and it is not pervasive. It is not pervasive. I'll give qualified opinion. If it is pervasive, I'll give adverse opinion. Suppose if the modification reason is not misstatement, the reason is inability to obtain evidence. Is it regarding material item? Yes. Is it regarding pervasive item? No. Qualified again. If it is both, disclaimer. Disclaimer of opinion comes only when there is no evidence for substantial portion of the financial information. Adverse opinion you will give when you can prove that substantial portion is materially misstated, either intentionally or unintentionally, whatever. Intention is not important for us. If at all intentional fraud, you will report to central government if it is a big amount. Otherwise, you will not report. That's it. That's the only difference. So whether misstatement is intentional or unintentional is not the criteria for the opinion. Is it a mistake or not? Are you getting it? Next. What do you mean by pervasive? We are saying pervasive. Pervasive means, in auditor's judgment, the misstatements or absence of evidences. It may be either misstatement or absence of evidence, whatever it is. They are not confined to a specific item. They are not limited to a specific element. They are not limited to a specific account. They are not limited to a specific item of the financial. Means the misstatement is not in one item. The misstatement is not in one account. Or if so confined. Okay, sometimes it may be one element only, but it could represent substantial portion. The reason why I told substantial word is because of this. When it is called as pervasive, when you consider the misstatement is substantial to the financials, you can simply say anything more than 20% is substantial portion. You can apply income tax definition. Substantial means what? If 20% of the balance sheet is materially misstated, or for 20% of the item in the balance sheet you are not getting evidence, you can consider it as pervasive. In fact, most of the auditors consider 5% itself as pervasive. Most of the auditors consider 5% itself is pervasive. 1% is material. 5% of turnover is pervasive. 5% of net worth is pervasive. Able to understand? We don't even go for 20%. 5% is enough to change the position of the entity. Able to understand? So if so confined. So generally pervasive means what? It is limited to multiple elements, not limited to specific element. Sometimes single element only. Sometimes single element only. But that single element could be substantial portion. Are you getting it? Then also we will call it as what? Pervasive. You see in the example which we took, 100 crore, single element only. Mistake is only in single element, but not pervasive. 1000 crore, mistake is in single element only, but 1000 crore is substantial portion. That's why we call it as pervasive. Suppose no, mistake is not in single element, multiple elements. Debtors were overstated by 10 crore. Inventory is overstated by 5 crore. Some loans and advances were overstated by 20 crore. Fixed assets were overstated by 40 crore. Multiple items were individually they are material. Individually there are some items individually they are not even material, but aggregate they are material. Aggregate they are even pervasive, substantial. Then also I'll give which opinion? Adverse opinion. If at all the nature of matter is no evidence, then I will give disclaimer of opinion. Are you getting the point, all of you? Now in true or false statements, MCQs designed in true or false manner. MCQs are designed in true or false manner. They'll give you the following. Just 1 minute. Yes. So in exams, no, they'll give you like this. The audit, you are appointed as an auditor of so and so entity. As a part of the audit, you have found a material misstatement where you judged it as not pervasive, and the misstatement is in so and so aspect. Which of the following opinion drafting you will use? They'll give you like this. First option A. In our opinion, to the best of our information and according to the explanation given to us because of significance of the matter described in basis for so and so, they'll give. Option B. Because of, in our opinion, all that is common except for the effect of the matter described in basis for qualified opinion section of our report. Like nothing but they talk on opinions. 2 marks MCQ like this, they'll ask this. 2 marks MCQs. They were there. In the MCQ booklet also, these kinds of questions were there. Getting it? I'll show you that. Just we'll finish this in another 15 minutes. This topic will be over. This opinion topic will be over. So if you observe, this is a pronouncement book. Of course, it's not relevant for you. The illustrations of audit report is given in the CA Institute. Your material is there, right? At the end of the chapter, they have given illustrations. The same illustration is what I'm showing here. Okay. So there is one illustration where you have to give an audit report, on of a listed entity prepared in accordance with a fair presentation framework. How opinion wordings look like. So first of all, there should be a title for the audit report called Independent Audit Report. Yes or no? Now, so first one, to the members of the company. Then the first section in the audit report is opinion. In audit report, every paragraph should have a side heading for sure. Getting it? And when the word opinion, side heading is simply opinion. It's actually unqualified opinion. When you are giving a qualified opinion, you should reflect that in the side heading itself. Getting it? It should be reflected in side heading itself. Now you see what is there in the opinion para. In opinion para, there are two aspects. One is this introduction. Another one is actual opinion. One is introduction. This is called intro para within the opinion. Earlier we call it as introductory para. Getting it? Now this is actual opinion para. Both are under opinion section. So in the first thing, what auditor is saying, we have audited standalone financials of ABC company comprising balance sheet, P&L, cash flow statement of changes in equity, notes to accounts, which are prepared as per so and so. You will mention that. Now below, you are giving actual opinion. In our opinion, to the best of our information and according to the explanation given to us, the aforesaid financial statements give information required by the Act in the manner so required and give a true and fair view in conformity with the gap. And after is there no giving true and fair view. This extra sentence will come. I'll highlight with a different color. And give a true and fair view in conformity with the gap in India. Whatever I've highlighted in yellow color, these words will come if the framework is fair presentation framework. Suppose if the framework is compliance framework, we just put the opinion up to this full stop. In the manner so required of state of affairs, balance sheet, P&L, like that we will mention. Suppose if it is fair presentation, whatever is highlighted in yellow color, that will also come in extra additionally. Getting the point? So this is plain opinion. You see here, nothing, no exception, no reason specifically. In our opinion, to the best of our information and according to the explanation given to us, the aforesaid standalone financial statements give true and fair view. Nothing but simply they are giving true and fair view. That's it. Suppose if it is a qualified opinion, under SA 705 we have this illustration. So I'll go to SA 705. In that we have illustrations on all these things. So illustration 1. Here illustration 1 is an illustration for qualified opinion due to material misstatement. Material misstatement is there. What is that misstatement? Inventory is misstated. The misstatement is deemed to be material but not pervasive. Which opinion will give? Qualified. Yes or no? So they have given a hint that qualified opinion is appropriate. Same title, independent audit report. Side heading you see qualified opinion and basis for qualified opinion. Basis for qualified opinion. Now you see qualified opinion, right? How the wordings were. Same, in our opinion, to the best of our information, according to the explanation given to us, except for the effect of matter described in basis for qualified opinion section of our report. We added one exception here. The aforesaid financial statements give true and fair view. So in our opinion, to the best of our information and according to the explanation given to us, the aforesaid financials are giving true and fair view. Positive opinion. But in between we added one exception. Remember, the wordings must be the same. You cannot use some other wording. You cannot use the word subject to. Instead of except, you cannot use the word subject to. Instead of except, other than word you cannot use. Whatever standard says, only that phrase only you must use. You cannot use some other phrase or some other sentence, alternative. Except for the effect of the matter. You see, they are using the word effect. Why here material misstatement, evidence is there, you proved it. Suppose if evidence is not there, then we would have been using the word possible effect. Except for the possible effect of the matter, they will use the word. If evidence is not there, the wordings will change like that. Getting it? So, okay, except for the matter. Which matter? Where? What is the matter? Don't worry, it is described in basis for qualified opinion section. Where? Where is the section? In our report only. Where is it? Next part. Getting it? Now you see, this is actually called as basis for opinion section. Concept name is what? Basis for opinion section, we call it as. Generally, when you give unqualified opinion, what is the basis for unqualified? See, when I give a qualified opinion or adverse opinion or disclaimer, I will have a reason why I am giving qualified opinion. But when I am giving unqualified opinion, when I say everything is true and fair, what reason I have? Specifically, do I have any reason? Generally, I will have reasons. When I am giving unqualified opinion, the reasons are very general. Like, I have gone through the entire financials, I have conducted the audit, we obtained sufficient appropriate evidence. So that's why, based on the evidence we got, the opinion is unqualified. Suppose if it is unqualified opinion, now only the second part of the basis for qualified opinion para will come. Only the second part will come. Getting it? The first part will not be there. When you are giving, suppose if it is unqualified opinion, side heading of this para is what? Simply basis for opinion. So in that case, what is the basis for opinion? Basis is very simple. We conducted our audit as per standards on auditing. And our responsibilities under those standards are. So under standards on auditing, we have so many responsibilities. All our responsibilities are further described in Auditors' responsibilities for audit of financial statement section of our report. You see, I'll show you Tata Motors audit report directly. In Tata Motors audit report, if you observe, there is a paragraph called Auditor Responsibility section. So there is an auditor responsibility section. You observe here. Auditor responsibilities for audit of financial statements. Okay, if it is standalone, consolidated. But basically it's a financial statements. So what is our objective? Our objective is to obtain reasonable assurance. Whether the financials are free from misstatements, whether due to fraud or error. Reasonable assurance is a high level of assurance, but not a guarantee. Whatever the content you studied in CA Inter, inherent limitations of audit, that is copy pasted here. Getting it? So, and we do, what are our responsibilities? We do risk assessment, and we understand internal controls of the company. We check accounting policies of the company. We check going concern basis of the entity. We evaluate overall presentation structure and content of the financials. This point will come in fair presentation framework. We have that in smart notes. In the notes also I've given this. It is there in main material. So in case of fair presentation framework, what aspects auditor has to additionally consider? The auditor has to consider overall presentation structure of the financial statements. Overall presentation and structure. Auditor has to evaluate overall presentation, what is the structure and what is the content, including the disclosure. Whether the standalone financials are representing, underlying transactions and events in the manner that achieve fair presentation. They'll give you a question like this for 4 marks or 3 marks. In case of fair presentation framework, what additionally the auditor will evaluate? The auditor evaluate additionally the overall presentation, structure and content of the financials, including the disclosures. And second point, whether the financial statements reflect underlying transactions and events so as to achieve fair presentation. This point, that direct question might come. It is there actually as part of our question bank. It is there in our question bank. Getting it? Next. So we mentioned that in basis for opinion paragraph, we mentioned that we have conducted our audit as per standards. We are independent of the company as per code of ethics. And we will mention that we have fulfilled our ethical responsibilities as per code of ethics. And we will also mention a statement that we believe that the evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. You are asking what is the basis for opinion, right? Our evidence obtained itself is the basis for opinion. And remember, whatever evidence we obtain, we believe that it is sufficient and appropriate. So only after obtaining sufficient and appropriate evidence, I'm giving this opinion. So I'm telling in the audit report, dear shareholder, I'm not giving opinion just like that. I have conducted audit as per standards on auditing. What will I do as per standards on auditing? You want to know? Go to my another paragraph. What paragraph? Auditor responsibilities relating to financials. There briefly I explained how I do audit. Briefly I have explained how I will do audit. So in that I have given entire my responsibilities as per various standards on auditing. And look, I'm independent of the company. I complied with code of ethics. And remember, whatever the opinion I have given, base for that, the basis is evidence we have obtained. And I believe that it is sufficient and appropriate. I am giving an affirmation to the shareholder. I'm giving confidence to the shareholder that I have a proper basis for the opinion. Able to understand? Suppose, no, you have given here qualified opinion, right? Now, what is basis for qualified opinion? You are giving general reason, fine. You are giving general reason. You have conducted audit as per, but you have given qualified opinion. You are saying that something is wrong. What exactly? You should qualify and also quantify. You should qualify and also quantify. See. In this, no, I have clearly mentioned that reason. You see, how basis for opinion paragraph will be given when you are giving a modified opinion. Suppose if there is a material misstatement in financial statements, because of that you want to qualify. So first you qualify and you should also quantify. You should also qualify plus quantify. Both you should do. Suppose if you are unable to quantify, if it is not possible for you to quantify, state that you cannot quantify. State that if it is not practicable to quantify the financial effect, the auditor shall state in the section that you are unable to quantify. Now you see, if there is a material misstatement of financials that relates to a specific amount, getting it, including a quantitative disclosures to the notes, the auditor shall include in the basis for opinion section a description of the mistake, quantification of the financial effect of the misstatement unless impracticable. You see what in this illustration it is there. In this illustration they have clearly given that. In this illustration, no, they have clearly mentioned a company inventories are carried in balance sheet at 1000 crore. Management has not stated inventories at lower of cost or NRV, but only stated them at cost, which is 1100 crore. The cost is 1100. The company carried in the balance sheet at, okay, let us assume 1100 only they carried. Actually, NRV is 1000. NRV is how much? 1000 crore. Whereas cost is 1100, whichever is lower, they should show 1000. But company showed at 1100 crores only, which constitutes a departure from accounting standard prescribed under 133. It may be Ind AS or normal accounting standard, whatever. Getting it? Because cost or NRV, whichever is lower, they should follow, right? They didn't follow that. Now you see, we qualified. What is the mistake company did? We qualified. We mentioned that company financial statements are showing inventory carrying value 1100 crore, which is not as per accounting standard. As per accounting standard, whichever is lower we should show, but company showed them at cost only. They did not show it NRV. We qualified. Not only that, we should also quantify. How they quantified, you see. You see how they quantified. The company's records indicate that had management stated, if at all management stated the inventories at lower of cost or NRV, an amount of 100 crore would have been required to write the inventories down to their NRV and cost of sales will increase by 100 crore, income tax will increase by 30 crore, net income so and so will be increased by, shareholder funds will be increased or decreased by so and so. Are you getting the point? We are quantifying the financial effect. We are quantifying the financial effect. Now, you know, this is what we have given. This is there in the study material. My study material only. Getting it? Suppose, no, you cannot quantify like this. For example, I will show you next illustration. I will show you next illustration. This is adverse opinion related illustration. This is adverse opinion related illustration. You see here what happened is, I will tell you. Here they have given this. The consolidated financial statements are materially misstated due to non-consolidation of a subsidiary. If a subsidiary is not consolidated, we know consolidation of subsidiaries on a line-by-line method. Line-by-line method means every item in the consolidated profit and loss account, every item in the consolidated balance sheet will affect, right? If one subsidiary, that too a material subsidiary, is not consolidated. If a material subsidiary is not consolidated in the consolidated balance sheet and P&L, you know, Reliance Industries Limited, they consolidated 270 subsidiary companies, 140 associate companies, 26 joint ventures. Getting it? Reliance Industries Limited, the consolidated balance sheet is a consolidation of the holding company Reliance plus 270 subsidiary companies, 140 associate companies, some 25, 26, plus or minus 10 number wrong. I don't know exactly, but roughly I'm telling you, which is my number is close to actual. Getting it? Don't again come and say 270 you said, sir. Understand the intention. Getting it? So this much they consolidated. In this, one subsidiary company which is material, they didn't consolidate. Now tell me, is it a material misstatement? Yes. And since it's a material subsidiary that occupied 20% of the entire company size, since it's a substantial portion, it is pervasive also. You didn't consolidate. Consolidated financial statements are not prepared as per applicable financial reporting framework. Applicable framework says you should consolidate all subsidiaries, all associates, but you didn't consolidate one material subsidiary. Yes or no? So auditor decided to give adverse opinion. Now you see, auditor, no, same introduction, side heading, adverse opinion. What opinion he gave? In our opinion, to the best of our information, according to the explanation given to us, because of, you see the word, they have used the word because, not except. It's not one item. It's not one or two small items to say exception. I'm not giving positive opinion with exception. Qualified opinion means conditional positive opinion. Getting it? That's why we use the word everything is good except this. Whereas here I'm saying everything is bad. Why? Because of significance of matter. Because of significance of matter discussed in where? Basis for adverse opinion section of our report. The accompanying consolidated financials do not give a true and fair view. We straight away said do not give true and fair view. We are not saying that true and fair except. We are straight away said do not give. Why? Why they are not true and fair? Because of significance of matter described in basis for adverse opinion. You see, as explained in note number 10 in the financial statements, group has not consolidated one of the subsidiary which acquired because it has not been able to determine fair values. The investment is therefore accounted on cost basis. They didn't account it on line by line and method basis. Under the accounting standard gap, the group should have consolidated the subsidiary and accounted acquisition based on at least provisional amounts. Had XYZ consolidated, many elements in the financials would have been affected. The effect of these consolidated financials of failure to consolidate not been determined. Tell me, if it is one mistake, I will say that mistake is wrong. If that mistake is not there, this much be the amount, this would be the profit, this would be the fund. If I do not consolidate subsidiary, each item in the balance sheet, each item in the P&L will be affected with some amount, right? Can I quantify that entire list? So auditor, no, he has not determined what is it effect because it is impracticable. That's what they are saying. You see, if it is not practicable to quantify the financial effect, the auditor shall so state in this section. He clearly mentioned the effect of non-consolidation of a subsidiary is not determined. Getting it? Suppose no, this is actually another point. This is actually a separate point. This is actually separate point. Suppose no, if the material misstatement is relating to a disclosure. If the misstatement is relating to disclosure, you disclosed something wrongly. We know misstatement can be in the form of disclosure, right? In such a case, how do you qualify? In basis for opinion section, explain how the disclosure is misstated. What is right disclosure? You talk. That's enough. Suppose they disclosed wrongly some information. Some asset useful life, they disclosed wrongly. It's a material misstatement. You disclose what is right disclosure in the basis for qualified opinion or basis for adverse opinion section. Understood. Suppose they did a material misstatement by a non-disclosure. They didn't disclose at all. This is a very important question, 4 marks question. If a material misstatement arises in the financials by way of non-disclosure, what auditor has to do? Getting it? If there is a material misstatement, that relates to non-disclosure, discuss it with the top management. Identify the nature. Is it material or pervasive or all that? Include the omitted disclosure in the audit report. Include that in the audit report. Whatever disclosure is omitted, you include it in the audit report unless prohibited by law. If there is a prohibition in law to include that in audit report, don't include. Otherwise, you can include. In India, there is no prohibition. In the world also, there is no prohibition in any country. Getting it? So, provided it is practicable to do so. Suppose company did not disclose segment information itself. Segment information they did not disclose. Will you give an audit report entire segment reporting? It will come 4 or 5 pages. Now, who will do that? First of all, to prepare that segment information, company should have prepared. Na? If they prepared and not disclosed, you can take that copy and then attach it in the audit report. Now company is asking me, sir, what is segment information? They don't know what is segment information. Now should I sit and prepare primary segments, reportable segment, secondary segment, study AS 17 once again, and then prepare all the segment? Not possible. It is not practicable. So I will mention that segment information is not disclosed, and the impact is the actual disclosure is impracticable for us to do. So we will just mention that. Suppose you are unable to obtain evidence. If modification is resulting from inability to obtain evidence, mention that in the basis for opinion section, the reason for inability. So that also we will see. Next one. Next illustration, disclaimer of opinion. Disclaimer of opinion. You see disclaimer of opinion. Same title, independent auditors report. Side heading, disclaimer of opinion. Remember, many students here they write disclaimer opinion. No, it's actually disclaimer of opinion. You are not giving opinion, understand? Not giving an opinion should be expressed in the audit report. Technically speaking, this is not an opinion. Disclaimer of opinion is not a opinion. And you see here, in the introduction they mention, we were engaged to audit. Normally, in unqualified opinion, in qualified opinion adverse, where we mention that we have audited. Here we are mentioning we were engaged to audit because substantial portion we didn't get evidence. Technically, substantial portion, since we did not get evidence, we did not verify. When we did not verify substantial portion, substantially we didn't audit. So, we are not saying that we have audited. We are saying that we were engaged to audit. Straight away, we do not express an opinion on the accompanied financials. Why? Because of significance of matter described in basis for disclaimer section. Are you getting it? Now you see, basis for disclaimer section will have straight away the matter. We conducted our audit as per standards on auditing. Our responsibilities under standards on auditing are further described in so and so section of our report. That and all we will not give because you didn't give opinion. First of all, how do you conduct audit? You are not giving opinion. If there is an opinion, you can talk about basis for the opinion. How you did audit, all that. Here you didn't give opinion. So people are not bothered about what is the basis. Getting it? You are not giving opinion, right? Why are you not giving opinion? That reason you will mention. The group investment represents 90% of the net assets. Some 90% of the assets is represented by investment. We were not allowed access to auditors of so and so company and their documentation. We did not get access to the subsidiary. The investment where we mentioned a joint venture, that related company records and all, or their auditors access also we did not get. Ultimately, as a result, we were unable to determine whether any adjustment is necessary in respect of so and so proportionate share of assets, actually regarding a joint venture. If this company made a joint venture, this company invested in a joint venture. Now this investment value itself is 90% of the total assets of this entity. And that joint venture related audit report, audit and all happened, that records and all were there, but we were not given access to. 90% of our company assets were represented by this investment in joint venture. Whether that value is stated correctly or not, I'm unable to comment. So auditor gave what? Disclaimer of opinion. And now you see, there is a section, auditor responsibilities for audit of consolidated financials. So simply here, audit of financials. Generally, auditor responsibilities for audit of financial statement section, it will have the following. We do audit as per standards on auditing. We do obtain reasonable assurance. Reasonable assurance is a high level of assurance. As a part of our audit, we do risk assessment. We do verify going concern. We do verify accounting policies. We verify overall presentation structure. All that responsibilities, people will sit and listen when you give an opinion. You're not giving opinion. So what auditor responsibility section? Our responsibility is to conduct audit of the group in accordance with standards. Our responsibility is to conduct as per standards. However, because of the matter described in basis for qualified opinion section, I told some matter. We were not obtained sufficient. We were not obtained sufficient appropriate evidence to provide a basis for opinion on these consolidated financial statements. By the way, we are independent of the group. We have complied with ethical requirements, all that. Don't think I'm not satisfied with ethical requirements. That's why I'm not doing audit. No, I complied with ethical requirements. But because of the matter described above, where we did not get evidence, that is the reason why I'm not giving opinion. Primarily, I'm appointed for giving opinion. Our responsibility is to conduct as per auditing. Our responsibility is to conduct audit as per standards, but we are unable to conduct the audit because of so and so reason described in so and so. So, when auditor has given disclaimer of opinion, auditor responsibility section will be modified to this extent. That question is also there. Description of auditor responsibilities. For the audit of financial statements, when the auditor disclaims an opinion on the financial statements, here I have not updated the reference. This was asked in some November 22 or May 22, some attempt. May 23, somewhere it was asked. This question was asked. I don't know, is in CA final or CA inter, I don't know, but in one exam they have asked. How auditor responsibilities for audit of financial statement section you describe. When auditor disclaims opinion, when auditor disclaims the opinion, responsibilities of auditor section, what will you draft? When auditor disclaims an opinion due to inability to obtain evidence, the auditor shall amend description of auditor responsibilities to include only the following. A statement that auditor responsibilities to conduct audit as per standard. A statement that, however, because of the matter described in basis for disclaimer of opinion section, we were not obtained sufficient appropriate to provide a basis, and a statement about your independence and other ethical responsibilities. These 3 points, they'll give you a 4 marks question. Able to understand? Description of auditor responsibility section when you have given a disclaimer of opinion. Generally, responsibility section will state all this. Write about auditor responsibilities relating to audit of financials. Generally, you will talk about objectives of the auditor, reasonable assurance, material misstatement. You will mention about risk assessment. You will mention about internal controls, accounting policy, going concern, overall structure, presentation. All this you will mention in responsibility section. But when you give disclaimer of opinion, you will not mention all this. Understood or not? Clear? That's it. So types of opinions we have completed. Types of opinions we have completed. So we understood opinion para and basis for opinion para. If it is unqualified opinion, simply opinion, basis for opinion. If it is qualified opinion, basis for qualified opinion. Adverse opinion, basis for adverse opinion. Disclaimer of opinion, basis for disclaimer of opinion. Clear? All of you. I cannot discuss much more than this. It's a revision class, remember? Okay, that's it. So just 2 minutes, we'll continue next one. So now we have completed title, addressee, opinion section, basis for opinion section, even responsibilities, auditor responsibilities for audit of financial statements section. All this we have completed. In exam, they will ask you, what are the contents of opinion section? They'll ask you like this question. Okay, you just have to write. Identify the entity whose financial statements are audited. State that financials were audited. Identify the title of each financial statement. Refer to the notes. Specify the date of and period covered by financial statements. And ultimately, F point, opinion to be expressed. Opinion to be expressed. Actually, only these 5 are there in the institute book also. Actually, opinion section will also have opinion, right? That's it. What basis for opinion paragraph will contain? In basis for opinion paragraph, we state that audit was conducted as per standards. And we will also mention that our responsibilities are described under auditor responsibility. So we will refer to that section. A statement that auditor is independent and fulfilled the responsibility. A statement that whether we obtained sufficient appropriate evidence or not. You see the basis for opinion para, you read that all these points are only covered there. Getting it? Auditor responsibilities. This question has been asked in CA final also. What is the location of description of auditor responsibilities? Where you can, where you can locate this auditor responsibility section, where you can give it? I can give it within the body of audit report. I can give it within the body of audit report. You see, Tata Motors, they gave within the audit report itself, right? You see, they gave, yes, this is the independent audit report, opinion, basis for opinion, key audit matter, management responsibility, audit responsibility. So within the audit report only they gave. So that is one option you have within the body of audit report, or you can give as an appendix to the audit report. You can give it as a appendix. You see, Tata Motors, they did not give appendix, but for CARO, they gave it as appendix. CARO, you see, annexure A, they gave it as an appendix. So auditor responsibility section also you can give it as an appendix if you want. You can talk within the audit report itself, or auditor responsibility for audit of financials below, refer annexure B. Like that you can give. Option C. Another option that we have is by a specific reference within audit report to the location of such a description of a website of appropriate authority where law regulation expressly permit. In India, this is not permitted. Getting it? But standard, international standard on auditing have this option. If you want to talk about auditor responsibility, because auditor responsibilities are so many. Yes or no? Even in the audit report, we are only giving very few of our responsibilities briefly. Public want to know what exactly you do. Suppose the lawmaker might involve. They might say, auditor, you create your own website. You have your own website, right? Inside that, what are auditor responsibilities for financials? Add that blog. Getting it? Create a blog on that. Write a blog on audit responsibilities with clear examples, all that, so that people will understand audit report properly. I wrote a blog, and that website HTML address will be there, right? That address, I will put it in the audit report. Auditor responsibilities for audit of financial statements, refer to the website link like this. I'll put a link here. Able to understand? So that is another option. That we can do, website link and all we can do when law expressly permit. Companies Act is silent on this. SEBI is silent on this. So in India, we don't have this option. But in exam, they're asking this. Getting it? So what is the location of description of auditor responsibility section in the audit report? So where you will describe the audit responsibility? Generally, we describe within the audit report itself, not even as an appendix. CARO we are giving as an appendix. Actually, CARO is also part of audit report. But we are not directly discussing CARO in the audit report. We are giving as an appendix. Appendix is like an additional sheet in exam. Additional sheet is also equal like main sheet, right? Yes or no? Some students write correct answers only in additional sheets. Entire main sheet is strike offs only. Next. Then signature of the auditor. Signature of the auditor. Auditor, in case of sole proprietor, you should sign in your personal name. You should sign the report in your personal name. Suppose in case if the auditors is a firm. By the way, remember, firm means it may be a sole proprietor firm, or it may be a partnership firm or LLP. Firm means it essentially have a firm registration number. In ethics, we will discuss why this firm concept is important. Tomorrow, once you start your practice example, you can directly do in your name. Membership number is enough. That itself is enough for you to practice. By the way, COP is also required. That's what I mean. So with the membership number itself, with the COP itself, you can directly practice. So if I am appointed as an auditor, I can directly say caramharsha chartered accountant, membership number, I can sign it. But instead of that, you incorporate a firm. You incorporate a firm. Firm name you take. So firm name, suppose you took like caramharsha and Co. This is my firm name example. Proprietorship only. I'm the single partner only, single person only. It's a sole proprietor firm. That's it. Getting it? If I do practice in my firm name, no. Firm will have an experience. Firm will get experience. So this firm name can be transferred to another chartered accountant. If I practice in the name of the firm, firm will get goodwill. Getting it? That goodwill I can encash. Suppose if I practice in my name, gone. That's it. You can't encash. Your legal hairs and all cannot encash. Able to understand? So if you want to have sustainable identity, forever identity for your firm name, get a firm name. With ICA only, ICA will allow you firm name. FR and ICA will give you. Registered with ICA, a firm name. That's it. GP Kapadi and Co., who is the founder of our institute, he died long back. Still his firm name is there. His firm is still running. Yes, with different new partners. Goodwill will be there. Getting the point? In CA, in ethics chapter, we have no sale of goodwill concept. There, this only we will be discussing. Firm name, individual name, all that only we will be discussing. Suppose if a firm is appointed as an auditor, sole proprietor only, Ramharsha and co-chartered accountants is appointed as an auditor, not me. My firm is appointed as an auditor. Getting the point? If firm is appointed as an auditor, the partner will sign the audit report in his individual name on behalf of the firm. Individual name only I will sign, but I will sign it on behalf of firm. They will give you true or false statement. In CA Inter, true or false question they give. Of course, in CA Inter, separate true or false statements will be. For you, true or false will be asked as an MCQ. In MCQ itself, they'll ask true or false statement. So, when a firm is appointed as an auditor, the audit report shall be signed by the partner in his individual name. Full stop. Incorrect. The audit report shall be signed by the partner in his individual name and on behalf of the firm. That point they are expecting. Getting the point? They'll give you which of the following statement is not true. They'll give you 4 options like this. You have to be very clear. Confident. Next, date of the audit report. What is the date on which you mention the audit report? You should not mention the date of audit report earlier than. You should not mention earlier than the date on which you completed the audit. Nothing but the date on which you obtained sufficient appropriate evidence. Without obtaining complete evidences that you want, without verifying complete background information you want, can you date the audit report? 2. You cannot date the audit report before approval date of the financials. Remember, what is meant by approval of the financial statements? Board of Directors are signing the balance sheet saying that this balance sheet we are releasing in the public. Public want to know what is your opinion on that balance sheet only, right? Now, can you sign your audit report before they sign the balance sheet? Obviously not. Because they want your opinion on the signed balance sheet by the directors. Which means our audit report should be signed after they signed the financial statements. Cannot be earlier. It can be equal date. So, the date of audit report shall only be, on or after approval of the financials, on or after obtaining complete, sufficient, appropriate evidence. Actually, in standards, they use the word, the audit report shall not be signed, the audit report shall not be dated, not earlier than the date on which you obtain sufficient, appropriate evidence, the date on which those with appropriate authority have accepted that they have taken responsibility for financial statements. That's nothing but approval of the financial statements. That's the date of audit report. And we all know, finally, we have UDIN number. I hope many of you are in articles. Articleship completed. No dummy. Have you generated UDINs? Which means you are all latest only completed article, because UDIN is popular only in 2019 onwards. Getting it? 2019 onwards. So UDIN number, and UDIN is like a digital signature. Simply, it is like a digital authentication. So if you look at my signature is so simple. Anybody can copy if you practice. Getting it? It's very simple. Of course, my strike you cannot practice. Sometimes my signature will not match with my signature. Okay. Initially, I used to face this problem. Whenever I give a check, no, it's not matching. Banker will call me. So I'll once again send him. Okay, carefully. So then now it is perfect. You see, all the 3 signatures almost same. Bankrolls will check 90% accuracy only. He will not check 100%. If he checks 100% accuracy, all the checks will bounce. Everybody's, because 90% only accuracy we can maintain. Now, anybody who knows my membership number 239714. This is my membership number. Do whatever you want. Getting it? They can't do anything, because a document is today authentic only if it have UDIN number generated by me in my UDIN login ID. So there is a UDIN portal. Inside that, whatever document I am signing, the document characteristics I will mention in the UDIN portal. In the document, some numbers will be there. That numbers I will mention. So as a proof that this is the one I signed, and I will generate a UDIN number. Some 18 characters number will be there. Okay. So in that membership number will be there. All that will be there. So that number will be generated. Only when that number is there, you didn't, that document is reliable. Banker also will believe that the document is signed by you. If somebody without UDIN number trying to blame me, I cannot accept it. I will straight away say, where is UDIN number? I didn't sign it. Though my signature is there, nobody can, put a case against me easily. Earlier, many CS have faced these kind of situations. So institute came up with the UDIN concept. Now recently, institute is also trying to attach NOC concept to UDIN. Very recently, no objection certificate. Right? Clause number 8 ethics. We have to communicate with the previous auditor, right? So that we can obtain through UDIN portal nowadays. I mean, that's what institute is planning to implement. Otherwise, communicating with the previous auditor became so difficult, nobody will reply. Yes or no? We communicate with the previous auditor, he will not reply. Because he did not get reply from his previous auditor. That's it. Next. So that's about remaining contents of audit report. Now we are still left with responsibilities of management, report on other legal and regulatory requirement, and these standards. Getting it? Right now we have completed 700, 705. Technically speaking, 2 standards we completed, which is base for remaining all other standards. In order to understand remaining standards perfectly precisely, if you understand these standards, that's best. Now, next I will discuss key emphasis of matter paragraph, other matter paragraph. Emphasis of matter paragraph and other matter paragraph. Now you see, Tata Motors itself, you see, I'll go to the index itself. You see the Tata Motors financial statements, standalone financial statements were started with 305 page, ended 408 page. Okay, which means within this, some 10 pages audit report, not 10 pages, maybe 8 pages. Some 4 pages balance sheet, face of the balance sheet, face of the P&L, face of statement of changes in equity, face of cash flow. Some 4 pages. Some 10 to 15 pages, leave it. 90 pages approximately, notes to accounts. Who will read? Honestly, yes or no? People will not have patience to read. Auditors themselves read on a sampling basis. That's why so many mistakes in the financials. Many of you would have done this, right? When you are preparing financial statements notes, no? In a final discussion, you are going to your principal especially. You will never read that. You'll directly copy paste numbers alone, you change and then go there. Exactly there you'll find a mistake. Have you faced this? Yeah. So people will not read. But remember, you have a responsibility to read entire financial statements. Do you have the responsibility to read entire financial statements, including notes, each and every line and each and every page? Yes, of course, you have to sign that. You have to say whether they are true and fair or not. 100% of the financial statements, whether they are presented and disclosed as per applicable financial reporting framework, you have to read. In order to understand whether all the accounting standard disclosure requirements are met, you have to read. You don't have another option. Now, when you're reading, no, somewhere in this, some 94th page. Inside that, some note number 48 is there. Some note number 48 is there, which is talking about some contingent liability, which is talking about very big contingent liability, a pending litigation against the company by some environmental committee. Okay, they filed a case against EV manufacturing, EV batteries manufacturing and all. Getting it? You are manufacturing battery in the name of EV, that you're reducing car, all that carbon dioxide, whatever. But battery manufacturing itself takes so much of pollution. Like that, some committee has filed a case against the EV division of the company, for example. If at all that case went successful in Supreme Court, we have to stop EV manufacturing. That's the kind of case. Tata Motors, no, EV is growing like anything. Okay. Now, they disclosed this entire facts of the case, everything in the notes to accounts regarding contingent liability. What is the case, all that. Honestly disclosed. They did not hide anything. No hide and seek. Clearly they disclosed, Tata Motors. Now, when I'm reading this financial statements, no, I'm reading 10 times, 15 times notes. I found this 48th point is very important for people. And I know very well nobody will read this. If I ask them to read entire notes to accounts, by the time they read 3rd line in the notes account, they'll stop reading. Because they don't understand. CS students itself, we don't understand. Correctly, fair presentation for, you see in the starting and all, they use restated, all that. So many new words and all they'll be using, fair values, all that. If you do not study that accounting standard, fair value related standards and all, you don't understand this. Correct? So, I know very well. So, but I know somewhere that the percentage of people who read my audit report are quite higher than the percentage of people who read notes to accounts. Definitely audit report people at least will see. So, this important note point I want to highlight. That is where emphasis of matter paragraph comes. Emphasis means what? Highlight. Emphasis, dictionary meaning is what? Emphasizing, highlighting. So emphasis of matter paragraph. Emphasis of matter paragraph is a paragraph in the independent audit report you see here, emphasis of matter paragraph is a paragraph included in auditor's report that refers to a matter appropriately, the very important terminology, appropriately presented or disclosed in financials that in the auditor's judgment is of such importance that it is fundamental to users' understanding of the financial statements. I felt when I'm reading the audit report, when I'm reading the notes to accounts, or when I'm reading the financials, there are some point which is presented or disclosed in financials. I felt it is very important for the user understanding. It is very important for the user to understand the financial statements much more better way. Getting it? To understand that, to interpret the financial result, to interpret the company position in a much more better way. This point is no doubt very important, I felt. So I will refer to this matter. I will refer to this matter. In our example, the matter is note number 48. I will refer to this matter in the audit report. Getting it? When I can refer like this? Only when it is appropriately presented or disclosed. Appropriately means free from material misstatement. If at all the contingent liability information is not presented clearly as per the concerned accounting standard, they are not disclosing clearly the picture. Getting it? Which means it's a material misstatement. When it is a material misstatement, you should give a qualified opinion or adverse opinion depending upon the pervasiveness. You cannot highlight it under emphasis of matter. Under emphasis of matter, a particular matter presented or disclosed in financials, you can highlight only when it is appropriately presented. That is what they have given. Conditions. Conditions for emphasis of matter. The auditor shall include an emphasis of matter provided he is not required to modify the opinion in accordance with 705 on that matter which you are highlighting. You are not required to modify the opinion, and the matter is not decided as a key audit matter. If at all you are already discussing that in key audit matter, don't discuss again in emphasis of matter paragraph. Better. In key audit matter, no, when we discuss anything related to financials, we generally refer to that note point if it is there in the financials. Duplication, to avoid duplication, this point is added. So conditions for emphasis. It is not, you are not required to modify your opinion on that. 2, it is not a key audit matter. Why are you highlighting an emphasis? Because I felt it is important for them to read. Whether they read remaining notes to accounts or not. Because I already told balance sheet numbers, P&L numbers, everything is true and fair. I gave unqualified opinion. I don't have any objection. Company is so honest. They presented everything honestly. But remember, there are some important points that you need to identify. Look at these important points. Like this, I can highlight under which paragraph? Emphasis of matter paragraph. Manner of presentation. How emphasis of matter paragraph can be presented? I'll show you here in the audit report. So many points were there in emphasis of matter paragraph. So what is the manner of presentation Air India did? So this is an audit report, yes or no? Air India related audit report. Inside this audit report, in a separate section, emphasis of matter paragraph is presented in separate section, like separate side heading, like opinion side heading, how it is given. Qualified opinion they gave, separate side heading. Basis for qualified opinion, separate side heading. Emphasis of matter, separate side heading. Are you getting the point? So emphasis of matter paragraph is presented by Air India in a separate section in the audit report. What are they doing? We draw your attention to note number 29, note number 26, note number 14 and note number 46, like this. So they draw the attention of the users to so many. You see almost note number 49. So many note points were there in the Air India notes to account. So many would have been there. So Air India auditors are asking you to refer some 7 or 8 points. 7 or 8 points. By the way, at the end also they are mentioning one more clearly. What are they mentioning? Our opinion is not modified in respect of. Look, I'm just highlighting important points. That doesn't mean I have objection on them. Getting it? Emphasis of matter paragraph, I'm just highlighting important points. Why are you highlighting? Is there any mistake in that? No mistake. I don't have any objection on that. I'm just highlighting. Why are you highlighting? Because it's important for you. For that reason, I'm highlighting. And remember, people will not understand. If I highlight something, people may think that hey, something is wrong in this. That's why auditor highlighted. No, nothing is wrong. That's what I'm saying. That's why at the end of the paragraph, what are they mentioning? Our opinion is not modified. So we are specifically saying I don't have objection on the above point. Don't think that I'm having objection on these points. Which means our opinion is not modified means all these items which are presented in respective note numbers are free from material misstated. They are appropriately presented or disclosed in financial statements, which auditor is highlighting. Now you see here, Tata Motor, this one. What is the manner of presentation of emphasis of matter para? Include this paragraph within a separate section with an appropriate heading, where the heading will include this term called emphasis of matter and express the matter being emphasized. Give the reference to that matter. Air India, we draw your attention to note number 26, note number 49. Yes or no? State that your opinion is not modified. Mentioned or not at the end of the para. Our opinion is not modified. This is the manner of presentation. Next. Remember, emphasis of matter paragraph is not a substitute for modified opinion. Not a substitute for disclosure in financials. Suppose company has to disclose something in financials, they didn't disclose. It's a material misstatement. You need to qualify the audit report, or you need to give you need to give either adverse opinion. In the basis for qualified opinion or basis for adverse opinion, you should disclose that. If it is practicable to do so. Non-disclosure misstatement, you should disclose it in the audit report if possible. So if company forgot to disclose something, can you disclose it in emphasis of matter paragraph? Can you use that emphasis of matter paragraph as a substitute for disclosure in financials? No. Emphasis of matter paragraph is not a substitute for reporting as per 570 when a material uncertainty exists. When a material uncertainty related to going concern exists, what to do we'll discuss later. But emphasis of matter paragraph is not a substitute for going concern para. Clear? All of you? That's it. Emphasis of matter paragraph is over. In exam, they'll ask you, define emphasis of matter para. What is the manner of presentation of emphasis of matter para? Or they'll ask you, define emphasis of matter para. Under what conditions or circumstances auditor can use an emphasis of matter para? Give examples also, they'll ask you. You see, that's why in the question bank I've covered that question. Under what, give some examples of circumstances where auditor may consider it necessary to include emphasis of matter para. An uncertainty relating to some pending litigation, some significant subsequent event occurred, but it is not an adjusting event or adjusting event, whatever. Early application of some accounting standard, company, applying some accounting standard, even though they are not liable. They are applying and preparing as per new. Some companies, they are not liable for Ind AS. Voluntarily, they adopt Ind AS and then prepare. So, auditor can highlight that point, which is given in the notes to accounts. A major catastrophe that had occurred in the, this thing. Now, these are the examples of matters which auditor can highlight. You cannot write your own examples. Look, only these examples you have to write. Even though they are examples, you have to write these examples only. Suggested answer will have only these examples. Are you getting the point? You are writing your own random examples. Company suffering from so and so, highlight this auditor. You will suffer from lack of marks. So, see, paper valuationers, they are not subject experts. They are not faculties like me. Yes or no? I will understand your alternative answer, but others will not understand their alternative answer. Best example, if I give you statistics or mathematics paper, because you qualified foundation or CPT or some other, you have gone through mathematics, right? Somewhere in your life, point of life, yes or no? So definitely, of course, up to 10th standard or 11th standard, you have mathematics, right? 12th standard. So if I give you CA foundation mathematics paper, how will you evaluate? Student wrote alternative answer. Like what we claim, student wrote alternative answer. How do you evaluate? When you are evaluating, you just look at suggested answer and see what answer he wrote, not matching, wrong. Yes or no? Exactly. Same. That's how your audit paper is also evaluated. People are not realizing this. I understand this is a loophole in valuation, this is a mistake in valuation, but something that we cannot avoid. The institute condition, first conditioner for paper valuation, you should not be associated in coaching activities. That's the first condition. For CS students or CMA or CS, you should not be associated in the coaching activities in the past 5 years. So that's the primary condition for the valuation. So obviously I'm disqualified for paper valuation. Getting it? Now the person who is coming is a qualified CA. completed 4 years of post-qualification experience, forgot already whatever he learned. That fellow is sitting and valuing your paper by just comparing with the suggested answer. If you write an alternative answer, you only understand that it's an alternative answer, but he will not understand. So, if examples were asked, the institute gave so and so examples, they'll give maybe another 5 extra examples. But your example is not matching in any of the 9 points which they gave. You just have to write 3 points only. This question, you just have to write 3 to 4 points only. But it's not matching. What to do? He'll strike off the answer. Though your concept is correct, your examples are correct, he'll strike off. This is the, like what? Unavoidable loophole in the valuation. We can't overcome it. Inherent limitation. Getting it? So, what is the only option? You have to study from the ICA book only. Or any book that you follow must match with ICA book. If the author of the book is over enthusiastic and giving you different examples of his knowledge, it will be useful, but not for qualification. Getting the point? So be careful. Don't know, institute, no, they are trying to make all the changes. They are conducting exams for valuation notes also. No. Valuation notes and all, no, they keep 2 laptops. They'll see the question, open the question in another laptop and tick the answer. This is what they are doing. Online exam for valuationers. Getting it? For valuationers, online exam. I don't know. They are planning to conduct physical exams also. In physical exams also, they are allowing 2 laptops. And for paper valuation, they'll give you 150 rupees for the paper the person who is valuing the paper. They'll be getting some 100 or 150 rupees per paper valuation, per paper. Remember, valuing right paper takes lesser time. Valuing wrong paper takes so much of time. Because if your answer is not matching, first I need to assess your answer, right? If your answer is matching, it's easy to evaluate. If it is not matching, I need to at least see whether your sentence is similar to this or not. Which will struggle, where I will struggle. So this is a problem with the valuation. So be careful. You have to write. Some students, they'll ask, sir, can I write in my own terminology audit? For me, whatever terminology I studied, that itself is very challenging for me to reproduce. I don't have that much language skill to write alternative terminology. Honestly, when students ask me this question, I feel very how can you create an alternative terminology for this? This terminology itself you give, no, that's easy, right? Whatever terminology they give, understanding that producing is easy instead of creating altogether different terminology. See, sentence meaning should be same. And for applicable financial reporting framework, what alternative term you will use? For framework word, what alternative term you will use? You will use rules and regulations instead of that simple word framework, right? Financial reporting is a simple word, right? Instead of preparation and presentation of financial statements. Yes or no? Just that we should adapt. When we are reading, we should always consciously remember. Consciously read in the same terminology. What is important is understand it. So you remember. Okay. As I go further, I will discuss various observations. I will tell you to observe so many things. If you observe, you remember. If you do not observe when you are reading, you will not remember. This is the formula for remembering the things. People ask me again, sir, how to remember? I'm studying, sir, I'm understanding, sir, how to remember? I'll ask him a question, whether he understood or not, that itself he'll fail. He don't understand. He will think he understood. But point is, he will not understand. That's a basic, fundamental thing. People are not able to understand whether they are understanding it properly or not. What they think they understand is, they read this sentence. Like they read this, uncertainty related to future outcome, significant subsequent event, early application of new accounting standard, major catastrophe, circumstances when auditor can circumstances where auditor may consider to include emphasis of matter paragraph. They understand this, only this they understand. They don't understand the concept behind emphasis of matter para. They don't understand what is emphasis of matter para clearly. In that context, if you read this and visualize with that context, then you will understand, okay, some uncertainty happened relating to litigation. Company disclosed this in the notes to account. The auditor can highlight it. One example. Some subsequent event happened between the date of financials and date of audit report. That's a significant subsequent event which company already disclosed in the notes to accounts. The auditor can highlight it under emphasis of matter paragraph. So this is an example for what auditor can highlight. This is context based understanding. Are you getting the point? Reading the sentence, translating this into English in some other sentence and then understanding. No, that is not understanding. Clear? Some students, they listen to classes in local medium. Is even more mistake. If you are writing in Hindi medium, you listen classes in Hindi. If you are writing in English medium, listen to the classes in English. As simple as that. In North, no, in many Hindi background students, where they listen classes in Hindi, but write in English, they struggle 14-16 hours to study. Whereas South side, we on an average study 8 to 10 hours. Anybody got, okay, what day if you tell you studied more than 12 hours, I'll challenge you have not. You have not. Studying, by the way, means sitting and scrolling Instagram posts. No, that will not be counted in study time. Study time means focusing on the book properly without any other deviations or thoughts. Sincerely studying. That is what study time. Like that, in South, what I observed is 8 to 10 hours only is the maximum time students can study. Not more than that. Student plan for 14 hours, 16 hours schedule. He'll sleep that much time. He'll not study. Getting it? Whereas in North, no, they struggle a lot. The only reason is they are listening classes in Hindi. Since they are listening classes in Hindi, they are unable to sync what they listen with what they are reading. Now you see the audit report chapter after that, you read, you will sync everything. Because I discussed the subject in the same language in a simplified version. Getting it? I am trying to put the data into your mind, the terms, everything into your mind, because I'm discussing in the same terminology, in the same scale. But if at all you are discussing the subject or thinking about the subject in a different level, and here it is in different level, it will not sync properly. That's an easy way. So you remember when you understand it thoroughly. So understanding, focus on understanding, context. Why are you learning it? Understanding is important. Next. So emphasis is over. Clear? Next we still have other matter paragraph, key audit matter, material uncertainty related to going concern, report on legal and regulatory requirements, management responsibilities. Getting it? So other matter paragraph I will start. I'll take one example here. You see other matter paragraph definition. Are you all fine, energetic? Yeah, just 1 minute. I'll just relax 1 minute, okay? Continue other matter paragraph, okay? See, what is other matter paragraph? Let's look at the definition and try to understand how it is different from emphasis of matter para. So what is an other matter paragraph? It is also a paragraph where it is included in auditor's report. That refers to a matter other than those presented or disclosed in financials. If you want to refer in audit report of those presented or disclosed in financial statements appropriately, emphasis is there, right? Yes or no? If it is something is presented in financial statements, you want to highlight that. Emphasis of matter is there. Other than that, if I want to talk regarding what? Other than those presented or disclosed in financials, that in auditor's judgment is relevant for users' understanding of audit, auditor's responsibility, auditor's report. If you want to make the user understand about the audit, understand about your responsibilities, understand about auditor's report, you want to talk something about audit report itself in the audit report. Getting it? Then other matter paragraph is there. You see emphasis. Emphasis of matter paragraph. Emphasis of matter paragraph is important that it is fundamental to the user's understanding of the financials. The matter which is presented or disclosed in financials, the matter which is presented in financials is important for the user. So that, now you see other matter paragraph, everybody will read, but they don't understand the context why they used these terms. The context, if you understand, it's easy for you. Now, people who think they understand this other matter paragraph by reading this definition and translating, other than those presented in financial statements, if you want to talk, that's other matter paragraph. That is only a basic level understanding. The advanced level of understanding is right example you have to take. So here we wanted to make the people understand what is audit responsibility, what is auditor's report. You remember joint audit? All of you? In joint auditor, there is something called common reporting. All the joint auditors have to arrive common conclusion and express an opinion through a single audit report. Yes or no? However, a joint auditor is not bound by majority. If at all a joint auditor is disagreeing with other joint auditors, such a disagreeing joint auditor can give a separate report and can express his own opinion. In such a case, each joint auditor in each report, like the person, suppose State Bank of India is having 12 joint auditors. State Bank of India is having how many? 12 joint auditors. 11 of them want to give unqualified opinion. One want to give adverse opinion. Of course, the one whoever is giving adverse opinion, he has his own reasons. He can give in basis for adverse opinion in his audit report. Whereas remaining auditors, they did not have any reason. So they gave unqualified opinion. Now, the 11 joint auditors are giving one audit report 1 and this fellow is giving audit report 2. Now, in this audit report 1, other matter paragraph, inside that they will have to refer other auditor report 2. In this, in other matter paragraph of 11 joint auditors, they will mention in other matter paragraph, please refer so and so joint auditor who has given a separate audit report. Likewise, this joint auditor also in his audit report should refer about remaining auditor's audit report. This is called cross-referencing. Are you getting the point? So is this there or not in the joint audit? When the auditor is disagreeing, in such a case, auditor can give his separate opinion through a separate report, and in such a case, the auditor should also refer about other joint auditors report in his report. Each of the joint auditors shall refer about other joint auditors reports in their reports. Where they will refer? Other matter paragraph they will refer. Understood or not? Next. So, for one example of audit report is this. Another example of auditor's responsibilities. Another example of auditor responsibilities. Let me do one thing. This will take 10 minutes example, because now we are going to actually discuss simultaneously 299, 600 also. Now we are discussing simultaneously. If this example we understood thoroughly, SA 600 becomes very easy for understanding, and 706 will be anyhow over. Okay, so it will take little bigger example. So we'll continue this in the next session. So auditor responsibilities means what? In the other matter paragraph, we can refer about auditor responsibilities. What auditor responsibilities? See, brief introduction I'll give you. When joint auditors were appointed, each joint auditor is responsible only for the work allocated to him. Suppose a joint auditor is disagreeing and he wants to give a separate audit report. Inside that audit report, he will cross-reference about other audit report. Not only that, he will also mention that he is only responsible for so and so areas of the financial statements. Remaining areas of the financial statements, I am not responsible. Remaining areas of the financial statements, other joint auditors were responsible. This entire responsibilities of each joint auditor is decided, discussed, documented accordingly. Like that, the joint auditor can talk about auditor responsibilities in other matter paragraph. That is one example. Another example, branch auditor's responsibility. Subsidiary company, associate company, auditor's responsibility, all that. The subsidiary company, branch auditor, this discussion takes little time. So I will discuss it in the next session. Clear all of you until now? We'll wind up. Okay, that's it. Just we have 10 minutes more, that's why. Okay. So in the previous session, we are discussing about other matter paragraph, where in that we specifically discussed about these terminologies. Like what is emphasis of matter paragraph? First of all, emphasis of matter paragraph is a paragraph in the independent auditor's report that refers to a matter appropriately presented or disclosed in the financial statements, which in auditor's professional judgment was of significance for users' understanding of the financial statements. Remember that last sentence is very important. This can be tested as an MCQ. Emphasis of matter paragraph is a paragraph used in audit report that refers to a matter that is appropriately presented or disclosed in a financial statement that in auditor's judgment was of importance for users' understanding of the auditor's report, auditor's responsibility. Wrong. That is what? That is other matter paragraph. That too, you see, they'll give you somewhere they'll add other than, somewhere they'll remove other than. At some places at last no, they will use other matter paragraph last line. At final one option, they'll use correct definition. Unless you observe the entire definition, you cannot pick up the correct answer. Getting it? And yesterday, like in the previous session, one student was asking this out. Like I have given the introduction to all these standards, right? Where we spoke about standards on auditing, standards on review, standards on assurance, standards on related services. Getting it? Internal audit, tax audit comes under which part? For example, Internal audit do not come under any of this. Getting it? Because standards for internal audit, the institute has issued separate standards. SIA, standards on internal audit, they were separate altogether different standards. So they did not classify that assignment specifically under these. Probably, if at all internal audit has to be classified under some category, it generally comes under agreed upon procedure. It generally comes under agreed upon procedure. In many entities, internal audit is performed by two set of people. One, their own employees. Okay, two external auditors. Now, the question about internal audit comes under which assignment? It will arise only when internal audit is being performed by an external audit firm, where we appointed a different audit firm. Now, for them, which standard is applicable? Here only it will come. Generally, internal audit, the objective is not give opinion on financials. Understand first. You see the definition of internal audit or whatever, it uses the word consulting and assurance on risk management, governance, internal control. So internal auditors mainly provide assurance on governance, assurance on risk management, assurance on this one, internal controls, consulting and assurance activity. Consulting means what? Obviously, company will be asking you to verify something. Suppose they called you just for physical verification of fixed asset. So you have to go there, do physical verification of the fixed asset and give a report on that. That's an agreed upon procedure, technically speaking. Getting it? Without giving assurance, without providing assurance. So if at all a situation comes where internal audit has to be classified there. Now coming to tax audit, for that standards on auditing only apply. Remember, tax audit, we don't do separate audit. In tax audit, what we do, first of all, by the way, we do audit of financial statements only. That is what 3CA, 3CB report, right? In tax audit, we give 3CA, 3CB report, final audit report. In both the reports, we are talking about financial statements only of the entity, whatever the entity it might be. So we are talking about financial statements, whether they are true and fair or not. In the 3CD annexure, we give various other particulars. That's a different thing. 3CB, 3CA tax audit primarily talks about audit of financial statements, which is a stat audit for which all standards on auditing apply. Are you getting it? So that's it. So if at all any of you have this, I think this clarifies your understanding. So now auditor responsibilities. One more thing, auditor responsibilities. So let us take this State Bank of India example, very simple and classic example. SBI Limited. SBI Limited is having many subsidiary companies. It has many subsidiary companies. One of that subsidiary companies is SBI Cards. SBI Cards, which deals exclusively with credit card segment and loans. Getting it? So SBI Limited, in these two cases, the relationship between them is it's a holding company, it's a subsidiary company. The relationship is holding and subsidiary. And SBI Limited, because it is holding company, it has to prepare two sets of financials. One is standalone financials, another one is consolidated financials. Consolidated financials is holding company plus all subsidiary companies. Financial statements will be line by line consolidation method, associate, joint venture, depending upon the respective standard method. Then standalone financial statements means head office plus all branches. Head office plus all branches. Now SBI is having close to 23,000 branches. Close to 23,000 branches. Out of that, approximately some 19,000 branches were exempted from audit as per RBI requirement. As per RBI requirement, they have certain guidelines on branch audit requirement. SBI meet with exemption for 19,000 branches. Approximately some 5,000 branches, 4 to 5,000 branches. I'm just giving rough numbers, okay? You can see that in accurate numbers, you can see in SBI audit report. Roughly some 5,000 branches were audited by branch auditors. They were audited by branch auditors. Whereas for the entire standalone financial statements, SBI has appointed principal auditors. Who are they? Principal. 12 principal auditors were appointed. How many were appointed? 12. Because that's a maximum number permitted as per RBI guideline. For an entity, especially for a bank, the maximum number of joint auditors cannot exceed 12. Once upon a time 14, at the time SBI has 14 auditors. Now only 12 auditors. 12 auditors were appointed for as a whole standalone financial statements of SBI. Getting it? So all these 12 auditors' scope and objective is what? To give opinion on the financial statements of State Bank of India Limited, which includes financial information of the head office which they are auditing, and financial information of components audited by branch auditors. This is the main thing. Now let us call them as H, like CAH, holding company auditor. CAB, let us assume we call him as branch auditor. CAS, we call him as subsidiary company auditor. So S refers to subsidiary, B refers to branch, H refers to holding company. That's what I mean. Now, the CAH has to give audit report on one, standalone financials. He has to give another audit report on consolidated financial statements. That's why you see Tata Motors, if you look at the auditor's report, it will exactly if you observe here, independent auditor's report, one is title and address it to the members, straight away opinion. In between, they have added one more, report on audit of standalone. So you need to add this line specifically when you are giving two audit reports for the same financial year. Why Tata Motors is giving two audit reports? One relates to standalone, another one relates to consolidated. In such a case, what exactly this audit report is dealing with? This audit report is dealing with a standalone. Likewise, you need to give such a kind of reference. Fine. So I hope until now you understood this example. Now, so Mr. H, who is the auditor of SBI Limited, has to give audit report on consolidated financials, has to give audit report on standalone financials, both. Now, when he is giving audit report on standalone financial statements, remember he is giving audit report on the combined balance sheet, combined P&L. Combined balance sheet, combined P&L means head office plus branches put together. Getting it? But these branches, 5,000 branches were audited by other auditors. The 5,000 branches were audited by other auditors. Regarding this financial information of these 5,000 branches, these 12 joint auditors are not aware of anything. They only know that so-and-so branches is having so-and-so turnover, so-and-so interest income, so-and-so interest expenditure, so-and-so loans and advances, so-and-so borrowings. Only that information they know. Getting it? Now, SA 600, it clearly says the principal auditor is not responsible. The principal auditor is not responsible for the financial information of the component, for the financial information of the component audited by other auditors. Getting it? So now, in other matter paragraph of audit report on standalone financials, in other matter paragraph of audit report on standalone financials given by 12 joint auditors. Given by 12 joint auditors. So what auditor has to report? The main joint auditors, no, they have to report under other matter paragraph. Audit of 5,000 branches were audited by other auditors whose audit reports are given to us, and our opinion on the total financial statements is purely based upon the branch auditor's reports. Like see, if we are giving opinion, somebody else is using our opinion, right? Same way, branch auditors gave opinion on all the branches. 5,000 branches were audited by them. They said everything is true and fair. I took their branch audit reports and I verified they are all true and fair. And with respect to head office, I am having true and fair opinion. So branches and all put together true and fair. Head office is true and fair. As a whole, the standalone balance sheet, standalone P&L is true and fair. This is what as a main auditor I felt. I gave the same opinion. Now in the opinion paragraph, the aforesaid financial statements are true and fair. But people don't know that. They are thinking only I did the entire audit. They don't know that 5,000 branches were not audited by me. 5,000 branches were audited by some other auditor. So they are not aware of this fact. This fact I should tell them. Getting it? In other matter paragraph, I'm talking about my responsibility. Getting it? Towards what items in the financial information I am not responsible. Getting it? So I will show you directly this SBI audit report. You will understand easily. You see, other audit. This is other matter paragraph in State Bank of India. Okay, standalone financial statements related audit report. Now, what they are mentioning, we did not audit financial information of 5,700 branches. Okay, including some 34 branches, which are included in standalone financial statements audited by us. We audited standalone financials. In that 5,700 branches related information is included. Whose financial information reflects 20 lakh crore assets, 1,30,000 crore revenue. The financial statements of these branches were audited by branch auditors, whose reports have been furnished to us, and in our opinion, so far as it related to these amounts and disclosures which are included in respect of these branches, is based purely on the basis of branch audit reports. By mentioning like this, what are we saying indirectly? Look, in the entire standalone financials, total asset is 30 lakh crore. Out of 30 lakh crore, 21 lakh crore is belonging to 5,700 branches, which is audited by branch auditors. With respect to this 21 lakh crore, whether it is true and fair or not, I relied upon branch auditors report. So to that extent, my opinion is influenced by, my opinion is decided by branch auditors. What are we indirectly saying? We are mentioning division of responsibility. Are you getting the point? Same way, with respect to audit report on consolidated financials. Now I hope you understood regarding standalone financials. Now with respect to audit report on consolidated financials also, similar requirement apply. Remember, when I'm giving consolidated financial statements audit report, only holding company related financial statements were either audited by me or branch auditors. But remaining subsidiary companies, associate companies, joint ventures, we might have not audited. In Reliance case, 200 plus subsidiary companies, 100 plus associate companies, 10 plus joint ventures were used in consolidated financials. And the main auditors of Reliance, holding company auditors of Reliance were not, they are not the one who audited all this entire financial information. Getting it? So in the other matter paragraph of SBI or Reliance, there we talk about one, of course, regarding branches will clarify. Because main auditors have not audited regarding the branches, that point will clarify. In addition to that, we will also clarify, we will also mention so and so subsidiary companies, so and so associate companies, so and so number of joint ventures, whose total assets are this much, whose total revenue is this much, is audited by other auditors, component auditors. Able to understand? The auditors of respective companies, whose reports are given to us, and our opinion on the consolidated financial statements is purely based upon their report. Understood or not? So that's how we give a disclosure in other matter paragraph. So in other matter paragraph, we talk about audit, we talk about auditor responsibility, we talk about auditor's report. Now, what is about audit? Audit means in 710, we will discuss that point. For audit example, I will discuss in 710. In 710, no, we will discuss about a prior period financial statements audit. Getting it? If prior period financials were audited by predecessor auditor, that fact has to be mentioned in the other matter paragraph. That the prior period financials were audited by predecessor auditor and he has given so and so opinion. His audit report date is so and so. If previous auditor is not us. Suppose we are appointed for 5 years. First year in the audit report, EOMP, other matter paragraph, we should mention this. Second year onwards, not required. If predecessor auditor means auditor from different audit firm, the definition as per SA 510 and even as per SA 710. Clear? That's other matter paragraph. Now, so look at this other matter paragraph once. We'll close this and then go to 600. We'll close this and then go to 600. When to use other matter paragraph? The auditor shall include an other matter paragraph when it is not prohibited by law or regulation and it is not decided as a key audit matter. Getting it? Further, what is the manner of presentation? Same. How emphasis of matter paragraph is presented? Same. Other matter paragraph shall also be presented within a separate section with a heading with an appropriate term. Other matter or other appropriate heading. Like I showed you SBI audit report, any audit report you take, side heading will be other matter simply. Getting it? Other matter, and since it's a paragraph, we call it as paragraph or we call it a section in the auditor's report. And at the end of other matter also, if you look at SBI, they have even mentioned that our opinion is not modified. They have mentioned that our opinion is not modified in respect of the above. I am not so the auditor is saying that I am not objecting anything. Getting it? And you know, in CA Inter, in the last attempt, I think so, they asked this question, May 23 or November 23 in one attempt. This sentence they asked, when the auditor is including other matter paragraph, it need not be presented under a separate section of the audit report. It need not be presented under a separate section of the audit report. Half the students didn't understand because they never observed this. You see, when you're reading separate section means what? I showed you in the audit report, right? How it is separately presented. Are they adding anywhere as a under any particular para? Are they merging or are they giving equal importance like opinion para? Equal importance. Just like how opinion para has a side heading, other matter paragraph, emphasis matter paragraph, other matter paragraph. Every paragraph has a dedicated side heading. That's it. Getting it? So this is what understanding means. Every term you must have significance. What is its impact? What is its implications? You understood. Then you understood the subject. Getting it? And there is a requirement here. There is a formality. You have to communicate with those charged with governance. Getting it? Especially when you are deciding to use emphasis of matter paragraph or other matter paragraph. Even if you want to modify the opinion, what modification you want to give, the wordings and all, first you have to communicate with those charged with governance. Like, see, communication to those charged with governance, there is a standard 260. It says auditor has to communicate so and so various things. In that, one of the point is when required by other standards on auditing. Auditor has to communicate whenever required by other standards on auditing. Like that, there are requirements in 705, 706, 570. Getting in all these cases, 4 points you will get easily. When auditor is modifying the opinion on the financial statements, the draft audit report has to be communicated to those charged with governance. When the auditor is planning to include an emphasis of matter paragraph or other matter paragraph, he has to use this, he has to communicate to those charged with governance. When auditor is planning to use key audit matter, he has to communicate to those charged with governance. When auditor is intending to use material uncertainty related to going concern para, he has to communicate TCWG. Like this, a straight question might come. Of course, I'll show you in 260 that question. Getting it? Straight question. Under what standards communication with those charged with governance is required, especially relating to reporting? Getting it? So you need to write like this. Clear? That's it. In this possible questions also we understood. Next. Let's finish once joint audit and then I'll go to 600. So joint audit means appointment of 2 or more than 2 audit firms, or appointment of 2 or more than 2, one audit firm, one sole proprietary individual practicing. Nothing but there must be 2 different entities. Auditors must belong to 2 different entities. In such a case, we call it as what? Joint audit. They will have same scope of work. The scope of work is same. Like SBI is having 12 joint auditors. All of them have the same objective. They have to report on the financial statements of State Bank of India for so and so financial year. All of them have same scope, same power. Everything is exactly same. Why joint auditors were appointed is in order to reduce the work burden on the auditors. Getting it? And in order to improve the quality of the work. That is the main objective behind joint audit. Now, when joint auditors were appointed, they don't do each and every one. They don't repeat the same work. They divide the work. Getting it? Like suppose in SBI, the joint auditors might have divided the work based on items of assets and liabilities. Like some joint auditors might have focused on interest income and the assets. Another joint auditor would have focused on interest expenditure and liabilities. Getting it? Or income and expenditure. Some of them focus on interest income. Some of them focus on loans and advances. And remaining joint auditors focus on interest expenditure, and they also focus on borrowings, bank borrowings. Geographical areas. Some joint auditors might focus on head office and some corporate office wings were there. Some 5 head offices were there across. And some joint auditors, they focus on 5 controlling units. There will be something called controlling units and all in banks. So they'll focus on controlling units. geographic, I mean, sorry, some joint auditors focus on north zone, some joint auditors focus on south zone. Identified unit means some joint auditors focus on head office 1, head office 2, head office 3. Remaining joint auditors focus on head office 4, head office 5, head office 6. Identified units. Period of financials. One focus on quarter 1, quarter 3, another one focus on quarter 2, quarter 4. Able to understand? So on any manner, these are just a few guiding factors, few examples. On any manner, they can divide the work among joint auditors. Generally, they will draft a plan. You know, whenever people are doing joint audit, initially they will have a meeting. All joint auditors know they will have some meeting. You know, engagement partner from each joint audit firm. In case of SBI, from all the 12 audit firms, each partner will be there, right? One main partner who is the engagement partner for that SBI audit. Yes or no? Each engagement partner and key engagement team member, they all will be involved in planning the audit. So the moment they are all appointed as an auditor, they'll have a meeting first, or initial day meeting. So all 12 joint auditors, they will present. Their important team members also will present. So in a conference room, they'll discuss. So what is this SBI? What are the peculiarities involved in this? What areas of audit that we need to focus on? How many areas were involved? How many works were involved? And how many of our team members were involved? They discuss, they plan it. So all the joint auditors together should establish joint audit strategy. So first of all of them do risk assessment. All joint auditors shall assess. Each joint auditor shall assess risk of MMS and communicate to other joint auditor. So all the joint auditors do a risk assessment. They try to understand in their own way what is SPI, what are they doing, all that. And based upon that, they establish joint audit strategy, joint audit plan. Audit strategy is slightly different from audit plan. Audit strategy means control based audit strategy, substantive testing based audit strategy. What audit strategy you are following? Generally in a bank, we follow control based strategies. Getting it? Where we don't focus on actual transaction much. We focus on processes, we focus on policies, we focus on controls. Getting it? So that is the strategy. So auditors, all of them together have to decide which strategy we should follow. Should we follow compliance based audit? Should we follow substantive testing based audit? Getting it? In a normal entity where that much of information technology is not used, where the transactions are not tech driven, there we generally do audit by substantive testing approach. Means there we don't focus much on controls. We focus on actual transactions, actual balances much. Whereas in IT environment audit, we do audit on compliance approach. If processes are correctly going on, we assume the transactions are going properly. Because bank obviously is completely tech oriented, yes or no? If software is proper, if tech is working properly, we ensure that transactions are happening smoothly. And so first all of them do risk assessment. They all have to develop joint audit plan. Now here for joint audit plan, there is actually sub points. They'll ask you in exam. This was asked in CA final. Many times. All the joint auditors have to jointly develop a joint audit plan. What factors are considered while developing a joint audit plan? That question. So for this point, there are some sub points that are there. Getting it? In my main material, I have given that. In the main material, I have given. You see here. All the joint auditors should discuss and develop a joint audit plan. Specifically, division of areas are what? Common areas are what? What are the reporting objectives? Remember, reporting objective is different. Reporting requirement is different. Reporting requirement means audit report. What is the reporting requirement for us in audit report? That is reporting requirement. Reporting objectives means here communication, timely communication with the top, those charged with the governance. That is what the intention of reporting objectives here. And communicate significant factors identified with each joint auditor. Preliminary engagement activities. So while developing an audit plan, they have to consider preliminary engagement activity results, significant factors they identified and communicated by other joint auditors. What are the reporting objectives? What are the common areas? What are the divisible areas? Considering, keeping all this in mind, they need to develop a joint audit plan. What are preliminary engagement activities? 300 says 3 items are preliminary engagement activities. Acceptance and continuation of client relationship procedures, 220. Terms of engagement 210, relevant ethical requirements. In case of repetitive recurring audit, experience gained in the previous audits. All these 4 points will come under preliminary engagement activities. Getting it? It's actually CA into syllabus. So what are preliminary, you know, in CA final also this question is there. What are preliminary engagement activities? So under SA 300, the following comes under preliminary. So what are they? 220 audit procedures regarding acceptance and continuation of client relationship. 210 regarding establishing terms of engagement, relevant ethical requirements. You write these three enough. Getting it? Relevant ethical requirements including independence. These three procedures we will do that comes under preliminary engagement activity. Now, what are the procedures under 220 acceptance and continuation of client relationship? Inside that there are again some points. Getting it? What are the procedures under 210 SA 210 terms of engagement? There are some points. So that and all is not relevant. 220 anyhow we have in-depth discussion later. So there I will cover. Then, so here detailed question might be asked. Okay. Next. Finally, the joint auditor should discuss and document nature, timing and extent of procedures for what are the common areas and what are the specific areas. So now you know, not every area of audit is divisible. There are some works in the audit where the work cannot be divided. In respect of work that cannot be divided, all the joint auditors will have equal indivisible responsibility. Getting it? All the joint auditors will have equal and indivisible responsibility. You see, there are certain areas where there is a combined responsibility when the work is not divided, or where decision is taken by all the joint auditors and there is an evidence of documentation. There is an evidence for that. Or matters brought to the notice of all joint auditors. There is a mail sent to all the joint auditors regarding a fraud. None of them reacted. All of them are responsible to answer that. Or even for verifying disclosure requirements of financials. Remember, financial statements are ultimately signed by all 12 of them. We cannot divide 10 pages of notes, you verify, 10 pages of notes, he will verify, 10 pages of notes, he will verify. No, we cannot divide. Yes or no? Entire notes to account is interlinked with P&L and balance sheet. So, for verifying presentation and disclosure requirements in financial statements, all the joint auditors have equal responsibility. Whether the financial statements presentation and disclosure is as per applicable framework or not, is it as per a schedule, is it as per respective accounting standard followed or not, all of them are responsible. And we know that joint auditors together give an audit report, right? Audit report also has a reporting requirement, right? It has a particular format, it has a particular structure, making sure that the audit report matches with the law. Whose responsibility? All joint auditors, for ensuring that audit report complies with the relevant statute. Getting it? So where the work is not divided, where decision is taken by all, where matter is brought to notice of all the joint auditors for presentation and disclosure in financials and for audit report. For all these areas, combined responsibility. So finally, all the joint auditors know they issue a common engagement letter and they obtain common representation letter. So what is management representation letter? I will discuss in 580 standard. Okay. What is representation letter? I will discuss in 580. Finally, whatever the work allocation happened, right, between joint auditors, it should be documented. And the work allocation shall also be communicated to top management. So the work allocation, we will take a printouts of n+1. Getting it? Number of joint auditors 12 plus 1 for the management. So 12 joint auditors, each of them keeps one document with them. Getting it? So manual copy, if it is a manual, generally it's electronic copies. Big audits under electronic only happens. Getting it? So every one of them. So even for the management also, work allocation schedule should be given to the management. So tomorrow, if any investigation is going on, if they have any query on a particular area where they want to discuss with the auditor, they cannot call all the 12 fellows and then ask who did this. So if you give them the work, if you give them the plan, whatever you documented, for the management, it will be easy for them to locate the auditor, concerned auditor, and call them and ask. That's it. With this 299 is over. Clear? Next, 600. After I finish 600, then I'll go with 701, 570. Getting it? 600 also I'll finish it off because now you will understand. Because you remember SPA example? Yes or no? Yeah. Just 2 minutes. Yes. So we'll continue. SCA 600 using the work of other auditor. The standard, now if you look at the original standard also, The initial paragraph of the standard itself starts with this. Principal auditor would not be responsible in respect of work allocated to other auditors. The principal auditor should state clearly the division of responsibility, the extent to which the financial information of components audited by other auditor. What do you mean by extent? In SBI, I showed you 20 lakh crore worth of assets, 1,30,000 crore worth of revenue. That is what extent. Getting it? The extent to which the components, the financial information of the components is audited by other auditor. So the number of division, branches, subsidiaries, other companies audited by other auditors, and the financial information belonging to them. If you just mention 5,000 branches were audited by other auditor, people cannot understand, people cannot interpret the result. You need to clearly mention how much of the loans they are dealing with, how much of the interest income they are dealing with. That will give them a clear idea of interpretation. Able to understand? Even in bank audit also, you have a reporting requirement. In bank audit chapter, you will be getting it. Unaudited branches information should also be given. Unaudited branches information should also be given. But anyhow, when I come to bank audit, when I'm discussing there, I will locate you that unaudited branches. Right now, the disclosure requirement which I showed you is branches audited by other auditors. Now, there are three definitions here. One is principal auditor, other auditor, component. There are three definitions. Principal auditor means what? Principal auditor means the auditor with responsibility for reporting on financial information of entity. They use the word clearly, entity, when that information includes the information of one or more components audited by another auditor. Only when the discussion of other auditor comes, only the principal auditor discussion comes. Getting it? If there is no discussion about other auditor, there is no discussion about principal auditor. So they clearly, so cleverly they drafted. Principal auditor means the auditor appointed for the entity. Getting it? When the financial information of the entity includes financial information of components audited by other auditor. Now you see, other auditor is what? Other auditor is an auditor other than principal auditor with responsibility for reporting on financial information of a component, not entity. And this financial information is included in financial information audited by. So logically connected definitions. Now what is a component? You are using the word component and all. What is a component? Component means it may be a division, it may be a branch. These two are in the context of standalone financial statements. Or the component may be a subsidiary, joint venture, associated, or any other entity. This is in the context of consolidated financials. So for consolidated financials point of view, component means subsidiary entities, all that. From standalone financial statements point of view, component means branches or divisions. Whose financial information is included in financial information which is ultimately being audited by principal auditor. Now, acceptance as principal auditor, November 22 attempt or May 22 attempt, 4 marks question. Getting it? So first of all, will you accept as a principal auditor? See, this question and all generally do not require, but suppose SBI approached you. Sir, we are choosing joint auditors for our entire SBI. Sir, we were looking for you. We were looking for your firm to be appointed. Now, can you accept that appointment as a principal auditor of State Bank of India, having that much size, that much vast business? So, if you want to accept such a kind of assignment as a principal auditor, that too, you need to check certain points, right? What points you will consider? That's what the auditor should consider the following with respect while accepting the audit while accepting the audit as a principal auditor. 1. Materiality of the portion of information which you are auditing. So how much significant portion of the financial information that is there in your scope. So you will ask SBI. So out of total financial information, what is the scope of principal auditors? Scope is what? Principal auditors coverage is what? What is the knowledge regarding business of the components? So do you understand how the business is functioning, how the components are functioning, all that? And risk of MMS in the financials of the components audited by other auditors. What is the risk of the material misstatements of the financial data not audited by me, but are audited by other auditors. So what is the risk of the financial statements that are being audited by other auditor? And what is the significance of the financial information I am auditing? What is my knowledge of business? And performance of additional procedures as given in this standard, okay, regarding components audited by other auditors, resulting in principal auditor having significant participation. How far this entity allow me? So that this standard, no, there are some procedures which I have to do with other auditors. There are some instructions which I have to give with other auditors. How far the entity is allowing me all that? Getting it? How far entity is permitting me? The intention of this point is this only. Whatever procedures given in this standard, are you able to perform? If at all you can perform, you are having this authority to perform, then you can accept as a principal auditor. Getting it? So what is the knowledge of the business? What is the materiality of the financial statements? What is the risk of MMS of the components? What is the risk of MMS of the components audited by other auditors? And the performance of additional procedures as set out in this particular standard regarding work with other auditors. What are additional procedures? The moment you accept as a principal auditor, you have to do certain procedures. That too at planning stage. Getting it? You have to advise other auditor how his work is going to be used by you. You should tell other auditor, look, only when you complete the audit, that too you have to do audit as per so and so standards on auditing. This is the scope of audit. So don't think branch audit is different completely altogether. It is same like main audit only. We both are having same responsibility, same objective, everything is same. Just that I will give audit report on the entire entity. You will give audit report on the branch alone. At the end of the day, branch is also having a separate balance sheet, separate P&L. Overall entity is also having separate balance sheet, separate P&L. I should advise the other auditor how his audit report is going to be used by me. I will tell him, your audit report I will take as a base while forming the opinion on the overall financials. And I should also inform other auditor what are the areas that require special consideration. So SBI joint auditors, they inform branch auditors, look, when we are doing risk assessment in the SBI, there are some advances where one issue I'll tell you. Suppose as a principal auditor, we will tell other auditors, look, in SBI, there are so many fixed deposits that are available with so many. At every branch, some customers have opened fixed deposits. Now, out of these fixed deposits, there are so many fixed deposits are already matured. Well before 31st March, there are so many deposits which are matured, but customers did not claim the money. In such a case, until customer claim the money, we have to create a provision for interest. By default, bank system has a software which recognizes provision only up to maturity date. Once deposit is matured, bank will stop recognizing interest expenditure. Getting it? But until customer get the money, it is bank has to pay interest amount. This is the norm as per RBI. So look at your branches. What are the fixed deposits that are matured before 31st March but not yet claimed by customer? Getting it? Whether branch has created provision or not, this is something manually branch will create. Getting it? So like this, we should tell what are the areas that require special consideration. And we should also advise other auditors what are the reporting requirements under auditing and accounting standard. Look, this is a company, CARO is applicable. This is a bank, CARO is not applicable. So we should tell the branch auditors. So in your audit report, what points you will cover? Dear branch auditors, I have to report as a part of overall audit. Since bank is a listed entity, I have to report key audit matter. So at branch level, whatever key audit matters you felt, you report, so that I will use them for developing key audit matters when I'm reporting at overall financial statements level. Principal auditor might discuss with other auditor the audit procedures applied. So what procedures he should apply? What verification techniques he should apply? When he should do cash counting, physical cash counting. Let's all of us do on a same day physical cash counting. Like this we should. Or I may review a written summary of other audit procedures. Other auditors might have performed so many works, right? If possible, I can review their works. I can review how they are working. Getting it? That's a power given under SA 600. Now here there is a slight conflict with SQC. SQC says working papers are the property of the auditor. Yes or no? The auditor cannot share his documentation unless he wants to share, unless he is wishing to share. So here, if other auditors cooperate you, review how they worked on. Getting it? Their workings and all you can review. If other auditors are saying, sir, I'm a chartered accountant, I'm also just like you, so don't do all that banda. I know I did very well. You take my audit report. You can't do anything. Technically speaking, legally you can't do anything. If possible, principal auditor may visit the other auditor. If at all other auditor is not cooperating, okay, you don't give me working papers, I will come to branch directly because I'm having power. The main auditor has right to visit to every branch, every record he can access. If you don't give his working paper, okay, I'll go and do audit once again. Get it? I'll throw his away. I'll ignore his audit report. So generally, auditors will not decline like that. If principal auditor is wanting to review the working papers, branch auditors generally cooperate. Are you getting it? In a in true or false statement, in CA internal, there is a question. Principal auditor, can a principal auditor request working papers of other auditor? Like that, there is a question. True, he can request. Nothing wrong, right? But the answer is false. The answer which they gave, suggested answer, is false. What they mentioned is, no, the auditor, working papers or documentation of the auditors, working papers are ownership of the auditors. Working paper is completely owned by auditors. So he cannot share the working paper. If at all he want to share, at his discretion, he can give portions thereof or extracts therefrom to others. So principal auditor cannot demand working papers from other auditors. The question, whatever you mentioned, is request. In the answer, you're talking about demand. Yes or no? If I am there, if I genuinely read that question, I will say true. Yeah, he can request. However, he cannot demand. Getting it? Now, the institute says the answer, the marks are given for the reason, not for the word correct or incorrect. Getting the point? If at all really the person who is valuing the paper apply brain, no. When I write like this answer, for example, though I mentioned the answer correct, the principal auditor can request working papers of other auditors. However, he cannot demand. The other auditor, at his discretion, can share working papers with the principal auditor, but principal auditor cannot demand. I don't clear with the reason, but examiner, he looked at correct, whereas suggest answer says incorrect. He didn't even look at the reason. Strike off the answer. Able to understand? This is a risk we have. And those who are writing, these true or false statements, MCQs and all, somebody like us only suggests to the institute. So institute, they have a separate department where they collect MCQs and true or false statements developed by many years. Getting it? Now the fellow who designed this question, in his intention, demand, but he didn't convey that through the sentence. He used the word request, and in his reason, the incorrect option, the reason is correct only. But that is not matching with the valuation pattern, right? In valuation, they both do not match. Getting it? Student, no, when the student read that question, he feels that it is right only. And he will say it is correct and he'll give an accurate reason. But the point is, suggested answer says the word incorrect. And the valuationer, without even reading further answer, will strike off the answer. This is the risk we have. Very rare, extremely rare circumstances. That's it. And now you see, principal auditor can visit, right? Principal auditor can visit other auditor, right? Principal auditor can review their summary, right? Principal auditor can direct other auditor what procedures to be applied. He can advise other auditor what are the requirements. He can advise him what are the special focuses, what are the areas where special focus to be given. And he will advise other auditor how they should work together, how they should coordinate with each other. All this they have to, like principal auditor has to do. To what extent he will do, when he will do, in what manner he will do. It depends upon circumstances of the engagement. Principal auditor's knowledge of professional competence of other auditor. How far I know he is competent. If at all other auditor is also a chartered accountant having COP, in India that's what? Getting it? Branch auditors must also be a chartered accountant. So since I know he's a chartered accountant, he is also governed by same standard, same code of conduct like how I am governed. If that is the case, I will not do this much. I will not interact this much. Maybe at the initial starting at the planning stage, I will send him a formal note. Getting it? I will send a formal mail. That's it. I will not do all this. So the standard itself says, what is the extent of the above procedures? To what extent you perform these procedures? When you will perform these procedures? In what manner you will perform? All the above procedures. It depends upon circumstances. It depends upon other auditors' competence. They'll give you a straight question. What are principal auditors' procedures under ACA 600? They'll give you one story. Okay, you are appointed as an auditor of so-and-so entity, which has so many branches. The branches were audited by so-and-so auditors. Now, as a principal auditor, what are the principal audit procedures? So you just have to write this answer. So in this entire answer, you have to write no exception. Entire answer you have to write. Next. Now, principal auditor and other auditor, they must have a proper coordination, right? if principal auditor, when he is doing audit, when he find any information that affects component, he should inform the component auditor. Same way, component auditor also, when he finds certain issues which he feels it's important as a whole for the principal auditor, he should also communicate to principal auditor. Such a kind of arrangement principal auditor should make. Getting the point? And the other auditor, he must know the context in which his work is used by principal auditor, should coordinate with principal auditor, bringing to principal auditor's attention any findings requiring to be dealt at entity level, adhering to timetable for audit. The branch auditor should cooperate. Only after he branch audit report, I can finalize my main audit report. Yes or no? Ensure compliance with relevant requirements. Similarly, principal auditor should advise other auditors any matters that came to his attention where he thinks it will have important bearing on the other auditor. If necessary, when considered necessary, principal auditor may require other auditor to answer a questionnaire. So principal auditor will send to all the 5,700 branch auditors of SBI one questionnaire he will send. They have to fill the questionnaire, electronic questionnaire. In electronic form, they just have to yes, no, that's it. So I will ask certain questions, whether branch is recognizing provision on so and so. They just have to tick yes or no. Already they did audit, they gave audit report, everything is fine. As a formality, I want to know additionally, I want to get some additional documentation on communication with the branch auditor, so I can send a questionnaire. So this is coordination. What is this? Coordination between principal. Remember, some students know when this question is asked, they will write this answer. Getting it? Observe what is covered. Here you observe, they clearly spoke about coordination only. Yes or no? Other auditors should bring to principal auditor's attention any matter that he knows which are important for principal auditor. Same way, principal auditor should bring to the other auditor's attention any matter which is important for other auditor. And the principal auditor, if possible, can send a detailed questionnaire to other auditor where principal auditor require for discharging his duties. The other auditor should respond to such questionnaire on a timely basis. He should respond because it's a SA 600 requirement. In SA 600, there is a duty for the auditor to respond to questionnaire. Are you getting it? Finally, significant findings by other auditor. Suppose other auditors, they found some important big issues in branches where they felt like giving adverse opinion on the branch. Getting it? Now what? So first, principal auditor may discuss with other auditor and the management the audit findings that affect financial information of the component. First, they will discuss what is the issue that we found. Suppose this issue I told, fixed deposits up to maturity date only, bank is creating provision for interest expenditure. After maturity date, but up to 31st March reporting date. Getting it? For that period, any unclaimed fixed deposit is there from the customer. Bank is not creating a provision. This is a significant finding. Like this, so many deposits were there, so much of interest expenditure, bank has to recognize. I'll discuss with management what they're going to do this. If possible, I will also supplement the test. Branch auditors have identified this and showed me, right? I will also go and test whether that is correct or not. And I will document. So principal auditor should document ultimately components audited by other auditor. 5,723 components are audited by other auditor. Significance of the financial information to the entity as whole. What is the significance of the components information? 20 lakh crore worth of assets, 1.3 lakh crore worth of revenue. Names of the other auditors. Company, you ask the company, they'll give you the list of the other auditors, the branches which they're auditing. Conclusions reached that individual component is immaterial. Any component that you decided as immaterial, so that list of components you just decide. Generally, components which are not material, no audit will happen. No audit will happen. And ultimately, what procedures principal auditor performed, like sending them questionnaire, visiting branches, all that, please document. What is the decision that you have taken ultimately? So they'll ask you a question. What are the documentation requirements under SA 600? They'll ask you this question. Are you getting it? All of you. Finally, reporting requirements for principal auditor. Suppose if component auditor give adverse opinion, what principal auditor also should give? No. It depends upon significance of that component. Getting it? Suppose State Bank of India having 23,000 branches. Out of that, 5,700 branches were audited by other auditors. Out of this 5,700, some 20 branch auditors gave adverse opinion. Now, principal auditor also should give adverse opinion? No. These 20 branches, the total of the asset value of these branches to the total assets of the company, total of the revenue of these branches to the total of the revenue of the company, it is less than 1%. It is less than 1% means from a company point of view, it is immaterial. Therefore, I will ignore branch auditor's adverse opinion and I will straight away give unqualified opinion. I will not even talk about these branches. Why? They are immaterial. Are you getting the point? Suppose if the component auditor has given an adverse opinion on a particular component and that component information is material to the financial statements. If it is material to the financial statements as a whole, but not pervasive, principal auditor will give in his audit report qualified opinion. In the basis for qualified opinion, we will mention that so and so branch, which is a significant component audited by other auditor, has given adverse opinion, so and so report date, so and so. Able to understand? Suppose if component auditor, that adverse opinion is also material and also pervasive at financial statements as a whole, then the principal auditor also will give adverse opinion. In the basis for adverse opinion, we clearly mention the reason. So and so branch, which is having 25% of the total assets of the company, which is having 20% of the total revenue of the company, the branch auditor has given adverse opinion because of so and so mistake. He found so and so reason. We will describe that reason. Accordingly, we also gave adverse opinion. Clear? Suppose if at all company is restricting you like anything, or other auditors are not at all cooperating, you want to apply some procedures and other auditors are not at all, other auditors work you are unable to use. If it is material but not pervasive, qualified opinion. If it is material and pervasive, disclaimer, because when you are unable to use other auditors work, when you are not getting other auditors report, when you are not getting information about branches which are material and pervasive, absence of evidence, not obtained sufficient appropriate evidence, we should give which opinion? Disclaimer. Easy. SA 600, got clarity? Yes, there is a doubt. If other auditor have not cooperated with principal auditor, understand? Non-cooperation means very simple. Other auditor is not discharging his duty, where he is not giving his audit report. Primarily, other auditors are responsible to give audit report to the company, and company has to collect that audit report and hand over to the principal auditor. Management has to do this mediation. They have to be the communication interface between both of them. So if other auditor is not cooperating with principal auditor, ultimately, even though after interference with the management also, we ultimately concluded that other auditor is not giving his report properly, where principal auditor is not getting clarity that he want on the components so and so, and those components are material to the financials and are also pervasive to the financials. A material and pervasive components related financial information, principal auditor do not have evidence. If I do not have evidence, what will I do? Exactly. Now here, is it because of non-cooperation from management? Is it because non-cooperation from other auditor? That and all is irrelevant. I will give disclaimer of opinion primarily, and I'll mention reasons in basis for disclaimer. So and so things happen. This and all will not happen. Getting it? If other auditor do not cooperate, no. SA 600 violation, code of ethics. Yes or no? Schedule 2 violation. Is liable for penalty up to 5 lakh. Yes or no? Because as per schedule 2, every auditor has to comply with all the documents which are issued by institute. One document issued by institute is standards on auditing. SA 600 specifically says other auditor has to cooperate with the principal auditor. Clear? And in SA 705 also there is one point. I think I did not cover that, but once I'll cover now. In SA 705, you see, this is an important question, of course, 4 marks question. What are the consequences of inability to obtain sufficient appropriate evidence due to management imposed limitation after the auditor has accepted the engagement? Before accepting engagement, if management puts a limitation, SA 210, it says don't accept the audit. If after accepting the audit, if management is limiting you, they're not giving you information. Whatever information you're asking, they're not giving. They're just postponing it. They're delaying it intentionally. If there is a limitation like this on the auditor to get sufficient appropriate evidence, first auditor has to politely request. You see, request management to remove. Suppose if management is refusing to remove, the auditor shall obtain through alternative ways any evidence that is possible. Suppose if auditor is unable to obtain sufficient appropriate evidence even alternatively, and possible effect on the financial statements of undetected misstatement is going to be material but not pervasive, we will simply give audit report which is qualified. Suppose if it is material and pervasive, I will not give disclaimer straight away. First I will try to withdraw where permitted under law. Getting it? If withdrawal power is there, if a situation comes where I have to give disclaimer of opinion, I will not give disclaimer. First I will try to withdraw, because disclaimer of opinion means breaching the contract. My objective is what? To give an opinion. Disclaimer of opinion means what? I'm not giving opinion. So which is primarily a breach of contract. Getting it? So that's why whenever a situation arises where disclaimer of opinion arises, auditor will withdraw from the engagement where withdrawal is possible. What is meant by withdrawal is possible? LODR regulations, if you recollect, LODR regulations, you cannot resign just like that in case of listed entity. If you want to resign within 45 days from the end of the quarter, you must give review report for that quarter and then do a resignation. Suppose if you want to resign after 45 days from the end of the quarter, you have to give review report for the previous quarter and the current quarter and then resign. An auditor who has done review for 3 quarters should give review for 4th quarter, should complete the audit and give audit report and then resign. There is a formality. Getting it? So wherever practicable means that. Getting it? So in some cases, it is not possible for you to withdraw. Suppose if it is not possible, I have done 3 quarters review. Now I wanted to resign. I cannot resign. I have to do the audit. I have to give the opinion. Now I cannot resign. Management is also not giving me. So they are asking me to give audit report. LODR regulation also says to give audit report. Then I'll give disclaimer of opinion. If withdrawal from audit is not practicable or possible, disclaim the opinion on the financial statements. Got clarity? So this question they'll ask you. So what are the consequences of inability to obtain sufficient appropriate evidence? Yeah. That's it. Next. Joint audit common reporting requirement also I told, I think so. So no, all the joint auditors generally arrive common conclusion and give a common opinion through a single audit report. No joint auditor is, by the way, bound by majority. If there is a difference of opinion, disagreeing auditor can express his own opinion by a separate report. In such a case, each joint auditor shall refer about other joint auditors' report in their audit report under other matter paragraph. Now I hope you are clear. So we have completed SA 700, 705, 706 and 600, 299. 5 standards we have completed. Special considerations. This itself can be asked as a 4 marks question. What are the special considerations under joint audit? Straight question. In that case, main points, any 4 points you have to write. 4 marks question they'll ask. What are the special considerations under SA 299 for the joint auditors? They'll ask you a straight question like this. Clear? Next. Now once I'll go back to this audit report. Now, emphasis of matter per understood, right? Clearly. Now there is one important thing in SA 705 regarding that. Once we understood emphasis and other matter, I thought of bringing it. Clarification on emphasis of matter para in case of adverse opinion or disclaimer of opinion. Suppose if auditor has given adverse opinion or if auditor has expressed a disclaimer of opinion, in the same audit report, emphasis of matter paragraph cannot be used. The same audit report, emphasis of matter paragraph cannot be used. So what is that? See, what is adverse opinion? Saying that the entire above financial statements do not present true and fair. The aforesaid financials do not present true and fair. That is what adverse opinion. Disclaimer, I don't have opinion. We do not express opinion. Whereas emphasis of matter paragraph, you look at the presentation. At the last time what you were mentioning, our opinion is not modified. Indirectly, what are you saying? I'm having positive opinion on that. First of all, you said everything is bad. Below again in emphasis of matter paragraph, you are highlighting some important points and you are saying no objection on that. Is this contradicting your opinion? Within the same audit report, you are giving 2 contradictory opinions. To avoid that, 705 says, if an auditor who expresses an adverse opinion or disclaimer of opinion in a single audit report, in the same audit report, the same auditor shall not use emphasis of matter paragraph or other matter paragraph. Emphasis of matter paragraph is not permitted. You see, when auditor expresses an adverse opinion or disclaim on the financials as a whole, the auditor's report shall not include an unmodified opinion with respect to the same financial reporting framework on a single financial statement or one or more specific elements on the financial, because it would contradict the adverse opinion or a disclaimer of opinion on the financials. You know what? There is 805 standard. Again, we have audit of single financial statement, element or account or specific item of the financial statement. Audit of single financial statement, element, account or item of the financial statements. This is actual standard. Inside that, suppose I'm the auditor. I gave adverse opinion on the general purpose financial statements of the entity in the audit report. Suppose the same company called me to do a trade receivables audit. Audit of specific element. Getting it, 805 engagement. For that, I have to give a separate opinion, separate audit report. And on the trade receivables, can I give an unqualified opinion now? Yes. If the trade receivables is not a major item. If the trade receivables is not a major item, it is not a pervasive item, you found sufficient, you have got sufficient appropriate evidence, and the law do not prohibit this. Law prohibits to give an emphasis of matter paragraph in the same audit report where you give adverse opinion. Now, emphasis of matter paragraph means on that matter we are giving indirectly unqualified opinion. Yes or no? Will you agree? Emphasis of matter paragraph means on the same audit report, on that matter, whatever the matter we are emphasizing, indirectly we are giving unqualified opinion. Remember, emphasis of matter paragraph, we can highlight the matter which is appropriately presented or disclosed. So indirectly, by highlighting under emphasis of matter paragraph any particular matter, on that matter we are giving unqualified opinion. In the same audit report, adverse opinion, emphasis. Adverse opinion, unqualified opinion is not permitted. But I am giving a different audit report on trade receivables. It is a SA 805 engagement. Now can I give same financial information? Getting it? As a whole, the financial statements I give adverse opinion. But on a specific element, can I give an unqualified opinion? Yes, because they both are two different audit reports. This prohibition applies when it is a single audit report. In the same audit report, you cannot. Getting it? So, the auditor's report where you expressed adverse opinion shall not include an unmodified opinion on a single financial statement or one or more specific element, account or item. Same audit report shall not include. That's what the prohibition is. If at all audit report is a different audit report on a specific element, special audit, getting it? Can I give an unqualified opinion? Whereas the same trade receivable is there in the overall financials on which we already gave adverse opinion. Yes, you can give like that because both are two different audit reports. So this audit report for general purpose is adverse opinion. That's for some reason. Here, trade receivables audit is being asked by so and so person. Specific user requirement, we are doing this audit. For that person, the trade receivable is prepared by the company as per the specific person requirement. I can happily give unqualified opinion because it's a different audit report. And moreover, trade receivable is not a major item. This is an important question in 805. This is an important question in 805. When I come to 805, we'll once again sync with this. Able to understand? Here no. Here for the sake of convenience, in the same audit report word you can use. In the same audit report where you have given adverse opinion or disclaimer, you cannot use emphasis of matter. Whereas in a separate audit report on the single financial statement or specific element, can I give an unqualified opinion? Whereas adverse opinion is given on the complete set of the financial statements. On the complete set of financials, adverse opinion is given. Can I give an unqualified opinion on? Can I give an unqualified opinion on single financial statement or specific element or account? Yes, if at all you are giving a separate audit report. Provided that specific element is not a major item and it is not prohibited in law. In India, it is not prohibited. Single audit report, it is prohibited. With a separate audit report, that concept itself is not covered. So it is not prohibited. Clear? Have you recollected that 805 point? If you have not studied, don't worry, I'll bring there. That's it. Next, one more important point. You remember supplementary information point in SA 700. What is auditor's responsibility relating to supplementary information? If supplementary information is integral part of the financials, then our opinion shall also cover supplementary information. Suppose if supplementary information given by the company is not integral part of the financials, whether the supplementary information is presented in a way that clearly differentiates it from audited. You see, Tata Motors have given so much of supplementary information. In the beginning pages they have given. So they have given so much of supplementary information. You see, these are all supplementary information which talks about some financial data. You see, this is supplementary information. They are talking about some financial information. Getting it? But you see, this is completely different from the financials. Financial statements are somewhere in this page. They clearly mentioned. In the index, they clearly mentioned only this is financials. So supplementary information, suppose if at all, at a glance, the company at a glance, if at all they have given immediately next to standalone. Supplementary information they presented not clearly differentiated from standalone. They were like an extension to standalone financials. In that case, we have to even give our opinion on supplementary. Nothing but notes to accounts means supplementary also will be included. If supplementary information is included like this, which I feel integral part, my opinion should cover. If supplementary information is not an integral part of financials, I should see whether supplementary information clearly presented separately or not. Yes, here they have given so much of financial data. They have given separately. So they are not somewhere, they are not mixing up with the standalone or consolidated. So not an integral part. So my opinion need not cover supplementary information. Supplementary information can be considered as other information. Supplementary information can be considered as other information. Suppose in the annual report, in the notes to accounts, immediately after notes to accounts, key highlights of the company they are writing. Yes or no? That is confusing for the readers. Audit opinion consider these key highlights also because they are immediately next to financial statements, notes to accounts. They are immediately after notes to accounts page. So people will get confusion. So ask the company to clearly differentiate it. If they are not differentiating, in other information para, you clearly mention that we have not audited the key highlights of the company. Clear? So that's about supplementary information. This itself can be asked as a 4 marks question. What are the auditor's responsibilities relating to supplementary information presented along with the financial statements? So what are your responsibilities? 4 marks question possibility. Finally, so we have completed emphasis of matter para, other matter para. Getting it? I will also discuss other information para. So we'll take a break and get back. Okay, fine. So in the next session, I will discuss going concern, key audit matter, other information, CARO. With that, the chapter will be over. Getting it? So where we will be discussing almost 10 standards. So by the what standards that we have completed? 700, 705, 706, 299, 600. So remaining also I will come back. Remaining also I will cover in the next session. Okay, that's it. Yes, let's begin the next section of the audit report. That is other information para. Okay. So in audit report, opinion, basis for opinion, then material uncertainty related to going concern, and we have key audit matter, emphasis of matter paragraph, other matter paragraph. Then we will have this other information section, other information para. So what is this other information? You see the standard heading is auditor responsibility in relation to other information. What is first of all other information? Other information may be financial information or non-financial information, which is included in entity's annual report. In the annual report, whatever information is included, which may be financial or non-financial, it is other information except financial statements and auditor's report thereon. Except financial statements and audit report, entire information is called as what? Other information. So if you observe in the Tata Motors, if you see the index, except financial statements, what are they saying? Except financial statements and auditor's report. In this it is there. This is financial statements and auditor's report. Except this, whatever information that we are including in the annual report, we call it as what? Other information. So what is auditor's responsibility regarding other information? By the way, I have given a note specifically. Other matter paragraph is completely different from other information paragraph. Getting it? Now, what is an annual report? So they have given a definition. It's a document, combination of documents, typically on annual basis by top management or management in accordance with the law or regulation to provide owners about information on the operations, financial results, position as set out in financials. An annual report contains or accompanies auditor's report thereon, and it also includes entities development, future outlook, risk uncertainty, so much. You see Tata Motors, they are giving so many. Yes or no, at a glance about the report, company profile, our presence, value creation, product portfolio. So what happened in 2023 Auto Expo, what they disclosed, getting key performance highlights, chairman's message, so many other information they are talking. So annual report includes so much of data. This annual report has a structure as per SEBI. In SEBI guidelines, they have given structure for annual report. Getting it? So there are some minimum contents that are to be given in annual report that are minimum. In addition to that, if a company want to talk about anything else, they can talk about future also. So, what is auditor's responsibility in this standard? The auditor, the objective of this standard is very simple. The auditor has to identify whether inconsistency is there, whether any material inconsistency between other information and the financial statements. We are giving audit report on the financial statements. The financial statements has some numbers. So we said everything is true and fair. In other information, somewhere in the key highlights, financial highlights, company is showing some other different figure. Immediately when a reader looks at these both things, he will confuse which is correct. Of course, auditor said that balance sheet P&L is correct, but the same audit report, same financials are included in this document, and that contains some other information. Getting the point? So what I mean, say it creates some sort of confusion to the users. Getting it? You need to clearly tell the users, that readers, that we have not audited other information. Yes or no? Are we auditing any other information? We are not. We have audited only financial statements. We have not audited other information. We should clearly mention that to the users. By the way, we don't give opinion on other information. Our audit opinion do not cover other information, but we still read other information, right? Why are we reading other information? To whether there is any material inconsistency between other information and auditor's knowledge obtained in audit. First point, you have to understand, you have to obtain whether there is an inconsistency between other information and financial statements. 2, whether there is any inconsistency between other information and your knowledge of the business. When you read annual report, you got to know that company is launching a new product. You don't know that. All these days you are doing audit, you don't know anything. So what about this new product? Some research expenditure is incurred. How they capitalized? So now you will go through. By the way, when should we read this other information? After giving the audit report or before giving audit report? Obviously, before giving the audit report, we should read other information. Getting it? So, to whether other information is having any additional information, or is it inconsistent with the financial statements, or is it inconsistent with my understanding of the entity? So by reading other information, I will get to know some additional data. Getting it? Now suppose you got to know some additional information. How to respond when auditor identifies material inconsistency. Suppose other information is showing some different numbers than the financial statements. On a particular sales related information, financials are talking about some numbers, whereas other information is giving different numbers. How to respond to this and report accordingly as per the standard. The objective is how to respond. So you will generally like there is an inconsistency between other information and financial statements. Example, if there is an inconsistency or some information which I am not aware of, I got to know now additionally. First thing what I will do is I'll discuss with management. I'll discuss with the company that so and so other information contains so and so, which is conflicting with the balance sheet, which is conflicting with the P&L, and I will investigate further which is correct. Is the balance sheet P&L number which is correct or the other information which is correct? I will investigate further. Then I will take a conclusion. Suppose if other information is only correct, financial statements were only materially misstated, then I will do further investigation and discover what exactly the material misstatement. I will request management to rectify this material misstatement. If management do not rectify the material misstatement, I will give a modified opinion in the audit report. Suppose material inconsistency is there, like other information is not matching with financials. And when we investigate further, the financial statements numbers are absolutely right. The other information is only wrong. Now, which opinion I should give? Financials are right only, right? I should give unmodified opinion. But other information is inconsistent. And that is published along with the financial statements. In audit report, under other information section, we should mention this situation. That other information is materially misstated. We have not audited. The financial statements are showing true and fair view. That is what correct. Other information is wrongly presented. You need to mention that. Clear. Now, generally, if other information is materially misstated, you request the management to rectify. If management rectifies, happy. If not, you need to specifically mention that point in the other information paragraph. Like I'll show you Tata Motors, the audit report, what they mentioned in other information paragraph. Yeah, you see here, other information, other information, sometimes they will mention this side heading as information other than financial statements and audit report thereon. They will mention the side heading as information other than financial statements and audit report thereon. So that's how they mention. You see, who is responsible for the other information? Obviously, management. So they mention management and board are responsible for other information. It comprises company's annual report but does not include financials and audit report. Our opinion on standalone financials does not cover other information, and we do not express any form of assurance conclusion on other information. So we are directly telling to the people that, look, this audit report is part of annual report. I know annual report contains so much of other information. I'm not giving opinion. Not just that, I'm not giving any sort of assurance on the other information. So other information, whatever it contains, don't link with the audit. In connection with our audit, our responsibility is to read our information and consider whether the other information is materially inconsistent with the financials, or is it inconsistent with the knowledge obtained during the audit, or otherwise appears to be materially misstated. If at all, based on the work we performed, if we concluded that there was a material misstatement of other information, we are required to report that fact here. By the way, we have nothing to report in this regard. So we are mentioning to the shareholders in the audit report, in other information para, we are responsible to read. If other information is materially misstated, we have to report the fact in the audit report. Apart from that, we don't have any other duty. And by the way, here the other information is not inconsistent. So what the auditors have finally replied, we have nothing to report in this regard. What does it mean? Other information is matching with the financial statements. Wherever some financial numbers were used, it is matching with the financial statements. Are you clear? Now, look at this. Auditors' responsibility under this standard do not constitute an assurance engagement on other information. Do not impose an obligation to obtain assurance on other information. MCQ. Getting it? Under SA 720, auditor has to get an assurance on whether other information is free from material misstatement or not. True or false? It's false. Auditor need not get any assurance on other information. It is not the responsibility of auditor. By the way, this standard is not dealing with announcements of financial information like quarter results and all. Securities offering document like prospectus and all. This is standard is not regarding prospectus. Of course, the standard clearly says annual report. The standard clearly defines other information. Word is used in the context of annual report. Now, when do we say misstatement in other information exists? A misstatement of other information exists and the other information is incorrectly stated or misleading. Either it is omitting or it is misleading the information necessary for proper understanding of a particular matter. Audit procedure for other information. Audit procedure for other information. What auditor has to do? The auditor shall obtain other information. First, get the other information. Ask the company before you publish annual report, first give it to me. Getting it? Discuss with the management what comprises annual report. What are the documents that are there in annual report? I'll ask startup owners. They showed me an entire index itself. Get final version of other information prior to the date of auditor's report, MCQ. Getting it? Auditor should get other information on or before audit report date. False. It must be prior to the date of audit report, not even on the date of audit report. Suppose other information is not available prior to the audit report date. Suppose you have conducted audit much more early. Sir, we are planning AGM in July, sir, for which we prepare other information annual report in June. Now it is May month, you are giving audit report. By this time, other information is not yet ready. If so, get a representation that final version of documents will be provided to the auditor when available prior to issuance by the entity. Before you publish to the public, I know, I completed audit much more before in May month. You are giving and you are preparing annual report in June. Once you prepare, before publishing it, give it to me. Give me a written declaration that you will give it to me. Are you getting it? Only after getting the written representation, I will give audit report. Are you getting it? If other information is not available prior to the date of audit report. Getting it? Verify the other information. Now, so once you get the other information, what auditors shall do? So they'll ask you a question. What write about audit procedure for other information? In that first point, the auditor shall obtain other information by discussing with the management what documents constitute other information that are included in annual report. And the auditor must obtain the final version of other information prior to the date of audit report. After obtaining, what you will do? You will read the other information. Why are you reading? You will identify, is there anything conflict? Okay, material inconsistency between other information and financial statements, or is there any material inconsistency between other information and your knowledge obtained during the audit? You know something about the company as of now because you have completed the audit, you are about to give audit report, but after reading other information, you might get to know some additional facts. Then please be alert for indications that other information is not related to financials or auditor's knowledge appears to be materially misstated. Be alert wherever other information is materially misstated. Just be cautious when you are reading. Be careful, be skeptical. You may find other information which is conflicting with financial statements, conflicting with your knowledge of business. Suppose if there is a material inconsistency, suppose inconsistency is there, like what other information sales figure it shows, what financial statements sales figure it shows, both are not matching. What auditor has to do? Auditor has to discuss the matter with management and conclude whether a material misstatement of other information exists or a material misstatement in financial itself exists. When you find a difference, no, either that information is wrong or the balance sheet P&L number is wrong. Decide that. Suppose if material misstatement is in other information, not in financial statements, agree with the management for correction. If management agree with the correction, auditor see that correction has been made. Suppose if management is refusing, communicate with those charged with top management, audit committee. Communicate with audit committee that other information is materially misstated. We have to mention that in other information section of our audit report if it is materially misstated. Suppose before the date of audit report, other information is not corrected. Getting it? After even communicating with the top management. Communicate top management how you are going to address the same in the audit report. If at all management is not correcting other information prior to the date of audit report, you found other information is wrong and management is not correcting it, and you need to tell them, okay, if you don't correct, I will mention in the audit report like this. You need to inform that fact to the management. Withdraw from the engagement where it is permitted. If at all it is so severe, so intimidating, to withdraw. Suppose after the date of audit report, we identified misstatement in other information. Example, I completed audit in May month and I obtained written representation that other information before publishing will be given to my review. And on that assumption, I gave an audit report with other information para, nothing has come to our notice. But after June, in the June month, when other information is published, of course, it is not issued to the public. Now I got to know that other information is materially misstated. What auditor has to do? If the other information is corrected, perform procedures necessary. If management corrected it, fine. Suppose if other information is not corrected, after communicating with top management, take appropriate action considering legal rights to seek uncorrected misstatements are brought to the attention of the users to whom audit report is prepared. Here I have given follow 560 procedure. Suppose after the date of audit report, you got to know that other information is materially misstated and management is not rectifying. You have a right to attend general meeting. You can, in the general meeting, you can talk about this other information that it is materially misstated. As on the date when we have given the audit report, this other information is not ready. So make people aware of this other information material misstatement. Clear? Suppose if it is material misstatement in financial statements, ask management to rectify. If auditor concludes that material misstatement in financials, the auditor shall respond appropriately. How he will respond generally? We will ask the company to rectify the other financial statements so that they are free from MMS. If the company is not rectifying the financials, we will give modified opinion. So that's it. If MMS in other information, unmodified opinion, and the same thing we will report in other information para. Suppose if material misstatement is in financial statements, we will give modified opinion and reasons in modified opinion paragraph of the report. Clear? Easy or not? So in this, the question which is important is, they might ask you if a material misstatement is identified in other information after the date of auditor's report, how auditors should respond. This itself can be asked as a 4 marks question. Getting it? Or they may ask you how auditors shall respond under SA 720 if a material misstatement is identified in other information. Then you should respond. You should write 2 parts. Before date of audit report, if you identify how do you respond? After the date of audit report, if you identify, how do you respond? This is one category of question. Another, write audit procedure on other information. Just these points if you write enough. These points if you write. These 2 points if you write, that's enough. Getting it? Complete answer. Nothing but complete points you have to write. And annual report, other information, objective of the standard. This is important for 4 marks straight question. And definitions are important for MCQs. Confident? That's it. 720 is over. So SA 570, going concern. In going concern, the kind of questions which were tested in past, I have given in question bank. When performing risk assessment procedure as required by 315, by looking at this line, student thinks it's a risk assessment chapter question. The auditor shall consider whether events or condition exist that may cast a significant doubt on entity's ability to continue as a going concern. Explain. Half the students don't understand what they're asking. Getting it? Because you read like these notes, which is a short notes. Getting it? So if you read from any short notes, short version, of course mine is completely somewhat at least cover 80%. Okay, in the market, no 30 pages bomb and all is there. Okay, that's it. Your result is bomb only. So cover audit in 100 pages. See, it is very simple. How to make material in 100 pages? Instead of using font 12 size, line indent 1.25, if we reduce the font size to 6 and line indent 1, obviously it will come exactly half, almost half size it will come, not even half, less than half size material will come. It's not number of pages that you should observe. It's the content, what they covered. Getting it? So that's a psychological feeling. Students know it's a psychological feeling, but be awake. Like consciously look at what you're reading, where you're reading. Is that a proper source or not? In exam, no, they'll ask you this question. This was asked, in fact. This was asked, you know, this is completely, I have compiled from past question banks. Getting it? Past examination questions. Another question they'll ask is, this question, like you don't even imagine that this question exists. Management's assessments of ability to continue as a going concern involves making judgment about inherently uncertain future outcomes of events or conditions. What are the relevant factors to the judgment? What student writes answers, you know, for this? As part of essay 570, if at all he remember number, he'll mention it. Mostly he'll remember. Essay 570 going concern, auditor has to evaluate whether company going concern ability is proper or not. Okay. For that, auditor has to check whether management has prepared a cash flow forecast. Whatever he know, he'll write. Getting it? And look at the answer what they have given. What they have given. The degree of uncertainty associated with outcome of an event increases significantly. Most financial reporting frameworks require management to make an explicit assessment. The size and complexity of the entity, nature and condition of the business, degree to which it is affected by external factors. Any judgment about future is based on information available at the time when it is made. This is the suggested answer, and your answer looks how you saw. That's the problem. Getting it? See, the point is, student have never read this. If at all he read this, at least there's a difference. He never read this content, because in the notes which he is following, it is not covered. Most of the materials that are there in the market, I'm challenging, they are not covering 100%. They cover 100% all the standards. 35 standards, 35 list you will find. You will not find inside content. Getting it? What is important is inside content. Observation is very important. Fine, I'll cover these two now along with the going concern standard. So 570, what auditor has to check? Very simple. A company has specifically mentioned in the notes to accounts that the financial statements are prepared on going concern basis. The financial statements are prepared on going concern basis. Auditor has to verify whether the financial statements are true and fair or not. So management used going concern basis, right? Whether it is fair or not, we should check. Fair or not means what? Then management use going concern assumption. Simple example. See, fixed assets we are showing at historical cost only because we don't want to sell them. If at all you want to sell them, if a fixed asset you want to sell them, they will not fetch that much value. Ford Motors, best example. They have invested 10,000 crore, 12,000 crore approximately in the plant, and they are selling it for 700 crore now. Getting it? Somewhere around 500 to 700 crore. The book value is somewhere around 5,000 crore. Book value means balance sheet value. The fixed assets value is showing 5,000 crore, but if you put it for sale in the open market, it will not even fetch 500 crore. Plant and machinery and all, who will buy? Will you buy and keep in your home? No point, right? Because plant and machinery and all customized. So they are not useful for general public like you and me. They are not general products. So they are customized. Only in one way they can sell it, piecemeal distribution. Getting it? They have to sell it in bits and nuts. There is no, the only in way kgs method they have to sell. So tons and quintals only they have to send. They have to send like an iron and steel, not as a plant and machinery. So that's the main disadvantage. But then why are we showing the plant and machinery at 5,000 crore? Because impairment is not there. When we are doing impairment loss and accounting standard, we do two things. Recoverable value. Recoverable value means by using this machinery, how much cash flow I can generate in future, and we discount it. And if it is more than carrying value, no impairment. If it is less than carrying value, there is an impairment. Indirectly, what are we saying is, look, I know if I sell the plant and machinery, it will not even fetch 10% of the book value. But remember, I don't have intention to sell. By using this plant and machinery, I will generate cash flows much more than the book value. On this assumption, we are showing it at historical cost. Now, you are promising that you will use this plant and machinery in the near future or in the future and generate so much of cash flow that is more than this. First of all, if you want to use in the future, you have to continue in the future, right? Can you continue your business or not is the main question. So can you continue? Is management has the ability to continue the business? Can the management use going concern assumption? It depends upon whether they can continue the business or not. You can continue the business only when you honor payments to everybody. Only when you are having proper cash flows. Only then you can honor. Only then you can continue in the business. Otherwise, you cannot continue in the business. Correct? So that's what auditor has to verify. Now, primarily, who has to do this assessment? Primarily, whether the entity has ability to continue the going concern, entity has to do this assessment. That is what here given. Risk assessment procedure related to going concern means what? The auditor shall determine whether management has already performed preliminary assessment of entity's ability to continue the business, to continue as a going concern. If such an assessment is performed, ask management, discuss with them whether management identified any events or conditions. Events or conditions means nothing but indicators, nothing but symptoms. Which symptoms? What symptoms? Those symptoms that may cast significant doubt on the entity's ability to continue as a going concern. If so, what management is having to address them? So, whether management has conducted a preliminary assessment related to going concern, ask. If so, what events they identified, ask them. Whether they are affecting going concern or not, ask them. If they are affecting, what management, how management is taking remedial actions to respond to them so that they will rectify that, so that going concern will not affect. Verify that. Suppose management has not performed the assessment, you should not sit and perform. Getting it? Ask why management have not performed going concern, on what basis, on what basis they have taken going concern assumption, on what basis they prepare financials on going concern assumption, ask them. So when management has not performed, auditor shall discuss with management basis for intention to use going concern basis. Getting it? Please be alert throughout the audit for identifying symptoms that may cast a significant doubt on going concern. Risk assessment procedure means this only. Risk assessment related to going concern means what? With respect to going concern, is there any risk? How do you check? First ask a company whether they did any risk assessment related to going concern. If so, what do they identify any symptoms? If so, how are they addressing them? Suppose if they did not do risk assessment, ask them on what basis you have chosen going concern, because you didn't do assess about future. Without assessing about future, how can you say you can continue in the future? Third point, auditor shall be remain alert throughout the audit to identify any events or conditions that may cast a significant doubt on the entity's ability to continue as a going concern. And SA 315 standard also requires, please revise your risk assessment and modify further procedures when events are identified. Getting it? That sentence meaning is events, nothing but when additional evidence is obtained during the course that affects auditor's assessment of risk, nothing but if in the course of risk assessment, if you identify any events or conditions, tell me, originally you didn't plan this in the audit. Now, do you have to revise your audit procedure or not? Do you have to revise your further planned audit procedure or not? That's what. Further planned procedures, revise, modify your risk assessment, modify your plan. If you identify, if you get any additional evidence that affect your risk assessment. Additional evidence that affect your risk assessment means what? Additional evidence, you got nothing but you found some events or conditions. What do you mean by events or conditions? Events or conditions? Nothing but indicators. Nothing but indicators. They are broadly classified into three categories. They are broadly classified into three categories. I think I have not given here. So these are broadly classified into indicators. Most of the students only study this in going concern, which has never been asked in exam. Correct? So indicators, just example for understanding sake only, this indicators is, they may ask you for 4 marks question also. What are financial indicators that cast significant doubt on entity's ability to continue the going concern? Give any 4 examples. Net liability position, fixed term borrowings are approaching maturity without any renewal, indication of withdrawal from creditors, negative operating cash flows, adverse key financial ratios, operating losses, discontinuance of dividends, inability to pay creditors on due date, inability to pay EMIs and all on time, that is nothing but inability to comply with loan agreements, change from COD, change from credit to COD, inability to get finance for new products. Many startups know they fail at the initial stage itself because they are not getting funding properly. Getting it? Operating. Management itself is wanting to close the business. Or loss of key management without replacement. Loss of major market. Labor difficulties. Shortage of supplies. Emergence of highly successful competitors. Suddenly a new competitor. When Geo has came into picture, Union or all that gone. Aircell is there, Aircell, which is very popular network. So Aircell, Union or all of that were gone in the market. They were merged either with some existing telecom or they were removed. They were completely closed down the business. And other indicators. Non-compliance with capital statutory norms. See, Paytm Bank, no, the license has been suddenly cancelled by RBI. Yes or no? Very strict, stringent, sudden action taken by RBI. Getting it? From so long months onwards, they are hinting Paytm, you have to meet, you have to comply with so and so norms, so and so things. But Paytm is continuously failing to comply. One day, suddenly, just exactly some 3-4 weeks ago, RBI has cancelled Paytm Bank's license directly. It was a very big, Paytm has worked so hard to construct the business to a large scale. Almost with every vendor, they found the speakers and all. Now, Paytm speakers and all were being removed now. Getting it? Remaining competitors and all have showed this to each and every vendor that 15 days, 20 days, Phone Pay, even various Bharat Pay, all their staff, field level staff, they went to each and every flower vendor, every vendor that are there on the road. They educated that Paytm Bank license was cancelled, take our speaker boxes. And they replaced it so fast. You see, so if you don't comply with law, your business will stop. So Paytm Bank license has been stopped and Paytm Bank is no more functioning. Of course, they want to now revive it. Don't know what happens. Pending legal or regulatory proceedings, if successful, result in claims that entity unlikely to discharge. So if any legal case, if company loses, they may have to close down the business in such a way. Changes in law or regulation or government policy adversely affect the entity. Uninsured or underinsured catastrophe. So if any flood or any catastrophe occurred, if at all you don't have proper insurance, your fixed assets and all were destroyed, you cannot continue the business. So many indicators. Auditor has to be alert throughout the audit whether any of these kinds of symptoms are there. If any of these symptoms are there, you have to do further audit procedure. You have to do further audit procedure. Suppose if you identify any events or conditions, so you need to do further audit procedure, like whether management's plans for future action. What are the management plans for future action? Whether entity has prepared a cash flow forecast. Forecast is generally prepared for short-term duration. Getting it? Projection is different. Forecast is different. Forecast is a best estimate assumption. Getting it? Whereas in projection, higher uncertainty. In projection, uncertainty is very high. We'll discuss in 3420. When we are discussing 3420 standard, there I'll talk about 3400, 3420. In both the cases, this context of discussion will come. So what is a projection? What is forecast? We'll discuss that. Evaluating reliability of underlying data. So they prepared cash flow forecast, right? On what basis they prepared? Underlying data. See whether whatever assumptions they have used, right? For that assumptions, do they have a proper proof? Check out and get a written representation that these plans are feasible. Whatever management is having no future plans, get a representation that these are feasible. Of course, you will check whether they're feasible or not. If you feel that, yeah, they appear genuinely feasible, you also get a representation from management that they are going to implement these plan of action for sure and they will be feasible. They will come out of this situation very soon. So get a representation. Now, there is a question like this. Suppose they'll give you a question. Suppose there is a significant delay in approval of the financial statements. Approval of the financial statements were delayed significantly by the management. What auditor has to respond? How auditor has to respond? Here they are linked with the going concern. If auditor believes that the delay could be related to events or conditions relating to going concern, the auditor shall perform above procedures necessary and consider what is their effect on your auditor's conclusion regarding existence of material uncertainty. So if any events are there, any events or conditions are identified, check out. If there is a significant delay in approval of financials, why are you not approving the financial statements? What happened? Is there any event or condition that casts significant doubt on going concern? If so, take a conclusion. Take a conclusion whether Material uncertainty exists. Material uncertainty exists. See, I'll tell you what is material uncertainty. Generally, if a material uncertainty exists, like best example, Air India, until 2022, they are having material uncertainty. Like what Air India is doing. You see here they have presented material uncertainty related to going concern. What they presented, you see, the company has incurred a loss of 7,700 crores, 77,000 million or 7,700 crores, same. Okay. During the year ended so and so year, the company current liability exceeds its current assets. Remember, current liabilities are exceeding current asset. Net working capital position is negative 54,000 crore. And the company has accumulated losses, means reserves and surplus negative 70,000 crore. Getting it? Now with the current liability exceeding current asset, with the accumulated loss negative, how the company is functioning? Can I function with minus money in my pocket? First of all, how minus money is possible? It's not possible. Getting it? Now how Air India is functioning? In spite of this, in spite of these events or condition which may cast a doubt on ability of the company to continue as a going concern, the management is of the opinion that going concern basis of accounting is still appropriate. In spite of this, they are feeling that it is appropriate. Why? In view of, because continued support from Government of India. Because Government of India, as and when we are having cash deficit, they are transferring money. Getting it? So we are surviving now. But just because we are honoring all our payments, that doesn't mean our company's operating revenues are very fine, perfect. We have a net current liability position. We have accumulated losses. We have net loss. Getting it? So in spite of this, we choose to go in concern because Government of India is supporting. Now, what is the uncertainty here? How long government supports? That's the uncertainty. Getting the point? Government might withdraw their support on one day. Government might withdraw their support on one particular day. That is material uncertainty. And the Air India has honestly disclosed in note number 53 this uncertain situation. They honestly disclosed this material uncertainty in notes to accounts clearly. Now, since it is honestly disclosed in notes to accounts, the material uncertainty, Air India is facing going concern issue. Material uncertainty is there relating to the company's ability to continue as a going concern. And that material uncertainty, in spite of this, they are choosing going concern. Why they have chosen going concern in spite of material uncertainty? All the reasons clearly they demonstrated in the notes to accounts. What you can do here? Can you give a qualified opinion here? They disclosed clearly everything. So we will give obviously unqualified opinion on the going concern matter. We will give which opinion? Unqualified opinion for sure. We will give on going concern unqualified. But don't you think this is an important point which they have disclosed in notes? We can highlight it in emphasis of matter para. But instead of emphasis of matter para, SA 570 says don't highlight. Under emphasis already so many points have highlighted. If you highlight going concern, which is a life and death situation of the company, it is not just a normal matter to highlight. It's a very significant matter to highlight. Put a dedicated para. Put a dedicated para. What is the side heading of the para? Material uncertainty related to going concern. Put that side heading and highlight here. This is also an emphasis para only. This is also a type of emphasis only. Are we emphasizing or not here? We are just emphasizing. So here also auditor is emphasizing only, but not under emphasis of matter para, but a dedicated para for going concern. If you want to highlight a going concern matter that is appropriately presented or disclosed in financial statements, under which section of the audit report you can highlight? Under material uncertainty related to going concern para, you can highlight. Understand? By the way, is there any material misstatement of the going concern presentation by Air India? No material misstatement. They honestly disclosed everything. Then why are you highlighting? I'm just highlighting. I'm not objecting anything. Because this is an important point, I'm just highlighting. I still gave unmodified opinion on Air India. You see, Air India auditors have given qualified opinion, but the basis for qualified opinion, they didn't talk about going concern. So, with respect to going concern material uncertainty, our opinion is still unqualified only. So on going concern, what opinion we have expressed is unqualified. Qualified opinion we gave on the overall financials related to some different issues, not related to going concern. So on going concern issue, we still gave unqualified opinion. We are just highlighting. Suppose if Air India is not disclosing this properly in the note number 53, you went and read the note number 53. It is not clearly demonstrating what happened exactly. You felt that the note number 53 is slightly misleading. What you have to do? You have to issue a modified opinion because financial statements are presenting something misleading. The disclosure is not proper. So what you have to do? You have to give a modified opinion. Depending upon the severity, either qualified or adverse opinion, and reason for that you will mention in basis for qualified, basis for adverse. Now tell me, will material uncertainty section comes in this scenario? No. Material uncertainty related to going concern section comes in the audit report only when the going concern is properly presented in the notes. If going concern uncertainty is not properly presented in the notes, we will not talk about in the material uncertainty. We will straight away modify the opinion. Understood or not? Here there is a doubt which is asked by one student. Suppose we give adverse opinion because of some inventory materially misstated and it is pervasive. For example, we give an adverse opinion, but remaining items, remaining current asset or remaining fixed asset, we wanted to use emphasis of matter paragraph. Can we use in the single audit report? No, prohibited. In the same audit report, as a whole on the complete set of financial statements, of course, the reason why you are giving adverse opinion is because of one element, but that substantial portion. That one element is substantial portion. That one element changes your entire perception. Getting it on the company. So that one element itself, substantial portion, it is affecting substantial portion of the financial statements. It is like a marriage. Yes or no? In the groom or bride family, you don't like one person, close family member. So still you don't marry, right? Arranged marriage I'm talking about. Getting it? Yes or no? So something like that. So if in the financial statements as a whole, you gave an adverse opinion, that too adverse opinion you get because of one particular issue only, but that's a substantial issue. In the same audit report, don't talk about anything else positively. Getting it? That's what the answer is. Getting it? Now, when we are giving qualified opinion or adverse opinion or whatever, when we are finding mistakes, how to interpret the mistakes? This one small simple discussion. Suppose current assets, they are materially misstated by 10 crore, overstated. Some trade receivables were understated by minus 10 crore. Set off, balance sheet total is still right only. So we'll give which opinion? Unqualified opinion, huh? No. What is the total misstatement value? 20 crore. Misstatement will not have a symbol. Getting it? So total mistake is 10. So both the fact that they both are setting off with each other. Remember, we are not giving opinion on the balance sheet total value. Getting it? Balance sheet total is irrelevant. Even in exam, in most of the exams, even if you do not put balance sheet total, they'll not worry. Getting it? If the amounts are right, you will get marks. So we are concerned about what exactly the amounts. Getting it? The balance sheet liability values and assets values, not the total. We are not giving opinion on the balance sheet total value. Total is just a byproduct of the assets and liabilities. So total is not a decision making factor. Are you getting the point? Now suppose we found mistakes like this. Now current liability is some 5 crore. Now what is the aggregate mistake? 25 crore. Is it material? We will have to check out. Yes, material, but not pervasive. Then I'll give qualified opinion. And why I gave qualified opinion? Because I found these three mistakes put together aggregate concluded me that they are material but not pervasive. So these three mistakes I will talk in the basis for opinion paragraph, basis for qualified opinion section. Suppose after these three mistakes I felt that it is material plus pervasive, I will give adverse opinion. In basis for adverse opinion, I will mention that these mistakes I found. Whatever that I can demonstrate, I will demonstrate. Next. So now auditor has to, suppose you found some material event or material condition, some events or condition that cast a significant doubt on going concern. Auditor has to check whether management plan exists. Suppose if there is a management plan, management has a future plan, solid plan is there to overcome the situation. Adequately disclosed the principal events or conditions that may cast a significant doubt, and management plans to deal with these events or not. Auditor has to check. Auditor has to check whether management is adequately disclosing what are the situations that they are going through, which is affecting going concern, and what is their plan of action to deal with these events, disclosed or not, check out. Suppose no, if management is not having any plans to mitigate, disclose clearly that there is a material uncertainty related to events that may cast a significant doubt on the entity's ability to going concern, and that it may be, therefore, the entity may be unable to realize its assets and discharge its liabilities in ordinary course of business. So in ordinary course of business, we cannot get these assets and liabilities values exactly whatever we shown in the balance sheet. Disclose that. If management do not have a proper solid plan of action, disclose that they do not have a proper plan of action. Because of this, company may have to cease operations. In IFRS audit report, it is there. In 1718, there is a company called ILFS. In their audit report, this disclosure they have given. Now, Air India comes under category A. ILFS comes under category B. In Air India, no, they are saying Government of India is supporting. We are having a plan of action. We are reviving. We are looking for alternatives. All that they presented. Whereas in ILFS, they clearly mentioned that the company is facing a severe financial crisis. Already everything is negative. We can come out of this situation if we borrow additional funds. Right now, Vodafone is also saying the same. Vodafone Idea, you want to go for external, further public offer. They want to go for funding. So to expand into 4G and 5G spectrum. Getting it? Now, reporting. If going concern assumption is appropriate, but material uncertainty exists. Already told you. Financial statements adequately disclose the fact. The properly disclosing. Which opinion you will give? Unqualified. And you will give unqualified opinion, and you will draw in a separate section. You will highlight. Yes or no? Draw the attention to the specific note point which is presented or disclosed adequately by the management regarding material uncertainty. Suppose if the financials are not disclosing the fact adequately, then auditor will give a qualified opinion or adverse opinion, and reason he will mention in basis for qualified or basis for adverse. Suppose if going concern assumption is inappropriate, you felt company is prohibited to use going concern. They're already closing down the business. Already they stopped all the operations. Factories and all stopped. Employees are all left. Getting it? Still the company is preparing financial statements on going concern. Adverse opinion. Financial statements are prepared using going concern assumption in spite the business is completely halted. Getting it? You should give which opinion? Adverse opinion. Are you clear? All of you? Now there is one more question which is important on going concern. Say this question. Management's assessment of entity's ability involves making judgments about inherently uncertain future outcomes. Yes or no? Future outcomes are uncertain, right? Can we make it certain? Obviously, about future, we cannot certainly make any judgments. It is only uncertain. That is something inherent. Yes or no? The future is always uncertain. It is inherent limitation. Yes or no? What are the relevant factors to that judgment? So, management is taking a judgment about future plan of actions, all that, which are inherently uncertain. Getting the point? So, what points you will verify? The following factors are relevant. What is the degree of uncertainty associated with the outcome of an event or condition increases significantly the further into future of an event or condition or outcome that occurs. Nothing but if the degree of uncertainty is very high, if the degree of uncertainty with the outcome increases significantly the further into the future of the events or conditions or the outcome that occurs. Nothing but see, like suppose if Air India is saying next year we are buying so many planes, okay, and government is also funding us. We are trying, we will within next 2 years we will dominate Indigo Airlines and then become the #1 airlines in India. That is what their future plan of action. That is highly uncertain. The degree of uncertainty for that management future plan is highly uncertain. Getting it? For that reason, most financial reporting framework requires an explicit assessment, specify the period for which management is required to take into account all the information. See, you know, going concern for how many months we should assess. By the way, future means what? Minimum 12 months. Minimum what? 12 months. Period of assessment of going concern is 12 months. I will show you that. What is the period for which going concern has to be assessed? If the management assessment about going concern is less than 12 months, then auditor shall request the management to increase it to at least 12 months. Suppose, no, in some cases, extremely rare cases, going concern assessment for more than 12 months is also justified. In such a case, management must do assessment for that extended period. In some entities, no, we should do going concern assessment for 24 months. In that case, you should do 24 months. if management is unwilling to make the assessment at all, or they assessed for 6 months, they are not willing to extend it to 12 months. Auditors shall consider the implications in the audit report. We either give qualified opinion or disclaimer of opinion, because management is not assessing about going concern. Without assessing, they are choosing going concern. Getting it? So we either give a qualified opinion or disclaimer, because regarding future, there is no information available because management did not do that assessment. That's it. So about judgments, no, here they have given, right? You see here. So what points you will consider? What factors you will consider? One, degree of uncertainty associated with outcome of event or condition. Up to that 1 point. The next later part you can ignore. This first point. The degree of uncertainty associated with the outcome of an event or condition. Getting it? The size and complexity of entity. That is another point. Nature and condition of business. That is another point. This is second point. This is third point. Degree to which it is affected by external factors. Fourth point. Getting it? So that is what I have given in notes here. So discuss with the management their preliminary assessment of going concern, like what is the nature and condition of the business, what is the effect of external events or conditions, what is the operational forecast, any significant event or transactions that are occurred during the year. All these points we will check. So in order to decide whether management judgment is proper or not. How management judge about going concern? Because going concern is about future. Already events or conditions are there that cast a significant doubt on entity's ability to continue as a going concern. So some symptoms are there, some indicators were there, material uncertainty is clearly visible. How management has chosen this assumption in spite of this? Look at the management judgment. They made so many assumptions about the future. What is the assumption? How far this assumption is uncertain? Degree of uncertainty involved. Able to understand? In SA 540, to have this material uncertainty. I mean, in 540, estimation uncertainty, there is a word. Yes or no? Estimation uncertainty. What points auditor has to check relating to estimation uncertainty? We'll cover that later. Okay, that and this are slightly interlinked. Clear? So that's it. I think these are the questions which you need to for sure you should not miss. These two questions you should not miss at all. Getting it? So in question bank it is given, but if you are following ISA material, it is there in the ISA material as it is in the proper discussion. It is there. So with this 570 is completed. Now you understood in 570 when in audit report exactly that side heading comes in the audit report. That's it. So with that 570 is also over. I spoke about all possibilities in 570. Getting it? Any question they can ask. So they'll ask you, what are the audit procedures when events or conditions are identified? This itself one question they'll ask, right question. You have to write 4 points. Okay. And write about adequacy of disclosures in the financial statements when events or conditions have been identified. So whether financial statements are adequately disclosing or not, what you will check. So the auditor shall verify whether financial statements adequately disclose the events or conditions that may cast a significant doubt on going concern and management plans to deal with them. Suppose if management has no plans to mitigate, if there is no future plan of action, but event or condition is there, as of now management do not have any clarity on how to resolve the situation. In that case, financial statements shall clearly disclose that material uncertainty shall be clearly disclosed, and company shall also disclose that it may be unable to realize its liabilities. I mean, it's unable to realize its assets and discharge its liabilities in normal course of business. They should clearly mention that. This is there in ILFS audit report. You can just download ILFS 1718 audit report. That's the last year audit report. I mean, that's the last year for the ILFS financial statements. So in that they clearly mention that company cannot realize its assets and liabilities in ordinary course, means NRVs. The company will realize assets and liabilities at NRVs. That's it. So with this 570 is also over. Next will begin 701 key audit matter. After that I will discuss this one 610 and 620. So let's begin the next one, that is key audit matter. So the heading is communicating key audit matters in the independent auditor's report. Straight example I will show you first. Yeah, let me take an easiest example. In Air India audit report, they have presented one key audit matter. Let's look at what they have presented. So you see how they are presenting key audit matter? Two boxes. One, what is the key audit matter? And principal audit procedures performed. Like what auditor has performed on the same. What is key audit matter? Important audit matter in the current period audit. So when you're doing the audit of the financial year 22-23 or 21-22, whatever year, what is the important audit matter? There is a difference between, this is nothing but significant matter, but there is a difference between significant matter and significant risk. Significant risk is different altogether. Getting it? So auditor felt this is an important issue that while he is conducting the audit. So what he is describing, the management uses estimates to assess useful life of PPE, right to use assets, nothing but lease properties, investment properties and intangibles, including the application of component accounting, recognition of early retirement from use, etc., which have a significant impact on the accounts. The company also assess whether an impairment indication exists and perform an impairment test in respect of PPA investment, all that, which involves management judgments of various factors, including future growth rate, all that. So, okay. So, this auditor has considered as a key audit matter. This auditor has considered as a key audit matter. So, what auditor has verified with respect to this useful life? So, here they are talking about two issues. One, useful life and impairment. What he is saying is useful life estimation involves significant judgments. Impairment estimates involves estimations about future growth rate, all that, which is also a judgment. What auditor has verified? We have reviewed the judgments and methodology applied by management, including the nature of cost capitalized, NRV, useful life of assets, and we verified this considering the rates given under Schedule 2 depreciation rate. So what are the depreciation rates given under the Companies Act? What rate the company have chosen? What useful life company has chosen? All that the auditors have reviewed. That is what we do, right? When we are doing depreciation audit, what we verify? We verify at what rate the depreciation, what method they have followed, whether that method is suitable or not. Whether that method is suitable or not. That's what we verify. Correct? Further, we have reviewed company's impairment process and workings they did. Whatever workings they did for impairment, future cash flow, discounted cash flow workings, all that. We have reviewed adequacy of disclosures relating to impairment in the non-standalone financials. So whatever assets related, impairment related disclosures also they verify. Try to figure out what they are communicating here in the audit report. They are communicating whatever according to them felt as important audit issue and how they did the audit on them. This is what they are presenting. Are they highlighting any important issue in the financial statements? Are they highlighting any matter in the financial statements that are presented or disclosed in financials? No, they are not highlighting anything. Are they talking about audit report, audit responsibility, audit process? Actually, they're talking about audit process. How they conducted the audit, they're talking about. Are they talking about any going concern issue? Are they giving any opinion on this, by the way, separately? Key audit matter is a matter in the professional judgment of the auditor or of most significant while performing the audit of financial statements of current period. In the current period, when he is performing the audit, whatever matter that he felt important, so that he identified as a key audit matter, he is just demonstrating how we do audit. He just want to give examples to shareholders. Like they will have a doubt, right? How auditor will be conducting audit? Tata Motors, 3.6 lakh crore sales is there. How auditor would have audited this? They'll be having some doubts on audit procedures. Through Key Audit Matters section, we are selecting some important issue, and that important issue, how we resolved in audit, how we verified that in audit. We are just giving it as an example. So any shareholder, by reading these 3-4 examples of how I do audit, will understand how I do my audit procedures. Because he only know that I do audit, but how I do audit, what I will verify on a particular issue, on a particular situation, what points I will verify, he is not aware of. So I am taking one particular issue and explaining him what are all the things I verified briefly. I'm not explaining in-depth audit procedure. I'm just briefly explaining. Tell me, technically speaking, is this useful to anybody? Not to anybody. Even for market analyst also, for nobody it is useful. In audit, no, for you important matters are different. For another auditor, important matters are different. Key audit matter selection is judgmental. Yes or no? So typically, key audit matters discussion itself is typically waste in audit report. Honestly speaking, it's no use. For whom it is useful? You're reading this, how it is useful in your economic decision making. Suppose in emphasis of matter paragraph, you are highlighting some important points that are there in the notes to accounts. Some contingent liabilities, some non-adjusting events, some company future plans and all they spoke in notes to accounts. You are highlighting that, which is good for me. Other matter paragraph, you are talking about where you are responsible, where you are not responsible, all that you are talking about. Fine, it is useful to me. Opinion section, you are giving your opinion on the financials, whether they are right or wrong. And if something is went wrong, you are giving in basis for qualified opinion what went wrong. That is useful to me. Material uncertainty related to going concern, you are highlighting and alerting me that be careful. That's useful to me. Key audit matter, why do I bother? Getting it? You want to buy the AC, you just inquire whether it's a good AC or not. How they manufactured inside. You want to look into the manufacturing process. Before you buy AC, do you look into manufacturing process? Why it is bothering you? Too much of overaction. This is getting it. So to make the audit report much more informative, they are giving all this information. So you see here, purpose of key audit matter. This is a straight question you will get. What is the purpose of communicating key audit matter? What is a key audit matter and what is the purpose? Purpose is to enhance communicative value of auditor's report by providing greater transparency about the audit. Who wants transparency about audit? Getting it? Hardly 1%, not even 0.01% of the readers of the financial statements can understand what is a key audit matter. Remaining people and think that, hey, what auditor is talking something, some issues going on. Yes or no? He's highlighting some key audit matter. It's an important issue. Something is going on in the company. People will misinterpret. It provides additional information to the users of financials for understanding the entity and areas of significant matters in the professional judgment of the auditor. According to auditor, what are all the important areas in the company? People will get to know. Remember, key audit matter is not a substitute for disclosure in financials. It is not a substitute for modified opinion, and it is even not a separate opinion, and is not a substitute for reporting in accordance with 570 when material uncertainty exists. Key audit matter, then what is it? Just what is important audit issue and how I audited, just to demonstrate my skill set. That's it. Correct? Now, key audit matter is compulsory for the following listed entities. It is compulsory, or if there is a requirement in law that you have to communicate a key audit matter, then it is compulsory. In India, it is not there. Or if under circumstances when auditor decided to communicate, suppose if auditor himself decided voluntarily to communicate key audit, then he can communicate. The applicability of key audit matter. Now, key audit matter will not, you should not talk about key audit matter when you disclaim your opinion on the financial. See, you gave disclaimer of opinion because substantial portion of the financial statements you did not get evidence. Substantial portion of the financials you have not audited. When you have not audited substantial, where is the question of important audit matter? You didn't audit substantial portion. That's why you are ending up giving disclaimer of opinion. So you are ending up giving disclaimer because you haven't audited. Where is the question of important audit matter? Because you didn't audit, first of all. So SCA 705 prohibits auditor from communicating key audit matter when auditor disclaims the opinion. How do you select key audit matter? I told professional judgment. If at all your professional judgment is not working, here. Areas of higher risk of MMS. So generally you can select key audit matters from the area where you found high risk. Getting it? Suppose you found high risk in provision for bad and doubtful debts. Have you resolved that? Have you interacted with management? Have you verified the computations? Have you got external confirmations? All that procedure you can talk. Or areas which involve significant management judgment. Right now, Air India used this criteria. Auditors of Air India used this criteria. Asset useful life estimation involves judgments. Impairment involves judgments. So auditor have considered that as a key audit matter because it involves significant judgments. Or key audit matter can be selected from a significant event happened during the year or significant transaction that occurred during the year. So in a significant event or transaction that have happened, key audit matter can be selected. So the auditor will select key audit matter. Selection of key audit matter is a matter of professional judgment. The following factors will assist the auditor. The auditor can select key audit matters from the following issues. 1. Areas of higher assessment, higher risk of material misstatement, areas of significant judgment, areas of significant events or transactions. Any of these 3 characteristics can be communicated as key audit matter. Suppose you see Air India itself once again. Some impact of COVID-19. It's a significant event happened. It's not a transaction, right? COVID is a transaction. Huh? It's an event. Okay. Ind AS leases, first time adoption. It's an event. So, it's a significant event. It's a significant event which is communicated. Whereas this is significant estimate. Investment in subsidiary and advance recoverable from the subsidiary in significant transaction. Getting the point? On some criteria, you select a key audit matter. Generally, we don't read key audit matter and then select. We are doing so many works as part of our audit. When we are doing so many works, at which work you are giving most attention? Most of the attention where you are giving. Which work make you struggle? So that you will select as key audit. Simple. Getting it? So it is unnecessary to communicate key audit matter. Most of the auditors know why to communicate. They will say that there are no key audit matters. Now the standard also permits that. So what are the examples? By the way, they'll ask you this question. Oh, you should write only these examples, not other examples. Getting it? So what are the factors that assist the auditor in selecting and communicating key audit matter? Give you examples. So you should write factors. Impairment, provision for losses and contingencies, valuation of instruments, revenue recognition, taxation matters, so many. Getting the point? In US and all, it is called as critical audit matter. Even in Apple Incorporation, Alphabet, all these companies, their auditors also present key audit matters. There it is called as a critical audit matter. In US and all, it is critical audit matter. The audit report framework across the world is same. It's similar, mostly similar. You can compare audit reports across different countries, different companies, you can compare. So it is same. The opinion terminology is exactly same. We use unqualified opinion where we simply mention opinion. Even in the United States, even in the UK, Europe also, they use the same. Unqualified opinion means simply opinion. Qualified opinion, they also give qualified opinion. Here, adverse opinion, there also it is adverse opinion. Because at the end of the day, our standards are derived from international standards on auditing. International standards on auditing is what across the world followed. Getting it? Certain matters not to be communicated as key audit matter. This is not there in your study material. It is now removed. Okay. You can strike off. I think it is not covered in the study material. In spite, see, the prohibition is when you have given disclaimer of opinion. Suppose I have not given disclaimer. I have given a proper opinion, adverse or qualified or unqualified. Some opinion I gave. In spite of this, there are some issues which I should not talk in key audit matter. Either because it is highly confidential in nature. So better not to talk about that in the audit report. Or by unnecessarily talking about that in the audit report, it brings adverse consequences. If you think discussing that matter in the audit report under key audit matter brings unnecessary confusion to the readers, don't talk about that. Law regulation prohibits that. If any particular matter is law is prohibiting you to communicate any particular matter, then you should not discuss about. Getting it? That is a restriction on key audit matter. It's actually called as what? Restriction on key audit matter. It's not a prohibition. Some matters are restricted. Remaining all other matters important according to you, you can communicate. That's it. 701 is over. Now definition finally. Key audit matters are the matters which in auditor's judgment are most significant in the audit of financial statements of current period. And these are selected from matters communicated with those charged with governance. You should communicate with top management what matters you are selecting as key audit matters for sure. Now introductory language I will show you. Key audit matters. Suppose this is an introductory language in the audit report. Key audit matters are those matters that in our professional judgment were of most significant in the audit of financial statements of current period. These matters were addressed in the context of our audit. So whatever key audit matters I'm listing out below, we already solved them in our audit. We verified them in our audit as a whole while expressing opinion on the financial statements and informing the opinion. However, we do not provide a separate opinion on these matters. So Tata Motors have highlighted what are the key audit matters, how the matter was addressed in audit. Same like how in Air India. In Air India, instead of using this, they use the word principal audit procedures. Principal audit procedure means what? Not principal auditor. Principal audit procedures means important audit procedures. What briefly we did. Clear? Next. This 701 is also over. So we'll go back to this once again. So material uncertainty related to going concern is completed. Key audit matter is completed. Responsibilities of management for financial statements. What are the responsibilities of management for financials? Preconditions to audit in CA Inter 210, SA 210. Management is responsible for preparation and presentation of financial statements as per applicable financial reporting framework. 2. Management is responsible for design and implementation of internal controls so that the financial statements are free from material misstatement whether due to fraud or error. 3. Management is responsible to provide the auditor with unlimited, unrestricted access to books, records, documents, all that. Management is responsible to provide additional information requested by the auditor. Management is responsible to give unrestricted access to persons within the entity from whom auditor can obtain sufficient appropriate evidence. That's it. Yes or no? And of course, we will give additional responsibilities. Management is responsible for proper selection and application of accounting policies. Like that, we give so many other points also. But if at all a question, what are management responsibilities? Don't think that these will not be asked. In the last attempt, what are fundamental principles of audit? They asked that question, 5 marks question. Integrity, independence, objectivity. Students were shocked. Thrice they read. Is the same question which they asked? Yes, sometimes they'll ask simplest questions. Getting it? Because we prepared for very advanced level, we failed to answer simple questions. Sometimes. So last attempt, I think it was asked. Last attempt, what are fundamental principles of audit? Recollected? In ethics, first initial, we directly skip first 10 pages in ethics when we are reading. By default, we straight away. Ethics means it started at 101 page. You will directly go 111 page. First 10 page you will never read. Many students could not answer that question. That's a so simple question. Yes or no? Independence, integrity, objectivity, professional competence and due care. That question is asked. Other information is also over. So, signature of the auditor, place of the signature. You will sign, right? Below that, date and place you should mention. Place means ordinarily the place where he is signing. If at all you are signing in company office, that city name you should mention. If you are signing in your audit office, that city name you have to mention. Place has no much relevance. Date of auditor's report, already I told. Date of audit report, UDIN number. So all the contents are over except one content. Report on other legal and regulatory requirements. So report on other legal and regulatory requirements. So just 1-2 minutes gap, okay? Some students know, they'll ask me, sir, in the attempt, I didn't study well. I'll skip this attempt. Next attempt, I'll try rank. This guy will never get rank. Because rank is a conscious decision. It should not be a byproduct of your process. Like, because this fellow is not studying properly, somehow he was deviated. Finally, he'll come to somewhere in the 1.5-2 months before exam. That time he realizes that this attempt I will no doubt qualify. This fellow will get a beautiful thought. Why can't I try for rank next attempt? I have 2 months plus next 3.5-4 months, totally 6 months. All India rank I can get, right? You will get generally, but this kind of students will never get it. Because same thing will repeat again. What he will do? He will skip this attempt. Since he skipped this attempt, why should I start immediately studying 1 month? Jolly poidva. Somewhere he'll enjoy 1.5 month. Then again coming back and sitting on the books is a very typical task for him. It is not possible for him. He'll not get that interest back. And he will decide at least, okay, fine, it's okay, not rank, at least I'll qualify both the groups at a time. This is the thought again with which he'll start. Then he'll start attending classes or start reopening the book and he'll try to read and understand, not understanding anything. Then he'll open marathon classes on the YouTube. He'll watch something and again implement all that in the book. Okay, it is not syncing. 1.5 month time will pass by. Then he will realize both groups is not possible for him. Then he'll shift to single group plus one subject exemption in other group. Yes or no? Then he'll start studying the other subject which he want to get exemption. Okay. Then he will be going little bit. Then he will realize after 15-20 days, I don't know, first let me finish that group and come back to this. He'll skip that. That fifth subject also gone. Once upon a time, fifth subject, fourth subject. That also gone. 3 subjects. Now he'll be coming to October somewhere. 1.5 month before exam. He has studied only 50% of the entire syllabus. So remaining 50 is not yet complete. And in each subject he studied 50% only. Okay, now he'll be having this thought. Okay, I'll do one thing. One subject I'll take, I'll get exemption for this subject. And he will ignore other 2 subjects. On the day of exam, he'll be absent for this exam itself. Getting it? This is how the law of diminishing marginal utility applies. Getting it? So you should not be having rank is something like if you want to get a rank, you should have decided at the first year of articleship itself. When you are in first year of articleship itself, you should have decided that you want to get a rank. If you decided like that, the way you have to work is different. Because you should work in such a way nobody is working like you. So when you work hard, you will get that. That's it. Okay. So if at all any of you are still in that filtering process, at least come out of it. You are having exactly good amount of time from now. Even if it is May 1st exam. Okay, forget about that postponement, all that right now for the time being. Assuming it is May 1st, you are having almost 40 days time, which is a solid time. Not 40, 50 days time you have, which is a very solid time for group 1 students. Even if you start preparing today seriously, you will do it. Seriously, every day 10 hours if you dedicate 10 hours. The 2 minutes gap, I'll continue with the report on legal and regulatory requirements. Yes, let's begin. Report on other legal and regulatory requirements. So in the audit report, one more section is pending. Report on other legal and regulatory requirements, which is also called as other reporting requirements, So under legal means under company law, we have a reporting requirement that we need to give in audit report additionally. We are anyhow giving opinion. We are discussing key audit matter. We are highlighting important matters in emphasis of matter para. Any responsibilities and all we want to communicate, we are discussing in other matter paragraph. And with respect to annual report and all, we are discussing another information para, all that. In addition to that, there are various aspects that we need to report on. So 143 subsection 1. So where we have to report on 6 inquiries. We have to do 6 inquiries and then report. Whether it is positive or negative. Generally here, reporting applies only when it is negative. So if at all when we inquire these 6 matters, if at all the response that we are getting is negative, then we need to report. Then 143 subsection 3. These are called as checklist items. Or these are called as affirmations by auditor. These are again called as what? Affirmations by auditor. So auditor has to talk about, auditor has to affirm something. Auditor has to give his affirmations on various things. Approximately 16 to 17 items were given here. Like you remember that last point, like whether the company has implemented accounting software with audit trial feature, yes or no, and audit trial feature should not be tampered, and audit trial should be retained for 8 years, yes or no. So whatever the record retention period applicable for books of accounts, the same period audit trial shall also be retained. So whether company is maintaining audit trial feature or not, whether they are using that, you need to comment. Likewise, some 16 to 17 items were given. Getting it? So 16 to 7 on all these items, whether your answer is positive or your answer is negative, both you should report. If at all your answer is satisfactory, positive, you say that it is positive. Like yes, company has maintained an accounting software that has an audit trial feature and the company is retaining it for the record retention period. It's a positive answer. Suppose if the company has not yet implemented audit trial feature, say that the company has, based on our observation and examination of records, it is found that the company has not implemented audit trial feature with effect from 1st April 2022. You need to mention that clearly. Then we have 143 subsection 11, where central government has given power. where Companies Act has given power to central government to issue any order under which auditor will report on various issues. So the order, whatever the order contains, whatever aspects on that auditor will report. Accordingly, central government has issued CARO 2020 order. As per this, there are 21 clauses on which auditor has to specifically comment on. Now you need to remember clause numbers. It's important. Getting it? I'll tell you important clause numbers. That alone. Important means almost out of 21, some 14 clauses I'll tell you. Getting it? So, CARO 2020, 21 clauses were there. So on all these 21 clauses, auditor has to specifically comment. Now all this completely where it will come in the audit report only. Inside the audit report, under which side heading? Report on other legal and regulatory requirements, under that side heading. Accordingly, Tata Motors, no, you see Tata Motors auditors, they have given report on other legal and report on other legal and regulatory requirements. In that second one, 143 subsection 3, they have listed out all the affirmations. Then at the first point, as required by CARO, issued by central government. So they are reporting. So they are reporting on CARO as well. So this they are reporting as an annexure. Remember, annexure is equal to audit report. Annexure is nothing but instead of listing out 21 points here, we are giving it as a annexure. That's the only difference. Getting it? So now, in 143 subsection 3, important points I will cover, and 143.11 CARO I will proceed then immediately. As I told, audit report chapter, I divided them into two parts. Part 1, standards. Part 2, report on legal and regulatory requirements. 143.1 I'm not discussing, it's very easy. 143 subsection 1, 6 inquiries. For these 6 inquiries, reporting requirement is, if you got a positive response, you can ignore. If it is a negative response, you have to comment in the auditor's report. Now regarding 143 subsection 3, in question bank I have given a guidance note on that. Yes, you see here, 143 subsection 3, sorry, 143 subsection 1. In question paper 2019 attempt it was asked. In 2019 attempt it was asked. So what they have asked is, CAG was appointed as stat auditor. While doing the audit, it is observed that certain loans and advances were made without securities. Certain trade receivables and payables were adjusted within the books of accounts, book adjustment. Personal expenses were charged to revenue. As a company auditor, comment on the reporting responsibilities by CAG. 3 items they have disqualified. 3 items there is a mistake which they did. How auditor has to qualify, they have mentioned here. Just to go through this later. Okay. I am going to release one comprehensive question bank which is free PDF in the probably in the April 1st week. In the same website, April 1st week or 2nd week, I'll release a comprehensive question bank. One comprehensive. Already it is there. For question bank part 1, question bank part 2, like that it is there. But in that, whatever questions that are covered in CS study material, main study material, that I have not covered because I am covering it in the main material. For general, like YouTube students and all, I'm releasing that. Getting it? So, duty to report on certain matters under 143 subsection 3. Inside this, you see here, such other matters as may be prescribed. Inside that, there is a rule number 11 of company audit and auditors rules. They prescribe the following matters. 1. Auditor has to check whether company has disclosed the impact of pending litigations on the financial statements and financial position. So nothing but contingent liabilities information company will be giving, right? So that information, if it is proper, you will say that it is proper. Whether company has made provision under the law or accounting standard for material foreseeable losses, whatever possible losses company is expecting, whether they created provision under the law, whether they created provision as per accounting standard or not, we need to check. If they've created, you just mention that they've created. Whether is there any delay in transferring amounts to IEPF, Investor Education Protection Fund, every year company has to transfer some amounts where the due date has been crossed. Getting it? Whether there is a delay in transferring the funds, you have to comment on. And here there are some situations. Suppose our company where we are doing audit, this company is acting as a funding party. They are transferring funds. How they are transferring the funds? Either as an advance or as a loan or as an investment. Either as an advance or loan or investment, whatever. However the way, you are actually transferring funds to another entity. They use as the word another entity, not company. Remember, company is act. Inside that they are not using the word company here. But funding party is what? Your company where you are doing audit. The company where you are doing audit, they are transferring funds to another entity, which may be a foreign entity also. With an agreement that, with an understanding that this entity shall further advance it or loan it or investment. This entity shall further transfer that amount in ultimate beneficiary identified by the company you are doing audit, identified by funding party, nothing but. Getting the point? Generally, these transactions are called as shipping of funds. Getting it? We also call them as a diversion of funds. ABG Shipping Yard case. This is what exactly happened. They transferred to many of their foreign subsidiaries and all, and they defaulted loans in India. Hindenburg report on Adani also pointed out similar incidents. But of course, Adani have given proper replies. Adani group, there is a proper genuinity in the transactions and all like that. They have given a proper reply. They proved with the documentation. They are not something like diversion of funds with a malified intention. They are not like that. They are with a proper intention. There is a proper routing with the proper FEMA guidelines, and PMLA and all is not violated. Money Laundering Act and all. So they have given replies, everything clearly. So if your company is acting as a funding party and transferring funds to another entity, where the another entity has to transfer that fund to another entity. So now this middle entity is called as intermediary. This is called as intermediary. Your company is called as funding party. Ultimately, who is getting that fund is called as ultimate beneficiary. Now the intermediary, you are transferring funds not to the ultimate beneficiary. You are transferring funds to intermediary. That intermediary has to loan or advance or invest in ultimate beneficiary, or intermediary can do one more thing, or intermediary can give guarantee or provide security to some third party on behalf of beneficiary. So I will give money to you. You will give, I will direct you. There is a third part, there is a beneficiary belonging to me. You give the money to them, or do one thing, don't give money, take my money. But on their behalf, you give guarantee to third party. Why you will give guarantee? Because I am giving you already the money. I gave you the money already. Getting it? Since the funding party already transferred the money to intermediary, now the intermediary either has to transfer that fund to third party, ultimate beneficiary, or the intermediary has to give guarantee to third party on behalf of the beneficiary. Getting the point? That is the first transaction. Second transaction, that is the first point. I'll tell you what exactly they are asking. I'll tell you. First, look at these situations. Second one, suppose your company is intermediary. Suppose the company you are auditing is intermediary. Whether your company has received any advance or loan or investment from funding party with an understanding that your company has to advance or loan or invest in ultimate beneficiary identified by funding party, or given guarantee or security on behalf of ultimate beneficiary to any third party. So first, whether your company that you are doing audit, is it acting as a funding party? First question. Second question, okay, you are not a funding party. Have you acted as intermediary? In a chain of transaction like this, have you acted as an intermediary? So these two things we should verify. Whether the company for whom we are doing audit, whether they acted in this kind of transaction where our company transferred funds to somebody and directed them to invest in somebody, or our company received funds from somebody where they have received a direction that they have to invest in somebody. So whether the company you are doing audit acted as a funding party, or whether the company you're doing audit acted as an intermediary. Check out. If so, disclosure requirement is there. The company has to disclose the details of intermediary. Suppose if you're a funding party, the company has to disclose in Schedule 3 clearly in the notes to accounts what are the amounts that you transfer to intermediaries, on which date you transferred, what are the names of intermediaries, and where the intermediary invested ultimate beneficiary. That details company has to disclose it. This is a disclosure requirement. Getting it? 2. Suppose if your company has received funds as an intermediary from some funding party, list of the funding parties, amounts received, and where you have to invest it, where you transfer that money ultimately, list of the beneficiaries. You need to clearly disclose the details. Auditor has to check whether the company disclosed details of intermediaries, details of ultimate beneficiaries, details of funding parties, details of ultimate beneficiaries. In type 1 transaction, in type 2 transaction. So auditor has to check whether company has disclosed or not. Then finally, check out, disclosed, everything is disclosed. Get a representation from the company that other than that is disclosed in financial statements regarding these transactions, there are no other transactions like this. Get a disclosure. That is what exactly the point says. Auditor has to get a management representation that whether management has represented that to the best of its knowledge and belief, other than as disclosed in notes, no funds have been transferred or invested that fund to the entire transaction. Getting it? Funds transferred or invested or advanced to intermediary with an understanding in either in writing or in oral. Otherwise, that intermediary shall invest further in ultimate beneficiary or on behalf of beneficiary given guarantee to third party. All these transactions were disclosed in balance sheet P&L notes. Other than this, there were no other transactions, no other loans given by the company other than whatever we disclosed. Like that, you should get a representation. Are you getting the point? Third one. Now, okay, you got representation, fine. You have gone through the company bank statements. You have gone through payments and receipts. You know to whom the company paid, from whom the company received. Is there any of these receipts and payments made by the company? You found a list. Based on your audit procedure, do you think management gave a representation that there were nothing? There is no transfers which management is hiding. They gave a declaration. They gave a representation that they are not hiding anything. Based on your audit procedure, do you think the representation is wrong? Based on the audit procedures, auditor has considered reasonable and appropriate. Nothing has come to their notice that caused them to believe that representations under the clause number 1 and clause number 2 contain material. Indirectly, they are asking you to provide limited assurance. Indirectly, they are asking you to provide limited assurance. Look, the wordings are very simple. Point number 1. Funding party to intermediary to ultimate beneficiary. Ultimate beneficiary is decided by funding party. Point number 2. You are the intermediary. You received funds from somebody where you need to give that funds to somebody. Getting it? Now, whether you are giving to somebody and they are giving to somebody, or you are receiving from somebody and you are giving to somebody, all that has to be disclosed in financial statements clearly. You need to verify whether they disclosed clearly or not. That is the audit procedure. Finally, you should get a representation from the company that other than disclosed in note, there are no other transactions. Means you need to get a declaration that all these kinds of transactions were disclosed in notes to accounts. Now, okay, you got the declaration, fine. Now, you also verified all the bank statements, everything, right? Have you identified anything that makes the representation you got is not true? Getting it? Third point is this only. Based on audit procedure, nothing has come to your attention that causes you to believe representations contains material misstatement. Representation wrong means what? Contains material misstatement means what? That means based on your procedure, you found some other transactions where your company acted as a funding party, where your company acted as an intermediary. You found some other transactions which are not disclosed in financials, whereas company directors gave me a declaration that everything is disclosed. You found some additional transactions. Now tell me, representation contains material misstatement or not? That is what the reporting is. Understood or not? Don't worry, I'll upload in YouTube. Repeat mode you watch once again. Getting it? I hope right now you are clear. As of now. Whether dividend declared or paid during the year, is it in compliance with 123? You know what? This question is asked in CA Inter. In May 23 or November 22 attempt, in CA Inter it was asked. In CA Inter, they asked, right, what is the reporting requirement? What auditor has to report on this? Getting it? They asked in CA Inter. So final students itself are unable to understand the sentence. Yes, sir. You see how sentence? No funds have been advanced, loaned or invested either from borrowed funds or share premium or any other source of funds by the company to or in any other person or entities including foreign entities with an understanding recorded in writing or otherwise that intermediary shall whether directly or indirectly lend or invest in other person or entities identified by or on behalf of the company or provide any guarantee or security on behalf of ultimate beneficiary. Now I gave this example, right? With that example you read this, you will understand very easily. Clear? Finally, audit trail. With effect from 1st April 2022, every company must have audit trail feature as part of their accounting software, which is must. So auditor has to check whether the company has implemented audit trail feature or not. Audit trail means it's a step-by-step sequential record which provides evidence of documents of history of the transactions to its source. Simple. Any move, any changes happened in the transaction which is already recorded, everything will be recorded. Logbook will be there. It's like audit trail is nothing but activity log within the accounting software. Within the accounting software, what happened exactly? When a transaction is passed, when a transaction is deleted, you can find a deleted transactions also in audit trail. Earlier, if there is no audit trail, if a transaction is deleted, you don't know that there is a transaction which is already entered and deleted. How do you know that? So through audit trail, you will find the entire process went through in the back end. That's it. And one more thing. So there is one more requirement. Whether company has adequate internal financial controls with respect to financial statements in place and operating effectiveness of such control. Auditor has to express opinion on whether the company has implemented internal financial controls relating to financial statements and how are they operating effectively. Getting it? So auditor has to give an opinion on this. For this, as per the guidance note on IFC reporting, they will give it as a separate audit report again. They will give it as an annexure B. Sorry, annexure A, I think. You see, this one. I think annexure B only. After CARO, they might have reported. Annexure B. Report on internal financial controls with reference to standalone financial statements. Opinion. We have audited the internal financial controls with reference to so and so. This is IFC. They will give like a separate audit report on that. This is a guidance note requirement. As per guidance note on IFC reporting, you need to give a separate report. Now, this IFC reporting requirement do not apply for the following categories of companies. 1-person company, auditors of 1-person company, IFC will not apply. Auditors of small company, IFC will not apply. Auditors of a private company which satisfy the following condition: turnover shall not exceed 50 crore and borrowing shall not exceed 25. If a private company satisfying both these conditions, IFC.auditor need not comment. Nothing but that IFC separate audit report you need not give. Clear? All of you. And now, one more thing. You see, as I told you already, there are 3 reporting requirements under the Companies Act: 143.1, 143.3, 143.11. 143.1, 143.3, they are completely applicable for all companies, whether non-government, government, small, 1%, whatever. Within 143 subsection 3, only IFC point, that alone is not applicable for small company, 1-person company, private limited company, subject to conditions. Now 143.11, CARO. CARO is applicable for all companies except banking company, insurance company, section 8 company, 1-person company, small company and private limited company, subject to 4 conditions. Yes or no? Now this private limited company lost its relevance because of the small company definition. Yes or no? Small company means what today? 40 crore turnover criteria, 4 crore capital criteria. If a company which is doing business within that limit, if the business amount invested in the business is within that limit, it is treated as a small company and it was given with certain benefits. Not benefits, relaxations from the compliances of Companies Act. Rotation of auditor do not apply for them. Yes or no? Internal audit and all do not apply for them. CARO will not apply for them. Like they just relax, they just gave relaxations to the small companies. Getting it? So that more people will be attracted to these relaxations and get corporate identity, make transparency in the records. Getting it? So that's a small company advantage. Okay. So it is not applicable for these companies. Most of the private limited companies satisfy small company definition. If a private limited company satisfies small company definition, it's a small company and CARO do not apply. If a private company does not satisfy small company definition, CARO is obviously applicable. Simple. So private limited company, 4 conditions is there na. Paid up capital and reserves and surplus shall not exceed 1 crore as on balance sheet date. Total aggregate of borrowings from banks and FI shall not exceed 1 crore at any point of time during the year. Turnover calculated as per schedule 3, including discontinuing operations, shall not exceed 10 crore. And it should not be a holding company or subsidiary company of a public limited company. That and all you need not check. Today, yes or no? If a private limited company satisfies small company definition, it's a small company. CARO do not apply. MCQ, if a limit and all is given, it's a small company. Select that option where it says it's a small company. CARO do not apply. Clear? That's it. So with this, CARO introduction is over. Now we'll begin actual clauses inside the CARO. Just 2 minutes. So let's begin this CARO. So there are 21 clauses within the CARO where auditor has to comment on all the 21 clauses. Getting it? So first thing which auditor has to comment on is regarding fixed assets. See, the CARO object is very simple. In auditor's report, we are giving opinion. We are giving opinion that financial statements are true and fair or not. That's it. So they saw the numbers in the balance sheet P&L and you said that everything is true and fair. Fine. But people want to know how the company is protecting the assets. What is happening inside the company? What are the affairs of the company? So they want to know companies taking loans, companies having so many assets, companies having so much of inventory, companies having, recently some auditors have resigned from the company. What is this? Like, people want to know insights about the company. Getting the point? Through CARO, we are giving that insights. Getting it? About the company. What is happening inside the company we are giving. Remember, here we are not giving any opinions specifically on the financials. We are giving opinions on these matters. That's it. Now, fixed assets. Suppose balance sheet you observe, fixed assets some 11,000 crore is there in the Tata Motors. What is this 11,000 crore? Like what? How are they maintaining? People want to know, right? So the government identified some information needs of various users. The government has identified financial information needs of from various users. So they developed some points. Auditor has to specifically check these points and give his opinion. Auditor has to specifically check these points and give his opinion. Now, in that, the first thing what auditor has to check is fixed asset. Inside fixed assets, there are 5 elements which auditor has to check. There are 5 elements. In exam, they will ask you any 2 elements. Getting it? Any 2. Write about auditor's reporting requirement under CARO relating to revaluation of fixed assets and disclosure of benami transactions. What is the auditor's reporting requirement? 4 marks question. Or they'll ask you, what is the reporting requirement for immovable property and physical verification relating to fixed assets? 4 marks question. Or they'll give you a 6 marks question. What is the reporting requirement for fixed assets? Where you have to write all the 5 points. Each point will be given 1 mark to 1.5 mark. Getting the point? So, the first thing which auditor has to comment is whether the company is maintaining fixed asset register. Are they maintaining a record of fixed assets? Because in big companies and all, obviously the number of assets are vast. So they have to maintain a record to know what are the assets they have, where they were installed. All that fixed asset register means what I already explained previously somewhere. Yes or no? So whether the company is maintaining an asset register which contains quantitative details, which contains location where the asset is installed. PPE, yes or no? Then, whether the fixed assets are physically verified by the management at reasonable interval. They are buying the asset, they are recording in the register, all that is fine. Now, whether management is confirming whether they are still existing in the organization, I understand that nobody can take out an asset outside the premises. Management has implemented robust control, security systems, CCTV cameras, security guards are working 24/7. Nobody can take out. I understand. Fixed assets will be existing. But there should be a confirmation procedure that all the assets which the company purchased and installed as at so and so location as per register, are they still existing at that location or not? Management has to confirm it at a reasonable interval. Tata Motors, they are confirming once in 3 years. They are confirming once in 3 years. According to the information given, the company has a regular program of physical verification of PPE, and the plant and equipment are verified in a phased manner over a period of 3 years. And in accordance with the program, certain PPE were verified during the year. In this year, see, regularly in Tata Motors, Infosys, TCS, every day physical verification will be happening at one campus, at one factory. Getting it? By the time 3 years complete, all the machineries, all the assets will be verified. Getting it? Suppose they verified today this laptop physically, they confirm, yeah, laptop is there at so and so third floor at so and so. Again, within 3 years, they'll come back and check whether this laptop is there or not. Within these 3 years, what they'll be doing? There are so many dealership showrooms, there are so many factories, there are so many offices they have. In all these offices, they will conduct. Internal auditors will be there for Tata Motors. They will be doing all this physical verification and all. One segment of internal auditors. Getting it? In our opinion, this periodicity is reasonable regarding the size and nature of the asset. Looking at the nature of the asset and size of the company, once in 3 years verification is reasonable. So auditors said the physical verification by Tata Motors is reasonable. And one more thing is what? Whether any material discrepancies were noticed on the verification. By the way, who is performing this verification? Management only. Management, when they perform this physical verification, have they identified any shortage or excess? Check out. If so, how they were resolved, how they were recorded. So if any material discrepancies were there, how they were recorded in the books of accounts. Then, so that is the first. One is fixed asset register and the second one is physical verification. I hope you understood both. So you need to check whether the asset register is maintained as per CARO requirement or not. 2, whether physical verification is conducted at reasonable interval. If so, physical verification is conducted. Have they identified any discrepancies between the count and the actual record? If so, how they dealt with it? Getting it? There might be some unrecorded assets or there might be some recorded assets but are missing. How the company dealt with that situation? Next, immovable property. Companies having in the PPE, buildings, land and all were disclosed. And investment properties also, some immovable properties disclosed. Whether the immovable property title deeds, are they in the name of the company or in the name of somebody? Check out. Especially if a sole proprietary concern or a partnership firm is converting into company. Until this partnership firm, until its conversion, most of the properties are in the name of the partners or sole proprietor. Immediately on conversion, they will not transfer into the name of the company. But they are showing it as a company property in the fixed asset. They are showing it as a fixed asset in the company asset register. And even in the balance sheet, they are showing. But it is not yet in the name of the company. We just have to give the details here. Getting it? By mentioning the details, people understand that, okay, so and so property which is shown in the fixed asset balance sheet side, it is in the name of the director. It is not yet transferred in the name of the company. But company is the owner for the property. They will understand that. So, description of the property, land and building, gross carrying value so and so, held in the name of director. Reason for not being held in the name of reason for not being held in the name of the company. They are transferring the property. It is after 6 months. Like that you will mention. Now next, whether company has revalued its PPE, check out. Whether during the year, whether the company went for any revaluation of assets. If so, okay, let it be. Let there be revaluation. Whether the revaluation is based on a registered value. Who did the revaluation? Is it by a registered valuer? Who are registered valuers? Which chartered accountants? We have a post qualification course, registered valuer course from ICA. Once we get that course, you can be a registered valuer. Getting the point. And registered valuer designation you can use along with CA. Generally, along with chartered accountant, you cannot use any other designation. Only 2 designations: registered valuer designation and insolvency and bankruptcy professional. Only these 2 are permitted. So, whether revaluation is based on a registered valuer and what is the change happened. If the change is 10% or more in aggregate of net carrying value of each class of PPE. Each class of PPE means what? Buildings how much, plant and machinery how much, equipment how much, furniture how much, electrical fittings how much. These are all each class. Aggregate value means what? Buildings. Now company has 10 buildings. Don't see building wise. Total of 10 buildings put together, what is the carrying value before revaluation? After revaluation, what is the value? If the difference before and after revaluation of total of buildings, which is a class of plant and machinery, which is a class of property, plant and equipment, if the change is 10% or more within an each class, Getting the point? Within an each class, aggregate value of the each class. Able to understand the difference? Getting it? Suppose in Tata Motors, if you see the balance sheet, fixed assets, last year fixed assets total is some 10,000 crore. Current year fixed asset total is 12,000 crore. Percentage is how much? More than 10%. Not this. You should show fixed asset schedule. Open fixed asset schedule. You will get buildings how much, plant and machinery how much, equipments how much, furniture how much, vehicles how much. Like that you will find each class wise plant and machinery. Now that particular class, vehicles, they have some 200 vehicles. It's okay. But entire that aggregate of that vehicles class, before revaluation how much, after revaluation how much, what is the percentage of change? If the percentage of change is 10% or more, you need to specifically mention that fact in the CARO report. So you are indirectly alerting the users, this year revaluation happened, more than 10% there is a value change in that particular clause. You need to mention that. Remember, this particular revaluation will not affect in cash flow statement, correctly? Revaluation will not occur in cash flow. In people know, some people know assets revalued, right? They may forget the fact that it is revalued, and they will see in the cash flow statement whether corresponding entry is there or not. That's it. Now next. Now under Schedule 3, company has to disclose pending litigations or proceedings against the company under Prevention of Money Laundering Act or Binomy Transactions Act, like that. So whether they disclosed or not, you need to check. Whether proceedings have been initiated on the company or pending against the company for holding Binomy property under Binomy Transaction Act or rules made thereunder. If so, if some proceedings are happening, whether the company has disclosed it in the financials, you just have to check whether they disclosed already. If they disclosed, yes, during the year company is going with some pending litigations under Binomy Transactions Law, and they were all disclosed in the notes to accounts. Leo, all of you. Next. Inventories. What is the reporting requirement for inventory? First, only two things. One is physical verification. Whether physical verification of inventory is conducted at reasonable interval by the entity. Generally, this point is applicable only for manufacturing and trading sector of goods. For TCS and all, you will not find this point. They clearly mention that companies are not dealing with inventory. Accordingly, they are not. This clause is not applicable. You will mention that if it is not applicable, say that it is not applicable. So whether physical verification of inventory is conducted at reasonable interval, whether any discrepancy of 10% or more in aggregate for each class of inventory. What do you mean by each class of inventory here? Raw material is one class, work in progress, finished goods. 3 classes of inventories. Able to understand. Not material names. Getting it? Not so and so cars, so and so iron, so and so thing. Not that. Each class of inventory means raw material, work in progress, and finished goods. Now, in this, suppose in raw materials, no, you found shortage or excess. If the shortage or excess is more than 10%, as per record, so much is there, and in physically, so much is there. The variation is either shortage 10% or more or excess 10% or more. How it is dealt in the books of accounts. Especially if see, in fixed assets, they use the word material discrepancy. Here they use the word, they quantified it, 10% or more discrepancy. So in fixed asset also, you can take this adoption. You can adopt this, and there also material means 10% you can choose. Getting the point? In fixed assets, they have used the word material discrepancy. Here they have used the word discrepancy of 10% or more in each class of inventory. If were noticed, who are noticing, by the way, not auditor, management only noticing. If so, whether they have been properly dealt in the books. If any unrecorded inventory is there, they'll record it. If any shortage inventory is there, they'll write off. So whether they dealt properly in the books of accounts or not. Of course, in Tata Motors and all, they don't comment anything like this. So you see here, the inventories, except goods in transit and goods lying with the third parties. Okay, except inventories that are held with the third parties, nothing but they were physically verified by the management. And for stocks lying with third parties, confirmations have been obtained. And for inward goods in transit, subsequent evidence of receipts were linked with the inventory records. Goods in transit, inward transmit. So what they checked, whether subsequently received or not, they checked the company. Now, in our opinion, the frequency of the verification is reasonable and as to coverage followed by the entity. Generally, compulsorily, once in a year, inventory must be physically verified. Compulsory. For fixed assets, it can be 3 years or 5 years, no problem. But inventory, every year, it must be physically verified. Moreover, company has to maintain perpetual records. In SAF 501, you need to get evidence on existence and condition of inventory. That standard itself indirectly says you have to get confirmation. You have to get evidence on physical verification every year. Getting it? And they mentioned that no discrepancies were noticed. On verification between physical stock and book records that have more than 10% in the aggregate of each class of inventory. Clear? Next. Working capital loan. You need to check whether at any point of time is the company sanctioned working capital limit in excess of 5 crore rupee. Remember, it's sanctioned limit, not drawing power. Getting it? Company has a drawing power of 3 crore only, but sanctioned limit was 7 crore. Company was a sanctioned loan limit of 7 crore, but company offered 5 crore worth of security only. Since 5 crore worth of security only given, 40% margin kept by bank, 3 crore only power to withdraw has been given. Drawing power is 3 crore, but sanctioned limit is more than 5 crore. Here the point is sanctioned limit. If the company was sanctioned with a limit of more than 5 crore, what auditor has to check? Very simple. Company has to disclose this in the schedule 3 also. In the schedule 3, they need to disclose. Remember, Binami transactions, they need to disclose. Pending litigations. Next up, they need to disclose, companies, every year they file with, every quarter they file with the banks because they got working capital loan. Quarterly statements they will file with the banks to get the drawing power updates. Drawing power will be updated every quarter by the bank. Some banks do follow monthly mode, some banks do follow quarterly mode. Now, first quarter you get 5 crore worth of securities valuation, like inventory valuation 5 crore is there. They gave 3 crore drawing power. Second quarter, you gave some 7 crore inventory is there in your godown, average inventory. So you gave that report. Some auditor also certified that stock certificate, and then banker gave you 5 crore limit. So every quarter you are giving stock certificates and all, current assets certificates and all, current assets liquidity certificates you are giving to the bank. Nothing but statements you are filing with the bank. In the statement you are mentioning some numbers, and some auditor is also certifying, some third chartered accountant is also certifying that the numbers are correct. And based upon that, banker is giving you drawing power. He's fixing the drawing power. Now the statements that you are filing, right? In that, whatever the amount that you are mentioning as on so and so date in the statement, is that amount is matching with the books of accounts or not, you need to check. Because most of the entities, what they do is, in books of accounts, inventory value is 5 crore only. But in the stock statement filed with the bank, they will show 7 crore. Getting it? So next 1 week, we are going to receive some inventory. That also they will consider and show in the stock statement, which is actually not there physically. Getting it? So now you need to check whether the stock statements filed with the banks, quarterly statements, and how much amount indicated in those statements, is the amount matching with the books of accounts? Because books of accounts, whether they are properly recorded or not, we anyhow check. In books of accounts, before receiving stock, can they record it? They cannot. But in the stock statement filed to the bank, they may manipulate. Whether this kind of manipulation they did, you need to check and reply here. So whether stock statements filed with the bank, so whether any quarterly returns or statements filed by the company with the banks and FIs are in agreement with the books of accounts. If not, give the details. Start amount also, they have to give adverse opinion, but they gave an unqualified opinion. Okay, last attempt, last previous year audit report, no, they clearly mentioned. According to the information and explanation, the company has been sanctioned working capital limit in excess of 5 crore in aggregate on the basis of security of current assets. In our opinion, the quarterly statements filed with them are in agreement with the books of accounts. Last year, I think I'll show you, they have given they have given a different opinion. You see, last time, this was the first time this point is applied. This was applied for the first time. 21-22 financial year only. CARO 2020 was first time applicable. 21-22. At that time, you see, they are in agreement with the books of accounts except statements for quarter ended, quarter 1, quarter 2, quarter 3 with the SBI, Bank of America, Citibank, HDFC, ICICI, Standard Chartered, all the banks were listed. Yes or no? And the differences were like this. Like between company records and the stock statements filed with the bank, the differences were like this. They reported. Getting it? In the later year, this is the latest. That is 21-22 audit report I'm showing you. This is 22-23 audit report. In 22-23, by the time comes, okay, company got experience, they rectified it. So now they are filing correct values with the banks. Remember, this is not only audit reporting requirement. Company should disclose in the notes to accounts whether they file, what stock statements, numbers they filed, what is the balance in the books of accounts. They need to report in the notes to accounts also. And auditor has to check that and then report in CARO also. Getting it? Next. Next, the third point is not that relevant. So first clause, clause number 1 important, clause number 2 important. Maybe in clause number 3, subclause E, subclause F are important. Suppose no, if the company has granted any demand loans or any loans were given where there is no repayment period. Getting it? If any such loans are given, these loans are called as loan on call. Getting it? Demand loans or call loans, we call them as, like we'll give loan to some subsidiary company. Whenever we want, we'll call, they'll pay back. Getting it? So whether the company has granted any loans or advance in the nature of loan, either repayable on demand or without specifying any terms or period of repayment. If so, what is the aggregate amount of demand loans given and what is its percentage thereof total loans granted during the year? During the year, company has granted 100 crore loan, out of which demand loans are 10%. Are you getting it? So you need to mention aggregate amount of loans granted to promoters, related parties as defined. Okay, demand loans you are giving to so many. Okay, fine. How much of the demand loan is given to promoter, related parties? That breakup also you should show separately. Are you clear? Another point. Company, they have given so many loans and many loans were overdue. Many loans were overdue. Whether any loan or advance in the nature of loan have fallen due during the year, it became due already, but it is renewed. It is renewed or it is extended. The due date is extended or a fresh loan is given to settle the old loan. Any kind of extension, renewal or fresh loan is given to settle old loan. How much of aggregate amount of such dues were renewed, extended or fresh loans? How much amount? During the year, I gave totally 100 crore loan, out of which 20 crore is brought forward of old loan. 10 crore is a fresh loan is given for repayment of old loan. So totally 30 crore is the loan which is given either as an extension or as a reschedulement or as a fresh loan to repay old loan. Percentage of aggregate to the total loans and advances granted during the year. 30% of the total loans granted during the year. Getting it? For example, they are belonging to extended loans or rescheduled loans, like that. Able to understand? Especially for NBFCs and all, this point applies a lot. Getting it? Actually, in this clause, no. Initially, they will give 1 point. At the end of the clause or at the beginning, they'll give you 1 point. This point is not applicable for a company whose principal business is to give loans. Getting it? Obviously, they are not talking about banks. They are talking about what? NBFCs. So NBFCs, this entire point is not applicable. For other than NBFCs, if at all you are other than an NBFC and you are giving loans, getting it? Anyhow, there which a principal business criteria, whether it is liable for NBFC registration or not. But anyhow, irrespective of that, suppose it is not an NBFC, fine. Even though it is not an NBFC, you are giving loans to so many. You are giving demand loans and all to your inter-corporate lendings, yes or no? So that context. So this third clause is not applicable for NBFCs basically. Getting it? Then deposits not required, cost records not required, statutory dues. Very important, statutory dues. So statutory dues are very simple. Provident fund, ESI, income tax, service tax, all this, whatever dues your organization has to pay under a particular law because of a levy, whatever the amounts that you have to pay to a law, legal authority, we call them as what? Statutory dues. They are broadly divided into 2 categories: undisputed due, disputed due. Disputed due means very simple. Suppose GST authority sent a demand notice against the company. That company has claimed so and so input tax in a wrong manner. So they reversed the input tax, added interest, added penalty, and then sent a notice. Now company challenged this notice in an appeal, SESTA tribunal. Getting it? GST appellate tribunal. They went to GST tribunal and then filed a case against the commissioner, whoever have passed this order. So now 10 crores is the demand amount. Now this 10 crore demand amount will be ultimately decided by the GST tribunal, whether we have to pay or not. Now the case is pending in a tribunal. That amount is called as disputed dues. That amounts are called as what? Disputed. But apart from this, every month this company will calculate GST. 1 month some 1 crore GST liability, another month 1.2 crore, another month some 80 lakhs, another month some 1.4 crore. Every month they calculate GST voluntarily and pay every month by on or before next month 20th. Before filing 3B, they pay the GST amount and then file the 3B return. So every month voluntarily they pay GST, voluntarily they pay provident fund, voluntarily they pay TDS and all, which they deduct. So voluntarily company is remitting every month without any dispute. Okay, company is not remitting because there is a dispute between the company and the department. Company is voluntarily remitting. These are all called as voluntary dues. Those are called as undisputed dues. So that's the difference between undisputed due and disputed due. Now, what is the reporting requirement? For undisputed due, we just have to check, is the company regular? Is the company regular in depositing voluntary tax and provident fund ESI liabilities? Is the company regular? Regular means within due date. Regular means what? Within due date. Every month they are paying. No, not that. Are they paying within due date? Then the company is said to be regular. If not, if the company is not regular, like some months, they did not pay on time. Now, if not, what is the extent of arrears outstanding statutory dues as at the last day of the financial year for a period more than 6 months from the date they become due? As on 31st March, some tax amount is outstanding, which company has to pay. TDS they deducted and they have to pay. Provident fund they collected from employee and their contribution both together they showed as a liability. That liability belongs to which month? It belongs to August month, which means it actually was outstanding for more than 6 months. As on balance sheet date, it is outstanding. It is not outstanding afresh in March month. It is not a fresh outstanding in March month. It was outstanding from long ago, August onwards. It was outstanding for more than 6 months. Remember, this is an undisputed due. Means there is no notice yet. Voluntarily, company has to calculate tax, calculate provident fund. They have to voluntarily deposit without getting any dispute first. So that amount was outstanding for more than 6 months. Auditor has to disclose the fact. As on 31st March, company is having TDS liability of totally 10 crore. Out of this 10 crore, 4 crore belong to August month TDS, which is deducted in July month. This amount is not yet remitted as on 31st March. Since it is outstanding for more than 6 months, we are reporting here. Are you clear? So, undisputed due, very simple, is the company regular? As on the last day of the financial year, is there any undisputed due still outstanding, not deposited, and outstanding for more than 6 months? That's it. Suppose no. See, when a due is called as a disputed due, I'll tell you. I already gave this example. Demand notice is raised against you. You have not yet reacted. Still, it's an undisputed due. Still, the due is called as undisputed due. Suppose you filed a case against the company. Against the appellate authority, whoever have passed this order, against that income tax officer or GST officer, you again filed a counter appeal. Now the case is pending at the forum. Once whatever the particular forum, once they gave the decision, then that is the final. So it is pending at somebody, right? Then only it is called as the due under the dispute. Due under the dispute. Otherwise, it is not a dispute. Just because you received an income tax notice, demand notice, if you have not yet filed appeal against it, it is not in dispute. So in MCQ, they'll give you like this. Getting it? So company has to pay so and so tax belonging to February month. As on March 31st, it is not paid. Should we report it in the CARO? Not required. Option B. An amount that is became liable in August month. Should it be reported in CARO? As on 31st March, it is still liable. Suppose if it is paid off before 31st March, March 30 it is cleared. As on last day, it was not outstanding. Actually, April month we deducted tax. May month we have to pay, but we paid in March ending. Not March 31st, March 30. It was outstanding for more than 10 months during the year. But as on 31st March, it is not outstanding. So no need to comment. Getting it? You received a demand notice, but you didn't respond yet. Respond to the notices, information is not given. It is still undisputed due. Are you getting the point? When the notice was given, you check out. This last March, February month only notice came. March 31st, it is not yet exceeding 6 months. Demand notice is there, no dispute, undisputed due. So it is since not exceeding more than 6 months outstanding. So we will not comment. Able to understand? They'll give you MCQs on this. Next. Now, for disputed dues, you have to comment 2 things. How much is the amount involved in the dispute? Where the dispute is pending. Tata Motors, you see how simply they showed this. So they just showed income tax act, income tax some 46 lakh belonging to 91-92 assessment year, much before you were born. Central excise tax belonging to these years, this much amount. Finance Act 2014 means nothing but service tax. So 1086 crore belonging to 452-13-14. High Court, it is pending. Cestat it is pending, appellate authority it is pending, Supreme Court some amount is pending. So under which act it is pending, what is the nature of the due, amount involved, to which period it belongs to, where the dispute is pending, entire that information is given. Actually in CARO they are only asking two, amount involved and forum, where it is pending. But most of the companies voluntarily disclose clear-cut information, under which law, what is the nature of the due, how much amount due, for what period it belongs to, and where it is pending. They voluntarily disclose much more better information. Clear? Next. Discovery of undisclosed income. Discovery of undisclosed income. Very simple. Whether any transactions not recorded in books have been surrendered or disclosed as income during the year in the tax assessments under Income Tax Act. If so, whether that previously unrecorded income is now recorded in the books of accounts, check out. Suppose suddenly income tax raid happened in the company during the year and they found that so many cash receipts and all belonging to previous years were suppressed. So in the previous year financial statements also we didn't identify them. We may be the auditor or somebody may be the auditor, but we didn't identify that suppression, cash suppression, income suppressed. So now that income which is suppressed by the company is now detected by the income tax department. Okay, fine. Company also surrendered, paid tax, everything is fine. Penalty, everything is paid, over. Case is over. Now previously unrecorded income is now discovered, right? Prior period item, right? Company has to record it in now in the current year books, right? Whether recording happened or not, check out. And remember, when you find this kind of incident, it's naturally opening balance is materially misstated. Getting the point? Prior period financial statements are materially misstated. Accordingly, 510 procedure, 710 procedure will apply. We'll discuss 510, 710 together. Not no 710 I will not discuss along with this. Along with 510 I will discuss 710 standard. Better. That's the best way to discuss. Next. Just 1 minute. Okay. Let's proceed. So default in repayment of dues. Important clause, 9th clause. Clause number 9. So whether the company has defaulted in repayment of borrowings of loans to a FI, bank, debenture holder, government. Getting it? Any of them. Mainly financial institution and bank. Very important. So whether the company has defaulted in repaying loans to them. If so, the period and amount of default to be reported. Each lender wise. What is the period of default? How much is the amount of default is to be reported. So if you borrow any loan, have you defaulted? Default means what? On due date you are not paying EMI. Simple. What is the nature of borrowing? Building loan. Name of the lender. HDFC Bank. Amount not paid on due date. July month, August month, September month, October month installments. Okay. They were not paid. And July month, 10 lakh is EMI. August month 10 lakh is EMI. So EMI is equal, right? And whether principal or interest or both, EMI, which is consisting of both principal plus interest. Delay in days. July month is delayed by 20 days. August month is delayed by 31 days. September month is delayed by 5 days. You need to clearly mention. Remarks, if any. Company has paid later on, and along with additional interest the company has paid. Banker also has rectified the same in the credit report. Getting it? Now next, whether the company that you are doing audit, is it declared as a willful defaulter by any bank or FI or any other lender? Check out. Willful defaulter guidelines will be there. You need not. You just have to check in the credit report. You just generate CIBIL report of the company. Company PAN number you take. A name you enter. You generate CIBIL report. You will find in that whether is this company declared as a willful defaulter or not. Now, company has taken so many term loans and they mentioned to a banker certain purpose of term loan and for what purpose they ultimately utilized this amount. Generally, whenever a bank is giving loan for a particular purpose, they directly transfer that money to the vendor himself. They will not give to the money. Very rare cases, the money will be given to the company hands. If at all company has received that funds, they should keep it in a separate bank account. They should not touch it. They should not keep that in the regular operating bank account of the company. They should keep it in a separate. Suppose if at all that money is kept in regular operating bank account, see whether the balance became to zero. If at all after receiving the loan, after receiving that credit in the bank statement, it became zero. Only one purpose it should become zero. By this amount, where it is transferred for the same purpose for which we got or for different purpose. Company took the loan, paid salaries to the employee. Of course, later company got collection from debtors and they rectified. Later they got collection and again that amount is rerouted to original purpose for which the loan was. But temporarily company defaulted with the loan agreement. Yes or no? Whether the term loans were applied for the same purpose for which the loans were obtained. If not, what is the loan amount diverted? And for what purpose it is ultimately used, you should report. Even though subsequently if it is rectified, you should report it. Suppose company has taken a short-term loan and they have used it for long-term purpose. This will affect the liquidity of the company. You have taken a working capital loan and invested in construction of factory. So that is not correct, because how will you repay? Whether any funds raised on short-term basis. Hindenburg report pointed out these kind of issues in Adani Group. They pointed out these kind of issues. So whether any funds raised on short-term basis have been utilized for long-term purpose? If yes, what is the nature and amount to be indicated? Have you taken any loan to meet subsidiary company needs? Like for not for your purpose, you took loan. You took loan to transfer to subsidiary companies. If so, details thereof with the nature of such transactions and amount in each case. So how many loans you have taken, each and every loan to which subsidiary company you have transferred, you need to clearly mention. Have you taken any loan by pledging securities that you are having in the subsidiary company, associate company, joint ventures? You are having shares in subsidiary companies. That shares you kept it as a pledge with the banker and you got a loan. If you default, what happens? Banker will get the right. Getting it? You will lose the holding company status, because in a subsidiary company I'm having shares. As long as the shares are under my control completely, I'm the holding company. Now shares I kept as a security to the bank and I took loan and I defaulted that loan. Banker will exercise the ownership on the shares. Naturally, I will lose holding company status. Such a kind of incident. Whether the company has raised any loan on pledge of securities held in subsidiary, associate, joint venture. If so, give details thereof. Also report whether the company has defaulted in repaying those loans. So if at all you have taken any loan by pledging securities held in subsidiary company, report that if the company has taken so and so loan. And moreover, if the company defaulted, the default also to be reported. That's it. In this, any 2 points will be asked in exam. Any 2 or 3 points. Getting it? They'll give you a story. So in that story, you need to figure out this point. Getting it? Next. Whether the company has raised any funds in the form of IPO or FPO, nothing but public offer. Generally, when a company go for public offer, they clearly mention in the prospectus, red herring prospectus, they clearly mention for what purpose the company want this fund, for what purpose they are going to utilize. And in the same prospectus, they will also show pro forma financial information. They will also show in the prospectus pro forma financial information after the funds were received, after investing these funds for company proposed plans, how our balance sheet and P&L are going to be. Proposed balance sheet and P&L, nothing but I want 100 crore fund from you. You asked me for what purpose? I told by taking 100 crores fund from you, 50 crore I will use for marketing, 20 crore I will use for so and so, 30 crore I will use for so and so. By using like this, our business turnover will increase in the next 3 years like this. I told you. You asked me present it in the form of a statement. I presented in the form of a statement, pro forma financial information. Are you getting the point? Prospective pro forma financial information. I showed in the prospect that we showed in the prospectus. So for that 3420 standard is what dealing with it. Getting it? Auditors, how to give assurance on pro forma financial engagements to provide assurance on pro forma financial information included in prospectus. That is 3420. Anyhow, we'll discuss there. So for what purpose company have raised? For what purpose company has utilized? So whether the money raised from IPO, are they utilized for the purpose for which they were raised? If not, where is the default? They utilize it wrongly. So that you need to show. Or they utilize it late. Like there is a delay in utilization. They didn't utilize. Or subsequent rectification, if any, shall be reported. So default, delay, subsequent rectification. Of course, initially you delayed, but you rectified later on. You utilized it for ultimate purpose ultimately. So that also you should rectify. So initially you violated, but you rectified later. You violated and rectified. Both should be reported. So the fact that they violated and rectified, you should not ignore just because they are rectified. Getting it? preferential allotment or private placement. Whether the company has made any preferential allotment or private placement of shares, it may be fully or partly paid, which may be convertible or not. So company has raised money from preferential allotment. If so, verify section 42 compliance. Amount raised, whatever the amount you raised, private placement, have you utilized it for the same purpose or not? If not, provide the details in respect of amount involved and nature of non-compliance. Section 42 non-compliance. If at all anything is there, special resolution has to be passed like that. Some rules were given. If at all that procedure is not followed under Companies Act, we should qualify. Next, reporting of frauds. Reporting of frauds. Whether any fraud by the company or whether any frauds on the company. Getting it? The company means management committed frauds on third parties, or management committed fraud on the company, or third party committed fraud on the company. Whatever it is, either our company involved in a fraud or somebody made a fraud against the company and encashed something. Getting it? Whether are they noticed or reported during the year? For this, no, you ask management. Get a written representation regarding all the frauds that are identified or reported by the management. Get a representation. If yes, nature and amount to be in nature and amount involved has to be indicated. In Tata Motors, no, they report this. During the year, vendor related fraud happened, 15 crore rupees amount involved. Three staff members were involved in the fraud. Like that, they report clearly in Tata Motors old audit report. Whether the auditor has considered whistleblower complaints, if any, received by the company during the year. Company, no, they might be receiving whistleblower complaints. So whether any whistleblower complaints received by the company, you have to check. As a part of risk assessment procedure, you should consider complaints received by the company. Look at the complaints. See whether those complaints are useful for you to plan your audit properly. So have you considered whistleblower complaints or not? They are asking. 143 subsection 12. Whether is there any 143 subsection, whether any report filed with the central government for fraud identified by auditor. Here fraud is identified by auditor. More than 1 crore in each and individual item. In an individual circumstance, how much fraud happened? More than 1 crore. It has to be reported to central government under 143.12 ADT 4. Whether such a form has been filed or not, they are asking. You should report in CARO. See, if at all this point is not there, suppose in the company frauds happened, we reported. And fraud is properly adjusted in the financial statements. They rectified also. They wrote up all the things, whatever happened, they wrote off. We reported to central government. But people will not know, right? That so and so fraud happened. We reported to central government this much serious thing, people will not know. So through CARO, we are telling people that during the year we found a fraud for more than 1 crore, which we reported to central government. So take a look at the list of fraud that we reported. We are giving a list here. Clear or not? Nidhi company, I will discuss straight away in NBFC audit. Related party transactions. Company is doing so many related party transactions, whether they are in compliance with respect to provisions of Companies Act. Whether related party transactions are as per 177, audit committee has to approve. Getting it? 188, related party related specific provisions. And whether the details were disclosed as per applicable accounting standards. All the related party relationships and all the related party transactions has to be adequately disclosed in the financial statements. So whether they disclosed or not, you need to check. Internal audit system. Whether the company has an internal audit system commensurating with the size and nature of the business. Company is doing so much big business. A formality sake appointed internal auditor, because 138 section says it is mandatory. For a formality sake, internal auditors were appointed. But the internal audit department is not effectively functioning because there is no manpower at all. You should qualify here. Getting the point. Whether the reports of internal auditor were considered by stat auditor, have you considered their reports? Because internal audit report is one important source of information for risk assessment. And when you are planning the audit, that's a very important source. Even SES 16 says using the work of internal auditor in the type 1, using the work performed by internal auditor. Getting it? Non-cash transactions, this is not required. NBFC 16th clause also NBFC point, I will discuss in NBFC chapter. Cash losses. Whether company has incurred any cash loss. Cash loss is very simple. Profit after tax, for that add back depreciation, add back provisions. Add back provisions. You will get some number. This is called, if at all, this is still loss. After adding back depreciation and after adding back non-cash expenditure. Getting it? If still the amount is lost, then only that loss is called as cash loss. Cash loss comes. Now how a loss can be there in the, how cash loss can be there? How come the business profit can be negative? Simple. Company borrowed loans and paid expenditure. Company borrowed loan and paid the expenditure. That's what cash loss represents. Suppose no, after adding back depreciation and after adding back provision also, still there is a profit. Suppose originally 10 crore loss, depreciation 20 crore added back, now 10 crore profit. Typically speaking, in this year operating wise, we don't have any negative cash flow. Operating cash flows are positive. So just if you reduce depreciation also, getting it, if you reduce depreciation, then profit is turning into loss. It's a non-cash loss. Depreciation is a non-cash loss. This is something similar to income tax. In income tax, no, you calculate business loss, unabsorbed depreciation loss, right? Exactly. So in income tax, how do you calculate business loss? What is the profit as per PGBP? For that, add back depreciation. If still there is a loss, that's a business loss. And that depreciation loss, whatever depreciation you added back, which means you didn't claim, that's called as unabsorbed depreciation, carry forward for infinite number of years. Yes or no? So exactly. Now, whether the company has incurred cash losses, see, company P&L account show loss. That's not what important. To that loss, add back depreciation, add back non-cash expenditure. Still there is a loss. Then that is called as a cash loss. If so, is there a cash loss in the financial year for which you are doing audit, or is there a cash loss in the previous year? Getting it? Yeah, both the years it is there, or any 1 year it is there, you must report. Are you getting it? See, we are alerting people that company is facing cash losses. Company is facing negative operating cash flows. Cash loss indicates negative operating cash flows by default. Next, is there any resignation of auditor happened during the year? See, our existing auditor resigned from the company. Whatever reasons, he resigned. And we were appointed as a auditor in replacement of the existing auditor. Now, existing auditor resigned, right? He might have given some reasons, right? He might have filed AD83 form and all, right? So, have you considered those reasons or not? The resignation, why he resigned? You might have seen the reasons, right? Have you considered the reasons when you are doing your audit? Check out. Of course, anyhow, we consider this as part of clause number 8. Yes or no? Communication with previous auditor. If previous auditor has resigned, we have to get, it is much more important for us to communicate with him. Then, material uncertainty. Material uncertainty. So, material uncertainty, this point, the very important point. See, many auditors are avoiding their duty, pointing that they have not identified any events or conditions that may cast a significant doubt on entity's ability to continue as a going concern. They are simply avoiding going concern standard by simply mentioning that they did not find any event or conditions. Generally, financial indicators is something that we can find easily, but operating indicators and other indicators we cannot find easily unless we investigate. Getting the point? Operating indicators, other indicators, we cannot find so easily. So, financial indicators are not there that affect going concern. Auditors are simply saying going concern is fine. Now, in this standard, earlier also, even if some financial indicators were there, auditors are saying, okay, loss is a part of a business. Sometimes working capital might be negative, it's a part of the business, but it is not affecting going concern. So auditors are cleverly escaping from this. Getting it is not affecting going concern. Now, on the date when you are signing the audit report, as on the date of audit report, you need to see not on balance sheet, remember, on the date of audit report, you are signing a balance sheet, right, that everything is true and fair. In the balance sheet, so many liabilities and assets were given, right? Whether the company can discharge. All the liabilities that they showed in the balance sheet as on 31st March, can the company still discharge these liabilities? You should check this assessment on which date? When you are signing the audit report, you check. I know as on 31st March, you may not aware. Subsequently, some fire accidents and all big accidents happened. Insurance claim also company is not getting. On the date of audit report, you know all this. Company cannot pay the liabilities that are there on balance sheet date. But if at all this clause is not there, what you will do? As on balance sheet date, the information is true and fair. You will give unqualified opinion and proceed further. Able to understand? So, under 570, anyhow, you have to check this. In fact, this is what 570 requirement, exactly speaking. But under company law, under CARO, they specifically asking you, please, based upon financial ratios, based upon aging schedule, based upon dates of realizing the assets. Financial assets means trade receivables, loans and advances. Getting it? And payment of financial liabilities means creditors and borrowings. Based on inflow pattern, outflow pattern, based on that information, and based on the knowledge of board of directors, you spoke to directors, they have given you so much of information, whether the auditor is still of the opinion that no material uncertainty exists, means company will not default. Getting it? As on the date of audit report, that company is capable of meeting its liabilities existing as at the date of balance sheet, as and when they fall due within a period of 1 year from the date of balance sheet. All the current liabilities or current liability of long-term loans, getting it? Current maturities of long-term borrowings, whatever they showed in the balance sheet, current maturities of long-term borrowings, current liabilities, whatever they showed in the balance sheet, and these current liabilities are becoming due in the next 1 year. Will the company has the ability to repay them on time? Do you agree with that? Check this point not on 31st March. Check this on the date on which you are signing the audit report. On the date of signing the audit report also, you know what is the financial position of the company, inflows, outflows, statements, all that you are aware of. You please report it. Are you getting the point? In MCQ, they'll give you, okay, this, they will mention it as balance sheet date. This they will mention it as audit report date. In one MCQ, they will mention audit report, audit report. In another MCQ, they will mention balance sheet, another option. So one option they will mention audit report and balance sheet. Another option they will mention balance sheet. Another option they will mention audit report. Another option they will mention date of approval of financials and audit report. Unless you observe this, how do you answer? Getting it? You should check on which date, audit report date, you should check this. What you should check? As on balance sheet date, whatever liabilities were there that were becoming due within 1 year, can the company honor? Getting the point? Can the company honor? This question is there, right? When you should question? On audit report date, you should question. Clear? Then actually CSR, no, it requires little introduction, and 21st clause also requires little bit discussion. Shall we continue in the next session? Okay, yeah, fine. So we'll continue in the next session these two clauses, then I'll complete 610, 620, then we'll start remaining standards. Are you all fine, comfortable? Yes, take care. So let's begin. In the previous session, we are discussing the CARO, and in that, two more important clauses are pending. One, regarding CSR expenditure. As we know, every company has to spend, especially the company which meets the criteria for CSR committee appointment. So those companies has to spend 2% of average net profits on social responsibility expenditure. And you know that CSR expenditure, you will not get deduction under income tax also, because that is considered as a personal expenditure for the entity. So no deduction for CSR activities. Further, how the CSR expenditure can be incurred, how a company can spend CSR expenditure. It depends, it can be in two ways. One, you can directly spend it on the social responsibility activities given under Schedule 7 within the same financial year, on or before 31st March. By the time of reporting date, you should have spent it. That is one option. Two, CSR expenditure can be in terms of rural development, infrastructural development. In these aspects also you can spend. If you see the Schedule 7 list of activities for CSR, they have given certain long-term projects also. They have given, suppose a company has adopted some villages and they want to lay down roads, infrastructure, water tanks, all that, complete some sort of, water networking, getting it. So all sorts of developments in a village they want to do. So it cannot happen in the same year. Imagine a company called Reliance, their turnover is somewhere around 70,000 crore, 80,000 crore. Sorry, their profit is somewhere around 50 to 60,000 crore. Getting it? Into 2% means 1,000 crore they need to spend at least. At least the minimum CSR expenditure that they are supposed to spend is 1,000 crore. Now 1,000 crore, if they adopt certain villages, the company have chosen certain villages to spend CSR expenditure. It cannot be spent within the same year. So there, project mode is permitted. CSR expenditure can be spent in the form of a project. You take up a project, spend on that. So when CSR expenditure is spent on a project mode, you need not complete entire expenditure within the same year. There is no restriction on that. If at all the project takes more than 1 year, you can take a permission and deposit that money in a special bank account, and there is some time limit like 2 years or 3 years. Within that, you have to spend that entire money for that project. If at all any money is left even after the time limit, if at all when you allocated some, let us assume 1000 crore that you have to spend, you have to spend some 1000 crore, out of which 200 crore you already spent, you have bills everything within the same year, and still 800 crore is there, you allocated for project site. This you kept in a separate bank account. This must be spent within 1 to 3 years, some time limit they have given. So within that time, if you spend that money, no problem. If at all, even after expiry of 3rd year, from the end of the financial year, if you are unable to spend that money, you need to transfer that money to the funds or to the trust that is specified under Schedule 7. Getting it? If you want to spend on your own, you have to either spend it within the same year, or you have to spend on a project for which you can get a permission and then spend. Suppose no, you could not allocate money to project. You could not allocate money to project. From the end of the respective year, if at all money is not allocated for project, which means unspent, unutilized money is there, unspent CSR money is there, which is not allocated for project. In that case, within 6 months from the end of the financial year, you need to transfer to Schedule 7 funds. This is the provision. If you allocate to a project, then you are having additional time limit to spend that money for the project, whatever you have adopted. Getting the point? Even then, if at all you are unable to spend, even allocating, after allocating the money, even within the time limit permitted, you are unable to spend. Then from the end of that particular time limit, within another 6 months, there is a time limit. You need to transfer to the Schedule 7 fund. Suppose you don't want to take all this headache. You want to spend CSR expenditure, but you don't want to spend on your own. You directly donate to the fund given under Schedule 7. One of the fund is Prime Minister National Relief Fund. One of the fund in PM, this CSR expenditure activities, PM Relief Fund. You can directly donate to PM Relief Fund. Getting the point? And that donation, you can even claim under ATG probably. Getting it? I don't know that nexus, whether in income tax ATG deduction will be coming for CSR activity or not, I'm not sure exactly. But, so that's the main provision of CSR, entire brief of the CSR provision. Now in CARO, what they're asking is whether the company has, whether any amount remaining unspent, because of any ongoing project has been transferred to special account in compliance. Suppose if at all you kept any money for a project, have you transferred that money to a special bank account? That is one they're asking. There is some unspent money, 1000 crores is the amount you have to spend, 200 crore only, you spend 800 crore, unspent money is there. One option you have is transfer to project. Special account you create. Suppose if it is not related to ongoing project, suppose you still have some unspent money, but you are unable to allocate to any project, which means you end up not spending that money for any purpose. The company has transferred unspent amount to a fund specified in Schedule 7 within a period of 6 months from the expiry of the financial year. So the rule is, if at all you are unable to spend the money and you are even unable to allocate for a project where you have to transfer to a special bank account, if you are unable to do that, that entire unspent money will be treated as unspent money from the CSR, and that has to be transferred to Schedule 7 funds. They have given us a list of funds, you have to transfer them. That's it. So as an auditor, what you have to check? Company, how much they have to spend. Have they allocated it for project and then transfer to special account? If so, fine. If not, it must be transferred to Schedule 7 fund within 6 months from the end of the financial year. Getting the point? Here so much of interpretation and all we can discuss, but this is enough. Next. Modified opinion. In other group companies, this is something applicable for consolidated financial statements mainly. You know, I think in the introduction to CARO, I didn't speak about applicability of CARO to consolidated financials. CARO do not apply for consolidated financials, which means when we are giving audit report on consolidated financials, we need not report on CARO. So, but the 21st clause is applicable. Even when you are giving audit report on consolidated financial statements, this 21st clause is still applicable. Now, what is this 21st clause? Read it carefully. Many do not have clarity on this. Whether there have been any qualifications or adverse remark by respective auditors in the CARO reports of the companies that are included in consolidated financials. If yes, indicate the details of companies and paragraph numbers of the CARO report containing the qualifications or adverse remarks. Nothing but, suppose Tata Motors is preparing consolidated financial statements. I'll show you that directly. So this is consolidated financial statements related audit report. Remember, CARO will not apply, but here they have given still annexure A in the audit report, but that only contains only one clause. You see here, annexure A to independent audit report. This is regarding report on legal and regulatory requirement. And you see directly they have numbered 21st clause. So 21st clause is predominantly applicable for what financial statements? Consolidated financial statements. Getting it? For standalone financials, you need not apply. Technically speaking, you need not apply. Getting it? Now, Tata Motors, since it has so many subsidiaries, it is supposed to prepare consolidated financials. And on that consolidated financials also, auditor has to give audit report. Now, the consolidation objective itself is what? Individually you are performing good, but I want to know as a family. Yes or no? We want to look at you as a family, how are you performing? Because if any issue happens to any subsidiary, you are the one who are going to pay them. You are the one who are going to repay the loss that you are suffering. Jaguar Land Rover is suffering so many losses and Tata Motors is only bearing the loss. So Tata Motors individually might have so much of profit, but what is the point of having profit when your child is suffering with losses where you are compensating your profit with the child? Able to understand? So consolidated financial statements gives that picture. That is the main objective of consolidated financials. We want to see the group position, group performance as a whole. Now like here this is like a aggregated information. This is nothing but aggregated information of all companies that are included in consolidated financials. So in Tata Motors financial statements, what are all the companies were included in consolidation process? Like some Jaguar, Land Rover, Range Rover. You see they have given few list of companies. Of course, in consolidated financials, Tata Motors is the original company, and Tata Motors Body Solutions Limited, JLR, Tata Motors Finance, TMF Holdings, Tata Motors Finance Limited, and Automobile Corporation Goa, and so many companies. There are so many companies. Remember, these are not exhaustive list of companies included in consolidation. These are the companies where respective auditors have given some observation in their CARO reports. Now, suppose you see the Jaguar Land Rover India Limited. So further, for that company, clause number 7A auditor has given some disqualification. Auditor has given some qualification. Getting it? Some undisputed statutory dues. Regarding some undisputed statutory dues, JLR company related auditor has given some qualification. You see, clause number of CARO report belonging to these companies, getting it, which is unfavorable or qualified or adverse remark. Getting it? Where auditors have given unfavorable remark. So clause number 7A. Likewise, every company that is included in consolidated financial statements. So wherever under CAROs of the respective companies, under what clauses there is an adverse remark. So people directly open that company, their CARO report, and open that respective clause, and if at all they want to know, they'll get to know. Able to understand? So as a consolidation, you see how cleverly, generally CARO do not apply for consolidated financial statement, but by showing this, indirectly, if everything is remaining, rest everything is complete. By all the respective companies, rest everything is complete. All other companies which are included in consolidated financials, what clauses they have not complied? That is only important for people also, right? So indirectly, CARO is applied for all the consolidated financials also by this particular point. Getting it? So in this point, we are trying to convey all the companies that are included in consolidation. Respective auditors have given audit report. Respective auditors have included CARO 21 clauses, and under what clauses they have given a qualified opinion or adverse opinion or unfavorable remark. That entire list we are listing out here with clause numbers and company names and even corporate identification number, all that. So indirectly we made CARO applicable to consolidated financials also. Able to understand? That's why we need not comment on all other remaining 20 clauses, because here we are giving Complete list of all the companies where CARO has certain remarks. That's it. Clear, all of you? That's it. And we all know the reporting requirement in CARO is what? Whether the matter is positive or negative. Getting it? You have to reply both. Suppose if the matter is negative, you want to talk unfavorably, you need to give reasons also. Whenever the comment is unfavorable or adverse remark or qualified opinion you want to give on any particular point in CARO, you have to mention reasons also. If at all you are unable to express any opinion, you shall mention the fact together with reasons why it is not possible for you to give opinion on a particular clause. Suppose a company has not given you access to fixed asset register. How can you comment whether company is maintaining proper records of fixed assets? Getting it? Containing quantitative details and situation. If they do not provide fixed asset register access to you, you will qualify here. And if at all, this non-availability of register is also material as a whole for financial statements, you will also qualify an audit report. Able to understand? Whenever you are qualifying in CARO, you should cross-check whether that brings a question about qualification on the overall financials also. That also you should. Suppose undisputed statutory dues, company is not regular. They are not regularly depositing. You qualified. But that is not required for you. There you are not required to qualify on the financial statements. Financial statements, when you are supposed to qualify, only when there is a material misstatement in the financials or some financial information is not given to you. Only on these two occasions you can give modified opinion. Apart from that, you cannot give yes or no. That's it. So with this, CARO is also over. Next, we'll go to 610. The page number is 38. So using the work of internal auditor, here you need to remember one important point. At the beginning itself, you can take a note. The external auditor shall remain responsible for the opinion expressed on the financial statements. The external auditor shall remain responsible for the opinion expressed on the financial statements. The external auditor is responsible. The external auditor shall remain responsible for the opinion expressed on the financial statements. Full stop. This responsibility shall not be reduced. This responsibility shall not be reduced. This responsibility shall not be reduced by use of work of internal auditor. This responsibility shall not be reduced by the use of work of internal auditor. Most important thing. Even SES 600, it starts with different, the statutory or the external auditor has a division of responsibility. Yes or no? The external auditor is not responsible for the component financial information which is audited by other auditor. Whereas here it is not that. The external auditor shall continue to be responsible for the whole opinion on the financial statements. This responsibility in no way shall be reduced. This responsibility will not be reduced for of the fact that you have used the work of internal auditor. Whether you want to use work of internal auditor or not, your choice. But look, you cannot blame him tomorrow. Are you getting the point? So internal auditors cannot be blamed at all. So that is what the standard at the beginning itself it starts with. So now You take any company, big companies, especially listed companies. Of course, for them, internal audit is compulsory. Internal audit department will be there, internal audit function will be there, which is compulsory for them. So, internal audit department is compulsory. Just as a formality sake, they don't keep an internal audit department. They generally have internal audit department and staff members, competence of the staff that commensurate with the size of the entity. And in fact, we have to comment on the same in CARO. Whether internal audit, some 19th clause or 18th clause, some clause number, getting it. Okay. 14. Okay. So we have to, the external auditor has to specifically comment in the CARO whether the company has adequate internal audit system in its place that commensurate with the size of the entity. So internal audit system or internal audit function or internal audit department, you can use interchangeably. The standard SA 610 uses frequently the word function, internal audit function. So in entities, no, there will be an internal audit department. That entire department will be headed by one person called as CIA, Chief Internal Auditor. What do we call him as? Chief Internal Auditor. Now this entire department will have so many staff members. Some of them are CA, some of them are CMA, some of them are from MBA, some of them are from some other background, whatever. Because internal auditor, there is no qualification. I mean, there is no requirement of any particular qualification. Anybody can be an internal auditor. What just needed is, do you have that audit skill or not? And the objective of internal auditor, you see here the definition is so cleverly drafted. It is a function of the entity that performs assurance and consulting activities. So they provide assurance on whatever management asks for, and they provide consultation to the management whatever doubts they have. Getting it? To evaluate and improve effectiveness of governance, risk management, internal control processes. Internal auditors are providing assurance. They are providing consulting. Both they are providing to the company, where they are evaluating and improving the effectiveness of governance, risk management, internal control. So they are evaluating your governance systems, governance processes, control environment. Getting it? They're evaluating risk management systems. They're evaluating internal controls at various locations. It may be financial related or non-financial related. Internal controls, no? There are three types: financial control, compliance control, operating controls. Getting it? On all areas they will work on. Internal auditors will be working on all the areas. Like some team members of the internal audit department, they'll be working on some works. Another set of team members will be working on compliance controls. Another set of team members working on operational controls. Some set of team members are working on governance related work. Some of them are working on risk management related works. Internal audit report, if you look at it, will be hundreds of pages. It is not like audit report 5-6 pages document. Internal audit report will be very big, lengthy, because internal auditor's objective is not to give opinion on the financial statements. Their objective is to find faults within the systems. Their objective is to find what is happening in the company. They go through almost 50% of the transactions of the entity. They verify the processes, all that. So almost whatever we do in audit, like we do purchases audit, we do sales audit, we verify employee benefit expenses, we verify stock, we verify depreciation, we verify remuneration to directors, we verify operating expenses, we verify other expenses. So many we verify. Internal auditors also verify all the same. But the fact is, we are verifying them to give an opinion on the financial statements as a whole. They are verifying to find out where and all the transactions or processes went wrong. That is their objective. This is our objective. And definitely, internal audit function do audit throughout the year. And there are tens and hundreds of people who are doing audit. And they are doing audit concurrently along with the books of accounts preparation. So the number of mistakes that they find is of course higher than stat audit. So whatever works I have to do, internal audits have done already. Can I use that working as a part of my stat audit? Yes, you can use. The standard says you can use. Now, when you're using the work, you have to be careful. What precautions you have to take when you are using the work of internal auditor? That is what SA 610 mainly talks about. Getting it? Now, you can use the internal auditor in two ways. One, they already did some work, right? Take those workings. You verify those workings and take a documentation of the same. You do some basic inquiry analytical procedure on that work and conclude on that particular work. Suppose internal auditors have did purchases audit completely. Look at, ask their purchase audit, purchase related workings, ask them what controls they tested, look at their checklist and all, what questionnaire they are using, what checklist they are using, and you also verify sampling basis whether they're checking their results, whatever remarks they wrote, are they correct or not. You also on a sampling basis you check, take the documentation. You also look at purchases data, observe, apply analytical procedure, analytically, logically think whether this everything seems genuine or not. Getting it. Go through the entire purchase register. Is there any suspicious transactions? Do that analytical procedure and document it and conclude that purchases are true and fair. You have used the work of internal auditor and then you concluded that purchases are true and fair. Tomorrow, any fraud was detected in purchases which internal auditors intentionally suppressed. They know that, but they didn't discover. They know that they didn't identify. They didn't report. Getting it? They reported internally, but not in the audit report. Getting it? And you were caught. You are held responsible. You should only answer. You cannot say internal auditor work I have used. You go and ask them. You cannot. We are paying you fees because you have to do the audit. To reduce your work burden, you have chosen internal auditors work. Able to understand? That is type 1. Type 2. Type 2. Using internal auditors to provide direct assistance. Using internal auditors to provide direct assistance under the direction, supervision, and review of external auditor. So the internal auditor will be working under the direction of external auditor, will work under the supervision of external auditor, and the external auditor review his work. So what is direct assistance? Simple. Suppose my staff members are not adequate. Suppose we want to do physical verification of inventory, suppose, example. This company has almost some 20 godowns. As per SA 501, we have to visit to all the godowns, example. Getting it? So auditor has to attend physical inventory counting that is being performed at year end. So we want to attend all the 20 godowns. We do not have sufficient staff. So we asked the company, can you provide your staff members, internal audit department? So next 30 days, they will be part of my team. I will be allocating the works to them, how I allocate to my article assistants. Getting it? How my article assistants, engagement team members, we allocate the work. Same way, you give your staff, some 5 staff members you give me. So these 5 staff members, next 30 days, they will be part of my engagement team. And I will give them certain works. I will direct them how to do. I will supervise how they are doing. Once they completed a particular work which I delegated, I will review how they did. Able to understand. So this is called direct assistance. So once internal auditors know, whoever I have taken within my team, I will give them, I will allocate them work as part of my audit plan. And I will direct them how they have to do that. And I will supervise how they are doing it. Getting it? How I supervise my articles. Getting it? Like once my article completed the work, I will review how he worked, how he worked, what are his observations, all that. Same way, whatever work this person has performed under direct assistance, I will verify his work. Able to understand? This is called direct assistance. Now the standard objective you observed. The standard objective is very simple. Here I am not giving all that content. The objective of the standard is very simple. When external auditor decided to use the work of internal auditor under type 1 to evaluate whether the work is adequate for your audit. See, in purchases when we are auditing, no, our objective is what? In purchases when we are auditing, whether company control system is proper or not. So that all the purchases are properly captured into the systems. And all the purchases are captured into the system at right values. Only authorized purchases are recorded. Unauthorized purchases are not recorded. GRN purchase order, e-way controls, we will verify. This is the objectives for us when we are doing purchase audit. Internal auditors have the same objectives, similar objectives. Getting it? So when they are also verifying purchases, they verified these elements. In addition to that, so many other also they verify. Whatever internal auditors work is there, right? That is adequate for. Are you getting the point? Suppose another work is there. GST reconciliation we need to do. TDS reconciliation we need to do. This company is having 15 states. This company is operating in 15 states. Naturally, they have to take 15 registrations. Since they have 15 registrations, 15 into 2 into 12, 30 into 12, almost 250 returns they will file. So, 300 returns they will be filing. In a year, how many returns they will be filing? Somewhere around 300 GST returns. GST 1, 3B. And for 15 states, they will file annual returns. Now, as a part of CARO reporting requirement, I need to comment whether the company is regular in depositing GST. One of the statutory due is what? GST. So if the company is regular in depositing GST, I have to comment. So I need to check entire this 300 months related, 300 approximately 12 months for all the 15 into 2 months, 2 returns in a month. So I need to verify all these 300 returns. Only then I can comment. So this is a significant difficulty in audit. So much work I need to do. But don't worry, internal auditors have already performed the reconciliation. Take that reconciliation, check the reconciliation on a sample basis, see whether they have clearly mentioned what is the due date when the company has actually paid, what is the due date for return when the company has actually filed the return, is there any excess payment or short payment, any interest applicable, very clearly they did. Complete working which I want in external audit. The level of assurance I want in external audit for GST compliance, entire that work they did completely. So that work is adequate for my audit. Whether the work is adequate for your audit or not, how do you check? That point is covered here. When you are using direct assistance, what precautions you should take? That is what they have covered. So now you see here, using the work performed by internal auditor, that is type 1. The external auditor will evaluate the following. The external auditor will evaluate the following. 1. I will use his work only if the following 3 conditions are satisfied. I must be convinced regarding independence and objectivity of internal audit function in overall organization. Actually, they use the word the internal auditor's organizational status. Is it supporting their objectivity? That is what actual sentence is. Internal auditor's organizational status, is it supporting their objectivity? So what is their status in the company? Getting it? Are they at par with top management or below top management or below middle level management? Where? In the organizational hierarchy, where are they situated? What is the level of competence? All the internal auditors department, whoever is there, they're all chartered accountants. So definitely I will have some reliance. Getting it? Whether they follow a systematic and disciplined approach. So do internal auditors, when they're doing audit, do they have any systematic disciplined approach? Yes. For everything, they have a quality control policies and procedures. Though they are internal auditors, how to verify purchases, they have some 20 checklist item. How to verify sales, they have checklist. For everything, they have a questionnaire or checklist to verify. They are not just verifying by their professional judgment. Whoever verifies, whoever comes within the internal audit team, whether it's a new joinee or a senior person, whoever it is, when they are verifying checklist, they verify for sure 20 parameters. When they verify sales, they verify for sure some 18 parameters. So they have standardized the audit procedures, which means they are following a systematic and disciplined approach. Yes, they're having systematic approach, they are competent, they are independent and objective. Happily, I can use their work. I get answer for all these 3 positive. Suppose, if at all they are lacking independence or they are lacking competence or they do not have a systematic and disciplined approach including quality control, they don't have a systematic approach, you better not to use their work because it is not organized. Now, suppose you decided what nature and extent of work of internal audit function that can be used. What should be the nature of the work? Some works, you should not use internal auditors work. Areas where high risk is involved, areas where high judgments are involved, significant judgment related areas, significant risk related areas, significant transactions, to verify them, don't take the help of internal auditor. Suppose in 2021, 22 or 2021, Reliance Industries Limited, they have changed useful life of plant and machinery from 30 years to 50 years. Their plant and machinery was originally how many years? 30. And they revised their plant and machinery life to how many? 50. And what's the value of plant and machinery? 3.9 lakh crore. What's the value of plant and machinery? 3.9 lakh crore worth of historical cost of plant and machinery. Maybe some revalued impairment, everything put together, that's the value. Getting it? The useful life is revised from 30 to 50 years. Here, on this useful life also, internal auditors have worked on whether this is correct or not, they worked on. But don't use their work. Better you work directly. You can use the work of internal auditor. In spite of this, it should appear for the management that external auditor is sufficiently participating in audit. For everything you're asking internal auditors work. What are you doing then? Getting it? That's what the standard also says. The external auditor shall make all significant judgments and he should prevent undue use of work of internal auditor. He should prevent undue use less of the work of the internal audit function to perform more of the work directly. You perform the work directly more as much as possible. Try to use less the function's work. You should not unduly depend on internal auditor for everything. Getting it? And see that, ensure that you are sufficiently involved in audit in spite of using the internal audit function as planned. You are planning to use internal audit function. In spite of it, ensure that you are still doing the work properly and communicate with top management how you are going to use the work of internal auditor. Getting it? The nature and extent of work of internal audit function that can be used by external auditor. What factors auditor has to keep in mind? This question, 4 marks question. Getting it? And finally, they'll give you this question. The external auditor decided to use the work of internal auditor in so and so location, so and so thing. What are the areas of the work the external auditor can use the work of internal? So areas of work for testing operating effectiveness or performing substantive procedures involving limited judgment, inventory counts, testing of compliance with law and regulatory requirements, reviews, audits or reviews of financial information of subsidiaries that are not significant, immaterial subsidiaries and all. No, for them financial information you want to verify, because that is also included in consolidated financials. That verification works you can delegate to internal auditor. Suppose if it's a material subsidiary, don't delegate. If an area of work involves significant judgments, don't delegate that. If an area of work involves significant risk, don't delegate that. So for clerical works like operating effectiveness of controls testing, where limited judgments, inventory count, getting it. In all these cases you can use. Remember, only these you have to write in exam. You should not write others. Getting it? So what are the areas of the work that external auditor can use the work of internal auditor? Straight question only on this A point. 4 marks question might come. Or they may ask you, nature and extent of internal audit function that can be used by external auditor is affected by various factors. What are they? In such case, in such a case, you need to write BCD main points. So BCD, getting it? And as a last point, you should write this. In such a case. Then, now how will you use the work? What is the manner? How do you use? To discuss with internal auditor first. Discuss and coordinate with internal auditor. Coordinate means, okay, you decided to use the worker, ask him workings. Send him the workings through mail. Coordinate with him. Getting it? Read the reports of internal audit function. Read their internal audit reports to obtain an understanding of what procedures they performed and what they found. You read the report, what they did, what they found. They verify whether internal audit function properly planned, properly performed, properly supervised, properly reviewed, properly documented the work. Check how they planned, performed and executed the work, how they documented. Get evidence to draw reasonable conclusions. See whatever conclusions internal auditors are reaching, right? Yes, purchases are appropriate, sales are appropriate. They are giving in the audit report. In internal audit report, summary report is there inside that. In that summary, they are commenting so many things that if this is positive, this is positive. See whether their conclusions are appropriate or not. Check out. Reports prepared by them, are they consistent with results of the work? Purchases are appropriate, they said. When you go inside the workings, no, they found so many mistakes. Mistakes are so many, but you are saying appropriate. Whether the internal auditor final report is consistent with the workings they did. Cross check. Now here there is a question. Can external auditor ask the working papers of internal auditor? Very simple. If internal auditors are employees of the entity, their working papers are nothing but books of accounts. You have access to books of accounts. You have a right. If internal auditors are an outside audit firm, suppose an audit firm outside has been appointed as an internal auditor. Now, can you demand their working papers? No, because that's a different engagement. Understood? So I think this answer justifies. Next. Suppose you decided to use direct assistance. What points you evaluate? Here only 2 points I'll evaluate. If I am using them for direct assistance, third point, systematic and disciplined approach, I will not check. Why? I'm not using your work, right? I am directly using you. You will work as per my systems. You will work as per my policies. Because you are now my team member. So only 2 points here we will check. Whether they have objectivity and whether they have necessary skill and competence. Getting it? Prohibition. You should not use internal auditor for direct assistance if there is a threat to objectivity or if they are lacking competence. Okay, you decided you will use internal auditors, direct assistance, but certain works don't delegate them. Certain works don't delegate them. What works? Areas that involve significant judgments, areas related to higher risk, areas related to work with which already they have performed. These people have already performed tedious work. You are again giving them tedious work. Verify whether tedious is paid correctly or not. So don't delegate them. And there is another point actually here. I didn't mention intentionally, but there is another point. Now, in this standard, no, you need to take a decision, right? Whether to use type 1, which works of type 1 you should use, where type 2 work can be used. You need to take a decision, right? Whose responsibility to take that decision? External auditor. This decision making, can you delegate to internal auditor? That's what the fourth point is. The fourth point says the procedures that are required under this standard, that procedures cannot be delegated to external auditor. The decision making process where the work of internal auditor can be used by external auditor. The decision making process don't delegate to internal auditor. That's it. Predominantly we covered entire the standard. Comfortable? All of you. That's it. So then the next one is SAS 620. Okay, just 2 minutes, we'll begin. Yes, let's begin SAS 620 using the work of an auditor's expert. Even in this standard also, they have clearly stated the auditor has sole responsibility for the audit opinion expressed. This responsibility is not reduced by the auditor's use of work of an auditor's expert. So this responsibility will not be reduced. Remember, there are various standards which are governing this point specifically. See, 220, it says the engagement partner has complete responsibility for the opinion expressed. The fact that you are using article assistance, you are using paid assistance, you cannot shift them the responsibility. You cannot say my article did mistake, not me. Yes or no? You have taken the fees, not him. Okay. Then 500. In that there is a point regarding management expert. 500 talks about management expert usage. Even if you are using the work of management expert, if at all, you are using their workings, still you are only ultimately responsible. 610, even if you are using the work of internal auditor, you are only ultimately responsible. 620, even though you are using the work of auditor's expert, you are only responsible. 580, you are taking written representations from management for various things, still you are only responsible for the opinion that you are expressing. You should give opinion so only after you convince that it is true and fair. And whatever you convinced, right, you should be able to prove how you convinced. Documentation is your responsibility. Able to understand? So all these standards says you are ultimately responsible. Whereas 299, joint auditors have divisible responsibility. 600, principal auditor and component auditors have divisible responsibility. These two standards are saying divisible responsibility. These 5 standards are saying the ultimate responsibility is with the external auditor. Got clarity? This is a summary that you need to remember. No need to remember, just understand, try to understand. First of all, who is an expert? Can we call somebody as expert if they say we are expert in accounts and audit who are not from CA/CMA background? Obviously, we don't agree. Yes or no? Because we believe that we are experts in accounts and audit, whether we know it or not. Honestly, that's what even standard says. Expert is a person having specialized skill or talent in any field other than accounts and audit. If that expert work is used by management for preparation and presentation of financial statements, if the expert work is used by management for assisting them in preparation and presentation of financial statements, we call him as management expert. Auditor's expert. If a person having specialized skill or talent in any field other than accounts and audit, whose work in that field is used by auditor for obtaining sufficient and appropriate evidence. Most of the students, they study only up to management, only up to auditor. They don't read the subsequent part. They'll give you a MCQ. which of the following statement is true? An expert work used by management. A person's who is expert in any field other than accounts and audit, whose work in that field is used by management for obtaining sufficient and appropriate evidence. B, for preparation and presentation of financial statements. That is correct answer. So they'll give you confusing. So you need to read entire definition always up to the last point. Getting it? If an expert work is used by management for preparing financials, we call him as management expert. If an expert work is used by auditor, auditor's objective is what? Ultimately, whatever procedure we do, ultimate objective is what? To get evidence, to get reasonable assurance. So for obtaining sufficient and appropriate evidence, you see, that's what. So an individual, expert is an individual, or it may be an organization, a law firm. It may be a lawyer or it may be a law firm. Getting the point? Possessing expertise in a field other than accounting and audit, for example, law. Getting it? Whose work in that particular field in the law is used by auditor to assist the auditor in obtaining sufficient and appropriate evidence. And this expert, no, like auditor's expert, no, it can be either internal expert or external expert. In our firm, only one of the partner is a law graduate. Getting it? So I want to take a conclusion on some pending litigation. Whether it's a contingent liability or a provision is required, I want to take a conclusion on that. So I can approach my internal lawyer, internal expert who is a law graduate. Getting it? If I don't have like that, or if I want a better evidence, I can go for external law firm, which is not related to my firm. So we call him as external expert. Remember, auditor's internal expert means your partner or your firm or network firm or partners of network firms. All of them comes under internal experts. Even network firm related, another firm advice you have taken, that will also come under internal expert. External expert means what? You or your network firm don't have any connection with that particular party. Then we call him as what? External expert. Who is a management expert? He is also an individual, or it may be an organization possessing expertise in any field other than accounts and audit, whose work in that field is used by entity to assist the entity in preparing financial statements. See how clearly they have drafted? Yes or no? No. So the auditor has sole responsibility for audit opinion expressed. This will never be reduced by use of work of auditor's expert or even management expert for the matter. Even SA 500 says that. Now, why we need an expert assistance? Simple, we are not familiar in everything. Suppose a pending litigation is there, we don't understand legal terminology. Suppose you try to read a document in the, any Supreme Court judgment or High Court judgment or tribunal related judgments, you check. You can't understand the terminology completely. You can't interpret the status of the case by reading that particular case document. You can't understand exactly. So take the help of a lawyer. That is one example. Another example. In some entities, valuation of inventory is not that easy, especially work in progress. How do you value? How do you decide stage of completion? Suppose a company is manufacturing air conditioners. As on 31st March, some air conditioners are pending. They are in work in progress. How do you evaluate what is the percentage of completion of the air conditioner? You don't know how to technically evaluate the percentage of completion. Production manager will say some percentage. Getting it? But you are not able to believe him. So because work in progress stage of percentage completion will affect the valuation of inventory. Because overheads allocation, all that is based upon percentage of allocation, percentage of completion. Getting it? So stage of completion is very important. So take help of that expert, engineer expert in that field, whoever is there. Some companies, they maintain oil reserves. Suppose you are doing audit of IOCL, Indian Oil Corporation Limited. They have crude oil reserves. They have underground crude oil reserves. So many, gallons of crude oil is there. You want to measure how much exactly is there. How do you measure? Because the tank shows some number. Digitally, some number is shown. How do you know that management manipulated it? So there are so many occasions where we require experts' assistance. Getting it? So now, that's what. So these are the various reasons where experts' assistance is required for valuation of inventory, for valuation of provisions, for valuation of contingencies, all that. So many reasons. Getting it? Now, so what are the factors for determining need of an expert? Remember, here the question, it can be either auditor's expert or management expert, whatever it is. First of all, why you require an expert? On what basis you say that you require an expert? This answer is different. This question is different. There is another question. Considerations when deciding whether to use an auditor's expert. Considerations, factors, both are same. So what are the factors? What are the factors that influence your decision regarding use of auditor's expert? That question is different. What are the factors that determine? What are the factors that help you to determine need of an expert? First of all, do I need an expert? Suppose I need an expert. Already management has employed an expert. I can use his workings if possible. I need not go for auditor's expert every time. Why should I go for auditor, external expert again and again? Already company appointed a registered valuer. A company has appointed a legal counsel. Company has already appointed a special engineer for valuation of so and so things. Management has already appointed, and you based upon their workings only they valued. Why should I go for auditor's expert? Only thing first I should check, should I need an expert? Company valued inventory. Company classified some pending litigation as contingent liability. So is it correct or not? I want to know. So first of all, to know this, is my competence enough? I need to check. If my competence is not enough, then I need an expert. Now the question is, I need expert. Now which expert? Already management employed. Can I satisfy with his working? That is first question. If at all I'm okay with his workings, everything, he's competent, he's governed by external professional standards and all, he's having all, responsibilities, code of ethics, everything just like me, getting it, I can believe his opinion. Suppose if I'm having doubts about management expert's objectivity, I feel somewhere this management expert is biased towards the management, then I will go for auditor's expert. Are you getting it? So what factors that are required for deciding need of an expert? The question is different. What factors that are deciding, getting it? Need of auditor's expert. Both are different. Observe the difference. Getting it? Now, do I need an expert or not? First of all, an auditor's expert may be needed in one or more of the following situations: to understand the entity and its environment, including internal control. Suppose you are newly appointed as an auditor for a pharma company. You don't know how pharma company works, how pharma company operates, you don't know. Because the drugs they are manufacturing are liable for compliances with so many regulations, norms and all, international norms and all will be there. You don't know exactly how pharma industry works. So better take one expert help there. Getting it? Identifying and assessing risk of MMS. Identifying and assessing risk of MMS. Today so many new business models are coming. Yes or no? Suppose you are appointed as an auditor for BharatPe. That's a UPI payment company. Or you are appointed as an auditor for 197 communication, Paytm. How do you know in Paytm what are the risk factors? Suppose in a normal kirana store or a normal supermarket, I can easily understand where mistakes can go wrong. But in a Paytm like a company, where frauds can happen, how do I know? So sometimes experts are required depending upon the risk of, to evaluate risk of MS, you need an expert. Determining and implementing overall response to the assessed risk at financial statement level, nothing but for identifying risk, you need a help of an expert. Suppose you find risk, how to answer this risk, how to respond to this risk, how to verify so that I can identify whether this risk is materialized or not, whether this risk turned into reality or not. Responding means further audit procedures. They are nothing but what? Further audit procedures. See, there are two standards we have. One is 315 and another one is 330. 315, 330. 315 talks about identifying and assessing of risk of material misstatement through understanding the entity and its environment. Risk of MMS is divided at two levels: financial statement level, assertion level. Financial statement level risk, which is a significant risk. Generally, when we identify financial statement level risk, we don't do audit, we will withdraw from audit. Getting it? Financial statement level risk. Example, going concern risk. Top management are not with integrity. Top management, those who are running this company are not working with integrity. They are doing frauds in every way, which we cannot discover. These risks are called as what? Financial statement level risks. Assertion level risks, what are they? In go down, inventory warehouse, controls are not proper. That's an assertion level risk. If controls are not proper in warehouse, that affects existence of inventory. That affects existence of inventory, which is not a financial statement level, which is not a pervasive level. Able to understand? Purchases processes, vendor master do not have proper control. That's an assertion level risk. If vendor master is not proper, there is no proper control in the vendor master, there is a possibility that unauthorized vendor may be created, unauthorized purchase order may be created, unauthorized payment may be created. So some wrong purchase might be processed. Assertion level risk. Are you getting it? Suppose if you find so many assertion level risks and all of them put together may be treated as financial statement level risk. Able to understand? So the risk assessment, whatever risk you identify, no, you need to assess it. Is it a high risk? Is it a medium risk? Is it a low risk? You need to assess it. Getting it? So you need to identify and assess the risk of material misstatement at the financial statement level, at assertion level. Whatever the risk you identify, what can go wrong? You do that assessment. Anyhow, we discuss entire this in risk assessment procedure, risk assessment chapter. Getting it? So you do this. This is called risk assessment. To do this risk assessment, you may need the help of an expert. Okay, fine. You identified so many risks. How to answer this risk? How to verify whether this risk turned into a fraud? How to verify? Response to assessed risk. Getting the point? So response, how do you respond? So 315 says risk assessment procedure. 330 is talking about further audit procedures. Audit procedures are two types, risk assessment and further. 330 is further audit procedures. Response to the assessed risk. How do you respond? You have to perform further audit procedure. Test of controls, test of details. That is what 330 says. Clear? Next. So designing and performing further audit procedures to assessed risk. That itself is called as what overall responses we should implement. Overall response is nothing but you perform further audit procedure. You found some lapses in purchases. You do test of transactions of purchases. And finally, for evaluating sufficient and appropriate audit evidence. So whether evidence is proper or not. Suppose company valued inventory, workings and all they have showed you. You also verified whether this workings proper or not. You want to verify. You may take help of an expert. Clear? So this is the straight question that can be asked as a 4 marks question. It was asked actually once. It was asked. In the very recent attempt, in the past 3-4 attempts only it was asked. Either this or this. Either this or this. Any of these questions has been asked. Not only that, you should consider one of you should consider one or more of the following. And not only that, how far is your understanding of the other field? If at all you're having very good understanding of the other field, suppose I'm working as an auditor for this company from past 10 years. I know how valuation of oil reserves happens. So initial days, I don't know. So I took help of an expert. Initial 3-4 years, I worked with expert. I learned the skill of valuation of oil reserve, crude oil reserves. Now I know how to evaluate. Getting it? So experience in auditing the entities that require such expertise. So what is the level of experience you have in auditing these entities where you felt expert work is required? Education or professional development in that particular field. Suppose you studied a guidance note on crude oil valuations. Suppose you got a certification course from Petroleum Board, getting it regarding crude oil valuation. So you may get this development through formal courses or by discussion with people having that expertise and discussion with other auditors who performed similar engagements. If at all you are having access to all this now, you may don't take the help of an expert. Able to understand? Out of all this, any 4 points. So sometimes no, and what are the areas where experts assistance is required? This question might come. In that case, any of these 4 points you have to write. Sometimes the question will be factors for determining need of an expert. In that case, you write mainly the second point and first point, any 2 points write. Getting the point? See, remember the question is only for 4 marks. Most of the questions are for 4 marks where they expect you to write relevant 4 points. Any 4 points if you write enough, 1 point, 1 mark. Clear? What happened? Fine, all of you? So, next one. What are the considerations when you are deciding to use auditor's expert? So, on what basis you decide auditor's expert? It depends upon nature and significance of the matter, risk involved, and if at all management has used management expert, you consider additional factors. What is the objective of management expert? Whether he is employed by the entity or a third party. Getting it? How far management is controlling or influencing the management expert, and what is his competence and capability. Whether management expert is also subjected to standards like how I am subjected to auditing standards. Getting the point? Every profession has their own standards, their own code of conduct. So if at all management has already appointed management expert, can I use that expert work? What factors? These points you will decide. Getting the point? So you just check how far management is controlling him. What is the nature of the work? What is the scope and objective of that expert? Is he employed by the entity or is he a third party firm? Management expert. So, and how far he is competent, how far he is independent from the entity, and what are the standards that govern his work? If at all, everywhere I got positive answer. Why should I go for audit expert? I can happily convince with his work. Getting the point? Suppose if I have a negative answer on this, and I want to, and it's a significant matter, and with respect to management expert, I'm having a negative conclusion. Then I will go for auditors expert. Understood how these points are different from above points? In the above points, do I need an expert? In the below point, do I need an auditor expert? Getting the point? Which means, do I need to recruit expert on my own? That's the question. And what is your knowledge of and experience with work of experts in relation to such matters? In relation to that matter, suppose for the first time I'm doing audit of a pharma company related to some drug related research and development. Okay, I need to decide whether it's in research phase or development phase. I need to decide. So in that field, I don't have literally no knowledge to whom I should approach to have an idea on this, all that. Getting it? So, and management also have not appointed any expert clearly on this. In that case, I will have to take some additional precautions, ask industry experts, and then recruit an expert and get an opinion on this particular question which I have. Able to understand all this? Have you observed all this earlier? The simplest book that you follow is highly risky book that you're following. The more simpler the book that you follow, the success rate will reduce. I don't say that you fail, but success rate will reduce. Everything is a probability, right? So what we should do? We should do those kinds of activities that increases our probability of success. Getting it? Fine. Next one. Nature, timing, and extent of audit procedures influenced by auditor's expert work. Obviously, the way I planned my audit, it obviously changes because I'm using now auditor's expert work. So in determining nature and timing and extent of audit procedure, the auditor shall consider nature of the matter to which expert work relates to. Is it relating to closing balances or is it relating to opening balances? If it is relating to opening balances, expert work, I have to wait until his report comes. I cannot start the audit. Getting it? So your nature, timing, and extent of audit procedures are influenced by where the expert work is. Getting it? Risk of MMS in the matter, significance of the work, auditor's knowledge and experience with that expert, whether the expert is subjected to firm's quality control. Only our internal experts are subjected to our firm's quality control policies. Why external expert and all is subject to our firm quality control procedure? Generally, if at all the lawyer is there in our firm only, he already know what kind of evidences we want, what is our quality control policies is well aware of. So if at all he is my internal expert, my audit procedures, nature and timing will be much simpler. Generally, in the following cases, more extensive procedures would require. Even though you are using experts' work, you require more. The work of an auditor The work of an auditor expert is related to a significant matter that involves subjective and complex judgment. Some complex, significant judgments are involved. There, your audit procedures extensiveness will increase. Because you cannot, just like that auditor expert opinion, you can't take. You need to work on it. You need to verify that also. And auditor has not previously used that particular expert. No prior knowledge of his competence and capability. If at all expert do not have competence and capability, I cannot simply delegate and relax. I need to continuously monitor him, how he is working. Is he properly working? Is he colluding with management? I need to put an eye on him always. Auditor's expert in performing procedures that are integral to the audit. He is performing anything that is integral to my audit, integral to as a whole my audit, which means only his work, only after his work I can do certain other works. And expert is an external expert, not subject to firm quality control policies. Obviously, since he's an outsider, our quality control procedures and all he is not aware of. What kind of evidence that we want, what kind of level of assurance that we desire of, he is not aware of. In that case, whether he is working properly or not, my nature, timing and extent of procedures will enhance like anything. Got clarity? I'm only giving you an understanding. You have to read. Though I am trying to summarize, but you have to read later on. And you need to evaluate competence, capability and objectivity of auditor's expert. Before you are using his work, first you need to evaluate what is his competence, what is his qualification, what is his credibility in the market. Evaluate whether expert has necessary competence and capability. In case of an external expert, inquire regarding relationships he may have with the entity. Suppose you are appointing an external lawyer and that lawyer is a director's brother. So you need to look at what relationships, what are the relationships that the external expert is having with the entity we are doing audit. We are independent. He should also be independent. Getting the point? Get a written representation that from the expert. Get a written declaration from the expert that whatever relationships and interest that he is having with the audit client should be disclosed to you. And nothing is omitted. He should give a declaration, representation. Inquire the entity whether do they have any relationship with the external expert. Two-way inquiry. Ask him whether he has any relationship with the entity. Ask entity whether they have any relationship with him. If relationship exists, discuss with the expert any safeguards to reduce the threat to an acceptable level. Getting it? So definitely if some relationship is there, don't directly boycott him. Don't directly avoid him. See whether that threat can be mitigated or not. Suppose he is having a relationship with some production manager, but the work that we are dealing is regarding some pending litigation. Getting it? So probably we can take chance, not an issue. Get a representation from the expert that about any interest or relationship with the entity of which expert is aware of. So expert will give to the best of my knowledge and belief, me or my family or my relatives are not having any relationship with the entity. He'll give a representation like this. Get a representation. And see whether expert is subject to technical performance standards and other membership requirements. Suppose he's a lawyer, he's governed by Bar Council of India, he's governed by Code of Ethics. If at all he do something wrong, tomorrow if at all proven guilty, he is also liable for punishment like how we are liable for punishment. So I can believe his work because he's been controlled by some regulatory. Evaluation of competence is a continuous process. Remember, competence is not a one-time evaluation. You should be regularly checking his competence. Getting it? Finally, once you decided, once you evaluated competence, capability, all that, once you decided nature, timing and extent of audit procedures, once you decided to use an auditor's expert, you recruited, formalities, enter into a written agreement. Getting it? So auditor shall agree in writing because you are the one who is recruiting. Of course, fees for this you will collect from the company and then pay him. As an out-of-pocket expenditure, you collect from the company where you are doing audit and then you pay to the expert. You are the one who is engaging this expert, understand? So when you are engaging the expert, when you are engaging with the company, you had a terms of engagement letter. Same way you should have an engagement letter with the expert. There in that letter, you should clearly tell what is the nature of the work, what is his objective, what is the scope, what are his responsibilities, what are my responsibilities. I should clearly mention in the letter to avoid confusion in future. So nature, scope and objective, roles and responsibilities, nature, timing and extent of communication. We should tell in the letter itself how you should communicate with me, what times you should communicate with me, all that. And auditor's expert to observe confidentiality. I should also tell him in the engagement letter. Remember, whatever data that you are collecting, you have to keep it confidential. Because as an auditor, I have to keep the entire data of the entity confidential. You are also bound by confidentiality requirement. That's it. Okay, fine. Everything is over. Finally, expert has worked on it. He gave you workings. Will you directly blindly document it? Don't you evaluate the workings? You will check the workings, whether his workings are proper or not. What you will check? Look at his findings. Are they reasonable? Are they relevant? What are his conclusions? Talk to him. He will explain you the report. Review auditor's expert working papers and reports. You check his working papers. And corroborative procedures. Observation, third party confirmation. If you want, take a second opinion also. Getting it? And the relevance and reasonableness of assumptions and methods in the circumstance. So in that particular entity, he will also take some assumptions while valuing some crude oil reserves. He will take some assumptions. Whether those assumptions are reasonable or not in that circumstance, check out. And relevance, competence, and accuracy of the source data. He has gave his ultimate report based on some data. How far the data used by him is reliable? Check out that. And finally, suppose if your work of expert is not adequate, you decided after evaluating his work, no, it is not, still I'm not convincing. Ask him to work more. Suppose he is still working. In spite of it also, you're not getting convinced. There is a limitation on the scope. You understood based upon this, there is a limitation on the scope. You understood that limitation is created by management or circumstances. Ultimately, you are not getting sufficient appropriate evidence on a particular item, on a particular assertion. You will give a modified opinion. That's what. So if auditor determines that work of auditor expert is not adequate, request for further work. Suppose no evidence, you give modified opinion. Are you clear? Then finally, fine, okay. Suppose I have a point, I felt there is a need of an expert, and I felt that there is a need of an auditor expert. I found one expert in the market. I evaluated his competency, all that. I changed my audit plan procedures, everything. I delegated him some works. I entered into written agreement. He worked on it. Final results and findings. He gave a report. I evaluated the report. Everything seems fine. Based on his report, no. I found that inventory valuation is wrong. Management, of course, disagreed with me. Management replied me, sir, our expert have taken this assumption. Your expert has taken so and so. Management, when you say that material misstatement, inventory is material mistake, they'll ask you, sir, how come you prove? Look at my expert report. Management saw the expert report. Sir, no, sir, he is using different assumptions and all, which is not correct. No, management, as per my understanding, he is industry leader. So he is having very good reputation. He is very scientifically methods and all. Your expert is only not having that competence and all. I believe my expert work and I conclude that the financials are materially misstated. Management is not correcting it. They are not amending the financials so that they'll be free from material misstatements. I will give a modified opinion in the financials. Getting it? So I will give qualified opinion or adverse opinion depending upon the pervasiveness. In the basis for qualified opinion, basis for adverse opinion, the question is, should I talk about the expert name? If you think bringing expert name will help the people to understand better why you gave a qualified opinion, then talk about it. Otherwise, there is no necessity. Remember, whether you talk about his name in the audit report or not, doesn't matter. Your responsibility is same. He will not have any responsibility at all to the people, shareholders. You are the one taking the fees. Remember this point. So, generally, suppose based on expert work, you concluded everything is true and fair. Unmodified opinion you gave. Why reference and all? Anyhow, you concluded everything is true and fair. Auditor shall not refer to the work of an expert in audit report containing unmodified opinion unless required by law. In India, there is no such requirement. Getting it? Remember, just because you are referring in the audit report, you shall also indicate that in the audit report when you are referring his name, you should also indicate that the reference does not reduce your responsibility for the opinion. You should clearly indicate that in the audit report. Suppose, based on expert report, you gave a modified opinion on the financials and refer if necessary for better understanding. If you want to make people understand better why you gave a modified opinion, you can talk. So oil reserve is there. Valuation is highly subjective. So because we are not having the technical competence, we have taken help of an expert so and so firm name. Getting it? By the way, just because we are referring about this firm name doesn't reduce our responsibilities. Our responsibility to obtain sufficient appropriate evidence regarding valuation of inventory is still with us only. It will not be transferred. It will not be shifted to the expert. So if the auditor may refer to the work of an expert because such reference is relevant for understanding. Remember, the reference does not reduce your responsibility. They'll give you this question also, possibility. They'll give you a story. At the end of the story, they'll give a question. The auditor wants to refer about auditor's expert name in the auditor's report. Comment. 4 marks question. So you need to write this answer. Clear, all of you? What is the procedure? What would be your response? If work of the auditor's expert is not adequate, they'll ask you this question, 4 marks question. You see, anything that you read, you just imagine how it can be tested. I'm telling you, whatever the questions I'm telling you, in the entire CA history final examination, this will come. Anywhere it will come. So that's why I don't tell people to follow question banks. When you're reading main concept itself, imagine how it can be tested, how it can be tested. Getting it? If you read like that, you don't require question bank. You naturally develop that observation skills and that, grip on the subject. Clear? That's it. SA 620 is over. With this audit report chapter is over. Okay. So we'll begin. The next topic in our book is 11th chapter, that is standards on auditing. Actually, if you observe the ICI book, they are nothing but initial 7 chapters. Entire standards on auditing, initial 7 chapters, if you observe in the ICI book, they are actually dealing with standards on auditing up to 7th chapter in the module 1. Total up to 11th chapter, if you look at, they are all dealing with engagement and quality control standards. 1 to 11 chapters of ICI book. So chapter number 1 to 11, they are all dealing with what? All standards on auditing. Sorry, all engagement and quality control standards. Whereas 1 to 7 chapters, they are exclusively dealing with the standards on auditing and quality control standard. Now, let's once list out what are the standards that we have, and out of that, what are the videos that you're supposed to watch? I'll tell you here for certain standards. Getting it? And I'll show you in the institute material also how it is covered. Okay. Many do not have clarity on this. They are blindly reading the content, but they don't understand clearly what they are expected to read. This is something instructed in the CA material itself. The final audit material itself, it is instructed, and I'll show you with the proofs. So first of all, let's list out what are the standards that we have. 200, 210, 220, 240, 250, 260, 265, and 299. Yes or no? Then we have 300, 315, 330. Sorry, 320 and 330. 402, 450, and 500, 501, 505, 510, 520, 530, 550, 560, 570, 580. Then we have 600, 610, 620. Then we have 700, 701, 705, 706, 710, 720. Then we have 800, 805, 810. Then we have 2400, 2410. Then we have 3000, 3400, 3402, 3420. Yes or no? Then we have 4400, 4410. That's it. These are the standards that we have. And one standard that we have is standard on quality control. That is one standard. These are the total 46 standards that we have. Getting it? Now, out of this, all these standards, anyhow, I am specifically discussing in this class. Getting it? All these standards, nothing but these are all newly added into the new scheme of CA final audit. Getting it? So this chapter is called as specialized areas. This chapter is called as review. This chapter is called as assurance. This chapter is called as related services. Yes or no? This is what the chapter names are. Nothing but 8, 9, 10, 11 chapters in the ICA module 1 book. Now, if you observe, I opened this particular, weightage related, skill weightage related document. Inside this, I will show you certain points. You see here, what are they mentioning? Contents of 200, 210, 230. They are covered in depth at intermediate level. Thus, application may be discussed in the form of a case study in CA final. So 200, 210, 230. Let's list out that. 200 and 230, 210. Getting it? Then next, SA 300, planning of an audit. Getting it? Content is covered in depth at intermediate. Therefore, application will be discussed at final level. But in CA final audit strategy chapter also, most of the content they covered. In audit strategy chapter, they covered most of the chapter. But anyhow, so let us highlight that also. 300, nothing but audit planning. Okay. Then materiality risk assessment. Inside that, you see here, 315, 320. Both these contents are in-depth discussed at CA Inter. But I'm telling you, 315 content, most of the content is once again repeated at final level. Repeated at final level. That in fact we call it as risk assessment chapter. So I only select 320. I only select what? 320. And of course 330 also. Of course 330 also. Then in audit evidence, 500, 501, 505, 510, 530, 550. So you observe here 500, 501 and 505, 510, 530. 505, 510, 530, 550. These are all covered in depth in CA Inter. That's what they're saying. Then completion and review inside this, all the standards 560, 570, 580, all the three. So 560, 570, 580, all these are covered in depth in CA Inter. So they have given a list like this. Then 7th chapter, all these standards we freshly have to discuss. Now, by the way, let's leave and list out what are the topics that we already completed. What standards that we have already completed. Let's highlight them in green. 700, 701, 705, 706, 720. 600, 610, 620. Agreed? Yes or no? And we even finished 570. And we even finished 299. So these are the chapters, these are the standards that we finished. Okay. Now what I request you, there are some CA Inter revision videos that you are supposed to watch. That is what institute material also says. Application part will be tested as a descriptive question. When they're asking a descriptive question, I'll tell you a very simple example how they'll ask a question. You are appointed as an auditor of so-and-so entity. And as a part of the audit, you have found some risk of MMS in purchase processes. You want to apply sampling technique to the purchase processes. What are the factors that affect in determining sampling size for test of details? This is the question. What are the factors that affect auditor's judgment about test of details? There's a question on this that you can find only in sampling. Only in the sampling chapter revision you will find that. Now 320. By the way, before I talk about that, I have given material for most of these standards even though they are covered at CA Inter. With these standards I have not given material at all because institute material also it's not there. So I applied little judgment here, getting it, like these standards are not at all relevant at final level. One is 200, I didn't cover in the material. 210 I didn't cover. 230 I didn't cover. Getting the point. Rest all other I have given in the standards on auditing index if you check out. So just open the 11th one. So 240 I'm covering, 250, 260. 265 is there in risk assessment chapter. 265 standard is covered in risk assessment chapter. So typically speaking, in our material, I have covered 220, 240, 250, 260, 265. All these were covered in our material, in the smart notes as well as main material. Then 315 is also, I will say that it is covered because risk assessment chapter entirely is based on 315. Further, I even gave 320 material. If you look at standards on auditing index, you will find 320 material also I have provided. Then 402 I have covered. 450 is again covered in CA Inter only, so which I have not provided the material. Getting it? It is covered in CA Inter. So this is not provided, this is not covered because it is covered in CA Inter in depth. 500 material I have given only as a diagram which institute gave. Institute just simply gave, if you look at the particular chapter, they just gave one page diagram for 500. They just gave one page diagram for 501. They gave one page diagram for all this. Getting it? For all this, they just gave one page diagrams. You know, I have covered them somewhat better. Getting it? Not so in depth like in CA Inter, but not so less like in CA Final Middle. I covered like a medium. Getting it? That is enough from exam point of view. If you observe, I have given you the materials for 501, 505, 510 and 560, 580. For these standards, whatever I highlighted in green lines, green letters, I have given content. I have given fullest content, maximum content relevant, that I have provided. But in the institute book, they have not provided this much content which I provided in our book. So first you must understand what standards that we have, what institute its year final material says, what source you have to refer. Getting it? So for that, no, what I tell you is very simple. Very recently, I have uploaded latest new scheme CA Inter Audit Marathon. 2 parts videos I have uploaded. In these 2 parts, most of the standards I have covered. Most of the standards I have covered. Just if possible, I will just show you. So I will show you the timestamps also. Please, you can just observe it. Observe it. That's enough. You just observe it enough. Just go to my YouTube channel. So just go to our YouTube channel. Then there is a playlist. So inside this, May 24 marathons for CA Inter. Here I have uploaded close to 11 plus 9, 20 hours of marathon in CA Inter. Still part 3 also will come. Part 3 will be some 4-5 hours will be there. Inside that sampling revision will be there. Materiality topic revision will be there. Getting the point? If possible, I'll cover materiality here itself. If possible, I'll cover here itself. I'll cover there separately. Now, if you open this, so there are some standards which are again covered here. Audit documentation, you need to read, just take a note. So in part 1, marathon in CA Inter, the last timestamp, audit documentation, you should refer. Rest everything you can ignore. Rest everything you can ignore, no problem at all. Audit documentation 230 you should refer. You should watch this. This is in addition to this class. Getting it? So 230 you should watch. For sure you should watch. It's hardly 40 minutes is standard. But you watch, you don't read anything. It's not required also. Just watch. You will have an observation. Any MCQ you can answer. That MCQ answer, the ability to answer MCQ, that skill set you will get from this for sure. Getting it? Maybe you cannot write a descriptive question, but descriptive they won't ask for sure. Because the paper setter will not have that much patience to open CA Inter book and test. He also want to go to lunch break as quickly as possible. So he'll try to finish from the same material which is given in the CA final. So whatever content is there in the CA final material, only that he will test. 99% I'm sure. Getting it? Because in the old scheme also, the structure of standard is something similar to this. Not exactly same, but similar to this. Even in the old scheme book also, if you see CA final audit, they will say some standards refer CA Inter material. Getting it? They specifically tell that. The list has changed now. The list has been changed now. Next, go to part 2. Then in the part 2, if you observe in the part 2, I have given many standards here. You see, in this probably I say 550. In this, you can see the timestamp. 550 standard you have to. 550 standard, 500. These 2 standards you have to for sure watch. SA 500, SA 550. Maybe if possible, I'll try to cover 550 briefly here. Getting it? And I'll specifically mention that please watch this again. So when you're watching the YouTube video also later on, after a week or 10 days, maybe when I upload after 10 days, you can comfortably watch. Getting it? Then part 3 video I will upload. I will upload part 3 marathon. Inside that sampling video, analytical procedure video I'll upload. Inside that sampling analytical procedure I will cover. Getting it? So I think what are the standards that I told you now? One is 230, 500 and 550, 530, 520. These 5 standards related content you should go to CA Inter. Getting it? Now, so which means I will eliminate from this list those standards now. I will eliminate from this list those standards. What are the standards which I've told? And by the way, one more thing I forgot. Sorry. In the same first video, just in this first video, nature, objective and scope of audit chapter is there. In that only, So in this timestamps, if you go here, there is a topic called 3 hours 14 minutes. If you observe ethics and terms of engagement, inside the terms of engagement part, that is 210, that you should study. Nature, objective and scope of audit. This is last priority in this. When you're watching video, nature, objective and scope of audit should be the last priority. If you have time, you watch it. That is 200 standard. So now I listed you 200, 210, 230, 500, 550, 520, 530. These standards I have listed for you so that you have to refer CA Inter Marathon. Rest all other standards I will try to cover within this particular session itself. Okay. Actually 501, 505 also covered in CA Inter, same material only here. Getting it? But I will briefly cover here. If not going in depth, at least I'll cover neatly, decently I'll cover. Okay. So what we have identified, so 200, 200, 210, else I'll highlight with green. I'll ensure I make sure, I will write like mention it as completed so that you can watch those videos. 200, 210, 230. Actually 330 also comes in CA Inter only. That marathon only it will come. Risk assessment chapter, there it will come. In audit evidence topic, we will bring 330 topic. In risk assessment chapter, we will bring 330 topic. Getting it? Then 300 will discuss in this class. 320 we will discuss preferably. 450 again I will cover in CA Inter. 450 I will cover in CA Inter. Either in part 1, part 2, part 3, somewhere it will be there. If possible, the timestamps, I will make sure that SAN number is also reflected there. For some chapters, SAN number I have not given in CA Inter Marathon. Now I will modify that so that SAN number will be there. So you just open timestamps, you will find SAN number. Just open that, watch that. So either in CA Final Marathon or in CA Inter Marathon, that standard, every standard will be covered in depth. Maximum I will try to cover here few standards which are exclusively in CA Inter. In fact, there are many which are there in CA Inter only. Still, I'm covering some of them in the final book, though it is not there in our final ICS study material. Getting it? So then we have a 500, 520, 530. So these you have to refer, and even 550. But I'll not round up 550, but I'll just briefly give an idea on 550 in this session itself, because they gave a diagram here. So at least the diagram we will go through. So that's it. So whatever I highlighted in green, I'm not touching it all. Rest all other we need to discuss. So rest all other means what are they? 221, 2, 3, 4, 5, 6, 7, 8, and of course 9, 10, 11, 12, 13, 14, 15, almost 16 more standards and one SQC. Round figure 15 standards. So we are still having 15 standards on auditing to be discussed. Once we complete these 15 standards, the standards on auditing topic will be over. Then immediately I will start these review standards, all this. Confident? Got an idea now? Yeah. So now let's first begin with 250 standards, 250 standard. What institute, what they did a mistake is, I'll tell you what mistake they did. When you are coming in CA final under new scheme, CA Inter old scheme you wrote, and in CA final you are writing, you are coming with new scheme. And some standards in CA Inter old scheme which you have studied were covered exclusively in CA final. Some standards which are there in the old scheme and final were transferred to CA Inter in the new scheme, and institute thinks you have already read that standard, which you have not. Got the, like, you understood what I'm saying? So in the CA Inter new scheme, they have added some new standards. Actually 260 was not there in CA Inter earlier. 265 is not there in CA Inter earlier, but now they have added that. Slide 260 in-depth discussion is there in CA Inter. Getting it? In CA final, it is depth of the depth. There is even more depth discussion is. So this is introduction to the standards that we have. Okay. 1 minute, I'll start immediately. So whatever the standards I am covering now, in the same order only you revise later on. Getting it? This is one of the best order to understand the standards. First, we are discussing some standards which do not have any relationship with other standards. Then we'll be discussing interrelated standards. Okay. First thing I'll discuss is 250. So consideration of laws and regulations in an audit of financial statements. The standard sometimes is referred, heading is referred as auditors' responsibilities relating to laws and regulations in an audit of financial statements. So in both the ways it is referred as. Now, when we are doing audit of any entity, for that entity, there will be so many laws and regulations that are applicable. Why we are conducting this class, right? To organize a class like this, getting it, there are some laws and regulations that are applicable. Municipality corporation law is applicable, first thing. You should not throw anything outside. Getting it, in the break times, whatever it is. And some traffic related laws we need to comply. Getting it. And we need to comply with safety related laws. There must be fire extinguisher, which is not there. I'm just telling you, see, of course, depends upon possibility, all that. But as per, this municipality laws and all, every commercial organization must have a fire extinguisher. Getting it? So here itself, while conducting for the class itself, revision class itself, whatever it is, when students gathering is there, we must have a stop. We have to comply with various laws and regulations. Riots and all should not happen here. We have to take precautions for all that. Getting the point? And when you're running a coaching institute, you must have a playground. You know that there is a rule. Otherwise, you will not get recognition from the state government. Schools and all, they will not get recognition without their having a playground. But of course, they get registration. That's a different thing. Even without a playground, they show some ground as playground. Okay. Yes. So there are laws and regulations that we can't even predict. We can't even identify that there are some kind of laws like that. Okay. Most of the companies know, they do compliance audit. They do appoint compliance auditors. Their duty is only to figure out what are the laws applicable for the entity. Suppose a manufacturing entity, for them, at least some 40-50 laws will be applicable. The laws and regulations that we know is Income Tax, Companies Act, GST Act, some 5 to 10 laws. For that itself, we are doing so much of overaction in Instagram. Okay. But the laws and regulations applicable for the entities, so many. So many laws were applicable. Environment laws are applicable. Pollution related laws are applicable if it's a manufacturing unit. Okay. And if at all the factory is located in nearby any forest area, some forest related protection act laws are applicable. Garbage, how they're treating the garbage, some law is applicable, different law is there. Workers, some different law is there. Scavengers, if they appoint, for scavengers protection, there is a different law. For municipal workers, there is a different law when you're recruiting their service. So there are so many laws which a company is liable for. Now the standard is asking what is the responsibility of auditor relating to laws? Hello, my responsibility is to give opinion on financials. Why am I bothered about laws and regulations? But remember, failure to comply with laws and regulations will attract penalties and fines. Sometimes it even questions your continuity going concern, which happened with Paytm. Because they failed to comply regulatory requirements, their license, payment bank license, Paytm bank's license has been cancelled. It's been suspended. Getting the point? So, the standard divides the laws and regulations into two types. Type 1 laws. Those laws and regulations which we professionally aware of. Those laws and regulations which have a direct effect on amounts and disclosures in the financial statements. Type 1 laws. The standard classifies type 1 laws. Those laws and regulations that have a direct effect on determination of material amounts or disclosures in financial statements. Example, tax laws, commercial laws, all that. Labor laws also. Getting it? Then we have other laws and regulations that do not have a direct effect on financials, but compliance with them is fundamental for the business continuity. Otherwise, we are liable to pay penalties, fines, or sometimes we may have to shut down the business. For example, consumer safety laws, product safety laws, getting it, establishment safety related laws. These laws and regulations are called as other laws and regulations under this standard. So this standard refers two types of laws. Those laws that have a direct effect on the financials, those laws, other laws that do not have a direct effect on financials. Very simple. if I fail to comply with certain pollution emission standards, is there any material misstatement in financial statements? Any current asset, liability asset will it affect? No. But if I fail to determine right GST rate applicable for my commodity, the company whom we are auditing, they failed to identify right GST rate. For example, it's manufacturing some ointment. The company is manufacturing an ointment. That ointment, no, it cures some, let's assume, pimples. The company classified it as a medical product, which attracts 0 GST. But the GST department says it's a beauty related product. Getting the point? Because it is not curing, it is only for care. So some sort of negotiation. So it is liable for 28% GST rate. So company assumed it as 0 and they didn't create any provision for GST. Whatever sales they collected, amount they collected, they are directly transferring full amount to P&L account. But whether you collect from customer or not doesn't matter. Whatever you collect, we assume it is inclusive of GST. That's what GST law assumes. So you have to create a provision. Now, because company failed to interpret the law properly, they did not recognize a material liability. 28% of the turnover they have to create a provision for GST. They didn't create. Getting it? Now you see, if those laws, commercial and tax laws, labor laws, if you fail to interpret them properly, if the company fails to interpret them properly, it directly results in a material misstatement in the financials, either overstatement or understatement of performance or position. Now, what is auditor responsibility? Type 1 loss. Get reasonable assurance. Get reasonable assurance whether the company has complied with all type 1 laws and regulations. Type 2, get limited assurance. Type 2 loss, what is the standard says? Get limited assurance. Nothing has come to your attention that causes you to believe that type 2 laws and regulations are violated. In type 2 laws, we get only limited assurance because that's what we can do. We cannot do reasonable assurance and all. First of all, we cannot understand those laws and regulations. First of all, we cannot figure out those laws and regulations. For type 2 laws, no. You need to get it. The standard clearly says, you see here, the auditor has to obtain sufficient and appropriate evidence regarding compliance with the provisions of those laws and regulations that are recognized to have a direct effect on determination of material amounts and disclosures in financials. For this, you should get sufficient appropriate evidence. Whereas you have to perform specified audit procedures, limited audit procedures to identify incidents of non-compliance with other laws that may have a material effect on financials but not a direct effect on financials. That may not have a direct effect, but they materially affect the financials at a future date. May not be immediate, but it will have a material effect at a future date. Going concern issue is there because of some non-compliance. It will not immediately affect if you not comply with some regulatory requirement, but tomorrow it will affect suddenly Paytm Bank. Are you clear? So for type 2, the standard has given some procedures. You just have to perform those procedures. Enough. And these procedures are simply like inquiry and analytical procedures. The procedures which they listed is inquiry and analytical procedures. That's it. They didn't list out anything else. Getting it? You just have to get an assurance that nothing is not compliant. Getting it? That assurance, if you get, that's enough for type 2 loss. That's why for type 2, the assurance that we get is what? Limited assurance. Why are we getting limited assurance? To get reasonable assurance, it is outside scope of our competence. Moreover, we are not doing compliance audit here. By the way, here we are verifying laws and regulations not to give an opinion on the entity's internal control system regarding compliance controls. Here, entity has established some compliance controls. Some companies know they do separate compliance audit. They appoint some firm, audit firm or some law firm, okay, where they will list out all the laws applicable, where they will list out all the provisions applicable in that law. They will list out and then they will do. Actually, I have an example for that. Realistic example I have, where they have listed out 42 laws and they have listed out 2000 compliances. Under these 42 laws, 2000 compliances company has to satisfy. Getting it? The auditors will check all those 2000 compliances whether company is satisfied or not. That's a compliance audit. What is it actually called as? Compliance. So we will ask management whether they established a separate department to identify laws and regulations applicable and whether they are verifying laws and regulations compliance or not. This is what the basic overview of the standard. Now, Finally, okay, you have to get a sufficient appropriate evidence regarding compliance with the direct loss, nothing but direct effect to loss. You have to perform limited audit procedure, specified audit procedure to identify non-compliances in other loss. In other loss, no, whether everything is compliant or not, you need not check. Is there any non-compliance? You should inquire. Is there any non-compliance? You should inspect documents. Enough. There you have to try, there you need to try to pinpoint the issues. It's simple. Whether a car is working properly or not, I need not be an automobile engineer for that. I need not open the bonnet and check each and every component of the engine and all. I will just drive. I will just drive on speed breakers. I will just drive on highway. I will just drive on different terrains. If it is smoothly going on, everything is fine, I will say that car is working good. But am I an automobile engineer there? No, that skill is not required. But by driving the car or driving the bike, we can pinpoint the issues that are there in that. Yes or no? But does it mean, do we know all the issues in that? We don't know. That's the kind of assurance that you should get in type 2 laws. Whereas in type 1 law, you must have an expertise like an automobile engineer. Suppose if it is GST, how I should verify? I should do complete reconciliation for GST. Getting it? If internal auditors have already performed, I will take their work. But I will have to check complete GST reconciliation completely. I have to check April month, so and so state, so and so number, so and so GST number. What is the date? When they filed? How much amount they calculated? How much they are liable? Is there any excess payment or short payment? I need to get an assurance that they complied with everything. Getting the point? I will check what rate is exactly applicable. I will check whether they paid correctly or not. I will check whether they created provision in the books correctly or not. Their accounting is proper or not. Reasonable assurance I will get. So for direct effect related laws and regulations, we get reasonable assurance. By the way, whose responsibility? Primarily, obviously, management. So management is responsible to ensure that entity business is conducted in accordance with the laws and regulations, including compliance with those laws. Now, the company, in order to comply with laws, the company has to establish policies and procedures to help in prevention and detection of non-compliance. Straight question they will ask, 4 marks question. Give few examples of policies and procedures that will be established by entity to comply with laws and regulations. So what policies? Company should have a monitoring legal requirements. Monitoring legal requirements, one department they will appoint. They should appoint a system, appropriate systems of internal control, nothing but they have listed out all the laws, due dates, compliances list, all that they listed out, and they appointed a dedicated person to check all this, which means company implemented proper system. Company developed and publishing a code of conduct for employees with respect to employee related laws. Company ensuring employees are properly trained and understand the code of conduct. See, code of conduct, for example, sexual harassments for women at workplace, there is an act for that. You take Infosys, you take TCS, you take any company where like co-working, like where female and male, both of them work, getting it, they have to implement a strict code of conduct. Not only implementing and designing code of conduct, you should tell people also to follow the code of conduct. Getting the point? So see whether a company has developed a code of conduct and compliance with the code of conduct, monitoring the compliance. Company should have a process to monitor the code of conduct, whether employees are satisfying with the code of conduct or not. Operational audit team will be there, compliance audit team will be there, they will be checking that. And engage lawyers to help in monitoring legal requirements. Also call lawyers, recruit lawyers. Many big companies will have internal legal counsel. Many big companies will have internal legal counsel. They continuously assist the company whether they are satisfying laws and regulations or not. And companies have to maintain a register of laws and regulations with which entity has to comply in a particular industry, and what are the complaints that are there with respect to these laws and regulations. These are the controls the company has to implement. Policies and procedures the company has to implement. 4 marks straight question, any 4 points you have to write. Understood? Next. In larger entities, these policies may be supplemented by assigning appropriate responsibilities to internal audit function. Within this department, some compliance audit team will be there. They will be checking all this. Next. Fine. Now, what is auditor responsibility in relation to law? We are not responsible for preventing non-compliance. We cannot do that. Companies emitting pollution, will you go and cover yourself? No. Okay. And we are not responsible to detect all non-compliances. That is also not possible. Inherent limitations of audit. So the auditor, what auditor is responsible? Obtain reasonable assurance that all the laws and regulations that have a direct effect on financial statements are complied. Reasonable assurance we will get. And remember, there are inherent limitations of an audit. Due to inherent limitations in an audit, there is an unavoidable risk that some material misstatements may not be detected even though audit is properly planned and performed. The potential effect of inherent limitations on auditor's ability to detect misstatements are greater for such reasons are following. They'll give you this question straight away. What are the limitations relating to laws and regulations, non-compliances identification by auditor? What are the inherent limitations that affect auditor's ability to identify non-compliances? Remember, there are many laws and regulations that typically do not affect financials and generally not captured by entity's information system. Entity also will not have knowledge of what laws applicable to them because there are so many laws in India. Yes or no? So non-compliance may involve any conduct to conceal it, like through collusion, forgery, deliberate failure to record transactions, management overriding control, intentional misrepresentation made to auditor. Company knows that they have violated so many laws, but they didn't give representation to us. They didn't disclose it to us. Under 250, we need to get a written representation that whatever knowledge of non-compliances the company is aware of, they should disclose to auditors. And the non-compliances shall be disclosed in financial statements also. All the non-compliances, they have to disclose it in the financial. This is an implied requirement. This is not an explicit requirement. This is an implied requirement. By default, people think that you are doing business in compliance with laws and regulations. Nobody will get even this thought also. Whether company is doing business legally, nobody will get this thought. Whether an act constitutes non-compliance is ultimately a matter of legal determination by law. First of all, is it a non-compliance or not? Ultimately, court will decide. You need to apply professional judgment. See, they'll ask you a question. The potential effect, they'll give you a question, they'll give you some story. The potential effect of inherent limitations on auditor's ability to detect the material misstatements arising due to non-compliance with laws and regulations. There are various limitations. What are they? You need to write these 3 points. Are you getting the point? You need to write these 3. This will be asked as a 4 marks question. Clear? Next. Now, SCA 250, it distinguishes the loss into 2 different categories. Type 1, which have a direct effect on material amounts and disclosures in financials. Type 2, other laws and regulations which do not have a direct effect, but compliance with which is fundamental to operating aspects of the business to continue the business or to avoid material penalties. So non-compliance with these laws have a material effect on the financials, though direct effect is not there, but they have a material impact on the financials. May not be at present, but at future date. Getting it? So auditor is limited. Auditor responsibility is limited to undertaking specified procedures to identify non-compliance with those laws that have a material effect, nothing but type 2 laws. So for type 2 laws, what auditor responsibility? Perform limited audit procedures. Why are you doing that limited work also? Just to identify non-compliances. Whether they complied or not is difficult for me, but whether they not complied or not is easy for me to find. Able to understand? Very simple. Very simple. What I will do in case of limited audit procedures. Limited audit procedures, what I will do is very simple. Here I think that list is not given here. Limited audit procedures, what we will perform? One of the point, inquire management. Second point, inquire entities, legal counsel. Next, inspect legal expenses account. What is it? Legal expenses account. So you will understand for what purpose legal expenses are incurred, whether that purpose is any non-compliance related to law, you will understand. And you will refer regulatory authorities any communication that received, and you will inspect internal auditor's report. So these are the points generally you perform in limited audit procedure. This is standard content only. This is what the standard content. So what are the limited audit procedures? So you need to write like this. Getting it? So in inquire management, inquire entities, legal counsel, inspect legal expenses account, and internal auditors report. And this is what it was? Communications with regulatory authorities. Correspondence with regulatory authorities. So whether any correspondence happened between the company and regulatory authorities. Getting it? That's it. Here you can even consider whistleblower complaints, all that. Getting it? That's it. And the standard says you have to be alert to the possibility that other audit procedures applied for forming an opinion may bring instances of non-compliances to the auditor's attention. Suppose you are doing some GST reconciliation, or you are doing some ledger review, or you are doing some risk assessment procedure. There you identify that company is calculating GST wrongly. Immediately what it should strike? Non-compliance with law. Getting it? And maintain skepticism throughout the audit in the context of loss. These are all something like we don't do consciously. When we are working, if you identify something, immediately you should be able to sync with the standard. Now, auditors consideration of compliance with laws and regulations to obtain sufficient appropriate. So first, look at legal and regulatory framework applicable to the entity. So what is the legal and regulatory framework that is applicable? Whether entity is complying with that framework. See whether the entity, legal and regulatory framework means ask management what are the laws and regulations applicable. They will generally have a register of laws and regulations. So legal register will be there. Inside that they will give you list of laws and regulations. Get a legal opinion also whether the company has listed exhaustively all the laws and regulations applicable or not. And auditor shall obtain evidence compliance with the provisions of those laws generally that are having direct effect on financial statements. Those laws which are having direct effect on financials, whether those laws are complied or not, get evidence. For that only we do TDS reconciliation, GST reconciliation, Provident Fund reconciliation, ESI reconciliation, all that we do. Why? Because of SA 250 requirement. Moreover, only after doing that reconciliation only you can comment in CARO 7th clause undisputed use whether they paid regularly or not. The auditor shall perform specified procedures to identify non-compliances with the other laws. Specified procedures means what? I already told. Non-compliance with other laws, they have a fundamental effect on operations of the entity, so that entity operations can cease or they may question continuity, going concern. There are many laws and regulations that are relating to operating aspects of the entity, typically do not affect financials and are not captured by entity information system. Audit procedures applied to form opinion on financials may bring instances of non-compliance or suspected non-compliance to the auditor's attention. Maybe when you're doing audit, you will identify some non-compliances. So auditors shall remain alert to the possibility same matter is covered above. This is something nothing but audit procedure. Here they are talking about audit procedures, auditors consideration with compliance of laws and regulations. Whereas here it is responsibility. In both the cases, they are discussing in responsibilities as a part of inherent limitations. They have covered this. In inherent limitations, responsibility of auditor, they cover the same matter. The same thing auditor has to consider. That's what once again they are covering. Suppose if you identify non-compliance, what you have to do? If you identify any non-compliance as a part of audit procedures, as a part of inquiry with management, as a part of discussion with lawyers, as a part of checking legal expenses account, as a part of doing reconciliations for GST, TDS and all, if you identify non-compliance, what you have to do? What is the nature of the non-compliance, nature of the act? Is it a GST overstatement or understatement, or is it a GST wrong rate, or is it pollution related non-compliance? What is the nature of non-compliance? Further information to evaluate the possible effect on the financials. So how this non-compliance impact the financial statements? You should get information for that. Suppose if auditor suspects there may be non-compliance, discuss with management and top management. Those charged with governance is nothing but top management. Getting it? And if they are not providing sufficient information, you need to obtain legal evidence. Suppose on the non-compliance, they are also not able to understand what is a non-compliance exactly. So you communicated with them. You're not getting proper data, proper clarity. Then take a legal opinion. If sufficient information about non-compliance cannot be obtained, what is its impact on the overall auditor's opinion identity? Suppose ultimately you are ending up with no information regarding the non-compliance. You know that there is a non-compliance, but what is its impact on the financial statements you are unable to determine. First you try to take legal opinion. If even through legal opinion you are not getting clarity, then what is this impact? Is it material or pervasive? What is its impact on the financial statements? Can I still give the opinion? You need to consider that. And auditor shall evaluate implications of non-compliance, including the risk assessment and reliability of representation. Now management gave a representation that everything they complied. For example, now you found some non-compliances. How far the representation given by them is reliable now? They said everything is complied, no non-compliances. They even said compliance audit team is there. We have audited, we found every non-compliance. All the non-compliances they listed you. In that list, you did not find some new non-compliance which you identified. Getting it? So now when you identify some new non-compliances, whatever management gave a letter declaration, that declaration become doubtful, right? Because in the declaration they didn't list it. So that's what they're saying here. Then finally, suppose you identified non-compliance, you understood what is its impact on the financial statements, all that is over. Now, are you liable to report in the audit report? Yes, you are liable to report. First of all, before reporting it in the audit report, first whenever you identify non-compliance, first you have to report to top management, those charged with the governance. Getting it? And suppose if you think the non-compliance is intentional and material, please communicate it to top management as soon as practicable. If auditor thinks that management or top management themselves involved, if next higher level authority is there, report to them. Getting it? Suppose where there is no higher authority, and if auditor believes that even though you communicate, there will not be any action. Getting it? And you are not sure as to person to whom you report, take a legal advice in that case. Getting the point? Take a legal advice means, suppose in case of listed entity, you may have to report to SEBI. You may have to report to some other authority. Able to understand? So you need to take a legal advice there. You don't know exactly what to do. Suppose if board of directors are involved intentionally for certain laws and regulations non-compliance, they know they should not emit certain pollution related things in so and so locality, but they are doing all that. Getting it? One day it will bring into full stop. One day it will full stop the entity. Getting it? So you know that top management also aware of it. What you should do? So take a legal opinion. Take some lawyer who is expert in that. So what is this consequence? Take his opinion. What should I do? This is the position where I am in. Top management itself is involved in non-compliance. What should I do? Then the lawyer might tell you, report it to so and so authority. Getting it? Because it's a going concern issue or some other issue, whatever. Now in the audit report, what should I report? Suppose if auditor concludes that non-compliance has a material effect on the financial statements. Remember, they are using the word material effect on the financials. It doesn't mean amount or disclosure is affected. It doesn't mean amount is wrong or disclosure is wrong. Material effect. Some pollution related norm not complied. Paytm Bank has not complied with some RBI regulations regarding liquidity maintenance, all that, or regarding some key KYC norms and all that they didn't maintain properly. And it is not reflected in financials properly. Indirectly, the standard is mentioning that all the non-compliances with laws and regulations, a company, whatever they are aware of, it must be showed in financial statements honestly. If they do not show the non-compliance in financials, auditor will give either a qualified or adverse opinion, because non-compliance is not disclosed. Non-disclosure is a misstatement. Suppose you are unable to get evidence. You are unable to decide whether there is a non-compliance or not. You are ending up with no information. Then also you will give which opinion? Qualified opinion if the non-compliance related information which is not available and the possible effect is material but not pervasive, qualified. If it is both, disclaim. Getting it? So you are unable to get evidence. Not only for that, even if you are unable to determine non-compliance, you are unable to decide. Some means evidence is there, information is there, but is it a non-compliance or not? You are not having that ability. You try to get auditor's expert opinion. You try to get management expert opinion. Expert opinion is not adequate. Expert work is not adequate. Ultimately, you are ending up with no information, which means you will give again qualified or disclaimer. And above all, you should also keep in mind, there is a requirement from certain laws and regulations that if an auditor becomes aware of any non-compliance, you may have to report to concerned regulatory. So if auditor has identified non-compliance, auditor shall determine whether he has a responsibility to report to outside the entity, to any authority outside the entity. You need to check. You identified some pollution related law. In that, in the pollution related act, immediately the company, every officer of the company have a responsibility to report it to regulatory authority. It is there. Officer definition do not include auditor. Auditor has no responsibility to report. So he can simply, without reporting, just to qualify the report, enough. Suppose if they said every officer, every auditor, internal or external, they have to report. Suppose RBI, there is a guideline. Every auditor, whether internal or external, when they are aware of any fraud in the bank, irrespective of the size of the fraud, you have to report to RBI. Able to understand? And finally, auditor has to document what are the non-compliances identified, what are the suspected non-compliances, and what you discussed with management and top management, and what and all you discussed with outsiders like lawyers and all that you should document. Now, so fine, we do risk assessment related to laws and regulations, right? So when you're trying to understand the entity and environment, there will be some symptoms. There will be some symptoms that there is some non-compliance. Example, payment of fines or penalties. Company paid a fine or penalty. Some penalty ledger account is there. So much of amount is there. That itself indicates company has failed to comply with so many norms. Getting it? Unusual payments in cash. Unusual payments in cash. Unspecified services or loans to consultants, related parties and all. Unspecified expenditure. Unspecified means you are paying some other expenditure, miscellaneous expenditure you are writing. For that voucher only is there. No supporting documents and all. That may be a bribe. That may be an indication that some non-compliance might be there. Getting the point? And purchasing at prices significantly above or below market price. That may be tax related fraud. Tax related non-compliance might be there. Some investigation is going on from a regulatory organization. That itself is an indication that some non-compliance is there. Adverse media comment, Hindenburg report on Adani, example, that may be an indication for the auditors of Adani Group to investigate further regarding any non-compliances with any norms they did. Unauthorized transactions, transactions with companies engaged in tax havens. This is linked with ACA 550 again. So if you're transacting with the tax haven jurisdiction companies so frequently, so big amounts, that may be an indication that you are transferring funds to them, shippening of funds. So they'll give you this indicator also as a 4 marks question. So one question they'll ask you is, write about reporting of non-compliances with those charged with governance. This itself can be asked as a 4 marks question. Or they'll ask you, write about reporting of non-compliances in the audit report. This itself can be asked as a 4 marks question. Then write about audit procedure when non-compliance is identified. Reporting non-compliance to top management is a different. Audit procedure when non-compliance is identified is different. When non-compliance is identified, you will try to understand what is the nature of the non-compliance, what is its effect on the financials. Getting it? You will discuss with management and try to get evidence, try to get information to evaluate its impact on the financials. If you're not getting, you will take a legal opinion. That is a procedure that we do when we find any non-compliance. The procedure, what will do, we find a non-compliance. What is it? What is the non-compliance? What is its impact on my audit? So I will take a legal opinion. I will discuss with management, get more information and evaluate what is its ultimate impact on my audit. This procedure I do. Once I do this procedure, once everything is over, I need to report the non-compliance to top management. And I will see whether they are acting upon or not. What acting upon means, they need to disclose the same in the financials. I will see whether they are disclosed adequately or not. If they are not disclosing adequately, then I will report it in auditor's report. Suppose I found some non-compliance. What is exactly the non-compliance? I tried to get information. I am not getting information. I am unable to decide whether it is a non-compliance or not, ultimately qualified or disclaimer. Suppose I am not getting information behind this non-compliance to decide its impact. Information not available, qualified or disclaimer. Information available, non-compliance is clear. It has an effect on the financials like this. Everything is clear, but financials are not disclosing. Qualified opinion or adverse opinion. Clear, everyone. That's it. So they'll ask you this question also as a 4 marks. What are the auditor's consideration of compliance with laws and regulations to obtain sufficient and appropriate? By the way, for this standard, don't follow question banks because this standard is completely newly drafted in the new scheme. From pronouncement book, it is taken and given. You see, old scheme audit book 250 itself is not there. But 250 related MCQs they have asked. Because they are expecting you to read pronouncement book that time. Where you will not read main book itself. Yes or no? But now we are at least certain. There is no pronouncement book. Happy. So whatever they are going to ask, it is certain now. Only from the ICA main book it will be asked. So earlier students are in dilemma whether to read pronouncement book or not. They'll ask me. First I'll tell you read main book first. Then you think about pronouncement book. You know pronouncement book, right? So bulky. 1500 pages. Not 15,000 pages approximately. All standards put together 1000. At the time we don't have special areas. 2000 series, 3000 series, 4000 series and all we don't have. That's it. 250 is over. See, I'm giving you, remember this is a revision class. Every 10 minutes recollect that this is a revision class. Why sir is why he is going very fast? It's a revision class. Which itself by definition it's a fast track class. Yes or no? But still I tried my best to cover everything. Okay, so 2 minutes we'll begin with the next standard. So let's continue with the next standard. But before that, before I begin other standard, in 250, there is one interlinking point which I thought of covering when I'm discussing ethics chapter. But let me cover right now itself that NOCLAR also. In NOCLAR also, entire content is not that relevant. Very few points alone, if you are familiar with, that's enough. So come to 64th page. Non-compliance with laws and regulations, NOCLAR, that's what. See, this standard, no. Original, if you look at, sorry, not the standard, this concept of ethics, this is nothing but a code of ethics. It's part of code of ethics. When this NOCLAR is introduced, this is there across the world in all other, accounting bodies, they have already implemented. In India, we have implemented very late. But typically speaking, this particular NOCLAR do not have that relevance. Even if you read this, you will get this doubt. Should we report or should we not report? Because the standard, the way they discussed this content is in such a way. Originally, when NOCLAR has been brought, what they said, I'll tell you in a simple story. Whether you are a member in service or whether you are a CA in practice, whatever it is, on any engagement that you are performing or in any employment you are in, if you identify any non-compliances with laws and regulations, identify whether do you have a responsibility to report that non-compliance to any regulatory authorities. Only when you have responsibility to report, you have to report. Now, a specific indication like this earlier was not there. Earlier, an explicit indication that you should report to regulatory authority if you have a duty to do so. Like this, they will specifically tell you, but it's an implied requirement, understand? It's an implied requirement. Suppose so and so law is there, for example, in that law, the auditor has a duty to report is there. And you don't know about that law. Ignorance of law, no excuse, yes or no? So you have to report for sure. Whether there is a non-compliance like this in the entity that you are doing audit or not, you have to report because that's a requirement in the law. But you don't know the law. Now, through NOCLAR, what they're saying is, a company, an entity is subject to various laws and regulations. You may be an auditor of the entity or you may be an employee of the entity, whatever it is. If you came across any non-compliances while doing the engagement or while rendering that employment work, you have to report to respective authority if there is a responsibility for you. The NOCLAR concept says if you have a responsibility under that respective authority, a respective law to report, then you have to report. Failure to report, in spite you have a responsibility to report, is a professional misconduct. This is the main NOCLAR main concept. Later what they amended, NOCLAR is applicable only for the senior employee, not for everybody. You see, applicability of NOCLAR. Responding to, this is very important. This is only important in fact. Okay. Applicability of NOCLAR. Responding to a non-compliance with law and regulation applicable to professional accountant in service. Of course, it is applicable for professional accountant in public practice. But professional accountant in service, it is more important. To which professional accountant? Senior professional accountant. Being employees of listed entities. Okay, so just because tomorrow Infosys appointed you, okay, they recruited you, newly appointed chartered accountant. Okay, you were appointed as a, you just went, you took some finance role in the Infosys campus selection, you were selected. For you, NOCLAR is not applicable because you will not fall within the definition of senior professional accountant. Who is the senior professional accountant? Director, officer, senior employees able to accept, able to influence over and take decisions regarding acquisition, deployment, control of the employing organizations, human, financial, technological, physical, and intangible resources. Simple. If you can take acquisition and implementation of resources, all resources, human, technical, production, all the resources. If you are able to influence decisions regarding resource acquisition, resource utilization, you are a senior employee, senior professional accountant. You will come under senior professional accountant definition. So senior professional accountant in service are directors, officers, employees. By the way, which director? Chartered accountant director. You don't apply this to some other director. Mukesh Ambani need not comply with NOCLAR. Why? He is not a member of the institute. NOCLAR is given by whom? ICAI. So ICAI guidelines are applicable only for whom? Chartered accountants. They themselves are not following. Why do you expect others to follow? That's it. So it is further explained that senior professional accountants refer to key managerial persons who are chartered accountants. That is an implied meaning actually. See, professional accountant itself means chartered accountant. They are referring. Getting it? So just because director is covered, don't think every director. Those directors who are chartered accountants. The moment you are a chartered accountant, you are coming under the purview of CA Act. Schedule 2, Schedule 1, all this will be applicable to you. Yes or no? Now, what about professional accountants in public practice? What about practicing people? For practicing people also, NOCLAR is applicable only when you are doing audit of listed entities and who are having a net worth of 250 crores or above. A listed entity, it should be listed entity and it must be having net worth of 250 crore and above. So almost any listed entity whose net worth is less than 250 crore, nothing but defaulting listed entity. For example, you need not report, technically speaking. Now you remember only for audit engagements, only for audit engagements. What is an audit engagement? They gave reasonable assurance engagement, which means if at all you are appointed to conduct a review engagement, NOCLAR do not apply. This applicability is very important. Now, what is the difference between NOCLAR and SCA 250? Both are almost similar. SCA 250 we specifically apply in the context of standards on auditing when we are doing an audit engagement. It may be a tax audit engagement or it may be a financial statements audit engagement. Nothing but company audit engagement. So SCA 250 is applicable. In SCA 250, what they say? They divide loss into type 1 and type 2, where you have to get evidence regarding whether laws and regulations are compliant or not. Whereas in NOCLAR, when you are performing the duties, if you came across any non-compliances in NOCLAR, no, it is not your duty to detect the non-compliances. Getting the point? If you came across any duty, any non-compliances, please report it. If there is a requirement for you to report. Now, you see, SCA 250 is applicable only on audit, whereas NOCLAR is applicable on for even for professional accountants and service. SCA 250 do not apply for employees, right? Who are chartered accountants. SCA 250 talks on responsibilities for loss that have a direct effect and loss that do not have a direct effect, whereas NOCLAR, even though it is like 250, it is further ahead. It takes into account non-compliances that cause a substantial harm resulting in serious consequences of financial and non-financial terms. All loss are covered in NOCLAR. In fact, in NOCLAR, they didn't divide type 1, type 2 kind of anything. In SCA 250, they divided at least and said type 1 reasonable assurance, type 2 limited. In NOCLAR, there is no such clarity. SCA 250 does not define any stakeholder. There, you are only doing audit in the you're doing audit in the context of financial statements only. Whereas in NOCLAR, non-compliances relating to investors, non-compliance related to creditors, non-compliance related to employees, general public, everything is covered. That is what in fact SCA 250 type 2 loss also covers. Type 2 loss and type 1 both are covering all laws and regulations, typically speaking, just like NOCLAR. As per NOCLAR, the professional accountants became aware of any breach of law that would cause substantial harm to investor, creditor, employee, or general public, whether it would be appropriate to discuss the matter with management or top management and exercise judgment and determine whether they have to disclose the matter to authority in order to prevent or mitigate the consequences. Indirectly, NOCLAR says only when you have responsibility to report to authorities, you have to report. Otherwise, you need not report. So now, what are the steps for responding to NOCLAR? Suppose if there is a non-compliance you identify, how do you respond? Now we have seen when you identify non-compliance, what is the audit procedure in 250? First, what is the nature of non-compliance? What is its impact on the financial position? Communicate with top management. Take legal opinion if possible. That is audit procedure. Here, if it is a NOCLAR, you are an employee in a listed company, senior accountant in a listed company. You find some non-compliance. What you should do? What are the steps? First, what is the non-compliance? Look at that matter. Take an advice. Whether further action is required. Whether you can disclose the matter to appropriate. Determine. You see they use the word determine. Determine means what? Just because you find a non-compliance, you need not report to the respective authority. Only when you have a responsibility to report, you have to report. If you do not have a responsibility to report, you have to obey the company. You have to, you are employee in that company, so you have to be keeping quiet. You have to keep quiet. Only when there is a responsibility for you to report on that, you have to report on that. Imminent breach, what is the breach exactly? And documentation. Steps for responding to NOCLAR. 4 marks question might be asked. Are you clear? And remember, when you are reporting under NOCLAR, you have to keep in mind confidentiality requirements. For a member in service, confidentiality is required. For a member in practice also, confidentiality is required. For a member in practice, part 1 will be dealing with. For a member in service, part 2 will be dealing with. In both schedule 1 and schedule 2. Yes or no? That's it. Finally, documentation requirement relating to NOCLAR. I don't know whether they'll ask this or not, but if at all, when he is reading, he felt that this question can be tested, they will test it. Don't think that trend analysis and all. Examiner, no, the paper setter, he will not see the trend analysis. Every time ethics and all 15 marks they are asking. Now I will also ask 15 marks. He will not be in that assumption. Very simple. Ethics is almost 180 pages of the total 1500 pages material. Close to some 15% of the total material. So as the marks. That marks are reflected with respect to the content size. So what is the content size? Marks. Generally you see any subject, this is how it is. What is the total number of pages that chapter is having in a total subject? Generally the average weightage from that chapter is same. In the total weightage also. It is as simple as such. Every chapter will be tested simply. Okay. Maybe 20% of the chapters only will not be tested in exams. 80% of the chapters will be tested in exam most of the times, especially in the past 6-7 attempts. Paper patterns have changed. Be clear. Documentation requirement. Suppose you found non-compliance. You discussed with the management how they responded. Document it. What is the action accountant considered? As per accountant, what you have to act upon? You have to document. How accountant is satisfied that responsibility in public interest is fulfilled? How do you make yourself? How do you satisfy that? Yes, you complied with NOCLAR. This documentation is in addition to complying with auditing standards related documentation. SA 250 says you have to document certain things. In addition to that, for NOCLAR separate documentation you should have. And prepare documentation to enable an understanding of significant matters during the audit. The conclusions reached, significant judgments made in reaching those conclusions. Here significant matters, everything is in relation to laws and regulations. And finally document what are the non-compliances you identified, the results of discussion with management or top management and third parties. See, this point is there even in SAF 250 also. Documentation point, same point is copy pasted here. Clear? Main applicability provision is very important in NOCLAR. That's it. This is the difference between NOCLAR and 250. So typically speaking, what is the difference? We cannot figure out. Because SA 250, type 2 loss says other loss. Type 1 loss says specific loss. Type 2 loss says remaining loss. Obviously, all loss are covered right indirectly. You and others, everybody come to class means what? Everybody has to come. NOCLAR says everybody. SA 250 says you and others. That's the only difference. Getting it? Fine. With this, NOCLAR is also completed. Are you confident on this? 250 is over. And one more thing, many are nowadays worried about their future a lot. I think this is a phobia which everybody is having. In fact, for me also, once upon a time. Now I'm not worried much. Okay. Once you cross 30, you will not worry. Okay. Because things takes its own, I mean, you will realize that everything fall in its place in its time. Okay. The world is abundant, opportunities are abundant, and just that you have to look for opportunity. Getting it? There is a saying, opportunities are visible only for those who look for it. Only if you're looking for an opportunity, it will be visible to you. So you will be having so many struggles, so many mental trauma, getting it, like your pressures, financial pressures, everything. Especially the 99% of the problems are finance related problems for everybody, whoever it is, even Mukesh Ambani too. Otherwise, why he'll be working 18 hours in a day? Yes or no? So typically speaking, these business people who are so-called very rich, ultra rich, they are most hardworking than any of us. We are the one who are lazy. We are lazy buggers. Where we say that we are working hard. Actually, a person who really works hard, he never thinks that he's working hard. Only a stupid thinks he's working hard. Honestly. In Instagram, how many stupids were there you found out? Only stupid thinks he's working hard. Generally, those who really work, they don't even feel that they're working. Because they do generally with lots of passion. Passion is not something that you take it from outside. It should come within. Getting it? So those of you who are feeling insecure, those of you who are having that insecurities in, how is my career is going to be, all that, nothing to worry. A career, you will have a beautiful career as long as you are dynamically working. Not like a Dumbo. As long as you are working so strategically, dynamically. See, whatever field you have chosen, in that field, discover what is the route for success. See, in my field, since I'm in teaching, my only thing is I need to have commendable knowledge on whatever the thing I'm talking about. Getting the point? I need not know all the laws and regulations for explaining 250, for example. But I must understand the context of discussion. That's enough for me. For you as a student, as of now, your objective should be, you need to read thoroughly, understand thoroughly, remember thoroughly. I heard from some students who, what they say is like, I teach us very in-depth. What I'm teaching in-depth, I don't understand. I'm teaching what is there in book only, na? Am I going anywhere outside? Until now you saw, right? I'm not teaching anything from outside, technically speaking. I stick to only the book. But the point is, I make it understandable. You are reading without understanding. Honestly, you are reading without understanding. You're switching off your brain and reading 10 times. Okay. One time writing is equal to 10 times reading. This fellow writes, assuming that he read 10 times. And when he sees the question in the exams, no, obviously he will be shocked. He will not understand anything. He'll read the question, somewhere I saw this. But where it is? He don't recognize that. Some answer he'll write. And he'll expect 2 marks out of 4, he'll get 0 for that. This is what happens in audit, any subject for the matter. So give time, sufficient time that it requires. Whatever you are studying, evaluate yourself whether you're able to understand or not. So are you getting proper understanding or not? You have to evaluate. You may think this is not relevant for exams. Who said it is not relevant? Without understanding this, how come you retain it? So to retain without understanding is much harder task than to retain with understanding. So if you understand the content properly, you can retain it easily. So remember, these are something not just for education, these are important for anything. There is a reading skill. You need to adapt good reading skills. When you're reading, the way you read, it should give you the clarity. Getting it? You see, I don't know how many of you observed the way I'm reading. I read very specifically each and every word. I observe when I'm reading. I process when I'm reading each and every word. I just don't blindly read. Suppose 250, consideration of laws and regulations in an audit of financial statements. Everybody reads. Consideration of laws and regulations. By whom? Who is considering? Auditor. In where he is considering? In an audit of financial statement. This is concept and understanding. Getting the point? Everybody understand the sentence, but understanding the context is very important. And this kind of reading skill, if you develop, you learn things quickly. Tomorrow, even when you're doing a practice or job, or when you're doing any business also, the way you read things will be different completely. You will easily pinpoint the terms. The way you read, that reading skill gives you a lots of benefit in career also. And even in exams also, you can qualify very easily, you know. That thing that requires 20 days for you, generally, you will finish it within 12, 13 days. That's the smart work, I call it as. Smart work means who is using brain while reading. Hard work means those who are not using the brain while reading. That's the only difference. Any standard you take for the matter, it has an overview. It is dealing with some purpose. Understanding holistically how that will impact in the understanding how it is holistically impacting the overall audit. You see, almost at every standard, I connect with audit report. Because that's what we are responsible, right? We are ultimately responsible to give opinion. And at every standard, when some issue comes in the standard, I'm discussing, I'm linking it with reporting. Getting it? So you should, this is for auditing standards, auditing subject. For some other subject, suppose you are reading Ind AS. Ind AS ultimate objective is what? Preparing and presenting financial statements. So you need to always remember the ultimate objective of why you are learning. Any particular component of that subject you are learning, you should understand how this component has an impact in the overall subject. Implications. You need to understand the implications of each and every part that you are learning. That's how you learn easily. If you learn like this, you require less revision efforts. Some students, they do watch classes at higher playback speed. This is one big mistake everybody does. Higher playback speed means 2x speed he'll watch, where he will not understand anything. I bet he will not understand. If somebody asks a question on the same class, he cannot answer. He will once again go and look at it. Okay, I forgot to observe this. You didn't observe because you're watching it at a higher speed. Highest speed, in fact. 1.5 speed. When you are watching classes, whether it is YouTube free video or a paid video, whatever it is, watch at standard speed. Connection with the subject is important. When you're watching lectures, see why you feel some of you face-to-face classes effective is because it's at standard speed. You don't have in mind speed, playback speed, right? You cannot increase the playback speed, right? If you can do so, you need to consult a doctor. Getting it? So there is no such playback speed and all. That's why you feel face-to-face is effective. But the same principle you apply in a online class also, the same, what kind of attention, what kind of care you're taking in face-to-face, same you apply online, you will get the same result. Getting it? So observe what you're doing. Always be conscious. Consciously evaluate what you're doing. Everything, whatever you do consciously. Why are you doing this? Just question yourself. Don't blindly do. Running notes. Why running notes? It is good. I'm telling, running notes is good. Provided after I spoke something, you sit another 15 minutes and recollect everything and write running notes. That's running notes. When I'm saying something, you're not listening and writing notes only. It's not running. Getting the point? That is not a proper notes. When you're listening to class, your focus should be on listening. Are you carrying running notes to movie theater? To write important points in the movie? No, right. Understand, everywhere the brain works in a similar level. Just that you should realize that every task, whether you're listening to a class, whether you're watching a movie, your brain is ready to receive the information. Getting it? But unnecessarily you're disturbing it by writing running notes. That's a problem. Those who are writing running notes, I'll tell you, they will reproduce the content, but they can't explain the content. You can explain content better when you listen to it properly. Fine. So, long story short, be hopeful, and you will have plenty of opportunities. Believe me, India is growing like anything. I'm not bothered about the world, but India growth is like something extraordinary. We are still at the beginning stage. There is a much more to grow further. And I recently came across this some Instagram pages and all, Dr. Velumani something. Okay, so India, we know it's a poor country, so we are only the one having eligibility to become rich. Rich countries becomes poor. Only a poor country become rich, a rich country only become poor. Getting it? Once upon a time, India is a rich country, so we became poor. Now we are a poor country, so we can become rich. So the opportunities are abundant for us especially, believe me. So don't worry about your future. It is safe as long as you're dynamic enough. Okay? If at all you're lazy, you're gone. The world is so fast. And don't worry about automation and all, artificial intelligence, automation and all. System cannot understand. System can only figure out exceptions. Suppose you give 10 numbers. One extreme number only it will figure out. It doesn't have any other ability beyond that. No matter how much automation comes, it cannot interpret the results properly like you. Getting it? Only a human being can interpret results properly. So there are so many articles that are being published on social media. I'm telling you, 10 years before they said CA course is not there. Now today CA is having highest number of admissions. For the first time, 4.5 lakh students are writing for the May 24. Highest number ever. 15 years back also I heard from people saying CA course is over. Nobody will join. 10 years before I heard, 5 years before I heard, 3 years before when I started also people told me, why are you sticking into this? Why are you coming into this field? Why are you staying in this field? But 3 years later, the picture is different altogether. So if you work on it, you will get it. Believe in that. As long as, see, market may be low or market may be high. You should think in such a way that whatever the market, I should get it. It may be low or high, doesn't matter. Whatever is there, how to get it. It may be in any field, whatever the product you are dealing with. Interiors, so much competition, let it be. There are still people who are earning crores in that. There are people who are not even able to make lakhs in that. So whom you are looking at, that is important. Okay? So be aspirational, you will do well. Fine, next, let's begin with SCA 240. Auditor responsibilities relating to fraud in an audit of financial statements. Relating to fraud, what responsibilities you have? Are you liable to prevent a fraud? No. Management is primarily responsible for prevention of frauds and errors in the financial statements. Your liability is what? Your responsibility is what? You have to be skeptical. The standard says you have to be skeptical. Auditor shall maintain skepticism throughout the audit. Auditor has to be alert for possibilities of frauds or suspected frauds, situations of frauds. And if auditor suspects any fraud, he should investigate further and detect whether there is a fraud that causes a material misstatement in financial statements and evaluate the implications on the financial statements of the fraud, report it accordingly. This is what the actual entire standard talks. Getting it? So this entire thing is articulated in multiple steps. This 240 is covered very in depth now. So what is a fraud? SCA 240, what is a fraud? Mostly, many of you would have cleared CA Inter somewhere in 2020, 21, 22. Yes or no? And I hope you have not gone through in the old scheme fraud chapter. We have a chapter in old scheme CA Inter, fraud, we have a separate chapter. If you have gone through that, this standard becomes dead easy for you because it is the same. If at all you've gone through it but you didn't understand, then focus here. Okay. SCA 240, what is a fraud? Fraud is nothing but an intentional act by one or more individuals among management, top management, employees, third parties to obtain an unjust or to obtain an illegal advantage. Unjustified, unjust means which is not justified. So unjust or illegal advantage, to get some illegal benefit, to get some unjust benefit, they do some commit an act intentionally, knowingly, and that's called a fraud. Error is an unintentional thing. We also, the person who committed error don't know that he committed error. That's what error characteristic is of. Now remember, fraud, no, if you take Indian Penal Code or if you take Criminal Code procedure, fraud definition is much more broad. It's a very broad concept. But in audit, we are concerned about which type of fraud? Those frauds that causes material misstatement in financial statements. If a fraud is resulting in a material misstatement in financial statements, amount, classification, presentation, disclosure, any of these four is affected in the financial statements, then only it is called as fraud in the context of SA 240, in the context of audit itself. Are you getting it? Suppose no, company is cheating, multi-level marketing companies, they do cheat customers and all. That fraud and all, auditor of that multi-level marketing company, he need not bother about. But he may be concerned with NOCLAR there. Getting the point? Business frauds. Some businesses, they manipulate their customers and clients. Getting it? And they do frauds. There, NOCLAR is applicable. Other type of laws and regulations are applicable, not 240. And we all know that misstatement can arise either from fraud or error. The distinguishing factor between the fraud and error is what? Underlying action that results in misstatement, whether the underlying factor is intentional or unintentional. So what 240 says? 240 objective is very simple. You have to do risk assessment. You have to conduct risk assessment to identify fraud risk factors. To identify fraud risk factors, auditor has to identify and assess risk of MMS in financials due to fraud. Nothing but you have to identify fraud risk factors. One example of fraud risk factor. We have, of course, a specific discussion there, but at the beginning, suppose company is facing so much of pressure from competitors, from holding company, from investors. The directors are facing huge amount of pressure that company is not having proper sales. They gave a target of, let's assume 100 crore turnover. Our directors achieved 90 crore. The 10 crores they may manipulate to make sure that they have achieved the target. And one of the director is having incentive. If at all he met with a 100 crore target, if at all the company reaches 100 crore, the director will get an incentive. So he found an opportunity in sales by entering transactions with related parties at higher prices, manipulated sales. Now you see, here a fraud has been committed because of three reasons. One, the person is having pressure. Two, he has a motivation, incentive. Three, he has an opportunity called related party relationships and transaction through which he can achieve the objective. Getting the point? So there are three risk factors for frauds: pressures, incentives, or opportunities. Pressures or incentives, opportunities, and fourth, another important characteristic, attitude. There is another risk factor, rationalization of attitude of the individual. How far the individual is ready to change his attitude. Getting it? So if at all he is having a see, there are many, though they have pressure, though they have opportunity, because their attitude do not support this culture, they don't do fraud. They're honest people. Some people have a bad attitude, but they'll not have an opportunity. They'll not have a pressure. They may not do fraud. So in order to a fraud has to materialize. In order to materialize a fraud, in order to get a fraud to be materialized, these three ingredients are must. You need to figure out. You need to figure out whether any of these indicators are there, and that's what the standard says. The standard says you have to identify and assess risk of MMS due to fraud, nothing but fraud risk factors. Okay, you identified fraud risk factors. Get sufficient appropriate evidence about the risk you identified. Implementing proper responses. Company is facing a pressure. Okay, so there is an indication that turnover is manipulated. So investigate into the turnover in depth, especially year-end transactions, next year beginning, cut-off transactions and all. Specifically evaluate whether they really happened or not. That is your response to the risk you assessed. And respond appropriately. If suppose you investigated further sales, you found dummy sales, how you should respond. The standard says very simple. Discuss with management. Tell them to rectify. Tell them to rectify. If they are unable to rectify, they don't want to rectify, you modify the opinion in the audit report. All these three related guidance is what the standard is giving. So the standard is giving you how to identify risk relating to fraud, how to respond to fraud, how to respond to the risk, and how to respond to the fraud if you identify any fraud. That is what exactly the standard is dealing with. And the standard also says frauds can be two types. Two types of frauds will impact financial statements. One, manipulation of accounting, which is also called as fraudulent financial reporting. What is it? Fraudulent financial reporting, nothing but manipulation of accounts. Books of accounts, they are manipulating. Financial reporting, they are fraudulently doing. So fraudulently they are reporting means they are modifying some numbers. This is what very popular fraud in big companies. In small entities and medium-sized entities, misappropriation is one fraud. Of course, in big entities also misappropriations might happen. Both might happen. Now, how misappropriation of assets result in material misstatement in financial statements? Suppose stock register shows 10,000 units of stock in the warehouse, but some employee stole there is a theft of some 100 units. This 100 units value is approximately 10 crore. Let us assume it's a jewelry industry. Getting it? As per the jewelry, the closing stock is 10,000 crore. 100 crore worth of jewelry has been stolen by some employees. Now, will they report about the theft to anybody? No, obviously not. Now, theft happened. The company as on 31st March also didn't identify this fraud. They showed in the balance sheet 10,000 crores only. Now tell me, is the balance sheet overstated or not? Because there is a theft already, but which is not recognized in books of accounts, because of which the actual value is 9,900 crore, but the balance sheet value is showing 10,000 crore. Misstatement by misappropriation of asset. Suppose this jewelry value, NRV is 9,000 crore. Value 10,000 crore is the cost of the jewelry. NRV they need to value at 9,000. Suppose they ignored that. Intentionally they valued at 10,000. This is fraudulent financial reporting. Able to understand the difference in how both will impact the financial statements? That's what I told. Now, what are the fraud risk factor? It may be incentive or pressure. It may be an opportunity, rationalization of the act. Nothing but attitude. Why people do fraudulent financial reporting? Why people do fraudulent financial reporting? Fraudulent financial reporting involves intentional misstatements like intentional omission of amounts, intentional omission of disclosure, intentional commission of mistakes. Getting it? It can be caused by efforts of the management to manage earnings, influencing their perception as to performance and profitability. They want to change people's perception on entity performance and position. Earnings manipulation may start with small actions. Pressures and incentives may lead to these actions to increase the extent of fraudulent financial reporting. If at all they're having so much of pressures, they may do fraudulent financial reporting. That is what Hindenburg also qualified on Adani. Adani is manipulating figures. Yes or no? Why he is manipulating? Because he want to get major market. Because he want to get major contracts from the government. So he is manipulating. That's what Hindenburg report also says. They mentioned all these fraud risk factors in Adani Enterprises, Adani Ports, Adani Power, everywhere. Due to pressure to meet market expectations. Suppose if a company is publishing quarterly results, you know how demat, especially those who are trading in stocks, you understand how impactful are the quarterly results. Sometimes in stock market, if the results are positive, stock price will come down. It is also because it is not as per the expectation. Anything that is not as per the expectation, stock market reacts adversely. There is no guarantee that if company published profit, price will grow. Company published loss, price will be reduced. Because when I'm doing options trading earlier, not now. Okay, once upon a time, I lost some money. But it is because I don't know, I lost money. Simple. Getting it? Because I'm not expert, I lost money. Don't try all that. Okay, that with your stipend and all, don't try. So, due to market pressures, because on the company there are so much of expectation from the public, so they may want to meet public expectations, so they may do fraudulent financial reporting. Management sometimes are motivated to reduce the earnings for tax reasons. In order to avoid payments of tax, they may be manipulating the records to show lesser profits, to show losses. Able to understand? Now, how they will be committing this FFR? How fraudulent financial reporting will be committed? Why they are committing, we understood. How they are committing? Very simple. Alteration of records, manipulation of records, falsification means wrong information, forgery and all. Intentional omission of some important transactions and events, misapplication of accounting principles, revenue recognition principle, you are preponing it or you are postponing it according to your convenience. Overriding of internal controls. They'll give you this question, 4 marks question. Fraudulent financial reporting often involves management override of controls that are otherwise appear to be operating effectively. When you look at them, it is operating effectively, but actually management is overriding the controls. Management is overriding the control. Best example for overriding of the controls means, for example, you take Avenue Supermart, DMart itself, or Big Bazaar itself, you take. Suppose if a customer is taking out the goods, the security person will stop him because he's a customer. If the store manager is taking out the goods, will the security guard stop him? Obviously not. The store manager is overriding the control. He's using his power and overriding the control. This is an overriding of control. Fraudulent financial reporting can happen by overriding of the control. Accountant of a company cannot pass any transaction without authorization of the CFO, but CFO can pass any transaction without anybody's authorization. Getting the point? That's overriding of control. So FFR, fraudulent financial reporting, often involves top management overriding controls. Generally, the controls look operating effectively, like recording fictitious entries to manipulate operating results, inappropriately adjusting assumptions, changing the judgments, omitting or advancing or delaying. Either you omit a transaction, or you recognize the transaction early, or you delay the transaction from recognizing it on time. Getting it? Concealing, not disclosing fact that could affect amounts in the financial statements. Complex transactions that are structured to misrepresent. Suppose Tata Motors want to buy iron and steel for cars manufacturing. They can directly buy from Tata Steel. But instead, suppose Tata Motors bought iron from so and so intermediary. That company has bought iron and steel from another intermediary. That intermediary bought from Tata Steel. Why are you engaging in such a complex transaction when you can directly buy from them? Able to understand? So engaging. So when a transaction appears very complex, that's a fraud risk factor. Altering records and terms related to some unusual transactions. Getting it? All these ways they can do fraud. 4 points. Any 4 points. Straight question might come. Fraudulent financial reporting often accompanied by management by overriding of controls which are otherwise appear operating effectively. Generally, they look like operating effectively. Accountant, he is not able to pass any voucher also without authorization. Very good, excellent. But CFO is passing in the back end. Able to understand? Next. Misappropriation of assets. Misappropriation involves theft of assets, generally in small and immaterial amounts. Getting it? And that are ways difficult to detect. But remember, many immaterial amounts become a material amount. 5 paise stealing, not a big deal. 5 crore people, 5 paise, 5 times. Aparichitudu. Onion. Yes or no? That's a material amount. Now, how people do misappropriation of assets? Embezzling receipts. Means they are collecting money from customer, but not recording, but not submitting to the company. They are saying, suppose no, our sales collection agent might collect some 1 lakh rupee from so and so customer. They will report 95,000 only customer gave. 5,000 they misappropriate. Nowadays all these were overcome because of the digitalization. All these embezzling receipts and all have reduced a lot because of the digitalization. Wherever they go, they take company scanner. That Bharat Pay, Phone Pay, UPI scanner they'll take. Other party also will pay through UPI only. So there is no, and in fact most of the companies on every invoices and every walls, they clearly mentioned, do not pay money to anybody unauthorized. We will not consider. And at some stores also you will see, if you do not get the bill, your purchase is free. I will always wait when he will not give bill. They will give a bill. Now indirectly they are saying, like in FMCG, like food sector, food business, no, they can give you the food and take money without giving the bill, and they will not account it. The salesperson. So to avoid that, they alert the customer. It's a control through the customer. So customer, after looking at it, say, give me my bill, at least he'll ask na, for that reason. Next, theft of assets, stealing assets, causing the entity to pay for goods and services which are not received, dummy, fictitious transactions, using an entity's assets for personal use, unauthorized usage. All these comes under misappropriation of assets. They'll ask you a question. What is misappropriation of assets and what are the ways to commit misappropriation of assets? Sometimes misappropriation of assets will be happening with supporting evidences. There is a purchase order, there is a goods received note, there is an inspection note, there is an e-way bill, stock register update, everything is there, but goods are not received. Getting it? That's reality, but we don't know. So sometimes misappropriation happened with perfect documentation. In fact, when you see the documentation so perfect, that itself is a triggering factor that there is a fraud. A genuine transaction will not be that perfect. Only a fake transaction will have perfect documentation. You see, in investigation, in Tamil movies and all, they'll be showing some investigation. Everything is so perfectly arranged. Drishyam movie, you know. This is the point where they focus on actually. Yes or no? In Drishyam movie, the investigation, that SP, whatever it is, she focuses on this point only exactly. Everything is so perfect. That's why they're getting doubt. So, remember, you cannot make legal determination whether fraud has actually occurred or not in many cases. Because you don't know exactly. The person who committed fraud will come and tell you. No. You can't determine why it happened. Is it intentionally happened, unintentionally happened? You can only judge whether it is intentional or unintentional, appear to be intentional, appear to be unintentional. You can only judge. You cannot determine legally. Because you're not an investigator, understand? You're only an auditor. You cannot take narcotic test and all. Next. So, whose responsibility? Management is responsible. Both those charged with governance and management is responsible for prevention and detection of fraud. Management has to place a strong emphasis on fraud prevention that reduces opportunities for fraud to take place, and fraud deterrence. Means they should make sure that they should implement controls, policies, procedures, code of conduct, ethical principles, teaching employees of ethical culture. Once you are recruited in any company, from 1 month and all, they'll give training. What they will teach you in training? All this. All these things is what in companies they'll teach you. They'll give you what is the company's code of conduct, how you have to behave in the company, what you should do, what you should not do. All that they will mention. Committing a commitment to create a culture of honesty and ethical behavior, which can be reinforced by an active oversight by top management. Look at what is the attitude of top management. In SA 220, there is a question. Acceptance and continuation of client relationship. What points you consider? The first point is integrity of the key managerial persons and top management. How far the top management are with integrity, with ethical behavior, how far they are creating the culture of honesty in the employees' minds. Yada Raja Tada Praja. Yes or no? How's the king? The people are like that. The king is idiot, people are stupids. Yes or no? So it's as simple as such. If the top management is emphasizing on ethical behavior, proper work culture, employees also will do the same. Now, what are the responsibilities of auditor in relation to fraud? Now, you see how the standard is drafted. First, they told what is fraud. Then they told what are types of frauds, why each type of fraud happens and how it happens. Yes or no? And who is primarily responsible for preventing and detecting fraud. So initially they are making you understand basic background related to fraud. Now they are entering into the actual standard content. What is the responsibility of auditor? Fine, I agree. Management is responsible for all these things. I agree. Now what is my responsibility? Your responsibility is obtain reasonable assurance that financials as a whole are free from material misstatement, whether due to fraud or error. Your responsibility is same, to give opinion only. Your responsibility will not change. It is exactly same. But there are inherent limitations. Some material misstatements may not be detected, even though your audit is properly planned and performed properly. And in case of misstatements, especially resulting from fraud, actually this is a continuation. And one more thing, detecting fraud, detecting error, which is easy? Error. Because the person who committed error doesn't know he committed, so he will not conceal. So error, maybe you can easily find out because nobody have tried to conceal it. If some documentation is missing, you can find that something error is happening. But in fraud, perfect documentation will be there. Perfect coordination and collusion will be there. You can't detect. So not detecting a material misstatement resulting from fraud is higher than the risk of not detecting from error. Detection risk for fraud is more than detection risk for error. True or false statements important. Getting it? MCQ format only. 1 minute. Some students are asking in MCQs when they are solving, like yesterday one of the student has asked also. Like two answers are very close to each other. How to figure out? How to figure out the answer? Sometimes all the four answers appear similar. How to figure out? Orange is a fruit or color? Getting it? That's how our MCQs are like. So what is an orange? Option A is a fruit, option B is a color. So that's how they give. Yes or no? That's why you need to understand the context. Both of the above is not given. None of the above is there. Okay. You know, some MCQs, no? Generally, you think MCQ means four options will be there. Option A incorrect. Option A wrong, option B wrong, option C wrong, option D right. This is how generally you expect. Another MCQ, right, right, wrong, right. This is another MCQ. Only these two is what you are expecting. But institute gives this MCQ. Not wrong, not wrong, not wrong, right. Getting the point? I'll give you. Yeah. Under SA 240, fraud includes fraudulent financial reporting. Option A. It's not wrong. Option B. Under SA 240, fraud includes misappropriation of assets. That is also not wrong. Option C. Under SA 240, fraud includes both fraudulent financial reporting and misappropriation of assets. This is right. You see, option A and B, are they wrong actually? No. Yes or no? So, yes. Look at these four options, which is most appropriately describing the context of the question. That is how you should select. So, sometimes, no, you will find three not wrong answers, means they're not right. They're right only. But you will feel one option even more right. That is the right answer. Getting the point? Which of the following is most appropriate? They'll ask these questions. Especially you will find this in, now you practice online MCQs, you will find these kinds of questions. Some questions, no, some others, no, they will give that question. Only he can understand that question, nobody else. Okay. People know when they're giving any MCQ, they should also think from other person's perspective. They should think how general, how it is clearly conveying the context. Another MCQ pattern is not right, not right, not right, wrong. Getting it? So it's not right, not right, not right, and wrong. Like three answers they'll give you. You feel like they are not right. Absolutely speaking, they are not right. But one is absolutely wrong. So that you should pick. Getting it? For example, option A. SA 240 deals only with fraudulent financial reporting. It's not wrong. Actually, it is dealing with that also. Or else you see, SA 240 is dealing with fraudulent financial reporting. SA 240 is dealing with misappropriation of asset. SA 240 is not dealing with both. SA 240 is dealing with so and so, not dealing with so and so. Like this, they'll give you 4. This is worst possibility. This kind of questions are very difficult. These two categories of questions are very difficult. So when you're solving MCQ, remember this technique. If you are unable to get, if the MCQ do not fit in this parameter, it will either fit in the third parameter or fourth parameter. If you understand that, you will figure out the right answer. Able to understand? One stupid, no, he asked a question like this. You know, I'll tell you that question. 143 subsection 12 fraud is there. In RTP, I saw this question. So I call him stupid because it's really stupid. I'll show you this. I'll reason. When auditor identified any fraud for less than 1 crore, he has to report to which of the following? Option A, to audit committee. Option B, to the management. Option C, A or B. Option D, A and B. This is the question. Okay, actual answer is A or B. That is the answer which is given. I will report to both. Is there any violation? Then how come you say that's wrong answer? See, Some cases they will use the word or, they will use the word and, but these words will not have relevance there. Getting it? You can write notes or you can listen to me. Is there any relevance here? Or get the point? One da sollirka sir, one da pannanu, or irukanga sir, or use panna. Will you? No. Yes or no? You listen to me and write notes. It's not that. So sometimes we use the word and or so generally. There is no specific relevance to it. In that particular 143 subsection 12, they specifically used auditor, actual act. If you see, if the auditor has identified any fraud, reason to believe that any fraud exists for an amount not exceeding 1 crore, he shall communicate it to board of directors or audit committee as the case may be. That is the full sentence. Since they have used the word or, this fellow tested or and. You don't understand that why that or has been used there. Like this, there are many MCQs. Like this, there are many MCQs which are being prepared by some people who do not understand the context of learning. Getting it? If that MCQ comes in exams, what to do? Nothing. You have to do the right answer, otherwise you will not get mark. That's inherent limitation in exams. Getting it? I think this will help you, right? Maximum any MCQ comes in these 4 combinations only. Any 4. Most of the MCQs will be in the last 2 combinations. At CA final, they will ask in these 2 combinations. That's why they named it as application oriented MCQs. Getting it? Application means nothing but they'll give you everything right. It looks everything same. But you should select the most appropriate thing. Fine. Next. They'll give you the C point as a 3 marks question. C point. The risk of not detecting a material misstatement resulting from fraud is greater than the risk of not detecting a material mistake from error. Comment. What should I comment? You should write the next part of the answer. That is what they're expecting. So you should write the same sentence and continue. This is because fraud involves carefully organized scheme to conceal it, like forgery, failure to record the transaction deliberately, intentional misrepresentation, making it more difficult to detect, even though when it is especially accompanied by collusion. Collusion may cause the auditor to believe that evidence is persuasive when in fact it is false. When all the documents are perfect, prepared by multiple people with collusion, I don't know that collusion exists. Getting it? I believe that they are fine, convinced, I will convince, persuasive. Getting the point? So they're expecting you to write this. They're expecting you to comment this. You will write, yes, the statement is correct. I agree with you. You will write like this. Some students, they have this mentality. Compulsorily for 100 marks you attempt and come. Have you seen this? What you will attempt? Only when suggested answer matches only you will get a mark. Why are you unnecessarily getting a bad impression of the examiner in the last page of the paper? Don't write something. Getting it? You write 70 marks, perfectly you write, you will get 55 plus. Believe me. Getting it? 70 marks, 75 marks or 80 marks. Entirely if you write perfectly, you will get 70 plus. 40 marks perfect, 40 marks average. Average means, by the way, not irrelevant answer completely. 2 points are relevant, 2 points are irrelevant. That's an average answer according to me means. Perfect answer means all 4 points are perfect points. So for a perfect answer, you will always get full mark. For an average answer, you will get quarter mark. For an above average answer, you will get half mark. Suppose if you write 3 points out of 4, don't think step marks. 4 points, 4 marks. No, sometimes 1 point will have 2 marks weightage. 1 point will have half a mark weightage. 1 point will have 0 mark weightage. This culture is now institutes following. Sometimes you think some 8 points were there. Question is for 4 marks. Any 4 points they asked. So you wrote 4 points. Out of these 4, 1 point is having 2 marks, 1 point is having 1 mark, 1 point is having 0, another point is having 1. Let's assume in the suggested answer scheme of valuation. You wrote 0 point marks on all the 4. So in some cases, no, though they are having multiple points, some points will have high weightage. That accurately describes that context better. In Certified Internal Audit course, CIA, getting it, CIA course and all, They will give 200 MCQs. 4 hours is the exam time. Out of 200 MCQs, some MCQs carry 0 marks. Some MCQs carry 10 marks weightage. Some MCQs carry 4 marks weightage. Some MCQs cause only half a mark weightage. And which MCQ carry how many marks, that breakup will not be given to you. CIA exam, that's how they evaluate. No, this is there. In certified internal audit course, US related course there is. And that culture is being adopted in India by ICA. Thinking we are at par with US. Of course, we are superior. Okay. We will break US economy very soon. Honestly. Just another 10 to 15 years it takes. So we will break. Look at the population of India. Obviously we break. Yes or no? Next. The auditor's ability. Now fine, next. I'm patriot only. Whoever is, anybody thinks that I'm not a patriot, I'm obviously patriot. Okay, that's why I'm doing passionately my job. Okay, so and obviously if country grows, obviously we all grow happily. And if we grow, country grows, by the way, sorry. Not otherwise. The auditor's ability to detect a fraud depends on various factors. Now, whether an auditor can detect a fraud or not, it depends on skillfulness of the perpetrator. Who committed the fraud, how skillful he is. Frequency and extent of manipulation, degree of collusion, relative size of amounts manipulated, seniority of those involved. I'm not going in deep, it's a very easy point, so you can understand. And further, risk of not detecting management fraud is greater than employee fraud. If top management has committed a fraud, you can't even identify. If employee committed a fraud, internal control, some other cross-checking will be there. There you can easily detect it. So they'll give you this question. When obtaining a reasonable assurance, the auditor is responsible for maintaining skepticism throughout the audit, considering potential impact of management overriding the controls and recognizing that audit procedures that are effective for detecting error may not be effective in detecting fraud. You see, they are articulating very beautifully. What are the auditor responsibilities relating to fraud? They are not straight away saying his responsibility. They are saying first, look, fraud is like this. Fraud detection is difficult than error detection. Whether we detect fraud or not depends upon so many things, not our skill alone. Who did the fraud? Where he did the fraud? How much amount involved? How many times it is committed? What is his seniority? And further, top management fraud is even more difficult than employee level fraud, because top management will be in a better position to manipulate all the records. So, considering all this, it is not that easy for us to detect a fraud. But remember, the standard says, what is your responsibility? The standard says your responsibility is to maintain skepticism. Remember, these are all the issues that you are having. So, be alert. For any possible negative, unusual situations, you be alert. If something you found, immediately investigate further. So that is what the standard says. So now tell me what standard says. What is the responsibility of auditor? Auditor responsibility is to be skeptical. That is what entire SCA 240 says. Getting the point? Be skeptical. If you find any risk, how to investigate that risk? So that is what fraud risk factor question says. Fraud risk factor means what? It's important for MCQ. Fraud risk factor is a condition or symptom or indicator or an event that indicates an incentive or pressure to commit a fraud or provide an opportunity to commit a fraud. If at all a fraud risk factor exists and the person is having that attitude, fraud will materialize. So the auditor shall evaluate whether one or more fraud risk factors are present. Fraud risk, by the way, just because risk factor is there, does it mean fraud definitely happened? No. Fraud risk factors may not necessarily indicate the existence of fraud. Whether a fraud risk factor is present, whether it is to be considered in assessing risk of MMS requires professional judgment. For somebody, it may not appear as a fraud risk factor. For some auditors, it may appear as a fraud risk factor. Some auditors may find few risk factors. Another auditor may not find these risk factors, because everybody's risk assessment, risk appetite, risk perception are different. Getting it? When we see this traffic and all, we don't get anything. When an environmentalist see the road, he will get a different perception. Yes or no? Maintaining skepticism. So ultimately it says, auditors shall maintain professional skepticism and notwithstanding the auditor's past experience of honesty, integrity of the management, all that. I know you are doing audit of this entity from past 5-10 years. You know that they are honest, but still, don't ignore. Be skeptical. Are you getting it? Unless the auditor has reason to believe the contrary, the auditor may accept records and documents as genuine. What it is saying is, you need not suspect the books of accounts from day one. You can trust them unless contrary information you obtain. Unless you found some symptoms of fraud, no need to think with a perception that everything is fraud. See, you have to be skeptical. Skeptical means when you have to be more alert. Skepticism, you see skepticism definition, alert to unusual circumstances. Alert to unusual circumstances. Critical assessment of audit evidence. Skepticism definition this is. Professional skepticism refers to alert for unusual circumstances, critical assessment of audit evidence. Getting it? You have to be alert for unusual things. If everything is usual, you need not be that much. But remember, only when you're alert throughout the audit, you will find unusual things. Alert means what? Not like sober. Like, don't casually. Like we do vouching, right? Without alertness. How we do vouching? Amount matching, date matching, date matching, letters matching, letters matching. That's it. That's not how we should do vouching. We should do vouching from whom it is purchased, easy in the approved vendor list. Purchase. Now, how much amount purchased? For this is the purchase order. How much is the purchase order? What is the value? Who has to authorize this value? Suppose if the purchase order is 10 lakhs, who can authorize? Who authorized below? Who signed that? This is vouching means. But for us, how do we do vouching? We all know. Yes or no? Many of us. Getting it? Suppose if you are responding, suppose if you are inquiring management, you are getting responses which are inconsistent. Investigate the inconsistency. The finance manager told budget is for so and so amount. The CFO told budget is for so and so amount. Which is correct? You should investigate. Alert for inconsistencies. That is also one of the definition, ingredient of the definition in fraud. And the discussion among engagement team shall take place, particularly emphasis on how and where the entity financial statement may be susceptible to material misstatement. The discussion shall occur notwithstanding that engagement members believe that management are honest. Whether management is honest or not doesn't matter. Engagement team should discuss this. So formally the discussion should take place within the engagement team regarding fraud risk factors. This is not that important. No, this is important. Risk assessment procedures in identifying risk of MMS relating to fraud. So how do you identify risk? How do you identify the fraud risk factor? Inquiries of management within the entity, like talk to them, try to understand what they are doing, what business they are doing, what processes they are establishing, how sales will process, how purchases will flow, how payments will flow, how receipts will flow to the company, how they are collecting payments from customers, how they are remitting payments to suppliers. Look at the processes. See whether in these processes, is there any vacuum? Is there any gaps in the processes? Who are approving it? Look, this is a company where promoters' ownership is only 30%. 70% ownership is belonging to outsiders who are not part of the company. So promoters will have an intention to manipulate expenditure, everything, and make money out of it because they are only 30% owner. But they can get 100% benefit. They want to get 100% benefit. Understand how top management exercise oversight of processes for identifying and responding to the risk of fraud. Whether company established any formal system for frauds, whistleblower mechanism, whistleblower complaints they are receiving. So especially for fraud deterrence, fraud prevention, what specifically they are doing, ask them. By asking all this, you will understand whether is there any fraud risk factor. Suppose company, you are asking, sir, have you established any procedures to, have you established any formal procedures to identify frauds? The management replied they didn't understand the question itself, which means there is no formal culture in the company for frauds. Getting the point? There is a high risk at that time, frauds might happen. Look at the internal control management has established. Internal control is nothing but the process, how they are collecting, how they are paying, how the sale is being processed, how purchase is being made, how expenditures are incurred, how assets are purchased, how current assets are purchased, how liabilities are incurred. Everything, there is a process. There is a system for the entity. Suppose in DMart or Big Bazaar, if the store, some particular grocery item is out of stock, he cannot go to DMart and bring and keep it. So there is a system for that. So they need to file, they need to make a request to the head office. So and so item is left, it's over, or it reached to reorder level. So there is a procedure for everything. You go, suppose you want to exchange articles. There is a separate counter for exchanging articles after you purchase. And there is an authorization mechanism for that article. Getting the point? For everything they do in a business, there is a process for that. There is an established process for that. So the auditor shall evaluate the information obtained from other risk assessment procedures and related activities that indicates one or more fraud risk factors. So you will be doing any other risk assessment. Fraud related risk assessment specifically you do. Fraud related risk assessment means what? Enquiring management, whether do they have established any formal systems for fraud prevention, all that. Enquiring management, whether they are aware of any frauds. Getting it? And asking them, I mean, look at the internal control, and finally you will be doing some other risk assessment procedure. You are doing some scrap related assessment, you are doing some sales related risk assessment. What can go wrong, what can go wrong. There you might have found some fraud risk factors. Consider that also. So this is risk assessment related to fraud risk factors. Risk assessment procedure in identifying risk of MMS due to fraud. 4 marks question straight they might ask. Getting it? Now some are asking how to present in the exam. Nothing, you have to present as it is. As it is means, see, here enquiries of management and others within the entities there. Suppose you can skip the word others if you didn't remember. But enquiring of management within the entity, how do you write an alternative answer for that? Ask management. So, okay, yeah, at least even if you write that, it's okay. Is there any other alternative for this? Is there any other alternative? Discuss with management. Getting it? So any of these 3 combinations you can write, but you cannot outrightly ignore this and write your own point and say I wrote my own language. Yes or no? So same meaning should convey. How top management exercise oversight of processes for identifying and responding to fraud. How top management has established systems to monitor fraud risk factors. This alternative answer you can write. Point is, you can present answer well if you understand this context and remember it. Now students are asking how to remember it. Obviously, even if I tell you, you will feel like it is vague. There is no technique to how to remember. You have to remember. How to eat, you are asking. Huh? How to remember also the same, I am telling you. Some intelligence, so-called intelligence, no, they give I, enquiries of management. D, those charged with governance. And the internal control, IC, example. Getting it? And auditor shall evaluate whether information obtained from other risk assessment procedure, ORP. And all this they will combine and put some keyword. Student will forget that keyword itself. Getting the point? This and all will not work. Mnemonics, they call it as what? Mnemonics. Mnemonics approach will not work. It will work only for 4 out of 100. Only 4 out of 100 mnemonics you study, you remember. And you only remember that full observation, full form only you remember. You will not remember the entire sentence. What you will go and write? He will remember this mnemonic, right? He will go and write enquire. B. Option 2. Those charged with governance. Discuss with those charged with governance. Option C. Evaluate internal controls. Option D. Other risk assessment procedure, if he remember that too. Okay. He will write these 4. He will think that mnemonic, I reproduced the abbreviation correctly. So I will get 4 out of 4. He'll get half mark. Getting it? You see the sentence. How can you represent it with a one word, this entire sentence? So don't run behind mnemonics. That will not work. If you want, you can try. Okay, one chapter, one standard only. At least only for one standard you try mnemonics. I think that culture has gone now mostly. But still some students are using mnemonics. And many are in the YouTube promoting mnemonics. Mnemonics, all these codes. It will never work. Okay? Considering the subject size. Within fraud only, I have to develop 15 to 20 mnemonics to remember all the points. And you will never remember. The effort you put to remember this particular shortcut, if the same effort you put on the main content, you remember better. Understand, you see so cleverly. Risk assessment related to fraud. You see the heading. Question is asking in exam. What risk assessment procedure auditor will do in identifying risk of MMS due to fraud? Whether fraud will happen or not. Possibilities of fraud, how will you identify? Ask management and others within the entity. Getting the point? 2. Look at the internal controls they implemented. See how top management is monitoring How top management is monitoring the fraud prevention, fraud deterrence, all that. 4. Whether any other procedures that you performed indicate fraud. In these 4, no. 4th point is only difficult to corroborate with this. Only 4th point is difficult for us to sync with this. This is an artificial point, technically speaking. But remaining 3 are common sense points. So observe, visualize, you will understand. Now for this standard, since the content is very huge, I will summarize at the end of the standard. A summarization technique might help you. Next. Okay, you did risk assessment for fraud, for identifying fraud risk factors. You found some risk. How to respond to the risk? How to respond? If at all you found any risk at financial statement level, they'll give you this question. Write about responses to assessed risk of MMS due to fraud at the financial statement level. This question they'll ask you. 4 marks question. How to respond to risk of assessed risk of material misstatement due to fraud at the financial statement level. First you need to understand what is financial statement level. I told you already. Just before, somewhere in 250 or somewhere I told you. Suppose if top management itself is not with integrity, it's a financial statement level risk. Getting it? Because which item in the balance sheet and P&L might affect, because if the top management is not proper, any item and every item might affect. That's a financial statement level risk. If a production manager is not a honest guy, production related affairs only he can manipulate. If a store manager is not a honest guy, stores related only he can affect. If CEO is not a honest guy, everything will be affected. So who is not honest, who is not with integrity? Look at, is it affecting financials as a whole, or is it affecting any specific assertion? So if at all it is financial statement as a whole, if you identify risk at financial statement level, you have to assign the person having the knowledge and skill and ability for the significant engagement responsibilities and the auditor's assessment of risk of MS due to fraud for the engagement. So when you're assigning any person of your staff to address this risk, so if generally purchases you found some risk, for that you will appoint some article or senior article, you do purchase vouching, all this like this and all you will tell. If it is financial statement level fraud, look at the knowledge, skill and ability of your engagement team member. Considering the significance of this engagement, take into account their knowledge, skill, ability to assess this kind of fraud risk factor. Getting the point? Accordingly, assign and supervise. That's what they're saying. And see whether selection and application of accounting policies by entities, are they indicative of any FFR resulting from management efforts to manage earnings? Whether accounting policy selected by the management, are they indicating any fraud? Account. See, generally if accounting policy method which they are following is relevant, suitable method, no risk. If at all the asset which they purchase, for furniture, WDV method is not suitable method. For buildings, WDV is not a suitable method, because for them straight line method is what best methods. For plant and machinery, straight line method is not a best method. Why they have chosen straight line method? In Companies Act Schedule 2, they have given single shift, how much rate of depreciation, double shift, how much rate of depreciation, SLM, what is the rate of depreciation, WDV, what is the rate of depreciation. They have discussed so much about rates of depreciation. Check. Incorporate an element of unpredictability. This is called surprise checks. In the selection of nature, timing and extent of audit procedure. Remember, the best way to respond to risk factors is surprise checks. If you feel in warehouse and all frauds might happen, do surprise visit to the warehouse and count the inventory. That's what. So how auditors should respond to a risk factor? By these. At assertion level, how do you respond? By performing further audit procedures that are responsive to assessed risk. Suppose in purchases, purchase order control and GRN, there is no interlinking. There is no mapping in the software. So I need to check various vouchers whether GRN is more quantity than purchase order. Getting the point? So that is the response to this control weakness. In doing so, auditor may change nature, timing and extent of procedures to obtain evidence that is more reliable. So here he can change the nature, timing. Originally based on risk assessment, you planned audit so and so days for purchases, 2 days you allocated. But now after you find these loopholes, you may increase it to 4 days. That's it. So that's the response at assertion level. Next. What are the audit procedures responsive to risk related to management overriding the controls? Remember earlier also we have got this. Earlier also we have got management overriding control. I told you that itself can be asked as a question. Fraudulent financial reporting often involves management overriding controls. And how they will commit? They record fictitious entries, they adjust assumptions, they adjust all this, they conceal data, they enter into complex transactions. By these transactions, management is overriding controls and then committing fraudulent financial reporting. You found these kinds of risk factor. You found management is overriding the control. How do you respond to it? That question is different. Getting it? What are the examples of management overriding the controls? This answer you should write. What is the audit procedure if auditor has identified management can override the control? You need to check, you need to test appropriateness of journal entries. What are the adjustments made? Look at the revenue accounting estimates. Whether is there any bias in the accounting estimate? How the accounting estimate is made? For any big transactions, what is the business rationale for the transactions? Whether they engaged in fraudulent financial reporting to conceal any misappropriation. You see here, they are talking about audit procedure. Whereas in the above thing, they are talking about how they commit, misstatements through fraudulent, misstatements in the financial statements by overriding controls. Examples of management overriding controls, the answer is different. Audit procedures responsive to management overriding the controls, answer is different. If you don't observe like this, you will confuse. So when you find a similar word already which you came across, once again go back there. What it is talking about, what this is talking about. Try to observe carefully. You will figure out. Understood or not? Maximum from this standard, they'll ask a question. I'm thinking so. But if don't ask, don't judge me. Okay. But because this is so much of content, entire pronouncement essay 240, they copy pasted. They didn't do minimum basic due diligence also. Whether this student can study or not also, they didn't observe. They just added it. Finally, once you respond means what? We do verify things. By verifying things, what we get? Audit evidence. How to evaluate the audit evidence? The auditor shall evaluate whether analytical procedures that are performed, are they giving an overall conclusion? Are they consistent with auditor's understanding of the entity and its environment? So analytical procedures, you will apply analytical procedures. Whether analytical, if you observe, suppose very simple, best example of analytical procedures I'll tell you. This is previous year, this is current year, this is operating expenses list. Getting it? Auditors remuneration, last year 2 crore, this year 2.5 crore. Okay, tax auditors remuneration, some last year 20 lakh, this year some 30 lakhs. Some repairs and maintenance, last year 2 crore, this year 18 crore. Some electricity expenses, last year 5 crore, this year 6 crore. Office maintenance, some last year 4 crore, this year 5 crore. Like this you found. Now tell me, when you analyze this, you found this is something unusual. The deviation is something unusual. Everything are in trend with the business. But this alone is something extreme deviation is there. So in analytical procedure, only with analytical procedure I investigated. Generally when I do risk assessment, I may not get this. I may not. By the way, one more thing I'll tell you. Risk assessment procedure includes what? What are the examples of risk assessment procedure? What it includes? Risk assessment procedure meaning is different. Risk assessment, identifying and assessing risk of material misstatement through understanding the entity and its environment, including internal control. And risk assessment procedure includes the inquiry, inspection, observation, analytical procedure. Getting the point? You see risk assessment procedure definition. It includes analytical procedures also. Now, what are further audit procedures? Compliance procedure, substantive procedure. Substantive procedure, test of details, substantive analytical procedure. Substantive procedures includes substantive analytical. Risk assessment procedure also includes analytical. Substantive analytical procedure means actual data I am checking. Getting the point? Analytical procedure means generally as a whole financial statements I am going through. Getting the point? If I go through the ledger account in depth, that comes under substantive analytical procedure. But we use the word interchangeably. Getting the point? We use the word interchangeably. For example, I visited Godown factory. Their uniforms are different colors. That's an analytical procedure. Why? That is not substantive analytical procedure. But when I'm verifying numbers, when I'm verifying vouchers, there I'm analytically thinking, logically evaluating, is it correct, is it genuine, logical I'm evaluating. That's substantive analytical procedure. Nothing but analytical procedure is nothing but data analytics. The data may be financial or non-financial. If you are analyzing the data based on facts, based on some documents, that's called substantive analytical procedure. If you are analyzing data based on observation, that's normal analytical procedure. You want me to give an exact difference? This is clear. What happened? You're all okay? Sync with me. So when you're evaluating audit evidence, especially that you obtained as a response to fraud risk factor, you got some evidence. When you're evaluating, compare this evidence with the analytical procedure. Both are consistent or not, check out. Getting it? Now repairs and maintenance, I showed, right? So much deviation is there. I will go inside, in depth. Which month it has high expenditure? I'll open that. Which date it has high expenditure? I'll open that. Which voucher causes more expenditure? I'll open that. Is it a revenue expenditure or capital expenditure? I will interpret and take a decision accordingly. Getting it? And why that mistake happened, I will decide. Is it intentionally happened or unintentionally happened? When auditor identifies a misstatement, the auditor shall evaluate whether the misstatement is indicative of fraud. That's what I told right now. So if you identify any mistake, is it because of fraud? You need to check. If such an indication is there, what is the implication of misstatement in relation to other aspects of audit? Array, one fraud is found. Immediately you will get a doubt. What about remaining items? Will you get this? That's what. If auditor identifies misstatements, whether it is material or not, and you believe that it is because of fraud, re-evaluate the assessment of risk of MMS due to fraud. When a mistake, have you seen materiality concept? Materiality is not only quantitative. Materiality is also qualitative. Qualitative means what? Sometimes we don't look at the money. We don't look at the amount involved. We look at the background intention. That's what they're saying. Sometimes if any misstatement is there, whether it is material or not, and if you suspect it is due to the fraud, re-evaluate once again your risk assessment process. Getting it? Once again check entire things. Once again recheck what are all you have done. Is there any fraud risk factors like this? The auditor should consider whether circumstances or condition indicate collusion. Very simple. Repairs and maintenance, they accounted in revenue expenditure, right? I saw entities accounting procedure. Generally, when an accountant passes the entry, it should be approved by CEO. First approval should be by CFO, then by the CEO, then only it will enter into the actual back-end data. Then only audit trial will be recorded. Getting the point? So primary entry is there, then finally it went to it. Of course, audit trial from the beginning it will be recorded, but approvals will be at 2-3 levels because massive amount is involved. Now, when I discover this repairs and maintenance where they charge to P&L a capital expenditure, they said it is an IO, by mistake it happened. But multiple people approved it. Multiple people approved means, okay, one person, if at all single authorization, he might have approved it without looking at it carefully, I understand. But 3 people approved it. Only after 3 persons approved, only it went and set in repairs and maintenance finally. How come I said 3 people have not observed it? It's an indication of fraud. Are you getting the point? So they know that they did this mistake. Now you need to immediately alert. Like this, is there any other expenditure which is charged to P&L which is not belonging to P&L? You should immediately think of it. So that's what they're saying. Suppose if you are unable to conclude whether a material misstatement is as a result of fraud, evaluate the implications on the audit. Suppose you are unable to decide whether it is happened intentionally or unintentionally, take some call. If you are unable to take a call, what is this impact on your overall understanding? See, generally in reality, we should come into one conclusion. That too, through a natural process, we should come into. Getting it? Suppose if you are unable to conclude means there is some information missing from you. There is a limitation on scope. Circumstances where auditor cannot continue the engagement. If you are unable to conclude, you see, if as a result of misstatement resulting from fraud or suspected fraud, auditor encounters exceptional circumstance that brings into question his ability to continue the audit. What are the legal responsibilities? Whether there is a requirement for you to report to any persons. See whether withdrawal is possible. And communicate the withdrawal with the top level management, appropriate level. And see, do you have any responsibility to report to outside people? Example, if you want to withdraw from engagement or ADT 3 form, you have to file. Resignation with ROC. Finally, before you resign, communicate whatever frauds and errors you found with the top management. And suppose if auditor withdrawal is not permitted, this is actually in the ICA material, they have given this in audit report chapter, but I discussed here because it is like a continuation to this. Getting it? Sometimes auditor withdrawal is not permitted. Then you should give what? If you are unable to decide whether fraud happened or not. Unable to decide means what? There is no such situation possible. You will decide obviously based on circumstance, is it fraud or error? But if you are unable to decide means management is dodging you. Somehow they are manipulating you. That's why you are unable to conclude. You should recognize this fact and decide whether there is a limitation on the scope of the auditor. If so, you will not continue with that engagement. You will withdraw from the engagement because management is limiting the information from your access. So if you want to withdraw, you will withdraw. But before withdrawing, listed entities, you have this 45 days criteria. The listing agreements under SEBI on resignation of auditor does not permit withdrawing from the engagement without issuing auditor review report. It provides that if the auditor proposes to resign within 45 days from the end of any quarter, before such resignation, issue the auditor limited review report. Getting the point? Once quarter is completed, once you are appointed, before the quarter ending, from that date within 45 days, if you want to resign, just suppose today I want to resign from one company audit. Right now it is, let us assume 13th March today. What is the latest quarter? December. 13th March from December 31st is after 45 days. Getting the point? That's how you should decide. Suppose I want to resign on 10th September or I want to resign on 10th July. What is 10th July? What is the previous completed quarter? June 30. Now 10th July from June 30 is what? Within 45 days. Then first point will apply. If you want to resign within 45 days from the end of a particular quarter, whatever the latest quarter, that you should check. If so, before such resignation, issue review report for that quarter. You are appointed now. At least you should give review report for that quarter at least. Suppose you want to resign after 45 days from the end of any quarter. Suppose I want to resign on 10th August or I want to resign on 16th August. 16th August is what? Okay, last completed quarter is what? June 30. From June 30 to 16th August is what? 1.5 months, 45 days. Getting the point? After 45 days, I want to resign. In such a case, give Q1 report, wait for Q2 completion, give Q2 report and then resign immediately. Able to understand? If review report has been issued for 3 quarters by you, you cannot resign then after. You have to issue audit report for the full year. You should also issue review report for the quarter 4 before resigning. Then you resign. No need to attend AGM. Are you clear? And ICA has given this. I think they may give you as an MCQ. This point is something they are supposed to mention in professional ethics chapter, but they mentioned in audit report. You know, when you're resigning, no, you need to mention the reason, right? You cannot say preoccupied with some other work. SCA 220, accepting and continuation of client relationship, integrity of the management, ethical requirement, competency, capability, availability of resources such as time. You need to check this and then accept the audit. Now, when you accepted the audit, we assume that you complied with the 220 and you checked everything, whether you can do the audit or not. You checked everything. Now you are resigning and saying you don't have time. Or you said previously itself I was occupied with some other work. You cannot mention that reason. You should clearly mention the reason correctly. What causes you to resign? The ICA guidance note, the auditor of unlisted entity especially shall not mention professional preoccupation as a reason for resignation. Getting it? Because the moment you accepted the audit itself means you consider all your occupations and works and then only you have accepted the audit. Now you cannot resign and say professional preoccupation. Professional preoccupation means what? Already I have so many works. I unnecessary. Suppose if there is a statutory appointment, without your knowledge somebody appointed you. There you can resign with this reason. But if you have accepted appointment voluntarily, a company approached you and you have accepted voluntarily, there you cannot mention this professional preoccupation as a reason. Especially for unlisted entities. Of course, listed entities you cannot resign just like that because there is a regulation like this. And in the terms of engagement, these regulation and all will be put in the listed entity. This SCA 240 is over almost. And finally, you should get a representation. This itself can be asked as a 4 marks question. Write about obtaining management representation in the context of fraud. Auditor has to get a representation from the management that management should give a representation first. They should not directly tell about frauds. First, they are responsible for internal control system. They are responsible for preventing the fraud. They are responsible to do risk assessment, and result of the risk assessment shall be disclosed to the auditor, and they have to disclose the auditor about fraud. They have to disclose auditor about allegations on the frauds. The company honestly has to disclose the auditor what controls that we implemented to prevent frauds, what frauds, what risk assessment we did in our company. Risk management committee do all this. Risk management committee is those with oversight on all these affairs. Getting it? So they do this. So they have to communicate with auditor what systems they implemented, all that, what risk they identified, what frauds they ultimately identified, what suspected frauds they identified, allegations. All that they have to disclose to the auditor through a representation letter. You should get that representation letter. That's it. Finally, if you identify any fraud, you have to communicate with the management. You have to communicate to top management on a timely basis, and you have to communicate nature, timing of audit procedures. Because of your suspecting fraud, your nature, timing, or audit procedures might affect. You have to communicate that. And sometimes you may have to communicate to legal and regulatory authorities. Companies Act, if there is any fraud for more than 1 crore in an individual particular circumstance, you have to report to central government within 60 days by ADT 4 form. That one. I'm not reading this, but it's important. It's important in exam. Whatever I'm not covering in this revision class, don't think it is not important. It is important. Everything is important, but I'm covering whatever is technical little bit. Then finally, relating to SA 240, what you will document. What are the decisions that you have taken in engagement team regarding financial statements susceptible to fraud? So risk assessment procedure related to fraud, you will document. So your team and you, all of you have done some risk assessment evaluation, so that you will document. And how do you respond to the assessed risk? This is entirely nothing but audit plan. This is entirely nothing but what? Audit plan or audit program. In audit plan and audit program, this is what we document. Getting it? Preliminary engagement activities we document. This is what we document. Getting it? And the auditor has to document nature, timing, extent of procedures, and linkage of those procedures with the fraud. So what procedures you did in audit, what verification, you applied some vouching, you applied some surprise check. Why you did surprise check? It is to find some cash related fraud. So you need to document that linkage also. So your documentation should convey everything clearly. And the result of the procedure, okay, you performed purchase vouching, sales vouching, have you found any frauds? Document the results also. And the auditor shall document communications about fraud to the management, top management. Auditors and auditor has to document where and all, to whom you have communicated regarding fraud or suspected fraud. Document to whom you have communicated, what you have communicated. And finally, this is one standard requirement, 240 specific requirement. Fraud related to revenue recognition is not applicable in the circumstances of the engagement. The auditor shall document reasons for the conclusion. In revenue recognition, there is no fraud. You need to specifically prove that there is no fraud risk factor in revenue recognition. That's why many companies, revenue recognition, they select it as key audit matter. Many companies, you see, revenue recognition is selected as what? Key audit matter. So the auditor has to specifically, if the auditor has concluded that there is a risk of MS due to fraud related to revenue recognition, is not applicable in the engagement. Risk of fraud in revenue recognition is not there in the engagement. How do you conclude that it is not there? What reasons causes you? Their internal control system is so strong. Company selling only online. A customer can buy only online. No manual orders and all accepted. So by these reasons, I conclude that there is no risk of fraud in revenue recognition. You should document like that. So I think in exam, if they give you this documentation question, this second point itself, the auditor has to document response to the assessed risk of MMS due to fraud. What auditor has to document? They have given here, main point. Documentation of understanding of the entity and environment in relation to fraud risk factor. They will give high weightage to the fourth point in the marks. Fine. Oh my God, we spent 1 hour 12 minutes. But I'm just telling you, this is so lengthy standard. It's so lengthy standard. Almost 12 pages it has. Only one standard, 12 pages. Getting it? I will take 4 hours discussion in my actual class. So once if you observe, now you have to summarize. You have to summarize this. See, I'm spending intentionally on this because I'm just trying to make you understand how you should summarize everything. If you read individually like this and proceed further, you will not remember. you should summarize. What we learned? First, we learned the definition of fraud. Then we learned about what is the objective under this standard. What standard is expecting the auditor? The standard is asking auditor to do risk assessment and then respond to the risk, getting it appropriately. Then the standard is saying fraud is of how many types? And fraud arises because fraud risk factors are there. So what do you mean by fraudulent financial reporting? Why it is happened, how it is happened? What is misappropriation of asset and why it is happening? And they are saying a statement that misappropriation of asset with proper evidence and collusion cannot be even detected. And then they discussed management is primarily responsible for prevention of fraud, all that. Then it came to auditor responsibility. Auditor is responsible to maintain skepticism. And before they conclude this, they spoke about characteristics of fraud. Characteristics of material misstatements resulting from fraud. They spoke fraud is something intentional, people will involve, collusion will be involved. It depends upon skillfulness of the perpetrator. Top management fraud is even difficult to detect than employee fraud. Error is easy to identify than fraud. They are describing the nature and characteristics of fraud. Next. Then auditor has to evaluate fraud risk factors. Now, having understood what is our responsibility, now my first responsibility, standard objective, identifying and assessing risk of material misstatement through fraud, identifying fraud risk factors, evaluating fraud risk factor. Then once I evaluate fraud risk factor, I need to do risk assessment. I need to do risk assessment to identify risk factors. How to evaluate that? They have given. Now you need to first identify. Before evaluation, you have to identify. Okay, you identified risk. What you have to do? You have to design further audit procedure. You have to respond. Suppose if the risk is at financial statement level, what you have to do? If the risk is at assertion level, what you have to? How you have to respond? Then, suppose if the fraud risk is related to management overriding controls. Suppose you found management is overriding the controls, through that way they are trying to commit fraud. How do you respond? What procedures you do? First of all, how management override the controls? They override to do fraudulent financial reporting. Ways to override they have given in the above. Then, now, okay, you responded. You responded means you did further audit procedure, you did vouching, verification, surprise check, inspection, observation, analytical procedure, recalculation, external confirmation, so many things you did. Now you got some evidence. How to evaluate that evidence? How to evaluate that evidence? Finally, suppose when you are evaluating the evidence, you concluded that a material misstatement happened and you concluded that what is the reason behind this material misstatement, intentional or unintentional, you are unable to decide. Where you are getting a question that you are unable to continue the engagement itself because company is not giving you proper data. What you should do? Then we understood about you need to communicate about withdrawal to the management. And we understood about SEBI requirement regarding listed entities. And for unlisted entities, you cannot mention like this preoccupation as a reason. Then finally, your work is done completely. Get a representation. Now it is focusing on documentation part, last part. Get a representation from the entity. What representation? Management should give. They are responsible for, see, when they are giving representation to you, first they should acknowledge their responsibility. Then they should give you whatever information they are supposed to give you. So that's what they are giving you. Then finally, you whatever frauds you identified, communicate with management, communicate on a timely basis, and you also communicate because you are suspecting fraud or you are identifying fraud which will affect your other audit procedures. Communicate that your plan is going to change. I told you 20 days I'll finish the audit. Now I want 30 days to finish the audit. Communicate that and check whether do you have any requirement to communicate frauds to regulatory authorities. So check out. And finally, document entire fraud related thing. See how connected the entire standard? Getting it? Now what you have to do? Spend 2 hours to read this. Yes, you have to. Getting it? 2 hours. 12 pages content, 2 hours is much easy, man. Yes or no? In effort, 12 pages takes 4 hours. Audit is very simple. 2 hours only it takes. Now when you're reading, observe each and every point you observe. Observe and try to understand with the heading it has been used. Getting it? That's it. With this essay 240 is over. And I told you how to summarize also. If you summarize like this, you remember better. So the best way, easiest way to remember is first do study detailed. I explained you semi-detailed in class. Getting it? You have to read in a very detailed manner. Then summarize then and there. Once entire standard is over, summarize as a whole. Try to observe. See, in fact, I did very fast, very quick summarization. You have to summarize at least for 20 to 30 minutes. Getting it? Out of 2.5 hours that you are spending on the standard, 1.5 to 2 hours for detailed understanding of the standard, half an hour for summarizing the standard. If you do like this for every standard, I bet you will remember very easily. This standard, 402 standard, 540 standard are bit lengthy. Getting it? Rest all other standards are 3-4 pages standards or 5 pages standards maximum. These standards are only bit lengthy. Clear all of you? Confident? That's it. With this SA 240 is over. Let's begin with the next standard, that is SA 260. Communication with those charged with governance. See, like the standard specifically says the auditor has to communicate certain specific things to those charged with governance so that you can do the audit much more effectively. In order to conduct the audit effectively, it is asking you to communicate certain things to those charged with governance. Now, at many places we hear this word, those charged with governance, those charged with governance. What do you mean by exactly those charged with governance? Top management is the right representation for the word those charged with governance. Now, who are those charged with governance? They have given, a separate matter. It can come directly for 4 marks. What do you mean by the term those charged with governance? Give any 4 incidents or instances of what constitutes those charged with governance. So you have to pick any 4 points from this. Getting it? We just try to explain in different scenarios what do you mean by the word those charged with governance. So they said very simple. The persons with responsibility for overseeing the strategic direction, obligations related to accountability. Remember, governance is a word which has 2 things. One is accountability, one is authority. Only if both the words are existing, only when both the powers are existing. Accountability is a duty. Authority is a power. When both of these exist, getting it? We call it as governance. So in an organization, who are charged with governance? Who are having a responsibility for governance? The top management, nothing but board of directors. Suppose if in the entity above board of directors, there is something called supervisory board, like audit committee, risk management committee, CSR committee, CG committee, remuneration and nomination committee. So many kinds of committees that are there as per LODR regulations. If at all any such supervisory committee is also there, then they will be treated as what? Those charged with governance. In a small scale entities, proprietary concern, LLP, partnership firms, where multi-level organizational structure is not available, there those charged with governance means directly the owners. So what constitutes those charged with governance? It depends upon case to case. Now, if auditor has to communicate to those charged with governance, exactly to whom auditor has to communicate? Ask the client himself. Ask the appointing party itself. Getting it? Slip of tongue, appointing auntie and vardu. Sorry. Okay. Because of the club effect. Okay. Yeah. So, ask the appointing party itself what constitutes those charged with the governance. Getting it? That's what this entire content is about. Getting it? So in smaller entities, one person may be charged with governance. So it is not possible to specify for all audits with whom the auditor has to communicate particular matters. With whom the appropriate person with whom to communicate sometimes may not be identifiable from legal framework. Suppose we are doing audit under Companies Act. Companies Act, we have a clarity. Board of Directors or the Supervisory Board or above Audit Committee, some committees or there is a clarity in that legal framework, Companies Act related framework. But same kind of clarity is not there in Partnership Act. For sole proprietary concerns audit, first of all, there is no act. Getting it? So the auditor have to discuss and agree with whom to communicate from the engaging party. Getting it? In deciding with whom to communicate, you have to understand. Auditor's understanding of governance structure and processes is relevant. Like anyhow, you do risk assessment, right? When you're doing risk assessment, you try to understand the entity, how the environment is, what is the organizational structure, what is the management structure, all that you try to understand, right? That you look into. This is what they explain. Getting it? So So that is what those charged with governance refers to. But this is important, you have to read later. Okay. I gave you brief overview of most of the points. Next. So what is the significance of communication? Why we should communicate? In order to effectively discharge the audit. One point, an effective two-way communication is important with those charged with governance, so that top management and auditor, they both will have a proper understanding regarding matters related to audit and developing a constructive working relationship. Remember, 99% of the evidence that we see in the financial statements audit belongs to entity. Who has to explain you the affairs of the entity? Obviously, the management of the entity. That too, top management of the entity are the one who can give you a better explanation about the affairs of the company. You must always have a good relationship with them. Constructive working relationship you must establish. That's what the standard says. The auditor, and that's what, why it is important is because you have to obtain from top management information relevant to audit. In order to get information on time, in order to get much more appropriate information, you need to communicate with the top management. And most importantly, those charged with governance are responsible for overseeing the financial reporting process. Like they are the one who are responsible for preparation and presentation of financials. In order to make them to discharge their responsibilities much more accurately, because if you find any issues in financial statements, you have to communicate them and they will rectify that. So in order to have all this, you must have a proper communication with those charged with governance. Getting it? Remember, in our auditing standard is like a manual, user manual. So they tell everything. When you buy an AC, the user manual you get. Any product for the matter, you buy electronic matter. It will also have the instruction, first to switch on. We know that, we know already that we need to switch on in order to use the product. But why user manual specifically says? It's a protocol. It's a SOP. Getting it? Auditing standards are also like that only. When you read all this, of course, this is what we do, right? Even if the standard is not there, we do all these elements without even with this standard also. When we are planning, suppose a client appointed us as an auditor, obviously, don't we ask him, sir, from whom we want information, like from whom we can ask, if at all we want information, yes or no? Is the standard required specifically talking? No. But then, it's like a user manual. So, they will tell you each and everything. Why communication is important? All these points are common sense point. So that I can, whatever information I want, I can get from the management. And so that they can also fulfill their responsibilities much more effectively. We should have a proper two-way communication so that we can work in harmony. Yes or no? So all these points are something common sense points. But remember, this is a user manual, so they specifically tell each and everything. Okay. And these are all something that we impliedly do. Even if the standard is not there, we generally do all this. Next. So what is the objective then? What is the standard objective? The standard objective, very simple. Communicate with the top management. What are responsibilities of auditor in relation to audit? So what are our responsibilities in relation to? So what are our responsibilities in relation to audit? We have to communicate. And not only that, what is the overview of planned scope and timing of the audit? You might have noticed when you plan for an audit, you on a prior note intimate the client that from so and so date to so and so date we are planning for audit. Why are you intimating? So that they make things, arrangements for you. So they need to date, they need to have some certain staff members, they need to allocate their schedules to you, like so that they can answer all your issues and all. Yes or no? Next. And another objective is obtain from them information relevant to audit. So one, you have to communicate your responsibilities. You have to communicate the planned scope and timing of the audit. Planned scope means very simple. If the company is having 10 locations, you may be wanting to cover 5 locations only, not all the 10, because we do audit on a sampling basis. So what is the planned scope and timing of the audit? And to obtain information relevant for audit, to provide top management with the timely observations from the audit that are significant to discharge their responsibilities, and to promote an effective two-way communication between the auditor and management, those charged with the governance. The standard aiming at very simple. don't do audit isolatedly yourself. You need to get information from the top management. So be clear, maintain a proper two-way communication. For that, you need to establish a communication process also. That also we have a question. For all these points, we have questions. Able to understand? Now, so okay, communication with top management. What you have to communicate? The standard says minimum you must communicate these matters. In addition to this, whatever else extra you want to communicate, that's your choice. But these are the minimum contents that you must communicate to those charged with governance as a formality sake at least. 1. Responsibilities of auditor in relation to financial statements audit. We already communicate with the terms of engagement. We will communicate what are auditors' responsibilities through engagement letter. Yes or no? So no need to specifically once again communicate. So we anyhow do this as part of engagement letter. But what the standard says, don't give a confusion to top management that you are doing something else. Getting it? Tell them that you're only doing audit. You will not do anything else. You clearly tell them what is your exact responsibility and scope. So you need to communicate that auditor is responsible for forming opinion on the financials prepared by oversight with those charged with governance. And we should also communicate the management. Remember, I'm only doing audit. I'm not preparing financial statements. You're only responsible to prepare. You're only responsible to conduct the business. You're only responsible for implementing systems and all. So our audit does not relieve management or top management of their responsibility. We should also communicate this statement. Getting it? First thing, one you have to communicate is auditor's responsibility. Second one that you have to communicate is scope and timing of the audit. Third one that you have to communicate is significant findings from audit. And another important thing that we have to communicate is auditor's independence in case of listed entities. Specifically in case of listed entities, the auditor must communicate regarding his independence to top management. What he has to communicate? That he has complied with independence, code of ethics, all the requirements we complied with. We should also communicate the entity what sort of relationships that we have with the entity. Either we, our network firms, what kind of relationship that we have with the entity, or our network firms, or the entities, components, associates, all that. Getting it? So either the auditor or his relative or his partner or auditor's associate company, auditor's associate firms, nothing but auditors related enterprises. So what are all the interests we or our network firms or our associate enterprises have relationship with the client and his associated enterprises? We should communicate this. We all know in professional ethics you might have seen. Suppose if you are providing any other services also to the client along with audit, non-audit services you are providing, the fees charged for other services shall not exceed the fees charged for audit. Or if the fees charged for audit is less than fees charged for other services, you should not do audit. Network firms, it is 3 times multiplication. Okay, anyhow, once I come to ethics, I'll cover on that. So like this, certain relations, certain formalities you have to communicate. And you are having a team, right? Audit team, right? Within the team member, any of the team member have a relationship with any of the management person in the company, that you should communicate. Getting the point? So this is very important. 4 marks a straight question. You are appointed as an auditor of a listed entity, and as a part of the audit, you have understood that audit committee is the appropriate authority to whom auditor has to communicate as per SA 260. And in audit of listed entities, one of the important element of communication is independence. What are the points that auditor has to communicate regarding independence? 4 marks question. Getting it? So what auditor has to report here? A statement that you need to mention a statement that engagement team and others in our firm, and the firm and the network firm, they all have complied with the ethical requirements. They all have complied with ethical requirements means what? Nothing but all our firms, me or our firms, they are not providing prohibited services under Companies Act. If at all we are providing any other service other than prohibited service, we are complying with ICA Code of Ethics, Council guidelines, network guidelines. Getting it? Where the fees charged for other services by me do not exceed fees charged for audit. Where fees charged by our network firms do not exceed 3 times of the fees charged for audit by us. Getting the point? So we should communicate all these ethical requirements, nothing but we complied, don't worry. And all relationships and matters between the firm, network firm and the entity. So between the firm and the network firm and the entity whom you are doing audit, or what is the relationships that are there. It may be financial interest, or it may be operating interest, it may be relatives, whatever the interest. And what is the total fee charged during the period for the financials audit, and what is the total fee that you are charging for non-audit services, either by your firm or network firms, getting it, to the entity to whom you are doing audit, and components of the entity controlled by the entity. Able to understand? So to the entity and components which are controlled by the entity. Actually, though here they use the word control, maybe associate companies, all that will also be included. Getting the point? Sometimes when they are drafting the standard, they just casually use the word control here. Here control refers to not holding company subsidiary control, that definition of control, not that. Probably here I feel whatever entities that are included in consolidated financial statements, with all those entities, what services that you are providing. So that. And the fees shall be allocated to categories to help the management in assessing the effect of services on the independence of auditor. How much you are charging for GST services, how much you are charging for income tax compliance services, how much you are charging for statutory audit, how much you are charging for tax audit. You should clearly give the breakup of fees that you are charging, either you or your network firms, whatever. By looking at the fees, they can understand on which fees you are mostly dependent on. So management will understand whether my auditor is still working independently. If at all audit fees is very dominating than any other fee, then obviously you work independently. If at all other services fees is dominating as a whole than audit, obviously intimidation threat. Yes or no? It creates a sort of intimidation threat because you are depending too much on the client. And what safeguards that you have applied to eliminate the threats? Okay, some threats to independence, but then what safeguards you applied? Suppose one of the relationship that you mentioned is in the relationships, you mentioned one point, all my relatives together are having shareholding up to 10,000 face value, not up to 1 lakh also. 1 lakh limit we have in the Companies Act, but all our relatives together 10,000 face value only there. And we clearly instructed all my relatives and all that not to buy any further shares in this company. It's a listed company, demat easily available. But I strictly restricted all my relatives from purchasing the shares of the company, holding company, subsidiary company, associate, co-subsidiary. So we clearly told this is a safeguard. You communicated with relatives, right? That communication related documentation you show management. So these are the points you have to communicate in case of listed entities. These are all points are strongly communicating to the management that you are still independent. Getting the point? You are an independent auditor. So that you have to communicate with the listed entities management. Clear? All of you? Now you see the word listed entity management, like in case of listed entities, you have to communicate, right? This kind of requirement is there. Listed entity, the reference to listed entity in standards on auditing comes at 3 places. One, SA 220, engagement quality control review. For listed entity audits, before issuing audit report, compulsorily engagement quality control review must be done. Only after EQCR report is received by the auditor, then only he can issue final audit report to the listed entity. 260, communication of independence in case of listed entities. 701, Key Audit Matters. It is mandatory for listed entities. At 3 places in entire standards on auditing, 35 standards, at 3 places it comes mainly. Getting it? I don't know at remaining other places whether they used, but predominantly what I observed is only at these 3 places. Getting it? Sometimes if at all paper setter is very, very clever, he'll ask you like this. What are the reporting requirements or responsibilities of the auditor under standards on auditing with respect to listed entities? How will you answer unless you observe this? Getting it? So 3 points you will write here itself, 3 standards. So under SA 220, the auditor has to, the engagement quality control reviewer shall be appointed, and an engagement quality control review must be completed before the auditor making the report on the listed entity. That is one requirement under standard. 2, under SA 260, auditor has to communicate independence to the listed entity where he is appointed as an auditor. Under SA 701, while auditing listed entities, communicating key audit matters is significant. And remember, when you are selecting key audit matter, you select the matter from those matters that you communicated with those charged with governance under 260. Indirectly, yes or no? So all are interconnected. This kind of question might come. Who knows? Don't think that plain questions will come. Days are gone. If at all paper setter is little bit, having this understanding, he'll test like this. Next. Then, not only this, you have to communicate planned scope and timing of the audit. So what is planned scope and timing of the audit? So help top management to understand better the consequences of the audit work, discuss issues of risks and concepts of materiality, what procedures that you are going to additionally undertake based on the risk assessment. You just communicate them what procedures that you are going to undertake. By the way, don't communicate too detailed also. Briefly you communicate. Like on so and so day I'm coming, on so and so day I'm leaving. This is what I planned on these days. I'll be verifying these and all. Don't verify the sample. Don't communicate the sampling technique that you are going to follow. Don't communicate the selection approach that you are going to follow. Some surprise element should be there for the entity on how you are selecting everything. You communicate what you are going to do. How you are going to do, don't communicate. Getting it? And assist the auditor to understand better the entity and its environment. So if you communicate planned time and scope of the audit, maybe company will give you a guidance on all this. Remember, when you're planning audit itself, you need to understand the entity and its environment. The auditor shall communicate overview of planned scope and timing of the audit, which includes communicating significant risks identified by auditor. Important point. Communicating significant risks identified by the auditor helps top management understand those matters, why they require special audit consideration. Those require special audit considerations are the one which are basis for key audit matter. The matters which require special auditors attention, special auditors consideration, generally those matters are the one attracts under key audit matter. Where special audit consideration, where we specially focus areas of significant risk, areas of significant judgment, areas where significant transaction or event happened. That's what factors determining key audit matter. Remember, you are communicating planned timing and scope of the audit to top management, right? Does it mean they are responsible to, or they are responsible to assist you in planning the audit? No. Your responsibility does not change. You are still having the sole responsibility to establish overall audit strategy and audit plan. And by the way, be careful. Care is necessary while communicating so as not to compromise the effectiveness of audit. Indirectly, surprise check elements, sampling approaches, selection methods, your testing methods, don't communicate. So don't compromise in the effectiveness of audit. In such a way you communicate. Communicate them entire planned timing and scope, but briefly. You need not give entire your program, audit program you drafted. What points that you will verify in purchases, what points you will verify in sales, audit checklist, audit questionnaire and all is there. You need not give them. Able to understand? Another important thing that we communicate is significant findings from audit. Observe, broadly 4 we need to communicate. 1. Auditor responsibilities you should communicate. 2. Planned timing and scope of the audit you should communicate. Significant findings that you did in the audit or you found. Getting it? Finally, in case of listed entities, auditor's independence has to be formally communicated. Remember, even in engagement letter we communicate independence point. But since SCA 260 specifically says independence related requirement, we may have to give an additional letter of engagement. Something like a letter of engagement. Communication regarding auditor's independence as required by SCA 260 heading. Getting it? We are having the following relationships. These are all permitted relationships. No safeguards are required. These are the relationships where we require certain safeguards. These safeguards we implemented. Like that you have to communicate. For all this, guidance notes will be there. So in reality, when you're doing audit, you just go through the guidance note and then follow. Getting it? Next. So another thing that we are still pending is significant findings in audit. Whatever important findings you made in the audit. Suppose you are doing audit, You found some capital expenditures material debited to P&L account. That's a significant finding. You want to do TDS reconciliation where it's a natural expectation that client will be doing it already. We just have to take that workings and verify. But client did not. Now I want to know whether TDS is properly paid or not. So many sections are there under which company deducted. So many due dates were there. Every month they are paying. Quarterly ETDS return they are filing. And they are having multiple TAN numbers. Now how can I do all this reconciliation? But it is important for me as part of my audit. It is client's moral responsibility to do that reconciliation. Now this is a significant difficulty. In audit, what do we call it as? Significant difficulty. Now information is not there, means it is there. But it is not in the format that I want. Now it creates a difficulty for me to create that information altogether. I asked for management, can you do TDS reco and give me in the next 1 week? They said, no sir, we are already occupied with some other works. Now significant difficulty. So and when I'm asking information, management is not giving me on time. They're delaying. That's a significant difficulty. So significant difficulties, if any, encountered during the audit, you must communicate. What are significant difficulties? Straight question you will get. It was asked in the past 4 or 5 attempts. It was asked once. What are significant difficulties that auditor has to communicate to those charged with governance? Getting it? Or they'll give you like this. As a part of audit, you have to communicate significant findings as part of 260. One of the significant findings is significant difficulties that are encountered in audit. Explain any 4 examples of significant difficulties. So you have to write significant delay by management or unavailability of entity staff, unwillingness by management to provide information necessary. So they are not providing or they are delaying. Getting it? The information I want. Unreasonably brief time within which to complete the audit. They are pushing me, sir, complete the audit as soon as possible. We have to file with regulatory. Unexpected effort required to obtain evidence to do TDS GS reconciliation. They didn't do. I didn't expect that I need to work from the scratch. Getting it? Unavailability of expected information. Same GST record, TDS record. I didn't it is not available. Restrictions imposed on auditor. Management's unwillingness to make assessment related to going concern or to extend its assessment for at least 12 months. They're not. These are all significant difficulties in audit. Any 4 points. Simple. In audit, difficulty means what? Difficulty in audit means what? When we are doing audit, we are not getting data on time. This is some common problem which every auditor faces in every entity. Yes or no? Common issue. 2. Management, their duty they are not discharging. That's a difficulty for auditor to accomplish. So few examples they have given here. In the standard they have given only few examples. Any 4 you have to write. Straight 4 marks question you will get. What are the significant difficulties that are there? Sometimes they will not ask you this. They'll straight away ask you what are significant findings from the audit. In such a case, you only have to write main points. Main point 1. What is the main point 1? What is your view about qualitative aspects of entities accounting practices? You have gone through accounting systems. You have gone through how the company is maintaining accounting records. When they are updating the accounting records, are they periodically updating the records or perpetually updating the records, accounting records and inventory records, all that you know. And how are they selecting accounting estimates? How are they choosing assumptions? You have gone through, you have studied management. So right now you are in a position to comment on qualitative aspect of accounting practices followed by the entity. You are in a position to answer. So what is your view on the qualitative aspect of the entity's accounting practice? You communicate. What do you mean by qualitative aspects of entity's accounting practices? SA 700 explains. In SA 700 introduction, this is there. What auditor has to evaluate? One auditor has to evaluate qualitative aspects of entity's accounting practices. You have to evaluate. See, SA 700 standard. These 2 points I didn't cover intentionally because I want to cover along with this. In SA 700, forming of an opinion, reporting of the financial statements. What points the auditor has to consider while forming the opinion? You have to evaluate certain things. One that you have to evaluate is qualitative aspects of entities' accounting practices. This is one thing that you have to evaluate. 2. Specific evaluations. 3. In case of fair presentation framework, The auditor has to evaluate overall presentation structure and content of the financials so that the financial statements are presenting underlying transactions and events so as to achieve fair presentation. Three things you have to evaluate. One, qualitative aspects of entities accounting practices. Two, specific evaluations about the financial statements, whether accounting policy selected and applied consistently, whether changes in accounting policy are properly and adequately disclosed, whether information conveyed in the financial statements are reliable, relevant, not misleading, yes or no, relevant, reliable, understandable, getting it, comparable, whether the terminology used in the financial statements is appropriate. 4 points enough. Able to understand specific evaluations. And in case of fair presentation framework, you should also evaluate overall how the financials are presenting. What is the content covered as a whole? Overall presentation, how the structure is. So are they achieving fair presentation? Are they truly exhibiting the company picture? You should communicate that. Understood? Qualitative aspects. So auditor has to check qualitative aspects as per 700, those points, specific evaluations, all that. So here you have to communicate what is your view on the qualitative aspects. If at all there is any adverse view you have on qualitative aspects, suppose management is biased, management is not neutral in selecting and applying accounting policies, in choosing accounting estimates, getting the point, that biased nature, that lack of neutrality nature, you have to communicate with the management, top management. Able to understand? என்னமோ சொல்ற சார் அப்படி இருக்கா? Fine, you're able to recollect. Then, so one, you have to communicate qualitative aspects of entities accounting practices. Two, significant difficulties. Three, significant matters arisen during the audit that were that were discussed or subject to correspondence with the management. Already whatever that you are discussing with management, any significant issue is there, communicate it to top management. Getting it? And 4, whatever written representations you want. We want written representations for management responsibility. We want written representations as required by other standards on auditing. We want representation maybe by ourselves, by our own purposes. Wherever we feel we want. What representations you want, you communicate, you get it. Without communicating, don't expect they'll give. Able to understand? And circumstances, you must communicate circumstances that affect form and content of, not opinion, audit report. So circumstances that affect form and content of audit report. By default, form and content of audit report means company thinks 700. But when you are deciding to use emphasis of matter para, other matter para, other information para, material uncertainty related to going concern para, or you want to modify the opinion, you must communicate. Clear, all of you? Next, any I'll check. I thought my actually my finger is touching here. Fine. Any other significant matters arisen during the audit? Any other significant matters arisen during the audit which in your common sense, professional judgment, relevant for the top management financial reporting process? 6 points have given. Compulsorily that you have to communicate with the management. Like here, totally, see, in exam they'll give you what are just a minute. Fine. So we are in discussion of significant findings, by the way. So what are significant findings? A straight question they will ask you. In such a case, what you will communicate? Important issues. Significant findings means important issues in audit. 1. What is your view on qualitative accounting practices? What are significant difficulties that you have faced? What are the significant matters that have arisen in the audit? Where and all you want written representations? Under what circumstances form and content of audit report is affected? Any other matter which is relevant according to you to the top management for better financial reporting process. All these you have to communicate. They'll ask you straight that question. As a part of SA 260, auditor has to communicate significant findings. Give any 4 examples. Only main points you have to write. Sometimes what auditor has to communicate under SA 260, especially significant difficulties, then you need to write significant difficulties subpoints. Observe, both are different. And what are the matters to be communicated under SA 260? Auditor responsibility, planned scope and timing of the audit, significant findings in the audit in case of listed entities regarding auditor's independence. All the 3 questions are different. Clear? Next, what are significant matters? Any significant event or transaction that has occurred in relation to which you are not having some clarity. The business conditions affecting the entity and business plans and strategies that may affect risk may be related to going concern. Concerns about management consultations with other accountants or accounting or auditing matters. Maybe management is, concerns about management consultations, like management is consulting with various other people. If at all you think that consultation may not give them right advices, or where they are giving a wrong consultation, so that you need to communicate. Discussions or correspondence in connection with initial or recurring appointment regarding accounting practices, application of auditing standards, fees, all other things. Any other important issues, nothing but. Significant matters on which there was a disagreement with the management. Getting it? Wherever you disagree with the management. Sometimes initially there might be difference, but later they were resolved. That you need not communicate. That's why they use the word accept. So, on any issue, when there is a conflict between you and the management, communicate with top management. That there is a conflict between me and management on this issue. So, what is your call on this? Ask them. Able to understand? They'll ask you straight question on significant matters, 4 marks. Communication of significant matters, the answer is different. Communication of significant difficulties, the answer is different. Communication of significant findings, the answer is different. What are the matters to be communicated under SA 260? The answer is different. Auditor has to communicate regarding auditor responsibilities and planned scope and timing of the audit. Comment. Then you need to write 1 and 2, including subpoints. Any combination they can ask. Clear all of you? And finally, one more question is, in case of listed entities, auditor has to communicate regarding independence. What auditor has to communicate? What points you should keep in mind? And 4 issues, right? There are actually 2 more issues that are there, but these are not main points, but important. You have to communicate, of course, all the 4: planned scope and timing of the audit, significant findings, auditor responsibilities, and independence in case of listed entities, terms of engagement. You should communicate terms of engagement. What is the scope and objective of audit? What is the management responsibility? What is your responsibility? All that. And you should communicate reporting as per 700 series. Circumstances in which auditor is required to include additional information in audit report, for which communication with top management is required. This question was asked in the past 3 or 4 attempts for 4 marks. What are the circumstances in which auditor is required to include an additional information in audit report in accordance with SAS, and for which communication with top management is required? When? Under what circumstances regarding modifications to the audit report, auditor has to communicate? I told you this already. Auditor has to communicate when you want to modify the opinion. Auditor has to communicate when you want to include material uncertainty related to going concern under 570. Auditor has to communicate when he is deciding to communicate key audit matter. Auditor has to communicate when he is deciding to include emphasis of matter or other matter para. Auditor has to communicate when he is including 720, when there is a uncorrected material misstatement in other information. See, they have cleverly used the word misstatement in other information. You have to communicate. If misstatement in financial statements, is getting it. So whenever you are modifying the audit report, what is the reason why you are modifying the audit report? You have to communicate. This itself can be asked as a straight question. This itself can be asked as a straight 4 marks question. Tell me, will you find any one extra question in the question bank beyond whatever I'm covering in the class? Getting the point? You see, any question that you see in question bank, it is within the revision class which I'm covering. For sure. Getting it? So the coverage which I do, that alternative number of questions is much wider than the question banks that you want. So when you're reading, you should always visualize like this. Not just this subject, even for other subjects. So here, generally, in all the above circumstances, where you are modifying audit report, you don't communicate separately. You simply give a draft audit report to facilitate a discussion of how such matters will be addressed. So how I am addressing all these issues in audit report, you will give a draft audit report. Suppose management said, don't give all that. We will modify the financial statements. We will rectify other information. Then those points you will modify later on. Able to understand? Now, communication process. So auditors should also communicate with the management. In what format you communicate? at what timings generally you communicate, expected general content of the communication. You just tell them that as per 260, these are the points we generally have to communicate. These only we will communicate. And whenever there is any oral communication, getting it done, you have to document with whom you communicated, what you communicated, all that. The auditor shall communicate in writing, especially significant findings from the audit. By the way, when you are communicating in writing, no, don't include every matter that arose during the audit. Communicate only those that are relevant for top management. And auditor shall communicate with top management on a timely basis. And you should only make sure the communication is adequate. Management should not feel like auditor never consulted us. Yes or no? He never asked any single question to us. He will just come, verify some records and leave, go for lunch break and have tea on time and then leave. Does not complain like this. Correct? Documentation. Specifically, you have to document any matters you communicated orally. You shall include them in the documentation. When you communicated, to whom you communicated, what response you got. Whenever you made a oral communication, of course, when you communicate in writing through mail or WhatsApp, a copy of the communication, keep it as part of documentation. That's it. WhatsApp screenshots, mail copies. You can take a printout of the mail, right? The printout. Of course, now we are not maintaining hard copy documentation, only electronic documentation. So that mail copies and all, you keep it in the folders. Clear? That's it. With this 260 is over. Easy or not?